the FIIs are buying in the cash market. This month so far, there have been 6 sessions in which 4 of them have been buy sessions for FIIs itself after a big selling. So in the last 5 sessions itself, they've bought around 12,658 odd crores on a net basis. And not just that, they're buying in index futures as well. Yesterday, the net buy was just about 215 crores, but that doesn't tell you the overall story. The overall story is from the start of the series, November 28th, where you look at it, the Nifty net contracts were negative 1.18 lakh with 33% long exposure. That's now come down to around 37,000 contracts itself with long exposure coming in at 45%. Where does the market go from here? Some consolidation is expected in a range, 24,700 call premium of 100 rupees, 24,600 put premium of 150 rupees, telling you 24,500 to 24,800 is the broad range that everyone's looking at. What are the stocks we're looking at? A lot of short positions added on Godrej Consumer yesterday and a lot of long positions added on some jewelers. So Kalyan Jewelers, the latest entrant in the F&O space, doing extremely well, seeing some bit of long positions being built.
Shining bright are these jewelry stocks, aren't they? Mangalam, thanks a lot for that. Well, time for a short break. Up next, the big announcement from last evening. Revenue Secretary Sanjay Malhotra will replace Shaktikanta Das as the new governor of the Reserve Bank of India. More on this on the other side. Stay tuned.
The funniest story I remember is once when Gukesh had a very, very disappointing result during the Olympiad. I went to cheer him up a little bit. So I went to his room expecting to find him slightly distraught. And within 10 minutes, he was trying to cheer me up. He said, "Why don't we go and play some table tennis? So, I think you're quite affected by this game, sir," and so on. I thought that showed his composure as well.
What did you, if you don't mind, can you share what was the conversation like? What did you tell each other?
Well, I have had really disappointing results, obviously, at some point or the other. And it's taken me a while to get over them. I mean, and the full impact of what I've done hits me. And then, so I tried to go to his room and tell him he shouldn't just wave it away, but, acknowledge that it happened and then try to feel better about it and so on. So I was trying to get him to talk about it. But in fact, his approach was different. He genuinely pushes the past aside and starts again. So after a few minutes, he got bored with me trying to discuss the matter with him. And he said, "Let's go do something else." And that's when we went off to play table tennis instead.
Our next category, the Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress. The award celebrates an individual whose work has changed the way we think, act and build for the future. And the winner for the Lifetime Achievement Award 2024 is...
1966, one visionary set out to ensure that every child could enjoy a healthy childhood at an affordable price. This vision gave birth to the Serum Institute of India, a company that would go on to redefine vaccinations worldwide. Dr. Cyrus Poonawala's journey began with the launch of the first therapeutic anti-tetanus.
Welcome back. Now, Revenue Secretary Sanjay Malhotra will succeed Shaktikanta Das as the new Reserve Bank of India governor, and he'll take over on starting tomorrow, which is the 11th of December, for a 3-year tenure. Lata Venkatesh is joining in with some perspective on what this change means for the markets and for the Reserve Bank as well.
Well, Sanjay Malhotra definitely comes with a lot of pluses as well, because he's been in the Revenue Secretary's position for the past, 3-4 years. He knows the cash flow of the government. To that extent, he'll understand where things are getting stuck. He would have, of course, friends in the ministry. And so, coordination between North Block and Mint Street will not be very tough. Also a technocrat, IIT Kanpur, and at a time when the world is moving towards using of AI and ML, and the Reserve Bank is doing a great job of it at its technological hub in Bengaluru, he will come with an open mind and an ability to grasp this and grab the opportunity. So those are the pluses that Sanjay Malhotra comes with. He, of course, has some challenges. It's almost baptism by fire because he's coming at a time when growth is slowing and inflation is rising. But people will not blame him for it. It's just that he's coming at a slightly tricky time for the government and for the Reserve Bank, but perhaps the market will expect a rate cut since he will understand it from the government point of view. So the markets will react positively to the appointment of Sanjay Malhotra. The big question for me is who will be his vice captain? Michael Patra, who was the vice captain to RBI Governor Shaktikanta Das so far, is also due to end his term in January. And the post has already been advertised. Now the government and the RBI have many options. One would be to continue Mr. Patra for a little longer, or they could, of course, upgrade Dr. Rajiv Ranjan, who has already served the MPC as a member for the last 4 or 5 policies. To look for an external candidate of the caliber of Michael Patra will not be very easy, who also understands the mechanics of public policy. So that will be Sanjay Malhotra's big challenge, but he will be in on the appointment. So perhaps he can have his way and get a cohesive team. A word on Shaktikanta Das, who leaves behind a very rich legacy, goes with many feathers in his cap. Not for nothing was he voted best central banker by some of the most prestigious magazines, global magazines. He steered the economy through COVID. He also, could smell the issues with unsecured loans, put in guardrails quickly. As well, he has been, has the distinction of having the largest number of years where the growth figures were well over 7%. So he goes in a blaze of glory. No taking away from that. Shaktikanta ends a glorious chapter of 6 years as RBI governor.
Thanks a lot for that, Lata. And sticking to Shaktikanta Das, from quoting Mahatma Gandhi to Martin Luther King, references to the Mahabharata and an occasionally famous Bollywood song as well. And Shaktikanta Das's 6-year tenure has been an eventful one.
Shaktikanta Das certainly comes with a lot of qualifications, been there, done that, and therefore has seen the equation from the government's side.
Today, there is a turn in the wind which suggests that it is not imprudent to dream of a brighter tomorrow, even in the bleakest of times. As Dr. APJ Abdul Kalam, our visionary former president, said, I quote, "You have to dream before your dreams can come true. A dream is not that which you see while sleeping. It is something that does not let you sleep." If patience is worth anything, it must endure to the end of time. And a living faith will last in the midst of the blackest storm. As the great Lata Mangeshkar, whom we lost recently, sang in her immortal voice, "Aaj fir jeene ki tamanna hai." It is faith that steers us through stormy seas, faith that moves mountains, and faith that jumps across the ocean. Mahatma Gandhi's insightful words, and I quote, "We are wakeful, ever vigilant, ever striving," unquote. We will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy. I recall what I had said in my statement of February 8, 2023, wherein I had quoted Netaji Subhash Chandra Bose, "Never lose your faith in the destiny of India."
RBI Governor Shaktikanta Das in his final day in office today. Also tune in for that. It's his last press conference today, later this morning at 11:30 a.m. on CNBC TV18. Time for a short break. Now, up next, India's Statistics Ministry is set to release a number of new data series and surveys. More on that after the short break. Stay tuned.
To the world's largest vaccine manufacturer, producing over 1.3 billion doses. Today, Serum's vaccines reach 65% of the world's children. Through global collaborations and innovative vaccines like those for COVID-19, Dr. Poonawalla has cemented India's leadership in affordable public health solutions. CNBC TV18 India Business Leader Awards 2024 proudly presents the Lifetime Achievement Award to Dr. Cyrus Poonawalla.
Well, many congratulations to Dr. Cyrus Poonawalla and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawalla, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawalla.
Honorable Srinath, my friend Piyush, and our Chief Minister, Mr. Fadnavis. I first of all like to acknowledge with thanks the jury for having selected me for this coveted honor, and also CNBC for supporting such a great honor to me, though I have received many honors as you've seen in the past, but to me this honor is equally important, if not more important. I won't take a lot of your time, but there was one important aspect which I think the audience...
Back with us here on Power Breakfast. Now, India's Ministry of Statistics is preparing to come with a slew of new data series and surveys. Now, expecting an annual survey of services, a capex survey, monthly employment data and more district-level data. Lata has more on this. Lata.
Yes, that's right. We often talk about big moves from the Ministry of Power and Roads, but the ministry that's really working very hard with new schemes is the Ministry of Statistics. Now, the first thing that I want to say is one of the big headlines from my chat with sources there is that they're going to launch an annual survey of services sector enterprises. You know, we have an annual survey of industries, but services contribute over 60% to GDP. So this is a very important service survey that they are launching. And that is going to take a lot of data from GST, but not only from GST. So that one is awaited. It may take a year for this survey to come to be published. The other important survey or new one that is expected from the MOSPI or the Ministry of Statistics is a capex survey. They've reached out to over 5,000 units, asking them for their capital expansion plans. Right now, we don't have one place where we have all the capex plans. We only have the CMIE data, which is a very good database, but it's not an official database. This one is coming out. The last date for replies apparently is December 31, and perhaps the first survey is going to be released by March 2025. Will it be an annual feature? We don't know that as yet. Employment is another thing that people have been asking, monthly employment figures, and that perhaps is going to come out as soon as February of 2025. The first data we will get is for January, which will be published in February. There is also a lot of cleaning up of current data. We already know that the base year is going to be changed, and 22-23 is going to be the new base year. The previous base year was 2011-12. Now, what we understand from our sources is that they're going to watch this 22-23's revisions and the FY24 revisions and see if there is any one-off. And if there isn't, then 22-23 becomes the new base year. But they are going to let the data users have a look at the time series, and there won't be any nasty surprises. The announcement of the entire new data series will come in February of 2026, when all the revision of the previous years will also be announced. And finally, there is a lot of cleaning up of data which is coming from the ministries. You know, there is a statistics officer in every ministry, and what the MOSPI finds is that the definition of several things is not common across ministries, the metadata needs to be cleaned up, and some guidelines are being given by the Statistics Department. Finally, the states are also going to be told to try and declare the district development product. The center gives the GDP of the country and the NSDP of the states. The states are going to be goaded to give the district development product, so more micro data will be available. In short, lot of cleaning up, lot of new series are on the anvil.
Lata, thanks a lot for that. So multiple announcements that are coming in, multiple surveys that are on the anvil as well. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for today's trade.
Some of them know, but most don't know, that right from the beginning when I started Serum Institute with a capital of 5 lakhs, of which half was borrowed, and it helped me to grow a vaccine company, which is today, of course, the world's largest vaccine company, in spite, and that's what I want to emphasize, that I've supplied most of the vaccines, if not all, at half or quarter of the market ruling price, in which hundreds of millions of dollars of profits were sacrificed, and I continue to do it at a... And when I was asked about it in the press, I said, apart from my staff who have supported me in this sacrifice, the biggest loser is my son here, only son, because it's cost him at least $3 to $5 billion of cash profits, which we have lost in the process, and we continue to lose till at least in my lifetime. Thank you very much.
Well, thank you, Dr. Poonawalla, for your very, very noble cause. We're ever grateful, and congratulations again on receiving this award. Well, ladies and gentlemen, economic progress is built on a foundation of vision. It is built on a foundation of dedication as well as impact. The next award is a special recognition for outstanding contribution to the Indian economy, which recognizes an extraordinary force behind India's growth. This year, we celebrate IIT Madras for its unparalleled role in driving India's economic growth. Let's take a closer look at their achievements and the achievements of this year's remarkable winner.
IIT Madras, a cornerstone of India's technological revolution, has been shaping leaders since 1959. Known for its excellence in engineering, it has also fostered entrepreneurship, supporting over 233 startups that address real-world challenges. The Research Park, home to 200 startups, bridges academia and industry, driving innovation in AI, robotics and renewable energy. During the COVID-19 pandemic, IIT Madras played a key role in developing rapid testing kits and ventilators. CNBC TV18 India Business Leader Awards 2024 proudly presents the Special Recognition Outstanding Contribution to Indian Economy Award to IIT Madras.
Ladies and gentlemen, a round of applause for Professor Mahesh Panchagnulla, Department of Applied Mechanics and Biomedical Engineering, Dean Emeritus, IIT Madras Head, Center of Excellence on Sports, Science and Analytics, and Professor Satya Narayana Chakravarti, Department of Aerospace Engineering, Head, National Center for Combustion Research and Development, and co-founder of several startups. Sir, if you could kindly say a few words.
Thank you so much. It's great to be here. I think as the introduction went, I'm here standing in front of you as someone who has been participating as an academic in a number of startups, notably Agnikul, which many of you would have known has launched India's first semi-cryo rocket out of Sriharikota. Plus, we have actually been doing lots of other things like E-plane or satellite company called Galaxy and Hyperloop, through Tutor Hyperloop and Avishkar Hyperloop. We're part of a larger ecosystem.
India's market news headquarters. Cutting-edge analysis. influential insights, market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome. You are with us on Bazaar Morning Call and we are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me in the studios as always is Nigel D'Souza. Today we have Mangalam joining in as well. And guys, we finally have a new man on Mint Street. That's one of the major talking points that will sort of occupy our imagination today. But otherwise, things are not looking too bad on the global front either.
Things are not looking too bad on the global front either. Some, decline from the highs on Wall Street. That's pretty much warranted. But you speak about the new man on Mint Street. Let's take a moment and salute the old man as well, Shaktikanta Das. When he came in, everyone said that, everyone questioned his effectiveness, his capabilities and all of that. 6 years. He's gone through the pandemic. We've gone through multiple specific bank-related issues, a couple of wars, an interest rate cycle, and so much more, with nothing, but great. You don't only swim in troubled waters, you do extremely well out there as well. So that's telling you about, he was tested by fire time and again and came out like true gold. Not for any other reason has he been awarded, as the best central banker in the world multiple times.
Well, that's right. We thumb the table about the Indian equity markets and say that, well, India's done very, very well and we have, a better path ahead. I'll tell you what, in terms of central bankers, you hear some of the central bankers across the globe and you wonder, what they're going to do next year. A path was stated and he followed the path more often than not. So salute to Mr. Das. Thank you for the last many, many years. And now over to the next man in charge.
Absolutely. Well, remember Governor Das's smile. I'll always remember that smile and, may he continue to smile for many, many years in all kinds of, public roles that he will take on from here on. Such grit and such strong actions.
The beauty about...
but the smile, very gentle smile, but strong actions.
Incredible. What stands out in, RBI Governor Shaktikanta Das's tenure, and maybe Nigel would agree with this, Rahul Dravid as well. These are solid people. At the time things are going on, they're extremely strong, solid. Yeah. You remember them a lot more in their absence. Because, everyone will go out, hit sixes and all of that. And that's in the time when you miss someone who's just solid defense, blunting the ball. It takes a lot of effort to make things look so effortless. So I'm waiting for, the time he writes his memoir about this period at some point in time. A lot of the RBI governors, prior governors, have written their memoirs. This will be something that I'll most definitely read, look forward to. The effortless with which he took so many efforts.
Made it look so easy when it wasn't that. We know that. By the way, there will be a press conference today at around 11:30 a.m. When Mr. Sanjay Malhotra takes over. He will be interacting with the press, so watch out for that. But we have a full market to trade and lots of other cues to go over as well. So let's kickstart things. Now, Wall Street had a bit of a tepid session. We had a mild red across the indices, about 0.5% lower. It was a tech-related sell-down that happened, and even in after hours, the futures right now are looking at a mild shade of red. And that's largely thanks to, again, some issues around tech stocks. So while we were trading, it was all about NVIDIA and whether China is starting some antitrust investigation there or not. Even the AMD stock actually went down yesterday. And in after hours, Oracle's numbers weren't that great. That stock's been trading lower, 6-7%. So therefore, continuing with some caution on Wall Street. But Asia is actually looking much, much better, starting with the Chinese market. In fact, if I look at the Hong Kong Hang Seng, let's pull up those markets on the screen if we can. Last time I checked the Hang Seng, it was rallying about 2-odd%. Yeah, that's still the case, 2%. The mainland Chinese market is also up and about. And, the Chinese market, is the Shanghai Composite, that is up about 1.7%. And why is that? Because of what happened in the last 1 hour as Hong Kong was closing out yesterday. So just to jog your memory, yesterday after the Politburo meeting, there was a formal communication. It was in Chinese and translated. It basically meant that, the country will now be pledging a more proactive fiscal policy approach and also a looser monetary policy approach. And we haven't heard that term looser monetary policy in China since 2011. So the market got really excited. And then there is another big economic meeting happening later this week, probably starts tomorrow. And that's where people are expecting more concrete, big stimulus announcements as well. So China is actually doing pretty well for itself. We've discussed the governor for a goodish bit, so I won't repeat that. But like I said, 11:30 is his first brush with the public at large and with media. So we'll watch out for the man. He is a 1990 IS batch, 1990 batch IS officer, has been the revenue secretary. And, what scintillating credentials from IIT Kanpur, and then he went on to, I think, study public administration at Princeton. He's been at REC as a CMD, so, absolutely glittering career. And the fact that he's closer to tech, I mean, he's an engineer by sort of education, perhaps that'll equip him really well to take on all the fintech challenges that we're in the midst of. Let's quickly move on, talk about fund flows. Yesterday, we had, foreign institutions on the buy side, but it was a smaller figure, about 700 crores. The bulls won't be complaining. Domestic institutions sold off, stock worth about 1,600 crores. Let's quickly come down to stocks. And of course, our team will tell you more about this. Tata Motors is hiking prices for some of its vehicles. Watch out for this one. Metropolis is more consolidation in the diagnostic space. They've gone ahead and picked up equity in another, healthcare provider. So look at this one. Life insurance data came out, and the picture is very simple, that private insurers have done really well, but the likes of LIC have suffered. So just for reference, HDFC Life, November premium up 13%, SBI Life, it's up 8%, ICICI, Pru has done even better. So we'll watch out for some of these insurance stocks as well. Plenty to keep us busy today, Nigel.
Well, that's right. Mangalam, you want to take,
Yeah, I'll just talk about the Wall Street and how our markets are likely to be in today's trading session. You spoke about some bit of profit taking overnight that we saw, about 0.5 to 6.6% decline from record highs. So key indices, you have the Dow Jones, the Nasdaq and the S&P 500. What will be more interesting is how these indices pan out in today's trading session, and the Nasdaq in particular. Why? Because yesterday, Nvidia was down about 2.6%. It's been a big mover, and the reason for that is the Chinese regulator is investigating the company over possible violations of an anti-monopoly law. So whether this, trouble is something that the company strides through is something we'll be watching out for. The second thing I'll be watching out for is how Oracle performs, because post-market, Oracle was down 7% as their quarterly results missed street expectations. So those are a couple of factors we'll be keeping an eye out on. From the macro standpoint, tomorrow will be the US November CPI data, where 0.3% to or 2.7%, depending on whether you're looking at it month on month or year on year, inflation is expected. And this is the last major data point that comes in ahead of the Fed meet outcome on December 18th itself. Yesterday for our markets, while the broader markets did extremely well, the Nifty was, pretty much in line with the technical levels. The day's low on the Nifty, 24,580, absolutely in line with the 50-day moving average. The day's high at 24,705, in line with the 100-day moving average itself. But the story is actually in the broader markets. In the last 1 month itself, well, the Nifty is up 1.9%. We have the Nifty Bank up nearly 4%, mid-cap index up 5%. The small cap index is up 6%. And this is at an index level that we're talking about. Individual stocks doing a lot better. What's not doing well is FMCG. This month itself, the index is down 1.5%. GCPL did speak about subdued demand, rising input prices. So what it means is that could there be some pressure in the third quarter? Because there have been high expectations from this third quarter given festive season and the weakness that we saw in the second quarter already. They say that, good stocks either come at good news or good price. Godrej Consumer down 27% from its high, HUL down 21% from its high, Tata Consumer down 26% from its high. And these are only Nifty FMCG stocks that we're talking about. Asian Paints down 30%, Britannia down 28%, Nestle down 20%. So just keep an eye out on them. Blue chips going through tough times, all of them down anywhere between 20 to 30% from their 52-week highs.
Well, that's right. It'll be interesting to see how that pans out, Mangalam. And yesterday as well, we had given it as the sector of the day on the downside, right, and it played out in that manner. Well, let's take stock of what the F&O markets did yesterday. The FIs, there was some lightening of positions. There were some shorts as well that were covered by closure on 2,000 contracts. And that's what you've seen in the last few sessions. So if you look at it, in terms of the short positioning, it's come down from around 1.2 lakh contracts or thereabouts. It's come down to roughly around 35,000 contracts. So they remain net short, but a lot of that short covering bounce has already taken place. You pull up the chart, that will tell you the picture. Moving to the option skews then, they've seen a fair bit of action on both the put as well as on the call side. And the PCR had moved to around 1.2, 1.25 odd. Now that's cooled back down. It's come back down to around 0.9. At around 1.3 odd, the sense you were getting was that the put writing was getting too easy. So now that's returning back to the median at around that 1, to 0.9. And that's because a couple of strikes were active. The 24,700 call, well, that was fairly active. 40 lakh shares getting added out there. The premium at around 100 rupees. And on the downside, you have the 24,600 put that was fairly active. The premium out there is roughly around 150 rupees, which brings us to the levels. The Nifty is now hovering around that 50 as well as the 100 DMA. Last two sessions, the Nifty has ended mildly lower in trade. Nothing really to worry. But if you're looking at a support zone, maybe, just maybe, today if you go closer around this range of the support zone, maybe we could see a bit of a bounce because that's where the first support zone comes in at. Then you're looking at the 24,000 odd mark. But this 24,450 to 24,500 becomes an important mark. Last week, we went and we tested the higher level. So that's the resistance zone that you're looking at, which incidentally comes in around the 100-day MA. The Nifty Bank as well, that, the number on the downside you're looking at is around 53,000. On the upside, the resistance mark, which we took a U-turn from here for the last week itself, was around 53,900. The sector that I'm looking at is metals. Yesterday as well, intraday, towards the end of trade, you had a bit of a pop-up. There are two factors playing out here. One is there is hopes that, in fact, we'll see some kind of stimulus, or China is bracing for a better 2025, which will help demand in all probability. So that's one factor. The second factor is there is this buzz that some of these steel companies, they have rallied hard. They have put their requests forth that we require some protection. Will there be something that we could hear about in the next couple of weeks? It seems the street is optimistic of hearing something. So that's why I'll keep an eye out on the metal index.
Okay, absolutely. Metals will be a place to watch given the high expectations that are riding again in terms of that Chinese stimulus. In fact, let's discuss that and more with our next guest. Andy Rothman, China strategist at Matthews Asia, is with us now. Andy, great to have you with us on the program this morning. And that's really the question, right? Now the Chinese are finally talking about looser monetary policy and unconventional countercyclical measures. What would you expect? We have this big meeting coming up later this week as well.
That's right. Great to be with you. Thank you. I think expectations are high, and I would caution people to maybe bring those expectations down a little bit in terms of timing. The language from the Politburo meeting a day ago was very constructive. As you said, talking about more stimulus, especially on the monetary policy side. But I think that what's more important than monetary policy, which is already quite loose, is the leadership of the Chinese government restoring confidence among Chinese entrepreneurs, because these small businesses are the people that employ 90% of the workforce, drive all the innovation and all the wealth creation in China, and they've really lost confidence. Consumer confidence as well is at rock bottom levels. So that needs to get turned around for monetary policy to work. Now, the language that we heard from the Politburo was quite constructive and forward-leaning, but I just came back from a week in China, and my conversations with officials there leads me to believe that we need to be patient. We're probably going to have to wait until March to actually see implementation of more stimulus.
Okay, all right. Hi, Andy. Good morning and good to see you in. So what about positioning then? The Chinese economy is clearly weak, and you're hinting that maybe, in fact, it's not collapsing. From an equity market perspective, there's been this toss-up between India as well as China. If you look at it in the last 3 years, well, we have gone all guns blazing and we're far outperforming that equity market. But in the last 3 months, because of these measures that you just spoke about that are taken on ground, and because of the valuations, there is that bit of a shift towards China. So at current reckoning, what's your take? Which side would you be leaning towards?
Well, I agree that, while the Chinese economy is a bit weak, it's far from collapsing. We can look, for example, at the first 10 months of this year. Retail sales are up, of goods are up about 4%. Retail sales of services are up almost 7%. Electric vehicle sales are up about 50% year over year and account for almost half of all auto sales in China. So there are parts of the economy that are doing pretty well, but the market has really lagged behind. Earnings growth has been terrible. So what we're really waiting for is to see more stimulus, and especially, as I said, more rhetoric from the government to persuade private businesses in China, the overwhelming majority of businesses, that the regulatory environment in China, which has been really chaotic and untransparent the last few years, is going to be much better. And then we will see things come back, but probably not until around March.
In that case, would you bet on India?
I'm kind of boring. I just focus on China, so I won't be able to make a comparison between one or the other. And I also don't think that China and India are a zero-sum game. There's plenty of room for both. Maybe the biggest contrast between the two is simply valuations. Valuations in India, as you know, have gotten quite expensive, whereas in China, they're still quite cheap right now.
Sure. No, absolutely. I mean, China does have that on its side. Very attractive valuations. But, Andy, what will it take for the market's interest to sustain in China? We've had a lot of false starts since September, right? is sort of, stop and start, and then it's not sustaining because the market's not satisfied with the kind of announcements and the kind of measures that are coming out. So what kind of actual policy measures will keep the bulls' interest intact? And also talk to us a little about the whole tariff war situation, right? And it's really playing out. Look at this. I mean, the headlines are full of it that now China wants to investigate NVIDIA for antitrust. And then, Mr. Trump is promising higher tariffs come January. So how does that play into the fact that we're getting these policy announcements perhaps this week and how you're summing up the economy there?
Lots going on right now in China and between Washington and Beijing.
Yeah.
I think for markets, the most important elements are going to be, does the Chinese leadership do enough to get confidence back among consumers and entrepreneurs? That will lead companies to start hiring again, start investing. You'll start to see stronger wage growth. You'll start to see earnings improve. And with valuations relatively low, that's what's necessary to get investors back interested again. The US-China part's interesting as well, because frankly, we just don't know what Donald Trump is going to do when he takes office in a few weeks. It's possible that Donald Trump himself isn't sure what he's going to do. When we listen to him talk about tariffs, he goes in many different directions, sometimes in the same interview. Sometimes he talks about tariffs as a negotiating tool. Sometimes he talks about using tariffs to achieve a specific objective with respect to drugs or immigration. Other times he talks about just bringing a lot of money so he can reduce personal income tax in the United States. So we're not sure what he's going to do. But when I was in China last week, the point I made to my contacts in the government there is spend less time worrying about Donald Trump. Spend more time getting your own house in order, because the biggest part of the Chinese economy, the driver of jobs and wealth and innovation, is domestic demand. And if they can fix that, then dealing with Donald Trump becomes much easier.
Absolutely. That's probably a great prescription for the policymakers out there. Let's see sort of how they look at it. Stimulate demand, domestic demand. That's been the biggest ask for China. Thank you very much for joining us, Andy, and we hope to hear more from you as some of these US-China parlays continue to roll out as well. Thanks for joining in today. Well, with that, we move on quickly. Let's tell you what's lined up on the show today. Coming up at 8:35, we have Bino Pathiparampalli of Elara Securities to talk about the impact of the exclusion of the Biosecure Act from key US defense bill on CDMO stocks. At 9 a.m., we'll be joined by the management of Borosil Renewables as anti-dumping duties get introduced on solar glass imports that are coming into India. At 9:20, we have Yogesh Patil of LIC MF. He's our market master of the day. At 9:30, we turn to the RBI Full Tilt. Aseem Dhru of SBFC Finance and AK Bhattacharya of Business Standard will be talking to us about the new appointment with Mr. Sanjay Malhotra, all set to take charge as the new RBI governor. After that, we'll be in conversation with Patanjali Foods. Sanjeev Asthana is going to be joining in to talk about the business outlook in the second half. And at about 9:55, we'll have Ramdev Agarwal of Motilal Oswal Financial Services. He joins in as Motilal Oswal rolls out its 29th annual wealth creation study. Finally, towards the end of the show, today Lata in her Market Masters segment is going to be in conversation with Bhanu Baveja of UBS Investment Bank.
Faculty members, about 100 of us who are part of about 300 plus startups.
I want to thank the jury for selecting IIT Madras. Today's IIT Madras is not what many of us imagine. I want to borrow inspiration from a tagline, an old Tata Steel tagline. We also graduate the best engineers and scientists of the world today. We filed the largest number of patents for any academic institutions. We hold the highest number of startups. Several technologies are being translated for the world's benefit. I want to make one last point here. I believe we are the first academic institution to be recognized at the IBLA Awards. I want to accept this very gracefully on behalf of all of academia, all of the IITs, and the wonderful work that everybody does today. We need to build a stronger relationship between the worlds of academia and industry. I wrote a piece some time ago that was titled Industry Talks Quarters and Academia Talks Semesters. But I think there is a way to bridge that. Let's make it happen. Thank you all.
Thank you so much, Professor Panchagnula and Professor Chakravarti. A huge round of applause, ladies and gentlemen, for IIT Madras. The next award celebrates someone who has consistently raised the bar in the world of entertainment, delivering performances that resonate deeply with audiences. The winner of this year's Entertainment Leader of the Year is the most versatile actor, striking a perfect balance between commercial success and meaningful storytelling. He has turned the narrative around for himself and continues to thrive. Let's shine a spotlight on this year's Entertainment Leader of the Year.
Rajkumar Rao won hearts and accolades this year for his inspiring portrayal of Srikanth Bolla, a visually impaired industrialist in the biopic Srikanth. The film, a sleeper hit, showcased Rao's versatility and ability to bring extraordinary stories to life. Following this, he starred in Stree 2, this year's blockbuster, and the highest-grossing Hindi film ever. Building on his iconic 2018 portrayal of Vicky, Rajkumar delivered a performance that struck a chord with the audience. From the resilient lawyer to the small-town dreamer, Rajkumar.
Welcome back. Well, Asian markets have been largely holding up positive thanks to the excitement around China. There you go, implied open is suggesting that we'll start maybe 20 points higher. Right now, it's time to boil it down to stocks, and our team is standing by with the CNBC TV18 list of top stocks to watch. Guys, hi, morning to all of you. Let's start first with the news coming in on Syngene. Abhishek, what are you picking up?
Well, sources tell CNBC TV18 that there is a book which has been launched in Syngene, which is a block. So the seller is Biocon Limited. Indicative price is about 825 per share, which is at a discount of 5.7% to yesterday's closing price. Now, the offer size is about 2% of the equity, or in quantum, it is about 660 crores. So for residual stake, there is a lockup of 60 days post this stake sale that the seller cannot stake seller cannot sell their stake. The sole BRLM is Kotak Securities. Biocon's holding post this stake sale will be about 52.5% in the company. Back to you.
Right, Abhishek. Thanks a lot for that. Well, let's hop across to Vinny, who's here to tell us about Metropolis. Hi, Vinny. Morning. Looks like a rather good acquisition they've made.
Absolutely, a good acquisition coming in for Metropolis. Now, they have acquired 100% stake in Core Diagnostics. Total consideration is going to be 247 crores approximately. 45% is going to be through equity swap, and 55% they will be paying and funded by cash. Now, do not forget, 60 days is what is the time period they will be completing this transaction in. Why is it positive? Because this gives them a lot of synergies. One, in terms of financials, it is going to be EPS accretive starting from the first year itself, FY26. Return ratio, so return on capital employed, return on equity. Yes, marginally in FY26, that may see a fall. FY27, it will come to those Metropolis Healthcare levels, the combined entity. And then in FY28, it will start become accretive from those years for return on capital employed as well as return on equity. Even in terms of operating metrics, if you look at that as well, Core Diagnostics operates at around an average revenue per test of around 2,300 rupees per share, which is 2,300 rupees per test, which is 4 times higher than Metropolis. So keeping an eye out on their volumes are quite high. They are in the north and east regions. So that gives synergy to overall in terms for Metropolis in that region. They specialize in oncology tests as well. So drug tests, cancer drug tests, as well as, for cancer patients, the tests are quite high. And that gives a lot of opportunity to Metropolis Healthcare. And that is why a big positive there and expecting green here.
Take that point, specialty contribution of 85% versus Metropolis's own 37% is something that will increase their overall value mix as well. Let's go across to Vivek now. Vivek, IRB Infra and BEL, both you're watching today.
Good morning, that's right. So IRB Infra, the company has given the operational update as far as toll collections are concerned for the company as well as the private InvIT that the company has. So as far as the month of November is concerned, total collections is up almost 23% on a year-on-year basis at 536 crore. Along with that, the company has also given a positive commentary as far as the month of December is concerned. They expect the upward trajectory as far as toll collections are concerned to continue. They expect toll as well as traffic to increase, driven by year-end festive as well as holiday season traffic. traffic that they're anticipating. Now, coming to Bharat Electronics, some strong order wins coming in over there. Fresh orders worth almost 630 crore rupees. Major orders include the maintenance of the Akash missile system and a whole host of other orders too that has come in. Now, remember, FY25 order inflow as far as Bharat Electronics is concerned is over 8,800 crores. So, expecting a green on both of these stocks today.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm keeping an eye out on JSW Steel, and as I mentioned earlier, on most of the steel companies, because there is that hope that the government will come up with some action to protect them from all the dumping that we've seen of imports coming in from China, steel imports into India. But for today, we're looking at it because their November crude production numbers came in, and not too bad. Production number up by close to around 5%, so that's pretty good. They're also saying the capacity utilization levels for the India business was at around 94%. So the street will like that, and they'll also pin their hopes to hear in from the government with regard to that protection. So going with green on JSW Steel. Let's hop across to Yash. He's here to tell us about the insurance companies because the monthly business updates have started coming in. Yash, take it away.
Well, Nigel, let's start with the stronger side. Very, very strong growth coming in for ICICI Prudential Life Insurance. And interestingly, that strong growth comes over a favorable base. November premium was up 1.5 times. The total annualized premium equivalent in the month of November was up 2.7 times. And retail AP, that saw a growth of about 28%. Max Life Insurance also saw strong numbers. That was on a decent base which it had. November premium growing at 21%, total AP at 25%, retail AP at 25%. Now the weakness overpowers the strength here. Three companies with weak numbers. The first one, LIC, the weak growth has come on a favorable base. November premium has dropped by about 27%. SBI Life Insurance, weak growth again on a favorable base. November premium just growing at about 8%. And finally, HDFC Life, weak growth on a favorable base. Again, November premium just growing at about 13%.
Okay, all right. We'll watch out for all of these insurance stocks. Yash, thank you very much for that. Let's quickly recap the list for this morning. Stocks that have positive news flow around them are Syngene, JSW Steel, Metropolis Healthcare, IRB Infra, BEL, Max Financial Services, as well as ICICI Prudential Life. Let's get them up. Yeah, there you go. So that's the list of positive stocks. The ones that have negative news flow, HDFC Life, SBI Life and LIC.
A short break, come back. On the other side, we will connect with Hemang Jani for some fundamental stock talk and analysis. Take care.
Define excellence in Indian cinema with his power-packed and heartfelt performances. CNBC TV18 India Business Leader Awards 2024 proudly presents the Entertainment Leader of the Year award to Rajkumar Rao.
Ladies and gentlemen, a huge round of applause for the very talented, very versatile Rajkumar Rao.
Congratulations, Rajkumar Rao. From Stree to Shrikant Bowler, you've had quite the diverse range of roles. If you'd like to say a few words.
Good evening, everyone. Thank you, CNBC TV18. Thank you, jury. It's such an honor to receive this prestigious award, and especially in front of this August gathering. Some of my favorite people are here. Thank you for recognizing my hard work. As you said, I always try and push my boundaries. I always try and explore challenging parts, and this year has been truly special with Shrikant and Stree too. So Shri and Stree, I think both have been very lucky for me. But thanks to you guys, nothing would have been possible without your support. Thank you, Geo Studios. Thank you, Mukesh sir, Neeta ma'am, for putting your faith in films like Stree and just to support our cinema. Thanks a lot. Thank you so much, guys. Have a good night.
A huge round of applause, ladies and gentlemen, once again for the very talented Rajkumar Rao.
The Sports Leaders of the Year award recognizes outstanding contributions that have put India on the global map. Now this year, we celebrate the Indian chess team as the sports leader for bringing immense pride to India, to the nation, and inspiring a new generation of players across the country. A big round of applause for our chess team here.
Indian chess has come of age, transforming into a global powerhouse that commands respect on the world stage. At the prestigious Chess Olympiad, both the men's and women's teams made history by claiming gold, a first for India. In the open competition, India triumphed among 195 nations, with D. Gukesh and Arjun Irgaisi shining bright with individual goals. On the women's side, India outplayed 181 countries, fueled by stellar performances from Divya Deshmukh and Vantika Agarwal, who also secured individual goals. A moment of pride, a testament to talent, teamwork and grit. This is Indian chess at its pinnacle. CNBC TV18 India Business Leader Awards 2024 proudly presents the Sports Leaders of the Year award to the Indian chess team.
Please put a huge round of applause for Abhijit Kunde.
Welcome back. Hope you're having a good morning. Well, we've listed all the top stocks that we're tracking for you. So let's get down to some fundamental analysis. Hemang Jani joins us on the show. Hi, Hemang. Good morning and good to see you. Well, Hemang, I wanted to ask you about Metropolis. Vinny just told us about their acquisition that they've done. It appears it's in a vertical that they're not very, very strong. The geography as well is new, and it will add, I think, roughly around 8 to 10% in terms of revenues. What's your view on the stock? It ended at the high point of the day as well yesterday. Your take?
Good morning, Nigel, and thanks for having me. Yes, I think the Metropolis acquisition of Core Diagnostics is surely a big positive for the company because it will strengthen its cancer capabilities and the footprint in the North and the East India. And it will add to almost about 8 to 9% of the Metropolis sales. And the deal size also is fairly reasonable at about 2.2 times FY24 sales. Overall, we think that this will be EPS accretive, and more importantly, because of the kind of offering that it will be able to, introduce, there is going to be a, good amount of earning upgrades that one can see. So overall, a positive view on Metropolis on the back of this development.
Right, Hemang, we speak about Metropolis, we speak about the pharmaceutical space itself. We'll talk about it in just a bit. We'll probably go across to Vinny and she'll tell us about Glenmark too. But apart from that, I wanted your thoughts on the way consumption is likely to behave in the next couple of quarters. Do you think it's keep away from FMCG until you see signs of recovery, or maybe buy this dip that you're seeing? Stocks, blue chips available between 25 to 30% discount from their 52-week highs.
Good morning, Mangalam. I do think that the stocks have corrected because of the way things panned out in Q2, and the start of this review has not been that great, with Godrej Consumer telling you that there is going to be an issue in terms of both volume growth and margins. So we need to watch and see how this whole space pans out, and is it a company specific issue, or we are going to see a broader concern when it comes to the entire category. What we do think is that certain categories, let's say, for example, Britannia, or certain products that Tata Consumer is offering, the pressure is not that high. This is confined to certain pockets only. But we would definitely avoid, buying into any of these stocks till we see, very specific signs of revival in the consumption as far as FMCG is concerned.
Okay. Yeah, I mean, and take Mangalam's point on valuations coming down, but then if you're just not seeing any kind of, stable growth outlook, I guess then it becomes difficult for people to buy in. Anyway, to talk about another sector where we have a lot of data to go over, it's insurance. The life insurance trends are in. LIC hasn't done that well. The private insurers have done a bit better. Hemang, do you like anything here? Because there's still a lot of regulatory uncertainty. You can wake up any morning with something new on the regulation front.
Yeah, I do think, Survi, that there has been certain regulatory developments, and also in terms of the surrender value, related changes. have not been that positive for the sector. But I do think that as far as the distribution related, developments are there, it will take some time. I don't see that come through in a hurry. And in the meantime, if you look at the overall operating parameters, most of the insurance companies are doing well when it comes to their annualized premium equivalent and many other operating parameters. So from a stable, 14-15% kind of a CAGR growth theme, this does look good. Within the pack, if you really want to avoid this regulatory overhangs, I think Policy Bazaar looks like a very good, bet, because it would not have all these issues. Plus, being a platform company, and that theme is in the limelight. So I do like that as a space. But HDFC Life is one of our top picks at this point when it comes to insurance.
Okay, got it. All right. Request you to stay with us, Hemang. Vinny is joining in to tell us about another company, that's Glenmark. We had some news on the exchanges just around 30 minutes or so ago. Vinny, fill us in with the news.
So absolutely, Glenmark is something that we're keeping an eye out on. Now, positive update that has come in for one of their clinical trials. That is, Ichnos Glenmark Innovation has presented a positive clinical data for a phase 1 study of ISB 2001, which is a drug that they're working on for treatment of cancer. This is a multiple myeloma for multiple myeloma patients. That is a blood cancer treatment. So this is a very important one. Even though it's a phase 1 trial, there are only 20 patients which have been tested. Clinical data normally is more important ones, and especially for the oncology side and cancer treatment side, it becomes an important drug. The company has been talking a lot about this one as well. They're quite bullish on this segment, and that is why an important update on that front. The data has overall a very high response rate, durable response, as well as a favorable safety profile also has come in this phase 1 trial that they finished. 83% is the overall rate of response rate that we're seeing. So very good response rate coming in for this clinical phase 1 trial, an important drug, and that is why Glenmark is going to be in focus.
All right, we take that point, Vinny. Thanks a lot for that. And while this adds to their overall business as well, the important part is that Ichnos is, something that the company has not ruled out selling stake in or a partnership in the past as well. So if this increases the valuation out there because of this, then maybe you could see some accretion there too. But for the pharmaceutical pack, which was under pressure yesterday because of, the US Biosecure Act being taken out of the defense. Let's go across to Bino Pantaparambil, who joins in from Ilara. Bino, what was, there was a fair amount of optimism around, the opportunity that the Biosecure Act would bring about. But now, it's been taken out, there is some pessimism. But do you think that is unwarranted because it may be back in some form or the other under some other head?
Yeah, the Biosecure Act, as I understand, is not completely out. It may still come, but I think it would see some delays. The current Congress is winding up. A new Congress has to come in early next year. Before that, if the Act goes through in some form or the shape, it can be a positive. But if it doesn't get through this Congress, then the whole process may have to start again altogether, which means a delay of at least 12 months in my estimate. And possibly the shape of the law can also change with some provisions diluted, etc. So all these add to the uncertainties of the sector, which has already priced in a significant benefit coming from the Act. So as of now, it is not completely gone, but we should expect some delays and some dilution in provisions.
So could you give us a bit of a scenario analysis? If it does get passed in its current state and form, what is the kind of benefit in terms of an upside? If it doesn't, then what's the kind of downside? And at the same time, if it does get passed with some sort of riders, what are those important riders that you're looking at? What is it that moves the needle the most?
So the Chinese companies, the large Chinese CDMO players, especially the WuXi group of companies, they are probably twice or thrice the size of Indian CDMO players all put together. That is the scale at which China operates in the CDMO market for the US large companies. If that business entirely shifts to India, it can be a big game changer. There will be a huge demand. We could see growth picking up for the entire CDMO companies and pricing also improving. But if that is not happening in a full way, if there are dilutions in the way the the legislation is going to happen, then possibly the entire benefit may not come through. To what extent it comes and how it comes and over what period it comes is something which we will need to see when the fine print of the final legislation comes through. But whether it will justify the already run-up share prices, which are already pricing in significant benefits coming from it, all that are things which we need to see as the final legislation takes place.
For the benefit of our viewers, if you're wondering, we constantly go on and on about the CDMO. What are we talking about? It's contract drug manufacturers, which is seen as a big opportunity now for Indian pharma. It used to be contract research and manufacturing. Now it's actual drug manufacturing that we're talking about here. But, that's really my question. Now, I mean, purely from an investor's perspective, if you want to have some pharma in your portfolio, should you look at these CDMO plays and hope for that opportunity to materialize? Or would you would rather go with some of the, the large generic players like a Sun Pharma, Dr. Reddy's, some of the larger companies? What would your preference be and why?
From a pure valuation perspective on the current business, the general pharma companies look more attractive and cheap at this moment. The pharma companies have corrected a bit over the last 2 months in the market sell-off. That has made the valuations even more attractive. But at the same time, there is still strong momentum in the CDMO companies. A lot of that is the narrative around growth picking up in a big way over the next 3-4 years. Whether that narrative plays out completely and results in such a J-curve takeoff in the growth and further upside to the stock prices is something which we will come to know for sure only 3 to 4 years from now. But till then, the momentum is likely to continue based on narratives around the Biosecure Act. But from a pure valuation and value play, the general pharma companies, including Dr. Reddy's, Zydus Life, Sun Pharma, etc., look much more attractive.
All right, and just a couple of questions on 2 specific stocks. I'm not sure whether you track them or not. One is Glenmark. When he just did tell us about the ICNOS business of theirs getting clinical data from the first phase of tri-specific treat antibody. What does that do in their overall scheme of things? And the second one was on granules because of the US FDA issues at their Gagillapur unit on both those stocks.
Sure. The Glenmark phase 1 data for the antibody drug, which they just released, seems promising. In an area of high unmet medical need, this drug is showing some certain promise. This is still early phase 1 data, but being an oncology drug, we also get a sense of the efficacy of the drug in the phase 1 itself. And as of now, it looks promising. It has to proceed further into further phase 2 studies and then phase 3 studies before we will get a full understanding of its potential. But at this stage, it does look very promising. And coming to granules, as you just mentioned, there have been issues at their major plant, which exports to the US, manufacturing quality issues. The company is trying to address those issues actively. The US FDA has already put the plant on OAI status. What action the US FDA will take is still awaited. A warning letter or an import alert are possibilities. A warning letter looks more of a possibility as of now. But we will have to wait for the US FDA to come back to us on that.
All right, just before we let you go, a quick one. Have you ascribed any valuation to the ICNOS business of Glenmark? Because they haven't ruled out a stake sale possibility or a partnership possibility in the near future.
I'm sorry, not really. We don't cover that.
Okay. All right, Bino, no issues. Thank you very much for all the perspective that you've provided this morning. Quite helpful. Appreciate you joining in. Okay, so we've got the first comments coming in from the new RBI governor saying heartfelt thanks to the finance minister, I think. Will demit office, says RBI governor. Okay, this is the present RBI governor. This is Mr. Shaktikanta Das. He's saying that he's immensely grateful to the Prime Minister for the opportunity that he has been given. And, maybe I'm not sure if that 11:30 press conference, maybe we'll have the outgoing governor along with the incoming governor. And that's the new man in, absolutely. So all eyes are going to be on Sanjay Malhotra now as he takes on that job at a very, very interesting time when the economy is at crossroads, with inflation continuing to be, quite persistent and sticky, and with growth worries leading the market to believe that the rate cut cycle should start at some point next year. So interesting times for him to come in and take office. But at the same time, of course, touch wood, we're not in the midst of any sort of an economic crisis at all. So it's a fairly stable environment in that sense. We'll talk more about this as we go forward. Full throttle discussion, by the way, on this coming up at 9:30 a.m. Hemang is still with us. Hemang, actually, since we're talking RBI, let me ask you about financials. Now, because of the CRR cut anticipation, the last week was fantastic for banking stocks, right? I mean, positions were taken ahead of the event, and then the event also transpired. But now what? What are you buying in financials? Any fresh ideas? Anything additional?
I think it's been one of the better performing sectors, both operationally Q2 and in terms of the index, because Bank Nifty has been an outlier over the last about, 4 to 6 months. And given the fact that still many people are underweight, and the fact that some of the private banks as well as PSU banks, the overall growth outlook seems quite good, 13-14% kind of a loan growth, stable margins. So we do like, SBI, Axis Bank, ICICI Bank at this point of time. And we do think that, some of the NBFC pockets which have gone through a lot of stress, I think we would avoid, particularly microfinance related companies. We don't know how deep that issue is, and we are surely avoiding. Instead of that, we would be going with something like Chola, which has corrected about 6-7%. And some of the gold financials, because the gold price again is showing a lot of strength. So Muthoot Finance is something that we would prefer at this point.
Got it. All right. A final question before we let you go, Hemang. What about the metal space? There have been select stocks in there that you've liked. Now the hope is that Chinese, they go ahead and stimulate their economy. And on the domestic front, the government of India gives the domestic steel industry some kind of protection. What do you like from the space?
Nigel, we do think that there is a case for some more up move as far as metal companies are concerned, because the data points in the domestic market and the fact that China-related developments would have some positive rub-off. What we like at this point of time is JSW Steel, Tata Steel, some of the pellet companies, Godavari Power, because the iron ore price and the spreads as far as pellets are concerned are slightly better. So I do think that as a tactical opportunity, metal companies would give you maybe 5, 10, 12% kind of an uptick.
All right. Thanks a lot for that, Hemang. With that, what we'll do is we'll step into a short break. And as we do that, let's tell you a little about... All right, Nigel, you have to take it away, I guess.
That's right. I think we'll slip into that short break. But let me present to you the Growth Code, a collaboration initiative by Grow and CNBC TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we'll help you understand if you should be trading in cheap, out-of-the-money options.
Don't trade out-of-the-money options just because they're cheap. Traders often get tempted by out-of-the-money options, lured by the possibility of turning small bets into massive profits. But what's the reality here? Out-of-money options are cheap for a reason, because they're based on outcomes that are less likely to happen. For instance, if a stock is trading at 100 rupees, an out-of-money call with a strike price of 120 rupees is inexpensive, because the chances of that stock reaching that 120 rupee mark before expiry are slim. The real challenge for those who are buying this option is time decay. As expiration approaches, out-of-money options lose their value rapidly. Each passing day without significant movement towards the strike price erodes the wealth of those who've bought that option. In essence, buying out-of-money options is a high-risk, low-probability situation. Other side is that selling these out-of-money options. If you go ahead and sell them, when you make money, it would be a limited amount that you would make, just that premium. But were there be a situation when the stock price actually crosses that 120 rupee mark, the losses that you would have would be massive. So the potential rewards, while they may seem enticing, the odds in out-of-money options are stacked against you.
Team and the non-playing captain, and Divyetu Barua, the head of delegation, to join us. Sir, we would like you to kindly say a few words.
Good evening, everyone. We are deeply honored to receive India Sports Leader Award today in this ceremony. It's a historic moment for chess that India won in both the categories, men and women. Chess Olympiad, first time in 95 years, where 180 plus countries were participating. I think it's very rare that such a dominance is displayed in any other sport in both the categories. We are proud that we brought back the crown to India, the birthplace of chess. Today is special that we have been honored among the gathering, I think with the tycoons from politics and business. And we are confident that with your support and guidance, India will lead the sports by 2036.
Well, amen to that. Thank you so much, and a big congratulations again to the team.
I would like to thank on behalf of Indian team. I think most of them are playing in tournaments, so they are not here. And chess fraternity, CNBC and juries, and everyone for supporting us. I think this is a award from the industry, so I will just put some numbers to it, because I think everyone was showing some numbers. So chess is played in more than 190 plus countries. On the ranking, we are world number 2 as far as the top 10 players average rating is concerned. We are world champion in men and women category in the team event, and Gukesh is playing in Singapore for the world championship.
Many
Thank you very much.
congratulations. Many congratulations. Thank you so much.
Welcome back. You're tuned in to Bazaar Morning Call. As promised, let's get in our technical guests. We have Mitesh as well as Sudarshan who join us on the show. Good morning, gentlemen, and thanks a lot for joining in. Well, Mitesh, you go first. In the last couple of days, we've seen some kind of consolidation with a bit of a negative bias, though we continue to hold above the 24,500 mark. For today, what's the cue you're looking at on the index first?
So on the index, Nigel, I've maintained a view that we might actually consolidate after a good pullback from lower levels. The hourly indicators look tired, slightly overbought as well. So the range for me would be possibly, and you can give and take 50 points here and there, 24,500 to about 24,800. So the buying zone comes towards the lower end of the range. Yesterday we did get some decline. Today we might open gap up and cover a good part of the decline. So we might still be chopping within the range, but yeah, closer to 24,550, 530, I would look for buying opportunities, and around 24,800 is where I would want to exit the index.
All right. And Sudarshan, would you echo that sentiment?
Well, we all have different views. First of all, I think the markets are in a clear uptrend. We have broken out of a very reasonable correction, and the chances are, and we are in a seasonally bullish period. So in a clear uptrend, the markets don't have to go up every day. I mean, it's not a circus. They don't have to perform. The markets have done their bit last week. Now they are likely to consolidate. That consolidation is a natural process every time a market rallies. Now the problem is that we can't say when this consolidation will end, today at 10 o'clock or next week or next week. We don't know that. So within the consolidation, it's best to stay with your existing long positions. There are two ways in which you can build on your long positions, and you should have long trades in the Nifty. First is if there is a dip towards 24,500, then you buy. And the second is if the dip doesn't come, but if the Nifty decides to break out above 24,750, which is the upper level of the resistance or the trading zone, then you buy that breakout. Within this 200-point range, 250-point range, 500 to 750, there is no trade. So be patient. Wait for a dip, wait for a breakout, otherwise do nothing.
Got it. All right. Let's get to individual stocks. And Sudarshan, what are you looking at?
Well, there are a lot of mid caps, which are giving very attractive, patterns. All of them are suggesting the corrections are over and they are willing to go higher. Bajaj Finance, buy with a stop under 6,800. And since the patterns are the same, I'm not describing them separately. Dr. Reddy's, buy with a stop under 1,240. Lal PathLab, buy with a stop under 3,000. And finally, Voltas, buy with a stop under 1,710.
And Mitesh, your stock picks?
Yeah. On the stock side, I have all buy calls today. Lal PathLab is a buy for me with a stop at 3,100 for targets of 3,200 plus. Geo Financial is a buy with a stop at 330 for targets of 350. Also a buy on Concord. Look at targets of 885 here, use a stop at about 843. And the final buy calls on DMart, which is a buy with a stop below 37.98, broadly below 3,800, and look for a target of 3,880.
Okay, all right, gentlemen, stay on. We will come back to you for some more ideas around market opening. Take a break right now, and when we come back, we'll have the pre-opening rates. Also, we'll get chatting with the management of Borosil Renewables. That anti-dumping duty for solar glass has finally come through. So now what does it mean for business? Welcome back. You're with us on Open Exchange, and we're coming to you live from the CNBC TV18 Motilal Oswal studios. The next company that we're putting the spotlight on is Borosil Renewables. And you would remember, because we were chatting with the management just a couple of weeks back, talking about the need for more protectionist measures that India should perhaps take to deal with the dumping of solar glass that's happening in India from China and Vietnam. Well, guess what? Those measures have been announced by the government now, but are they enough? That's exactly what we want to understand. And we have Mr. Pradeep Kheruka, Executive Chairman at Borosil Renewables, joining in. Good morning, sir. Great to have you back on. So we want to keep it, very simple to understand what has been announced and to what extent it helps. I believe the value of imported glass is to be now kept at a floor price of $677 per metric ton. Tell us if this is the right interpretation and to what extent does it help you?
Thank you for having me. Yes, you're right. It is a floor price of $677 per ton. By and large, there's a little bit of variation depending upon which company is doing the export. But in principle, that is around the range coming from China. If it's coming from Vietnam, the price is a little more than $100 less in terms of the floor price. And I would say that this would go a long way in helping us to stabilize industry growth in India. I must say the government has been very proactive. It's been very sensitive. And the government has exhibited a great intent, resolve to ensure that domestic manufacturing in India is supported and grows rapidly. So this is definitely going to be helping the industry to grow.
All right. Hi, good morning, Mr. Kheruka. You asked for it, you have been rallying for it, and now you have got it. So that's good news. So tell us, how does business shape up? First, if you could tell us, out of the total solar glass that's consumed on a daily basis, how much of it is imported? I think it was some 30-40% approximately. You could give us the number out there. So that could come down. And domestically, can you go ahead and increase the solar glass price now, which in turn will help your margins?
So to answer your first question, the demand for solar glass has escalated rapidly. And right now, domestic production has been supplying about 30-40% of the demand. It is true that a lot of glass was lying in domestic manufacturers' warehouses, unable to sell because of cheap imports. And I believe that this duty is going to help domestic manufacturers be able to sell all that they produce. Even after that, there's going to be a big enough demand. And that is going to spur domestic industry to expand capacity. I just want to remind everybody that in the last time that anti-dumping was imposed in 2017, India had a capacity of 1 gigawatt of solar power, which means we had enough glass to manufacture solar modules worth 1 gigawatt annually. And within 5 years, this swelled up to 17 gigawatts annually. So the domestic industry and domestic entrepreneurs are not, they're not going to be waiting around. The moment this has been announced, I believe that we're going to see a lot of money going back into production capacity. So that is one. And secondly, of course, this is going to be a big shot in the arm for existing businesses. There's no question about that.
That still doesn't answer our questions, right? Because if you could tell us what the current domestic price is with this anti-dumping duty, how much will you increase the domestic price by? And the inventory that you spoke about, companies were sitting on, how will they liquidate it at what prices?
The liquidation of the inventory is not a problem at all. We were selling at way below cost, and I think the prices will see some kind of a correction. We haven't yet decided what the new prices will be, but they will be they'll be better than what we were selling at, but it would still be below the cost of imported glass. I must point out that the cost of imported glass has already taken hold with effect from the 4th of December. All glass that is being cleared at much higher prices than even the prices that we propose to sell.
Right. No, you said that you are selling below cost. So just wanted to understand what is your cost price and now how much above cost price will you be selling and what does that do to your operational performance?
We are going to be approaching this cautiously. We are in no hurry to match imported prices at this moment. I'm talking about domestic industry as a whole. And we are looking at being responsible about it. We realize that some of our customers have booked orders at prices which have taken into account the old prices. And so we will not do anything to jeopardize their sales, their business. So we're going to be approaching this cautiously, but yes, over a period of time, prices will certainly firm up, and we'll have to wait and see exactly what levels they come up to, whether they match the import price or they remain a bit lower. That remains to be seen.
Okay. Mr. Kheruka, for your business, the consolidated numbers, now that this protection measure has come in, when do you go back to profits? Because at the consolidated level, I think there was a loss both at the PAT and at the EBITDA level. So when do you go back to profits? And now what is the sustainable run rate of margins that we can expect? I mean, I know that you're taking your time to decide on the immediate pricing action, but tell us, I mean, now that there is protection in place, what is the margin at which your business will operate?
Yeah, I cannot give any numbers on margins. That's not possible. But yeah, the margins will definitely improve. There's no question about that. And that's a factor of the prices. See, we are already manufacturing at pretty much flat out production in our company, and so therefore now it's an improvement in margins will come from higher prices. So
What's the aspiration, sir? I mean, I understand you can't give a number. That will be a function of how much of a price increase you can take. But I mean, do you see the business going back to double digits? What are the timelines? And again, on profitability, by when does this settle? By when do you get back to full profits at the consolidated level as well?
See, at the standalone level, we should be back in profits in the next few weeks, I hope. And at the consolidated level, it all depends upon the German asset that we have. We are in some distress over there, in the sense that after the elections have been announced in Germany, that there is no new measure coming out, and the markets there are still in disarray. So we are waiting and seeing how it turns out. So we have some exposure there, and we'll have to see how this evolves. But standalone, which is much bigger, we are doing 1,000 tons here. It's just 350 tons there. So if we are strong here, then it should be able to take care of whatever's going on in Germany.
All right, Mr. Kheruka, let's focus on the domestic business itself. And I'm looking at the margins. Maybe 2 years ago, your margins were 30-35% as well. Then they came down to almost 5%. But in the last few quarters, gradually improving. So that's good. Fair to assume, you don't give us a number, but margins will improve, right, from what you did in the last quarter, which was around 18% for the standalone business.
Yes, certainly.
So could we assume by quarter 4, once everything takes shape, it should be maybe in the mid-20s? That could be an aspiration of margins?
Aspirationally, yes.
Okay, all right. Got that out of the way. And also, since whatever you produce now will be sold, there's going to be a fair bit of demand as well. And there's that import substitution. So what about the next capacity addition that you're looking at? And at what capex will it come at?
So the next capacity addition, well, to be very honest with you, we've already started discussing it. However, as you are aware, that we need board approval to begin with. I mean, in principle, we already have board approval, and we have announced it to the stock exchanges, but this was on hold. So we are reviewing the hold, and we're just examining the kind of steps we need to take to to ramp up capacity, and whether it'll be pockets of existing furnaces that we have, replicating those, or one very large furnace. We might go in for a situation where we'll replicate existing furnaces which are tried and tested, and the costs are well known and well understood, and probably more economic than going for a completely new design.
So what is the current capacity that you have, and what do you think you'll be adding on in terms of capacity? And if you could give us a ballpark number, if you're adding X amount of capacity, at what capex could it come about? Very, very rough numbers, a bit of a range as well. Capacity addition and capex at which it could come at.
I cannot say what capacity we will add. I can merely say what we are discussing, because all this will be firmed up. Yeah, we are discussing perhaps another 500 tons right now.
All right, you'll add another 500 tons. And typically, the prices that there are right now, I mean, you said that you won't take any price increase immediately. You'll be very moderate in that. Currently, the imports were close to around 28,000 rupees per ton. 56,000 per ton is what the government has indicated in terms of an anti-dumping duty. What are the prevailing prices in the market right now? How much of your capacity is locked at a certain price? And over, say, 2 to 3 years, how close would you get to this 56,000? Let's put it that way.
See, we typically sell about a month in advance. So December already. And So the price correction will start happening in sales from January, I think. Maybe some in December, the balance in January, and then it'll go on. I think by the end of March, we should be at a price which is stable and acceptable for us.
Which is closer to the $677 per ton.
This is something that you see. We work together with the consumers, and we will be in dialogue with them, and then we will see. We have no desire to make anything onerous for our consumers. We are very responsible in that way.
All right, I take that point.
All right, Mr. Kheruka, we'll leave it on that note. Thank you very much for joining in. Finally, some good news coming in for your industry, and hopefully in the subsequent quarters, we'll get more clarity on the pricing actions as well. That's Borosil Renewables, stock in focus on the green side. Now let's get back to the market and check the pre-open and see where it has finally settled. So you've got about a 30-point up move on the Nifty. The mid-cap is quite flat. The mid-cap index is 0.1% higher, so not too much traction. And the bank Nifty is also fairly quiet at this point in time. Just checking if there are any major movers on the Nifty. Maybe the steel names because of, the output numbers that Nigel was talking about, plus the fact that there's anticipation on this Chinese stimulus all over again. So other than that, there's not much movement on the large caps.
I think Metropolis as well is up close to around 2%. That acquisition looks pretty good. In the next 60 minutes or so, we'll try to get in the management to clarify with regard to how do they see this business ramping up. Keep in mind, the stock ended at the high point of the day and still it's building on 2%. So it tells you that they're looking at the news fairly positively. Let's get in Sudarshan back on the show. He's here to give us his 9-10 call. Sudarshan?
Well, consider buying Voltas with a stop under 1710.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
I'll go with a buy on Dr. Lal Path for targets of 3,200.
All right, that's the view coming in on individual stocks, the 9-10 views. We're talking about pre-open rates. Just keep an eye out on Swiggy. Swiggy's been doing extremely well ever since open, and the pre-open as well. The stock is up around 4.5% This morning there is a note that has come in from CLSA. They've initiated coverage on the stock with a buy rating, and their target price is 708 rupees. Remember when Swiggy came out with its IPO about a month ago? It was close to around 390 rupees what the issue price was. And now CLSA believes that the target price for the company is 708. Why is that? Because the company is riding the quick commerce highway. Indian quick commerce industry itself will become 6x from FY24 to FY27, and Swiggy will be one of its largest beneficiaries. They see the company's execution improving with accelerating growth and improving profitability. What is it that CLSA expects? On quick commerce itself, they expect a GOV compounding at 67%, and higher take rates would mean that the adjusted revenue for the quick commerce business compounds at 78% for the next 5 financial years. So just keep an eye out on that. That's something we'll watch out for. And on an overall basis, FY27, they expect the company's revenues around 26,000 crores, an EBITDA break-even, EBITDA of 2,000 crores, and net profit of close to around 1,842 crores itself. The most important part when you look at Swiggy is the valuation with Zomato. Remember when the company came out with an IPO, we here at CNBC TV18 had said that the valuation discount is 60%. And what price the discount settles at is something that we'll be looking at. CLSA values Swiggy at a 22% discount to Zomato itself. So that's something we'll keep an eye out on. That brings them to the target price of 708. The key risks we have to watch out for: higher discounting by competitors. We've been seeing that over the last recent past itself, and perhaps increased scrutiny on the sector by regulators is something we'll keep an eye out on as well, because of the impact that quick commerce has had on a lot of Kirana stores. So that's something we'll watch out for. But in particular.
But aside of those risks, 1,800 crores of profits by FY27. Yeah. That's their
That's the operating leverage benefit that these companies come up with as well, right? A year ago, Zomato's profit was close to around 2 crores. Now it's going to around 200 crores. So that's the jump that one can expect.
Once things kind of, take off, they really take off. All right, so Swiggy on the radar as well. And so will some of these insurers be because of the life insurance data that came out yesterday. Let's quickly revisit the numbers. Yash.
Well, Surbi, the overall number as far as the industry is concerned, that is LIC plus private players, would look weak. It's come at down about 4%, and that's largely because LIC this time around has dragged the numbers because private life insurance companies in the month of November have grown their premium by about 31%. Speaking about individual players, HDFC Life, it's weak growth on a favorable base. November premium growing at just about 13%, 8 months FY25 premium up 14%, November total APE growing by just 3%, and the retail APE growing by 3% as well. ICICI Prudential, very, very strong growth on a favorable base. November premium growing 1.5 times first 8 months. premium growing by 35%. November total AP up 2.7 times. November retail AP growing by 28%. Max Life Insurance, it's a good growth for the company in the month of November on a decent base. November premium growing by 21%. First 8 months up 19%. November total AP growing by 25%. Retail AP growing by 25% as well. SBI Life Insurance, it's a weak growth on a favorable base. November premium growing by just about 8%. First 8 months premium is down 2%. November total AP growing by 10%. And November retail AP seeing a growth of 9%. Finally, LIC, again weak growth on a very favorable base. November premium has shrunk by about 27%. First 8 months, a growth of 16%. The total AP in the month of November is down 19% and retail AP down about 12%.
Okay, all right, got it. Thanks very much for that, Yash. Speaking of brokerage notes, just watch out for 2 property stocks. Keep them on your radar as well. There's Godrej Properties, where Jefferies has come out with a buy. Their target is 38.50, which is a good $1,000 ahead of where the stock is right now. So, they're very bullish on the prospects. We'll tell you why in just a bit. The other one is going to be Macrotech. On Macrotech, there is a antique note that's come in. Again, it's a buy call on Macrotech. And the target price has been increased to 18.51. So 2 property stocks where the brokerage notes are fairly optimistic at this point in time. So we're about to get started. Cautiously optimistic, positive bias. Can the bulls pick up the momentum? That's the critical question. And can FMCG stop falling at least? If not, moving higher, can those stocks stop pulling the index on the downside? The bell has gone. Okay. JSW Steel is the winner, about 1% up on that stock. There's BEL, which is reacting well to some recent order win announcements. Grasim, Wipro, Tata Motors, which is hiking prices of some of its models, up about 0.5%. Infosys is contributing on the upside. Apollo Hospitals, Shriram Finance. So you can see there are no clear sectoral moves, at least as of now. It's very disconnected and disjoint. And it's also shifting extremely fast. On the downside, Tech Mahindra, Titan, Axis Bank, TCS. These are some of the names on the way down. SBI Life down about 0.2% as we speak. Let's look at some of the consumer stocks and see what's going on. Very flat now. So like I said, they've at least stopped falling more. I mean, yesterday, that painful reaction to Godrej has played out. Lever is flat. There's some additional selling in Trent, 0.5% down on Trent. Tata Consumers are also on the flat line. That's how it's playing out. So extremely quiet for the large cap space. The Nifty is barely changed, 10 points up.
Well, that's right. Well, let's look at a few stocks then. Greaves Cotton, the stock is bucking the trend because, noted investor Mr. Vijay Kedia went ahead and bought a stake in the company yesterday. It ended at the high point of the day yesterday. And in fact, today as well, it's following in on those gains. I'll be interested to see whether it sustains these gains because currently the stock has very, very large volumes. And yesterday as well, it already had ended higher. ITI continues its good run. The stock is up close to around 35% in a single month. Not making a mistake. Yesterday and today, it's up more than 20%. Today as well, it's higher. Swiggy, swinging it away, because of that brokerage note that Mangalam told us about. So that stock as well doing quite well. Relica is the other one that I'm looking at. There is hopes that, in fact, that Berman open offer gets the green signal. So that explains why that stock is doing quite well. Let's pull up JTL as well. You have Phillip Capital that's come out with a note. Yesterday the stock had ended lower, but now they're expecting more than a 45% upside to JTL. So, they've given their reasons with regard to profitability, volumes, capacity, balance sheet in better shape as well. It's come up drastically from the recent peak, but JTL is a stock maybe that should come up for you on the screen. As of now, we'll wait by up close to around 1%. All right, we'll keep an eye out on that. A couple of these interesting moves coming by in the jewelry space. We have Kalyan Jewelers, which is slightly under pressure. Titan from the bottom, from the front line end is not doing too well. The smaller jewelry players are doing a lot better. We have something like Thangamal Jewelry, TBZ, all of them bucking the trend in the overall weakness that we're seeing in the jewelry space itself. But the stocks that really are on fire this morning, we have IRB Infra. November toll collections rising by 23%. That stock is up around 2.5-3% Metropolis, the stock recovered about 4% from the lows yesterday's trading session on the back of that core diagnostics announcement that has come in. That stock is up around 1.6%. Glenmark as well. The street likes the data that has come in from the first clinical trial of the cancer drug. So that stock too sitting with a gain of almost 3% Syngene, there are reports that Biocon will sell about 2% stake via a block deal at about 825 odd rupees. Wonder whether the deal has happened or not because stocks surged closer to around 900 rupees out there. BEL, a mild order, an order win of close to around 634 odd crores, so mild green on that stock. Just keep an eye out on LIC now as well because this is the
first monthly data that has come in ever since the stock's inclusion in F&O, and it's weak growth on a favorable base. So the stock, because it's in the F&O, will perhaps see action on both the long and the short side, and as a result of which the stock down about 0.6%.
I just want to point out some more names. It's a very quiet day for the index, but don't let the index fool you because there's so much going on at the individual stock level. Just heard us speak with Borosil Renewables. Now that stock is up about 4.5%. And it's had a very sharp increase in the last couple of days since that anti-dumping duty was announced. Wari is putting on more gains, 5% higher. Sagility, which has had a great recent move, again up about 5%. And watch out for some of these textile players. Remember yesterday, Indocount, Trident, Gokuldas, all of them were surging. That trend is intact today as well. Not sure if they're anticipating, some kind of order shifts away from China into India as the US looks at tariffs. But I think that plays well and truly on. Positioning is building ahead of President Trump's inauguration.
Yep, just a word on Swiggy. Swiggy, the stock opened about 5% higher. From there, it's seen a bit of profit taking.
Yes.
The reason why, I believe that CLSA is bullish on this stock, two things we need to keep an eye out on. One, CLSA believes that, the compounding of revenue for the quick commerce business would be 78% over the next 5 years. That's a tough ask. Secondly, what they're expecting is that, the valuation discount between Zomato and Swiggy would narrow at 22%. That's the lowest that anyone has given at a discount, because the average on the street, when you look at all the brokers that have initiated coverage, would be anywhere between 30 to 35%. So that's something we'll keep an eye out on. And the third part is the risks that they spoke about when it comes to regulatory action and competitive action as well. So those are a couple of risks that we need to keep an eye out on Swiggy itself. High expectations, high valuations, and low valuation discount is what they're expecting.
Absolutely, which is why for quick commerce, when my biggest watch point is the great Amazon entry. And once we know what pricing and discounting is happening after that, I think then we can have a clearer idea on projections.
Just one stock, Borosil Renewable, just take a look at that stock. It's up 30% in this month itself, and it's building onto the gains. Clearly, the street likes what the management had to say. They'll be able to sell whatever they make. There could be a price increase that comes about from the Q4 onwards. And the aspiration is to take the standalone business, which is bulk of their margins, towards the mid-20s. Last quarter, it was around 18%. So Borosil Renewable should come up for you on the screen.
Absolutely. So lots of stocks in focus, but the market is absolutely flat. So let's get some perspective going. Yogesh Patil, Chief Investment Officer of Equity at LIC Mutual Fund, is with us. Yogesh, good to have you on the show today. So, let's start with the broader picture. The market has navigated a lot of different worries. Slowdown in earnings, slowdown in consumption, and then, of course, a lot of the global headlines in terms of tariffs and what's happening with interest rates. You tell us, broadly speaking, for the next 1 year or so, do you see the market higher? Do you see it range-bound, or do you think that there is still a possibility of perhaps, the correction opening up again?
Good morning, and thank you very much for hosting me on your channel. Long-term equity investment is like an infinite game, where you need to accept a lot of positive news, negative news, and developments as well at the same time. But we should not forget, India is the only country which offers a very high growth, and high growth comes with a long decadal growth, basically. So India is completely growth-driven story, driven by capex, infrastructure investment, urbanization, decarbonization, and basically, up to some extent, consumption. So it is a long driver, and we do see there might be short-term challenges in near term, maybe 1 or 2 quarters. But in terms of long-term growth, India is still heading for a very good growth, and China Plus One is actually picking up when you talk to corporates. And when you see the new project announcement, the manufacturing almost account for 40 to 45%. It gives a confidence that Indian entrepreneurs actually thinking about China Plus One and India growth story. And the second point, if you see the last 30 years, the kind of capex we've seen in last 30 years, the next 10 years could be very different. And the major growth drivers could be real estate and private and government, not government, basically PSU capex. This almost account for almost 70% of the gross fiscal capital formation. And this could be, we expecting a roughly higher double-digit growth in these 3 segments, and which will drive the India growth story. And this will reflect in the sectors and in the companies. And beyond a certain point, then consumption will also pick up. As of now, consumption is slow because of a lot of structural changes that happened in last 8 years. After demonetization, GST and COVID actually completely broken the legs of informal sector. Today, as per RBI, 64 crores
Right.
employees in informal and only 6 crore in formal. So slowly, it will take some time to adjust, and a major slowdown in consumers and consumption is basically lack of new buyers. And eventually, someday they will get a new jobs, and the new buyers will come for this segment.
Right.
And then only we see a consistency in growth and the sectors. As of now, the India growth story starts with manufacturing, infrastructure, and then followed by consumption and improving the per capita income. Today, the per capita income is completely skewed towards richer people, maybe 2-3% of the population. It has to be narrowed down beyond a point. Then only you see consistent growth and continues. As of now, in initial years, it will be completely driven by capex and basically manufacturing based.
We'll take that point, Yogesh. Just, hold on for a second, because the stock of the moment definitely is Religare. Opened with a mild gain, but now look at the volumes and the stock price move piling up almost 8% closing in on that 300 rupee mark on the stock. In fact, today's high has been above that itself, a 52-week high for Religare itself. The nod coming for the Burmans to purchase additional stake in the company, having the street excited. That's about a 1-month chart, but just look at today. The intraday today itself opened with a mild green tinge, and thereafter volumes and the stock price action kept picking up itself. So that's about Religare. We'll keep an eye out on this story as it develops. Yogesh, coming back to you, you said that, India's per capita income story and consumption story, the Indian economic story continues, but a large beneficiary of that would perhaps be the financial space as well. Not asking specifically about Religare, but what's your view on the financial sector? Would you look at banks, private sector, PSU or NBFCs?
Definitely, India has to grow. Definitely, BFSI segment will follow that. But in BFSI, the competition is currently very high, and there would be winners. We need to choose. But as of now, we are preferring private banks and selected NBFCs. Those who have proper discipline, and they any company which is not have proper credit, so normally we are avoiding those companies. So as of now, we are bullish on selected private sector banks and selected NBFCs, but broader theme in BFSI is completely actually disappointing in terms of, let's take MFI and even the regulator has highlighted there is a risk in unsecured loan. To that extent, we are avoiding some of the banks and NBFCs.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. This is Nigel on this side. Well, we're going to have a new RBI governor. The broad consensus is that we'll have continuity. However, the MPC committee, the constitution is going to have large number of new members. How do you see this, playing out, and your initial take?
See, definitely somebody is joining is definitely come with a lot of expectations. So I'm sure that we expect continuity in the reforms and maybe decision makings going forward also. At the best, I can say this one only.
Yogesh, so okay, let's take the the overall portfolio construct. What would be for 2025? What do you see as your top 3 overweight themes or sectors?
Okay. It is a combination of capex and manufacturing. Then start with power sector. We are bullish on power sector, industrials, chemicals, up to and IT and selected selected financials. And at the same time, we see improvement in rural economy is a combination of higher realization prices, higher output, lower agri cost, and government's indirect support to the rural economy. So we see these are the segments which could be seen a good growth in FY25.
All right. Just before we again come to you for the last question, keep an eye out on Oracle. It's a listed IT company in India. No direct business relation with the US Oracle, apart from the fact that the US based Oracle, the international company, is its promoter, holds about 72.6% stake. In the past, we've seen every time there is a big up move in Oracle overseas, we see an impact on the way up in Oracle Financial Services in India as well. But overnight, post-market close, Oracle was down 7% after a weak second quarter performance, and as a result of which we're seeing a bit of a rub-off in the Indian stock as well. It's seen a decent move, but the last couple of days it has seen a decline from the highs itself. So we'll watch out for Oracle, how it performs in today's trading session, and whether this selling is largely sentimental, and or if there is any business relation between the two as well. But speaking about Oracle, again, Yogesh, the IT sector, the Nifty IT index has seen some recovery in this month itself. It's up close to around 7%. The best sectoral index that the way it's performed so far as compared to the market. Do you have a view on the IT pack?
Yeah, we are positive in IT. If you see the last 2 years, this sector was struggling, but from last quarter, the commentary of management has changed. From now, no one is talking about the project cancellation or delays. Everyone is looking positive, and the commentaries are very positive. And the selected growth is coming from geographies and a segment like BFSI. But at the same time, we need to adjust all these things with Trump government, how the Trump government behaves. As of now, bottom, basically negative part of the negative bias from IT is actually behind us. But how the Trump administration take this forward. But as of now, sector looks good if you ignore government point of view. But even individual companies are highlighted, they're getting good business and good visibility from their clients.
Okay, all right, got it. Thank you very much for that, Yogesh. Good to have you on the show today. Well, just a quick spotlight on the market before we move on to our next big theme. Market's absolutely flat, not going anywhere, just about 22 points lower on the Nifty now, so there's a tinge of red out there. The big story, we do have a new man coming in and taking charge at Mint Street, and it's going to be Revenue Secretary Sanjay Mehrotra, who will succeed Shaktikanta Das as the RBI governor. Now, he takes over today, and this is going to be a 3-year tenure. In a bit, we'll have experts joining in as well to talk about, of course, the legacy that Mr. Das leaves behind, and more importantly, the task ahead for Mr. Malhotra. Lata is joining in with her editor's take and perspective. So finally, the suspense is over, Lata. It's going to be Mr. Malhotra.
Yes, it is always a suspense because unlike other positions, the governor is not appointed by any committee that news can leak. It's appointed only by the Prime Minister. And so anybody who is guessing is giving you their best guess. They're not giving you any sort of stories. Okay, coming to Sanjay Malhotra himself, the big strength would be that you know how government works. You know the government cash flows, you know their processes, their priorities. The second advantage I think he comes with is he's a computer science graduate from IIT Kanpur, apparently ranked 9th in IIT-G, All India. So clearly very bright in terms of being able to take this new world of fintech, AI and ML. So with, finance getting so, closely welded with technology, you have the right man perhaps. The negative is everyone perceiving that, he would be a government yes man. Not at all borne out by facts. In my own reporting career, Bimal Jalan, Y.V. Reddy, Subba Rao and Shaktikanta Das were all ex-Finance Ministry secretaries, and I think they all led independent innings when they played at Mint Street. I think, when you are in the governor's position, it is your headache when the exchange rate suddenly starts dipping or gets volatile. It's your headache if inflation goes above 6%. It's your headache if yields go up, and therefore you become an RBI man simply because your responsibilities, your KRAs are very clearly defined, and the whole world, the entire financial markets are watching you. So I don't buy this idea of yes man. Even if the governor, if Shaktikanta Das was governor, he would perhaps have cut in February. Actually, a person from Finance Ministry is able to coordinate better because he may have IAS friends in, consumer affairs, in agriculture. So you can talk across and say, potato prices are rising. Are you guys doing anything about it? There can be coordination. I don't see it as negative at all. For me, the only challenge for him is that he will lack a vice captain. Michael Patra, Deputy Governor, absolutely the pillar of RBI's monetary policy thinking, is going to end his term in Jan. And Sanjay Malhotra could do with a bit of hand-holding. I think he will sorely miss it.
Well, that's very interesting and great context to have, Lata. So, as you put it, the captain and the vice captain both are set to change in very quick succession.
I think the team only look new, right? Because
yeah, the external members are also new, but the external members come for 48 hours. Yeah. They don't really fashion. RBI is run every minute when it is intervening in the market, when it is buying bonds or not buying bonds, when it is responding to the day-to-day actions. So that remains unchanged.
The vice captain will be missed.
Captain, vice captain changing together is, I think...
So I think it'll have to be a very quick learning curve, and sort of a quick handover for Mr. Sanjay Malhotra till,
I'm just
Dr.
guessing.
Patra.
This is totally speculative. Maybe they will extend Patra, though people sources tell me that looks unlikely. The ad is out.
With so much that Lata knows, I'm wondering, I'm just out of curiosity, did you ever get a call from any of those guys to be, at least in the team, if not the vice captain?
They call me to report on Governor.
She knows exactly what's happening in those corridors. Okay, all right, let's take this discussion forward. We have, two guests also joining in. Aseem Dhruv, who's the managing director and CEO at SBFC Finance, and of course he's no stranger to the Indian financial services world. He's seen it from close quarters for many, many years. And also we have Tamal Bandyopadhyay, consulting editor at Business Standard, who's also seen the ins and outs of the RBI for many decades now. Gentlemen, thank you very much for joining in. First question, Tamal, to you. So, people from North Block eventually making their way to Mint Street, it's not new at all. How do you see this appointment, Mr. Malhotra, coming in as he does when there are high expectations from the RBI to start cutting interest rates and boosting the economy?
No, it's absolutely in sync with the tradition. I mean, there are exceptions, but primarily it's the North Block that at times directly somebody who is in charge of certain things come directly, like Subbaraw's case, finance secretary, or the current case, and sometimes like Dr. Jalan or Dr. Reddy, who had been there and coming there. So that's the thing. There is no surprise at all. But the way the things have been done, that's a bit surprise, because Reserve Bank of India governor is something which is extremely critical, not only now but always for Indian economy. So I think it would have been planned a little better, and there is this kind of suspense, so much of drama and so much of speculation. That's probably not the right way of doing it. So that's the only part. Otherwise,
well, Tamal,
it is it's the tradition. There is. I don't think the government, particularly in the past with one particular governor, they did not, which was an outsider meaning non-IS. I would say even two, they were not very happy. So they have come back. But just one point I want to make, what Lata mentioned is this. The perception of a North Block person getting into Main Road is like Trojan horse. But that perception is not correct at all. Whenever somebody comes to the Reserve Bank of India, the person becomes the RBI person, RBI governor. So RBI independence is so critical, and always the person at the helm is aware of that. So don't think that because of North Block a person has come and everything the government wants, it will be done. That has never been done historically.
No, absolutely. I think central bankers take their position with a lot of responsibility and pride in India and around the world, right? We've seen the same debate play out with the appointment of Mr. Trump and what happens to the Fed chief there. But it's the same situation that they act as independent men and women.
I think there is a lot of unhappiness, as Tamal said, in terms of the manner in which, the nth minute. Tamal, I'm on the government side on this. I think it was done with a lot of thought, and it was a very gracious act. My sense is they did not want to announce that Shaktikanta will not be governor when he is presenting the policy. I mean, there is a little bit of dilution of his authority when he says RBI will ensure that inflation comes down to 4.2 next quarter or the quarter after. He is still full-fledged governor, and they want to announce the next man after he has been passed his policy. I thought it was a gracious act. And for me, the fact that they did not announce till the day of the policy confirmed to me the guess that he is not governor. Because if he is governor, they would have announced earlier.
Oh, absolutely.
And to be fair, one of my sources, when I asked him like 8 weeks back, what is this? It's like, we're just about 8 weeks to go and you're not telling us. And he said, you will know on December 9th.
Yeah.
So I think that man was in the know. But anyway, I want Aseem Dhruv to answer something else which the market and investors are terribly worried about. There was a big pushback from DFS and generally the government for RBI's housekeeping activities, banking regulation activities. Tamal well knows that, the expected loss provisions, the extra provisions for infrastructure, the liquidity cover ratio. Lots of new rules are sitting there. And obviously, PSU banks are telling the government, give us more time. Do you think, Aseem, that now with the man coming from Mint Street, these could be, banks could get more time and these could be pushed back?
First, I think we should acknowledge, with a standing ovation, the the way in which the governor has ended his term. And and as the new governor walks in into the pitch, the realities are a little different from what the previous governor had. We are now faced with a slightly slowing economy and inflation, which is still persistent. Now, in terms of regulations, see, regulations is every governor has had focus on a particular activity that was considered critical by the governor. So whether Raghuram Rajan focused on cleanup of banks' balance sheets on the wholesale side, and Mr. Das has focused on two main things. One is cleanup of the balance sheets on all sides, not just wholesale, but the retail side as well as focus on customer fairness code, which was not what the earlier focus was. So to that extent, there's a balancing that has been attempted between the two. And as far as a lot of these ECL and provisions and those goes, it was always the view to move the entire banking system to INDAS. It was just that because nationalized banks wanted more time, they said that NBFC should move on this, while public sector banks and private sector banks will continue. So there, you cannot have a system working on two different ways of reporting of the same business. So eventually, the move to INDAS is a given. Enough time has been given. And I think that it's very likely that the policy will be carried through.
Okay. On the same lines, Mr. Dhruv, something that Governor Das will be remembered for is the way he called a spade a spade. He didn't care which bank it was, who was the promoter, how big the entity was. But if there were deficiencies in service or whether in compliance, we all know with Kotak Mahindra Bank, with Paytm, with so many other institutions, IIFL, on some of the gold financiers as well, the actions were stringent. They were extremely precise. So was the communication. I mean, we got used to the era of very clear, long press releases detailing why someone has been stopped from issuing more cards or why someone cannot onboard more customers through the digital route. On some of these fronts, do you think there will be continuity? Or could there be a slightly different approach, new man bringing in his own approach? What would you expect on the compliance part and the other regulatory issues?
What this governor has brought about a change in overall way in which communication has happened to the industry at large is that the earlier governors used to be a lot more cryptic, a lot more private, and not so expansive in terms of laying out their thoughts. The governor has realized two things. One is that the people have taken penalty as a cost of doing business. That's what's happened in the US as well. And therefore, the instruction is very clear that it's a one strike out. You either follow the law or you'll be called out. So, and if you take an analogy, in a class, you don't mind a strict teacher as long as the teacher is fair. You actually protest to unfairness of teachers, or when you think that you have been singled out while others, bigger guys, have got away with it, which has always been the complaint that we have in a lot of other things in the Indian economy. What this governor has ensured is that nobody has any chance of complaining that they have been singled out because the law has been applied equally to large players as well as small, to foreign players as well as public sector as well as private sector, to banks as well as NBFCs. Every governor has a slightly different style, so I'm sure that it will not be exactly the same way. Some fresh thinking, will definitely evolve both at the MPC level as well as in the way communication happens. But largely in today's day and age of social media, if you are not really out there putting your views up there, you are then opening the field for speculation. So in a way, I hope that the same level of communication is maintained with industry concerned.
Okay. Tamal, I wanted to get back to that pet theme. Patra not there after Jan. New members, new captain and vice captain, as Surabhi put it. And, the first policy is normally seen as from the shadows of finance ministry. Then he becomes an RBI man. So just your thought, will he have a problem with Patra going away? And, how is he likely to tackle the immediate problem of slowing growth and rising inflation?
Yeah, Lata, you are exactly on the ball. But before that, I just want to highlight one thing. If you look at the past few governors, when they came and right now, I think things are comparatively benign. compared with that. Like say Subbarao came and that within a week we had seen the Lehman crisis. After that, Raghuram Rajan tapered tantrum and rupee had a free fall. Next, Raghuram Rajan's successor had this demonetization. Shaktikanta Das, during his tenure, had to face COVID and multiple other things. So right now, the growth inflation dynamics and rupee under pressure, but that's a part of life. I don't think there's any huge, massive crisis is looming over India, which Dr. Rajan or Subbarao, even Urjit Patel, they had a much tougher time. And in the 90s, Dr. Jalan. So we don't see that kind of. Yes, we are talking about geopolitics. We are talking about what's happening, Ukraine. You were talking about Trump, etc. But still, we have pretty, barring the second quarter of the current fiscal, we have growth on firm footing. We have inflation, which is being tackled with extreme care. And we have pretty large foreign exchange reserve. So I don't think it's a very tough time as such. Having said that, 5 of the 6 members of NHPC will be new in the February meeting, except for one Reserve Bank of India person. 3 MPC members from outside, which for them, December meeting was the first meeting, and Michael Patra and Governor Das would be away. So yes, that's the thing. I mean, how do you? But whatever I heard, Mr. Malhotra is very sharp. His understanding is pretty fine. He is not new to the financial sector. Bankers who had seen him in the DFS as a DFS secretary said that he's cool. He's very sharp with numbers. Apart from his other attributes like he understands technology and all. But 5 new members at MPC, that's a tough call. So it will be now, we have to wait and watch who replaces Patra. Now, will Patra will get yet another term? I don't think it has ever happened that when you had applied, put up the ad and asked for applications for the job, you reverse it and the person continues.
Right.
I don't think that's going to happen.
Take that point entirely.
So we'll definitely get a new RBI deputy governor. So will they go for an economist?
Right.
That's what. Or that's the point. I think ideally we should have an economist at that point. Right.
All right, we take that point, Tamal. Thank you so much for joining in. Thank you, Asim. Thank you, Lata, for taking us through with that conversation as well. As Asim pointed out, we need to celebrate the great tenure of Shaktikanta Das and at the same time wish the best to the new governor as well. Tune into CNBC TV18 for the governor's last press conference, the current governor's last press conference as the RBI governor later this morning at 11:30 a.m. Take a short break. On the other side, we will have with us the management of Patanjali Foods. Sanjeev Asthana, CEO, joins in to discuss the demand slowdown concerns as Godrej Consumers' weak mid-quarter business update came by. Welcome back. You're watching us here on Corporate Radar. The market consolidating with now a positive bias, but one of the stocks on our radar is Patanjali Foods. Remember, FMCG stocks yesterday were under pressure. They felt the demand slowdown as worrying commentary came in from Godrej Consumer, dragged the other FMCG stocks lower as well. The key point from Godrej Consumer's mid-quarter update that may impact all the other FMCG companies is that 20 to 30% rise that they've seen in palm oil prices. The reason why that's important is because it's an important input for a lot of the personal care products like soaps, etc., and also a lot of the food products too. Sanjeev Asthana, who's the CEO of Patanjali Foods, joins us now. Sanjeev, good morning. Good to see you in. A large part of your revenue, of course, comes in from oil, but increasingly you've seen a higher proportion coming in from non-oil business, FMCG, and more so post the acquisition of the home and personal care brands from the parent Patanjali itself. On higher palm oil prices, can you tell us what's the kind of impact that your soaps portfolio has seen in the third quarter so far, and also your other food portfolio, which does use palm oil as raw material?
So high palm oil prices, clearly have a big impact. There's no question about it. Whether it's the soap prices, as we've seen that company after company have taken a price increase. Likewise, palm is a big sort of cost item in the manufacturing of biscuits and confectionery. So it always has an impact. And I think certainly it puts a lot of pressure both on the bottom line as well as the managing of the cost, of palm oil and the other ingredients. That becomes critical. So overall, net, I see that there will be some impact, not that substantial in terms of our own overall portfolio, because it constitutes a critical part of it. But I think it will have some impact certainly on the cost of inputs going into the manufacturing of these products.
Could you give us a number? What proportion of your revenue is exposed to palm oil as an input, and how much has your input cost increased by in that portfolio?
So palm has got two dimensions for us. One is that we are the largest sellers of palm oil in the country in our edible oil portfolio itself. So that is some impact in terms of the the demand elasticity on the price elasticity. But in terms of what it goes into the biscuits and the soaps, overall basis. So their contribution is about 20% in case of biscuits, and it's about 20% plus in case of the soaps business. So net on an aggregate basis, it would have an impact of close to about 1,000 crores of palm oil gets used into various businesses of ours.
Okay, 1,000 crore of palm oil gets used into various parts of your business. The prices have increased by about 20 to 30%. So 200 to 300 crore has been your overall year-on-year cost increase. But you also said that the offsetting factor of that would be your own palm oil business that you sell through in your edible oil. So what could the benefit out there be? Because, this edible oil cycle has been in your favor. Last quarter, you did a revenue of, volume growth of 4.6% with an EBIT of close to 200 crores. You had guided for an EBIT run rate of around 250 odd crores. Do you think that can increase? What's a sustainable number here and volumes?
So just to clarify that part of 200 crores, most of it is a pass-through basis. So It doesn't have an impact directly into a bottom line, only it has a partial impact. And the second part is that in the edible oil, entirely 100% of the price increase typically tends to get passed on to the consumers, and it gets priced in. So it's normally very beneficial for us. If we see the second quarter results and the third quarter, the bump in the prices will actually be beneficial because most of it is, on a pass-through basis, and the value in case you're holding on to the inventory, typically it's a value addition in terms of the P&L, in terms of the business, etc. So this rise in prices for the edible oils is positive. It is less positive in case of the ingredients that we have, but the impact is not fully passed on to the consumer. So there's only a partial impact that we see in the P&L.
All right. Hi, Mr. Asthana. Good morning and good to see you. Ben, let's talk about, the integration of Patanjali's HPC business into your own. How has the scaling up been, and what are the targets you have before you?
So very early days. We're just still 2 months into the integration now. 1st of November, we integrated that. It's going on well. Right now, we're just going through the process of integrating, the various elements of terms of teams and distribution, etc. By end of December, we are reasonably confident that it will be fully done and sorted out. So next quarter will be sort of positive, in terms of the overall on a fullness of, scale as it is being planned. And in the first 2 months, it has been pretty much on its course. November was pretty good for us. And December, we're hoping that will also be positive. And I think on a fully matured and fully integrated basis, I think 1st of January, we will start on a full steam.
FY26, what could it do? I think you were looking at a number of around 1,500 crores for the year. So FY26, what should the rough revenue number look like?
So on the HPC business alone, we said that we projected 15% growth rate. So typically, we're expecting about 3,200 crores of revenue in FY26 for the HPC business.
Got it. All right. And also give us a sense of festive demand, Mr. Asthana. For the verticals that you function in, oil as well as FMCG business, how has festive season been? And also your sense with regard to rural as well as urban demand.
So there are two sides to it. Festive season was good, but slightly muted. And in terms of the urban demand, clearly there are challenges. We're seeing some bit of contraction there. The growth rate has been, rather slow. And rural demand is still, while remains positive, but we'll have to see next couple of quarters that how it goes. But overall, slight dip in the FMCG growth rates. We still are maintaining sort of the food business. We'll maintain between 9 to 10% growth. And in the HPC business, we see a lot larger opportunity of 15% growth. So we're pretty much holding on to that projection for us.
So first half of this year, your revenues are at around 15,400 crores, EBITDA at 855 crores with a net profit of 572 crores. Give and take everything, what is the second half of this year looking like? And if you could give us overall projections for FY26 as well.
So certainly better than the first half. It will be premature to give the exact numbers. Certainly better than the first half, and because the lot of products that we have, the categories typically tend to pick up in the winter months. And FY26, our projection very clearly is that the growth rates in the edible oils of about between 4 and 5%, in foods business about 10%, and the HPC business about 15%. So net the company should see an uptick of close to anywhere between 7 to 8% in terms of the overall revenue, and earnings growth of close to about between 8 and 10% is what we anticipate.
Okay. All right, Mr. Asthana, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the business. Quick check on the market. The market's turned color. Remember, we were talking about this little tinge of red at around 9:30, but now the buyers are here. And actually, banks are seeing good traction all over again. The Bank Nifty is leading the charge on the large cap screen. The gain is about 0.25% on the Bank Nifty. Nifty is also positive. And there are some large cap names from the IT side like Infosys, which are also contributing. Infosys is up about 1.5%. Shriram Finance is having a great morning, and Shriram Finance has been on a tear last couple of weeks, almost 2% up on that stock. Wipro, HCL Tech, these are the other tech names that are up and about. SBI, I can see. So basically, the twin engines, banks and IT, both look like they could be firing away.
A couple of the consumer discretionary names as well doing extremely well. This morning we have United Breweries, which has moved to the high point of trade. That's doing well. Nykaa too has seen a decent traction. In fact, from its lows, the stock has recovered about 25%. Currently sitting with a gain of almost 4.5% for that stock as well.
Okay, all right. So that's the market. And on that note, the green note, it's a good time to look at the Motilal Oswal wealth creation study. They've come out with their latest one for the year 2024. And to take us through some of the key highlights and the findings, who else but Mr. Ramdev Agrawal right here with us in the studios. Ramdevji, great to have you back on, and thanks for joining in.
Very good morning.
So it's been an interesting year for the market, good year. But
good year, yes.
And I was looking at some of the highlights of the study as well. And this year's study talks about how you can create perhaps a lot of wealth by looking at bruised blue chips.
Yes.
Bruised blue chips. So very interesting.
How did you like the title?
I really liked it. And then I looked at some of the examples. So I think you picked up stocks like M&M and ICICI Bank. And first I was like, how is M&M a bruised blue chip? It's one of the best performing stocks this year. But I realized you're talking over a longer term time frame. How from being a bruised blue chip, this is a company that's become such a huge wealth creator.
No, it's a robust blue chip now.
It's a robust blue, bruised to robust.
Yes.
So why don't you tell us more about the thought process and the thesis
here? So, the first thing is that everybody would like to see in the portfolio beautiful, all the robust blue chips in their portfolio. But all the robust blue chips are very expensive to buy. And typically if you buy at those fancy prices, the returns are very at market level or something like that. So how do you make above market return while having blue chips in the portfolio? Right. So the best time to buy is when they are bruised.
Yes.
Bruised means they are bit scratched. I mean, they've not lost the blue chip status, but they are in bit of trouble. Maybe because of their own doing or external forces or competition or misallocation of capital. Something, few things come together and the companies are in trouble. Okay. And good thing is if you think that how come these kind of companies can be in trouble? But if you do the data, then you realize every year 40 companies, they get into trouble. 40 blue chips. So first thing we said, actually we started this study, we wanted to understand turnarounds. How to make money out of turnarounds, like Suzlon and Mahindra & Mahindra, JSPL. Tons of money. So how to get this? So you've got to have a good framework. In market, if you have a framework, then everything is sorted.
Sure.
Whenever the opportunity comes, you can use the framework and go about it.
Let me talk about one company, sir.
Yeah,
You know, but when you talk about bruised blue chips, let's talk about Asian Paints. You know,
we'll come to that. No, it's just getting bruised right now. So we'll come to that. First is about the framework. Framework, how to pick bruised blue chips. So first thing is to define blue chips. The world talks about blue chip, but where is the definition of blue chip?
Nowhere.
Certain market cap, certain...
So this is where because if you want to do a study, you got to have some hang of the numbers. So that's where we try to define the definition of blue chips. So definition, when we said, I was very clear, blue chip definition is like 20% average ROE for 10 years.
Got it.
Okay, so that gives about 1/3 of the 250 companies, top 50 companies as the blue chips. Then the guys, they said, say Reliance or a lot of big companies, they don't have 20% ROE for 10 years. So are they not blue chips? Of course they are the blue chips. So we said Nifty, any Nifty inclusion is also blue chip. So first 50 is the whatever Nifty companies, and then on top of it, any company which has more than 20% average ROE for 10 years. Very stringent note, I can tell you this. So we came across about 107 companies in total. So then we started, I said, now we are settled with the 107 companies to study. Then we looked around. When you do data for every 5 years, you come across something like 80 to 100 companies every year. So out of 250, about 1/3 is always, or a little more than 1/3, maybe 40% is always a blue chip status. So and actually in Nifty, about 20 companies, 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips.
So I have a question now, since we're talking about the framework, right? Bruised, to identify what is a bruised blue chip that can turn around, right? Because there could be companies where certain, very big things have changed, that maybe they're going to lose their blue chip.
No,
we don't know.
This is where the blue chip comes. The blue chip, see, first thing is what is bruised. So one of the book we read, so there he said 50% from all-time high, or say last 5 years high. So that gives some kind of number. So in last 5-7 years, the companies, whatever high they've shown, if somebody has shown $1,000 and now it is horrible at 450-500. The moment it breaks 50% from that high, you are in a watch list. No, you are not decided to buy. It is in watch list. Please don't mistake. So you are in watch list. Now, why blue chips only? See, any company can fall. The companies which are not a blue chip, small company, they can also fall, but they don't have the competitive edge. See, it's like a Rishabh Pant getting injured. He met with a car accident. 2 years he was out. He went to Europe and all, and then he came back as again a captain, roaring. So this is what the blue chips character is. When they lose the status, like Virat Kohli can be down for say 2 or 3 matches, but when he comes back, he hits century.
Okay, how do you identify that this blue chip which has become bruised? What are the characteristics that this is going to be the turnaround story?
So first thing is that it is a blue chip. It is erstwhile blue chip, confirmed blue chip. Now, so they have a characteristic of the competence to come back. Then, see, you can't do it only statistically. Then you got to have foresight that this company is going to survive and prosper. That's a call which is more of an art than any kind of a number.
Now you've created a watch list. Watch lists are blue chips which have fallen 50% from the top. The second part of the process is start to buy, awaiting buying triggers. So at what point, because the statistical analysis says that from the lows these stocks have moved this much, very difficult, it better than everyone else to.
So that is from the point of maximum pessimism. Okay.
How do you define that?
Yes, point of maximum lows.
Nobody's willing to buy in the market.
So who's to say that a stock which has fallen 50% won't fall a little more than that?
No, it will fall. It will fall. Particularly if you buy it, definitely will fall.
Yes.
Because bottoms are...
The honest truth in life in the market.
So bottoms are made for fools and liars. You will never get it.
Exactly.
Because bottoms are always, when you look back, then you realize that was the bottom.
Exactly.
So you have to buy when you are comfortable. See, like... say Mahindra & Mahindra, it was a say 600 rupees stock, 570, 580 rupees stock. After it became 280, and when they sold Syngene, the major trouble is sorted. In fact, we didn't believe that, is the Syngene actually gone? There's no liability left. They said, yes, it is gone. But nobody believed. For 1 year, nobody believed that it is gone. We thought the roundabout was the loss.
Somehow.
But nothing, they cleaned it up completely. And then, from the 300 rupees, See, in buying blue chip, the fun is that blue chips do come back to their old high. So there is asymmetric payoff. So if 100 rupee stock has come down to 25, the 3x is almost guaranteed if you buy it right. So, but the 3x happens in 3 years, which is 40-45% return, you know, or 50% return. So this is what asymmetric payoff is an opportunity.
Okay, so now let's go back to the question Nigel was asking you, right?
Yeah,
Let's
I'll ask it.
You please. Yeah, that's the
Is it
Asian
bruised
Paints
enough?
example. Yeah.
Asian Paints, it's down 30-35%, I think, so from the recent people.
yeah,
Got
yeah.
the number right?
Yeah, 35 and
30%,
yeah.
approximately.
Yes.
So it's not bruised enough?
It is bruised, but it is getting bruised seriously.
Right.
See, what is seriously bruised? If it is not bruised 50%, then it's like a correction. It will go back. It doesn't come in my list. My, kind of a bruised blue chip. The confirmed bruised is like after 50%. So, but I don't wish anything like that.
Yeah.
I want the stock to go back to 3,500 immediately. But if by chance it falls below, then it becomes very intense. See, because there is an intense war. See, there is a consumer slowdown for sure. Okay. I mean, I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow. And in that, then your builders, they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market share. So obviously it is going to come from, slowing. If it is market is growing at 30%, nobody realizes the new guy comes in and takes it to 3%. But in a slowing market, if you want to take 4-5%, I think it hurts the existing guys. And if the existing guys are not willing to give, then there is a price war or discount war. And that takes away the profitability of the industry. Like what Jio did to the entire telecom industry. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit.
Got it.
While the war is on. You remember PNG and Lever. So those are the things. I mean, I don't know whether it will be as bloody or not, but markets are very skeptical. And see, markets live by the quarter. First quarter result is bad. A lot of people, they come and buy. Then what happens is, the guys who have bought, the second quarter is also bad. Because it is not a 1 quarter war. It might be a few years. So second quarter, when the result is bad, the first quarter, the guys who have bought, they come to sell. So like that, the spiral keeps building up.
Would it then make sense to add another variable to this definition of bruised, apart from just price, add time as well? Because Asian Paints down 30% from highs for 3 years would automatically mean it's down 50% from the perceived highs because of the time factor. Would that make sense?
We have kept it simple. You can see, these are all the ways to think. How you want to think, I mean, how you want to add up your way of looking at things.
Yes.
See, we are not looking at underperformance. Underperformance, if you look at, then it might be 60-70%.
Exactly.
Because market is up 50% and you are down 30%.
Yes.
So, but then we have not put that, but it must come somewhere in the picture.
But at current reckoning, would you be a little bit positive from these prices on Asian
No.
Paints?
I said,
not yet.
Till 50%. See, what used to happen was, earlier, if any company is in trouble, I used to think, thank God I don't have it. And don't bother about it. Now I see opportunity in them.
There could be an opportunity. That's
the
very
basic
interesting mindset shift.
Yeah, so we wanted to buy all the healthy companies, go QGLP, all the quality and growth. Now, bruised quality and growth.
How interesting. I mean, what a different way of looking at things. But also, what's on the watch list now? Which are the top bruised companies? So why don't you tell us about 1 or 2 names which are top of mind for you in terms of the watch list?
So 2-3 Adani companies are there in the list. They have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again massive competition coming from Zepto, Blinkit and Zomato. So that is hurting at the margin, not really, but at the margin in terms of growth.
So let me ask you, let's take Avenue as an example, just to understand how the study is to be applied. Hectic competition, numbers have not been good, there's disruption playing out in the distribution channels. But it's a pedigreed stock, pedigreed management, quality, governance, all of it going for it. So how do you decide whether the time has come to say yes to this bruise?
I'll start applying my mind. Only after 50% correction.
Okay, so the starting point is 50%.
See, conditions will be very different, I can tell you this. But I remember at 70 rupees, telco looked untouchable. Rakesh, before just passing away, he bought tons of it, like 4, 5, 6 crore shares.
Okay.
Yeah. So he was the master of the game. He did Lupin, he did Titan, he did JSPL. I don't know how much he bought, but Telco and Indian Hotel was the last few months before he went. So what I'm saying is he was the master of the game. He always used to tell me, Ramdev, I'm buying this. But I never could understand why he's buying. Yeah. Now I can understand. But it's too late.
Beautiful. Beautiful.
Just the perception change, not a question, is that earlier when a stock fell, you said you were feared. Now you're looking at it as a shopper. You know, a lot of the people who go shopping, they'll be like, oh, there's a 30% discount on this shirt, 40% discount on these shoes. You say, oh, these are blue chip stocks, they have 30, 40% discount, 50%. Unless there's a 50% off, Ramdev is not going to the shop.
Yes. I said cricket analogy.
Yes.
If Virat Kohli is injured, it doesn't mean that he's no more a blue chip batsman.
Yeah.
He always, because whenever you give him the bat, he can hit a century. You know that opportunity is there. Yeah.
Mr. Agarwal, I'm just hoping in the third test match and all this comes through. We desperately require the boys need to come in there and perform.
Because it is one up, one down. See, they cleaned up Australians on the first match.
Right.
Second match, they got cleaned. Third match, they'll come back again.
Exactly. That's what we're hoping for. Finally, before we let you go, we're done with the cricket. How are you reading the economy? You know, suddenly these FMCG guys are coming out with these shockers. So staples are struggling, but discretionary is doing well. Again, but if I look at the auto space, two-wheelers are doing well, and suddenly there is some inventory build-up in passenger vehicles. So just a comment on that before we wind up.
So again, in this study, we have this market outlook. So if you see, the corporate earnings started climbing up from 2020 onwards. So there is some fundamental shift in the way Indian economy is being run. Till about 2020, it was dominated by consumption. Okay, so consumption stock went to the roof, 100p, 80p, that became the norm, irrespective of the growth and all. They were fantastic franchises, but it was overvalued. Then comes the capital goods. Suddenly the whole tide turned and the government expenditure from 3% to 6% fiscal deficit, the government started pumping all the government expenditure. And hence all the capital goods companies, defense, capital goods, railway and all sort of L&T and all. So that's the theme. That theme is not going to change. And I think new governor has come. I think he's a guy who comes from Delhi. He understands everything about the tax collections and all. And I'm sure the credit flow is slowing down and hence the GDP growth rate and the tax collection. So his job is going to be quite intense. I think today we'll listen first time.
At 11:30, we'll have Governor Das for sure.
Yes.
And let's see if we get any kind of statements from the new governor as well.
Of course, he'll be very happy to make statements.
So, sir, finally, and it's been a great year for the markets. It's been volatile, up and down, but I think investors overall will be happy.
Next year will be a fantastic year because last year we got $60 billion from DI. Okay. Foreigners, they were absent. I'm just saying one up, one down. Now next year should be a positive year for FI. If FI is even $20-25 billion by chance, I think you will have a party.
Okay.
Big party.
In fact, we'll have the DIR number today. Again, the mutual fund numbers are coming out today.
One way.
One up, one down. India is coming back in the third test and FIs are coming back in 2025.
Both up next year in 2025. Thank you very much, Mr. Agarwal. Always a pleasure. Thank you for educating us and for having been with us through so many years, including 2024. Wish you and your teams a very, very happy new year.
Thank you.
All right. Well, on that note, we do have to take a very quick break. Come back on the other side. We'll have Mitesh Thakkar joining in, get some quick technical ideas going for the market.
जिस प्रकार से ये सरकार मोदी जी और मोदी जी की पूरे सरकार किस प्रकार से गौतम अडानी जी को बचाने के लिए ये पूरा प्रयास किया जा रहा है, ये सब सर्वविदित है। आखिर क्या दिक्कत है? जब गौतम अडानी जी के वकीलों ने कुछ पैरवी कर दी, वही पैरवी मंत्री जी कर देते, आके वही पैरवी प्रधानमंत्री जी कर देते, तो मामला खत्म हो जाता। हम पर आरोप लगता है कि हम सदन में चलने दे रहे हैं, और आज क्या हो रहा है?
56 इंच का सीना जो था, देश प्रेम के लिए था या अदानी प्रेम के लिए था, इसका जवाब अब हम भी चाहते हैं। इन्वेस्टिगेशन हम भी चाहते हैं कि हजारों करोड़ों का जो घूस दिया गया है, जो यूएस कोर्ट ने इनको इंडाइट किया है, वो क्या ब्यूरोक्रेट्स को क्या था, या सबसे ये सरकार जो चल रही है, ये सारे एमपी जो चिल्लम चोट कर रहे हैं, उनको गया था।
Welcome back. Well, let's quickly look at some of the trades you can perhaps work with this morning. The markets managed to look at a bit of a buy on the dip. We've got Mitesh back with us. Mitesh, any ideas or calls on the index and, of course, individual stocks as well?
Good morning again. I think on the index, my view is still positive, but as I said, I think, we'll try to buy it near the lower end of the range. That continues. But Nifty IT is the index which clearly has some strong momentum today. And that's where the action could be. I would recommend a buy on Infosys with a stop at 1930. Disclaimer, I have some call options positions, so there's vested interest. But this is just breaking into all-time or fresh highs. And as long as 1930 doesn't get taken away, good chance that Infosys in the next few weeks could head towards 2020, 2025 to begin with, that being the first target. 2060, 2080 is the zone which I'm actually looking at, look for the stock to hit. So that's one. The other one is L&T Finance. That's, another stock which has given a good breakout today. So L&T Finance, I would recommend buying. Keep a stop just below levels of 147.5. Look for target of 157.
Okay. All right, Mitesh, got that. Thanks very much for the calls. We'll touch base again through the course of the day. Right now, a quick break, but on the other side, Lata comes back with our special segment, Market Masters. Today, she's in conversation with Bhanu Baveja of UBS Investment Bank to talk about the market outlook for India in 2025.
The Brand Campaign of the Year award recognizes excellence in creativity and impact in marketing. And the Brand Campaign of the Year 2024 award goes to Ariel's Share the Load. Congratulations, and request Josie Paul, Chairperson and Chief Creative Officer, BBDO India, and Mukta Maheshwari, CMO, PNG India, to kindly join us on stage. And while we take a glance at this amazing campaign.
Equality begins at home, and for nearly a decade, Ariel's Share the Load campaign, conceptualized by BBDO India, has been leading the charge for change. From its inception, the campaign challenged societal norms, asking a simple yet powerful question: is laundry only a woman's job? In 2024, Ariel redefined this movement with its hashtag Home Teams Edition. Through evocative storytelling, it urged families to work as a team, sharing responsibilities equally. By highlighting real-life scenarios, the campaign struck a chord with millions, inspiring conversations on gender equality and inclusivity. The impact, a wave of social media engagement, widespread participation in the #HomeTeams initiative, and a reinvigorated push for equitable homes. CNBC TV18 India Business Leader Awards 2024 proudly presents the Brand Campaign of the Year award to Ariel's Share the Load #HomeTeams.
Ladies and gentlemen, please give a big round of applause to Josie and Mukta here from the Ariel team for this campaign. Many, many congratulations.
Congratulations to you. Would you like to share your thoughts on this?
Welcome back to our ongoing year-ender series, Markets in 2025. My guest today is Bhanu Baveja, Chief Strategist at UBS Investment Bank. And I'm going to ask him more about the world, about which he has a better view than most of us here in India. Bhanu, thank you very much for dropping into our studios.
It's a pleasure.
Now, a month from now, or a month plus 10 days from now, we are stepping into a Trump world. Can you just give us a peep into how it will look? Until now, it's all guesswork. We're extrapolating Trump 1.0 into 2.0. You tell us, what do you think will be the main contours of the new 2025 order?
So the markets are already in a Trump world, right? So the markets have been anticipating Trump even when Trump wasn't elected and even when the polls were saying that it's unlikely that he comes on. So if you look at how stocks have performed, if you look at how term premium and the fixed income has gone, they were fully anticipating Trump. And after the election, you have seen many of the Trump trades also play out in earnest, right? The dollar has been strong. Financials have done quite well. The term premium in the yield curve has remained quite high. So most of the Trump trades are playing out. My sense is that once you actually get Trump's inauguration, there could actually be a phase where you actually have a reality check, because you are pricing in most of the good things that Trump is going to do for the markets. You are pricing in deregulation, or at least, even if it's not fully priced in, you're talking to a considerable extent that's a part of the market narrative in financials, in energy, in real estate in the US. You're thinking about deregulation. You're looking at lower taxes. But again, if you look at 2026 earnings, pre-tax and post-tax, you can back out from there a tax rate, and that tax rate is 19%, which is below the 21% you are. So you are expecting lower taxes. What you're not expecting, and I really struggle to see this in any asset class, is tariffs. Now, all media channels are sort of crying themselves hoarse about how tariffs are coming. Nothing in the market says tariffs are coming. The markets are smart, you have to give them that. But basically what the markets are implicitly assuming is that this is a transactional position, that Trump comes in and then he negotiates, and then, you know, you pull back. And so tariffs are not a long-term issue, and it's not going to hit the economy.
He's using it only for
it's a bargaining process, right? He's getting his way. That's an assumption, right? And that's an assumption which I think has been cemented by some picks that he has made in his cabinet, like Scott Bessent, really has a conservative view on tariffs. He's always been saying, in fact, on your channel in the US, he's been saying that we will never take a maximalist approach. But it's not clear at all that he will have the call. The Ministry of Commerce, USTR, US Trade Representative Office, will have the call, and they are talking about tariffs. So that's not priced in. That's one of the reasons we think the markets will face a reality check. By the way, most of our clients disagree with us. They think the US economy is blue hot right now. It is. And they think that moving forward, earnings will continue to do well, valuations will continue to go higher. I think it's a very different setup from Trump 1, where it's hard to see valuations rising. I mean, consider where credit spreads are in the US. They're the tightest they have been in 25 years in this century. Whereas in Trump 1, you had a lot of risk premium on the table that you could shrink and then see valuations going up. So different setup.
Okay, so how do you visualize yields going? How do you visualize the Fed reacting? And more importantly, the dollar?
So very importantly, even before we talk about sort of what Trump's influence on all of these is, we have to ask ourselves, what happened to the US economy in the last 2 years, right? We've heard this metaphor. It's strengthened. It's strengthened, and the metaphor that's used very often is that it's been exceptional. So what was exceptional? Was productivity exceptional, or was just consumer exceptional? In my humble opinion, it was just the consumer that was exceptional because of exceptional stimulus. So this is banal, old school factors like stimulus, like immigration.
Fiscal steroids.
Fiscal steroids, as opposed to new world productivity. If that diagnosis is correct, then in the next 2 years, you should see a material step down in consumption and therefore a material step down in US growth. So we are not looking for a recession, but we are saying US nominal GDP goes from a very high 5.5% to a slightly below consensus 3.9%, right? If that happens, inflation will first come down. Tariffs, immigration, lack of immigration notwithstanding, inflation first continues to come down. And what we think, therefore, is that the Fed is going to go close to its neutral, so go close to 3%. The markets are not anticipating that. The market says that it's going to go to just under 4%. So we are more positive on the Fed cutting because of lower inflation than is the street, but because we are more negative on US growth than is the street. The street assumes what happened in the last 2 years will happen in the next 2 years. So it's a case of simple extrapolation. We don't think we should be doing that.
Okay, now if the US growth is not going to be exceptional, one of the big reasons that helped India is also our growth was good because of our fiscal steroids, but also because the world was being a positive place. Do you think we're going to face a lot more global headwinds as we try to estimate next year's growth? How heavy will be the global headwinds?
The global economy is going to be less friendly than it was in 2023 and 2024 because China is not improving, right? China, despite its stimulus, will see drag in the property market. China will see tariffs compromising global trade further. So that is not a great situation. Europe is going to improve, but you'll have to look at Europe under a sort of magnifying glass to see the improvement because it's very minuscule, right? China and the US are coming lower. So that creates for lower global growth than we have been seeing in the last 2 years. We've been seeing slightly below trend global growth. We go further below trend. So we go from about 3.2% global growth to 2.9% global growth. One thing we've got to be a little bit careful about is, again, China, right? Because if the US administration was to shut down all the routes from China to the US, if they were to shut down Mexico, if they were to shut down Vietnam, the routes that China has taken to maintain market share in the US, then there's a possibility that China really dumps capacity on the rest of the world, on
Asia,
Europe,
Africa,
Africa, India, right? And we don't think of China and India as trading partners, but you look at the data, they really are. So India's private capex could be negatively impacted by the amount of industrial capacity or manufacturing capacity that's coming the rest of the world's way. So there, while the whole world is worried about inflation coming from tariffs and coming from lack of immigration, that is true. I mean, that could be the trade after the trade. But what we also have to be really cognizant about is that there are serious disinflationary winds within this region coming from China. China is already in deflation. So if I'm a US corporate, if I'm a European corporate especially, or an Indian corporate, I really have to worry about what my margins are going to look like in a world where China's always adding capacity, right? So China's response to every demand problem is to add more supply, right? So that is a problem for the rest of the world, and that's disinflation.
Oh, yes, actually, even in 2018, when Trump had announced much lower tariffs than what we are expecting now or what he's saying now, we did see business confidence and business investments go down globally. We are only hoping that India is less impacted than other countries.
That's absolutely true. India will be less impacted, and compared to the downside that you could see in Europe or compared to the downside in some of the more open economies in this region, you could actually see India hold up better. Okay. And Indian markets are also sort of benefiting from not just global flows, which they haven't seen much of, but also local retail flows.
Which is what I'm coming to. How do you assess the Indian market? Forever, people have been saying that it is expensive, but it's not really given up much. It's just about 6% of the September end highs. Two different questions. One, how do you see growth, both GDP and earnings? And separately, is this flows inexorable, and can the market continue despite being expensive?
It is. I love the way you frame it, because it is absolutely right. You almost have to. So the delta in a cycle is going to be driven by the earnings cycle. It's going to be driven by margins. It's going to be whether operating leverage is going up or operating leverage is going down. And right now, we have been in an earnings down cycle, and I think we will probably be troughing sometime soon. You can't really see the signs of a big renaissance, but it'll come, right? It'll come at some point, perhaps in the second quarter of the next calendar year. You should be able to see urban consumption beginning to slow, does not decline anymore, rural consumption improves, and perhaps a little bit of private capex pickup, which is not a big statement because it's been so weak. You can actually see that pickup. And also fiscal's actually been quite tight.
Yes.
Right? And so, in the next calendar year, next fiscal year, you could see that. So it will not be surprising to see growth bottoming out after a period of consolidation. We first have to go through that consolidation. So can't sort of be super optimistic about, one day we'll.
No, we're going through the consolidation.
Yeah.
Q2 was the fact, the quarter that hit us. But yeah, so you see 2025 as a recovery year.
I see 2025 as a recovery year, but we first need to go through the consolidation, right? So again, there's a trade and then there's a trade after the trade. We have not been through the consolidation fully. But that's the cycle, right? But what has happened in India, especially post-COVID, is that the ease of trading for many folks in the retail space has been so enhanced that people have been through SIPs and also through directly into the market, putting more and more money into the market. Now, that is a dangerous game. There's no doubt about that. But, think about what these people's P&L is, right? They have not seen a downturn. They have not seen a downturn, right? We've sort of grayed our hair in these markets. We know downturns come, right? You haven't, by the way. But we know downturns come. But they have not seen a downturn. So their stop loss, they're not going to get. So they are buying the dip all the time. And for them, it's a rational response, right? If I've gone from 100 to 180, if the markets go to 150, people will buy the dip. So that's why I think we have to be careful that despite the consolidation in earnings or revenues, the dips in India for now could be a little bit shallow. Now, at some point, you have to pay the piper, right? At some point, when the flows are coming down, you could actually see the opposite situation where the macro is fine, but the flows are going to turn much more negative. Everything that I'm seeing suggests that we are still quite a long away from that.
Okay, let me stop you there because I'm being warned we're out of time. So just tell me, at the moment, what you are you manage cross assets, you're the global asset manager practically. What are your top 3 assets now? And what do you think will maybe the top 3 assets in the second half of 2025?
Right. So at this minute, we are actually playing defense, right? So we're buying very conservative sectors within the equity markets. We are long the front end. So we're long fixed income and we're long the front end of the US. We don't think the back end comes off very, very aggressively. And we're also long dollars, particularly against emerging market currencies. So we think the INR weakens, we think CNH weakens. So these would be some of the defensive sectors, front end of the US curve.
And dollar.
And dollar against emerging markets. I think the yen is actually going to do quite well. But against emerging markets, the dollar will strengthen. In 6 to 9 months' time, if I could anticipate trades based on the kind of things that I've said to you, I see US markets actually coming lower. And then there's a possibility that markets like India could see an upcycle. And on that basis, at T+6 or T+9, you could actually see the Indian markets doing reasonably well. So that would be my trade after the trade. But we really have to go through the trade first. And there's a whole sort of plethora of possibilities.
Bharu Vavija, absolute pleasure having you with us. Thank you very much for giving our year-ender series such a big boost with your presence. We'll have to wrap up on that note after a break, Chartbusters.
It's a proud moment and an honor to accept the award for the Brand Campaign of the Year on behalf of Procter & Gamble for Ariel Share the Load. As part of building communication that drives superiority for a product, P&G brands try to communicate values like equality and inclusion, which are absolutely critical to drive conversations in our households so that we can redefine changes needed for society. Thank you so much. Awards like this support our unwavering commitment to build brand narratives that drive the change. A warm thank you to our long-term partners BBDO, who have helped us bring this commitment with their passionate storytelling to life. Brands at P&G, as they look at brand building narratives, do weave in addition to driving business growth, messaging that inspires our communities to have the conversation and inflect change. Thank you, CNBC. Thank you, jury, for putting up an amazing event and for the award. Thank you.
Thank you, Josie, Mukta and team, and congratulations again on winning this award. Well, it's now time for one of the most anticipated categories of the evening, the Young Turk of the Year Award. Now, this award celebrates startups that lead with innovation, agility, while also creating remarkable growth stories. And this year, the Young Turk of the Year Award goes to Noise. So I'd like to request Mr. Amit Khatri, the co-founder of the company, to join us here on stage. And while he does that, let's also take a moment to look back at his journey. Mr. Khatri.
In the fast-paced world of connected living, one brand is leading a silent revolution. Noise, India's top smartwatch brand, is powered by innovation and accessibility. Founded by Amit and Gaurav Khatri, Noise has consistently stayed ahead, pioneering smart eyewear and launching India's first smart rings. Even in a challenging 2024, when others struggled, Noise thrived, achieving a remarkable 19% growth rate and crossing 2,000 crore rupees in revenue. Its success attracted high-profile investors, including its first strategic partner, Bose Corporation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Young Turk of the Year Award to Noise.
A huge round of applause for Amit Khatri, the co-founder of Noise.
Let's make some noise for Noise.
It's a proud moment for all of us, our team, to have this award, and thank you CNBC and jury for selecting us. I spoke to few folks here, few people here. Most of them don't know Noise, which means we have to do a lot of work here. By the way, we are third largest in the world, just not in India, and we are the most downloaded app in health and fitness store. We have close to 20 million users and a lot more to come. So thank you so much, and it's a good motivation for all the noisemakers there in Vodafone. Thank you.
Once again, ladies and gentlemen, make some noise for Noise. It's time now to celebrate visionaries who dare to dream big. Our next category, the Young Turk Startup of the Year, recognizes startups that embody the entrepreneurial spirit, driving innovation and delivering exceptional impact. Let's delve into the incredible journey of this year's winner. Priyanka and Harshal Salot, the co-founders of the Sleep Company, may I request you to kindly join us on stage.
And a big round of applause to welcome them here as we look back at their journey.
In an industry stagnant for decades, one brand is redefining comfort and technology. Co-founded in 2019 by Priyanka and Harshal Salot, the Sleep Company was born from Priyanka's quest for better sleep, a need shared by millions. Since launching their smart grid mattress, the company has transformed over 2 lakh lives, delivering not just restful nights, but better living. With patented technology and relentless R&D, the Sleep Company is raising the bar on sleep innovation. The Salot's dream has found takers, supported by premier investors like Premji Invest, Alteria Capital and Fireside Ventures. The company has entered international markets and achieved a 500 crore rupee annual revenue run rate in just 4 years.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. As we speak, markets mildly in the green. The mid-cap index, though, doing a relative underperformance in today's trading session. But we've got a management with us. So, Mangalam, let's get straight to it.
Let's get straight to it. We're talking about Metropolis. They went ahead and made an acquisition yesterday, that of Core Diagnostics, a 250 crore acquisition, partly paid by equity, partly paid by cash itself. Let's get chatting with the management of the company itself. Ameera Shah joins in now. Ameera, congratulations. It's an acquisition that you've made. Just wanted to understand a couple of things. You know, what is the operational performance of Core like because of this high, salience coming in from value-added products out there, or value-added tests, so to say? And secondly, are you getting a new capability that you can go ahead and implement in your existing network as well? What's the scale opportunity here?
No, that's absolutely right. We are actually getting an existing capability while Metropolis currently offers oncology tests in the entry-level and specialized segment. Core offers it in the super specialized segment, and therefore you're able to from end to end offer the entire capability to doctors and hospitals all across the country, and that's where really the synergy comes in and the scale is possible. We are expecting oncology as a segment to be growing at about 17% CAGR for the next next 5 to 10 years. As a segment, and we obviously as leaders in the industry, as this acquisition catapults us to the leading cancer chain for testing across the country, we do hope to grow certainly faster than the industry, at this point of time. So, the business opportunity and the financial opportunity at hand is that core diagnostics is a good quality business, but subscale, and therefore doesn't really have great profitability at this point. If it was a fully matured, profitable enterprise, we would be paying far more for it. But here we are getting the opportunity to get something which is subscale and truly create the profit in it in the next couple of years. And in 4 years' time, we believe it will come back to the sort of Metropolis margin rate of it as well.
All right. Hi, Ameera. Good morning and good to see you in. This is Nigel on this side. So as you said, it's not functioning at optimum levels. How do you see this business scaling up? It's doing roughly around 100 crores. What are the current margins? And as you said, I think next 3 years you expect it to come online. But as of now, what is the margin outlook? And in terms of cross-selling, someone who is going for an oncology test, but they wanted some normal tests as well. Now there's a volume driver even for your core business because now they can do both at the same place. So run us through those details.
That's right. If you actually look at the profitability currently of core in 24-25, it is profitable, but a low single margin profitability from an operational basis. And like we said, over a period of 4 years, we believe this should come to the Metropolis margin. So we'll be able to create that internally. And that value is what will get generated for Metropolis shareholders. Over this period of time. The business has a couple of cross-sell opportunities and some core synergies at the back end as well. So the cross-sell opportunities, and you're thinking of it from a consumer angle, but you have to think about it from a patient angle. When a patient is going to actually get tested for cancer, they need entry-level. The doctor will then prescribe specialized tests, and all of that gets done in Metropolis with our infrastructure in 750 cities and towns across India. But when that patient was found that they had cancer and they had to go to treatment, the very super specialized tests were not available with us, and that patient would potentially go to Core or somebody else. And Core was not getting the initial patients which had the screening because they don't have the infrastructure all over the country. So by bringing these two together, you're able to provide from end to end all the tests that a consumer or a patient suffering from cancer would need, with the most cutting edge, innovative stuff happening in the country and in the world.
Right. So just to explain that point a little further, if you had to look at a pyramid as to basic tests of oncology, what is that target market or total addressable market out there? And as you move higher towards the specialization, it's something that Core's capability is. What is that TAM? What is that growing at? And, how many patients of yours on an average who get basic oncology testings done go ahead and do the specialized testing from not necessarily Core, but other players as well? We just want to understand that flow through.
See, currently we are the full cancer testing market is estimated at about 5,000 odd crores. Right? Okay. 4 to 5,000 odd crores. And majority of that will currently be at the base level, at the entry level and at the specialized level. And, a smaller part of that is going to be really at maybe 20% of that is going to be at the super specialized level where Core operates. But that super specialized level is actually the fastest growing area. Because as cancer therapies are actually getting more and more progressive over the years, in the last 10 years, we've seen incredible therapies come out for cancer treatment. And as those become more advanced, the diagnostic required to support those are also growing extremely fast. And so while we are there in the, like we said, in the entry level and specialized, the opportunity to grow that market of super specialized, which is growing sort of a very fast pace, is going to be the opportunity. And you want to make sure that your consumer or your patient is with you the entire journey, because you want to make cancer care and diagnostics accessible and affordable and available all across the country. Today,
so how fast is it growing, Ameera? Sorry to cut you in, because you said that oncology testing in the industry is growing at 17%. So I assume that's for the entire pyramid. But at the higher end, the 20% TAM that Core operates at, how fast is that growing versus the 17%?
So, honestly, there's no third-party data, so the best I can give you is an estimate, but it will certainly be around 20% odd that you will find that sort of growth.
All right, Amira, so this doesn't only help you in terms of business, it also helps you in terms of geography. And now, you'll be able to penetrate more into North as well as the Eastern markets. How do you see this geographic split going? Because you have got, a strong presence here in West India, but now this is giving you that opportunity. So comment on that.
No, that's right. We're already leaders in West and South of India, and we're probably number 3 or number 4 in the North and East. But this opportunity really gets us deeper to increase our market share, to be able to get closer to the customer, and most importantly, in the specialized segment, which is obviously very fast growing in that market as well. And the hospitals, the 1,200 odd hospitals that Core works with, are not cancer hospitals, they're overall tertiary care hospitals, and therefore could outsource even other non-oncology revenues to us. So there are significant cross-sell opportunities that we believe will allow us to become an even more significant player in North and East of India.
All right, and final question before we let you go. Beyond the acquisition, how's business been in the third quarter so far? Seasonally, not the strongest quarter for diagnostics, but how have October, November been in terms of overall growth, same center growth and the premium growth? What can we expect in the next couple of quarters for you?
So, as you rightly said, Q3 is not the strongest quarter of the year for diagnostic companies. Q4 is usually the strongest quarter of the year. But having said that, it all depends on each company and their execution level. I think overall industry-wise, should be normal in Q3 as it always is in terms of, the growth. Hopefully with Metropolis, we'll see a fair amount of growth in Q3, especially because our last year Q3 base was also a bit lower. So we're certainly excited about the rest half of this year, and H1 tracked well for us at about 13.5% growth, which was sort of growing faster than most of the other peers and in a profitable way, and we're very excited about H2 as well.
Okay, all right, Amira, we appreciate you joining in. Congratulations on this acquisition. The street likes it. Yesterday, the stock as well was buzzing, and today still holding in the green. It gives you a better presence in North as well as East India. It's also helped you in terms of, focusing on the specialty testing. And as you said, there's a tremendous potential to scale up this acquired business as well. Well, time to slip into a short break. As we do that, it's time to introduce the Growth Code, a special initiative by Grow and CNBC TV18. Well, to further empower retail investors and traders, renowned investors and professional traders convened at Grow's Trading Right Summit on November 9th, where they shared valuable strategies. Here's a snippet of what ace investor Mr. Ramdev Agarwal, chairman of Motilal Oswal Group, had to say about the cost of not investing in markets, and shares the valuable lessons he learned on his investment journey. Let's listen in.
One of the biggest mistakes which cost me a few percentage of my wealth was not being in the market. I didn't invest anything between 2003 to 2014, and we had the biggest bull run between 2003 to 2008. Probably I would have lost 50%. My net worth would have been literally double of what it was in 2014. Say it was about 1,200 crores or something for the company. It would have been 2,500 crores or 3,000 crores, God knows. So once you miss in compounding, you miss the, one of the steps, then it hurts you through the life.
CNBC India Business Leader Awards 2024 proudly presents the Young Turk Startup of the Year Award to The Sleep Company.
Priyanka and Harshal, do stay back and say a few words.
No, absolutely honored to be here and getting this award on behalf of the Sleep Company. At the Sleep Company, our mission has always been to revolutionize the way people sleep and sit, make world a more comfortable place. And we truly believe that, we're at the cusp of a huge consumer disruption where sleep is becoming an integral part of our health and well-being. Just taking a moment to thank obviously our incredible teams, our investors and our consumers who put in trust in us for their sleep. And to CNBC and the jury, thank you so much for honoring this vision. I think last but not the least, thank you to our amazing families for their support. And you know, our biggest cheerleader, our 8-year-old son Ayan, who's there. And he's the reason why this all started. So thank you so much, and thank you everyone.
Thank you so much, Priyanka. Many congratulations. A big round of applause for the Sleep Company. Thank you so much. Our next category is the Breakout Brand of the Year, honoring a brand that has reshaped its industry with creativity, innovation and impact. Requesting Meenu Margaret, founder and CEO of Bliss Club, to join us on stage. Let's uncover the story of this year's winner, Bliss Club.
In the world of activewear, one brand is redefining the game. Bliss Club. Founded by Meenu Margaret, a chartered accountant turned entrepreneur. Bliss Club's mission is simple. An activewear that's not designed just for an hour at the gym, but for the entire day, blending comfort, style and innovation seamlessly. In just 3 years, Bliss Club has become a leader in women's activewear, with over 65% of its sales from its website and a growing presence on Myntra, Amazon and in 12 retail stores across India. With an ARR of 100 crore rupees and an impressive 80% growth rate in just 3 years, it's won the trust of customers and top investors alike. CNBC TV18 India Business Leader Awards 2024 proudly presents the Breakout Brand of the Year Award to Bliss Club.
Congratulations to Team Bliss Club and to Meenu here. Meenu, you're the Breakout Brand of the Year. Tell us what you aspire to do next now that you've unlocked this milestone.
No, this is a super exciting time for us. Exactly 4 years back, Bliss Club launched from a 2 BHK apartment in Bangalore. We launched with a single pair of black leggings, which we call the ultimate leggings. I don't come from an apparel background, and everyone from the background said, you can't launch an apparel brand, with a single SKU. You need to launch a collection. But in my head, I just thought that if I can just make that one product that's really amazing, which I can call the ultimate leggings, there'll be a lot of women who want to buy it. And that's exactly what we did, and we continue to invest a lot in building insanely amazing products. That's something we want to continue doing. We also want to continue breaking the norms and challenging the industry. And it's been an incredible 4 years. From there, I wanted to thank everyone who's been part of our journeys, our investors, 8 Roads and Elevation, our vendors who's helped us make some incredible products, my family who's here, my husband who's been an incredible emotional support, my sister who's an orthodontist who shut her clinic to help me start Bliss Club during COVID, my parents who brought up 2 women who they said can conquer the world. I have a 6-month-old. I hope I can get her to conquer the world at some time as well. And our customers who we call Bliss Queens, who really are the heart and soul of everything we do at Bliss Club. But last but not the least, my incredible team. We are 150 of us back in Bangalore as well as in all our stores in India. I have Saket and Nagaraj here with me, and everyone back home. It's been an amazing 4 years to build a 100+ crore brand.
Welcome back. You're watching us here on Chartbusters. While we were having a conversation with Metropolis, there were important flashes at the bottom of your screen. Tata Sons application with regards to the IPO exemption is under examination. That's the clarification that we've gotten. Tata Sons application for surrender of certificates of registration as a core investment company is still under examination. That's the clarification that has come in from the RBI, and RBI had replied to an RTI information to CNBC TV18 itself. So that's the clarification that has come in. Its exemption is under examination. The exemption by itself still hasn't come. So we'll keep an eye out on how that pans out. Important story from a listed stock perspective. The stock that usually moves the most on either side of the Tata Sons story is the Tata Sons IPO story, that is Tata Chemicals. So we'll keep an eye out on that one. But good time to welcome in Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market as well. Shilpa, there has been consolidation for the frontline indices, but individual stocks doing a lot better.
Good morning, Nigel and Mangam, and thank you for having me on the show.
Yes, if you look at indices, we see that Nifty hovering around 24,600. It is playing a very crucial level. If you look at the individual strike-wise PCR, it is still just around 1. So it is very important to see whether we are holding this 24,500 to 600 mark. If yes, then this pause will only accelerate the upside move towards 25,000 to 25,300. Otherwise, a little decline towards 24,000 to 23,800 cannot be ruled out. So it's a wait and watch scenario for Nifty. Talking about Bank Nifty is of course better placed. But then 53,300 and 200, these, the band of 100 and 200 points out there is also very crucial. We should be holding to this, and if we do, then again, rally towards 54,000 can happen very soon.
Okay, got that. What about individual stocks?
I have two buys. The first one would be a buy in Metropolis. Metropolis has given a range breakout and it is sustaining quite well. So any sustenance above 2,200 will only, push the stock further towards 2,350 to 2,400. Of course, positional, but I guess it's a very favorable risk-reward ratio right now, and one should be invested here with a stop loss of 2,150 on a positional basis. The other one would be a buy in Birlasoft. Birlasoft also has given a very, strong attempt to sustain above 600, which is very positive for the stock. And a move past 620 will only, show more momentum towards levels of 645 to 650.
Okay, all right. Thanks a lot for that, Shilpa. Well, for the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anubhav, over to you.
Well, we have been talking about CRAMS space as a decadal opportunity on account of upcoming Biosecure Act in the US. There is a surge in inquiries from innovative pharma companies because of that. For the domestic diagnostic market has been doing very well. Now, one indirect way to play the structural trend in lab research space is following pick and shovel way of investing. In this context, leading plastic labware company Tarsen Products is an interesting proxy. Now, company holds about 9% market share in the domestic market and has recently showcased demand recovery for the key geographies as channel inventory level have normalized. Secondly, company's new plant at Panchala is expected to operationalize by the end of fiscal year 25. A new facility almost doubles the revenue potential of the company and therefore presents a strong runway for the growth with no additional investment. While operational leverage would play out in fiscal year 26, one structural margin driver is the scope of synergy with company's European distribution subsidiary, which was acquired in fiscal year 24. Now, a key risk to watch is the competitive intensity from the MNC players. That said, post-recent correction, valuations are reasonable, and given industry tailwinds and healthy balance sheet, stock can be accumulated in our view.
All right, with that, we wrap up on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Which is women's activewear, which they say is niche. So we have some very large incumbents in this category, and we hope to build something truly differentiated. Hope to see a lot of women building brands in India.
And more power to you and your tribe, Meenu, and may this tribe continue to grow. Many congratulations again on winning this award.
Up next, the outstanding contribution to climate consciousness recognizes individuals or organizations driving impactful, scalable solutions for sustainability. From water conservation to waste management, energy transition to carbon capture. This award honors efforts that address environmental challenges at scale. Requesting Utkarsh Singh, co-founder and CEO of Batex Energies, to join us on stage to accept the award, and let's learn more about this year's winner.
Batex Energies has recycled 220 million lithium-ion batteries, extracting essential metals like lithium, cobalt and nickel to reintegrate into the supply chain. As India's largest battery recycler, it has processed over 2,500 metric tons of batteries, redefining sustainability. Beyond recycling, Batex is developing 100% off-grid solar EV chargers for companies like MG Motors, advancing clean energy innovation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Outstanding Contribution to Climate Consciousness Award to Batex Energies.
Ladies and gentlemen, a huge round of applause for Utkarsh and Batex Energies team.
Utkarsh, congratulations.
We would love to hear about your story and your accomplishments.
This award is dedicated to the entire team of Batex Energies, who are dedicated in creating a circular supply chain of these critical materials. We all are talking about electric mobility, but it is not possible if lithium, cobalt and nickel is not there. The only way India can create our own materials is if we start recycling them. And this also contributes to Atmanirbhar Bharat and circular economy. So we are going to keep going ahead with our vision and saving the environment. I would like to thank CNBC and Standard Chartered for giving us this recognition. And thank you to our families. Thank you to my wonderful co-founder Vikrant and to all our mentors, our investors, our teachers who have got us here to date. Thank you. Thanks
And
a
we
lot.
wish you all the very best with that, Utkarsh. Big round of applause again, ladies and gentlemen.
We recognize a company that has rewritten the rules of its industries, creating new opportunities while challenging traditional players. The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now this year, the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra in the green now for a market very, very quiet. The Nifty is at 24,644, a gain of 23 points. The Sensex is higher by close to about 90 points. Today, there is no big upside in the broader market. So far for the last couple of days, the small caps were outperforming. Today, it's absolutely flat. All eyes will be at that 11:30 press conference by the Reserve Bank of India, where the outgoing RBI Governor, Shaktikanta Das, will be speaking perhaps for the last time as the governor. So all eyes are going to be on that. That's scheduled at 11:30. But till then, so far, things in the morning have been on the quieter side.
On the quieter side, and it's been the case from the highs that we've been seeing as well, right? You spoke about the mid caps and small caps and the broader markets that have been quite muted today, so to say. The small cap index, we were discussing it yesterday, Reema, how they are up 10% in the last 2 weeks. They continue to do well today as well, actually. That index is up around 0.2% as we speak. This is when Nifty is absolutely flat with some positive bias. We do have the AMFI data, which is expected any time today. So we'll get to know what kind of flows we have seen in this category in the month of November as well. We have some comments coming in from the new RBI governor as well. And as Reema pointed out, there's a press conference from the outgoing RBI governor. So that's definitely the big story. We'll have some experts and special guests to discuss that in greater detail as well. For now, it's the Nifty Metal Index, which is contributing to gains that we are seeing 0.9% higher there. IT is doing well as well. And we have the Realty Index. That index has done exceptionally well this month. So it's up around 6% already. So all these realty names have been seeing a lot of growth, or I would say a lot of gains this month itself. But let's do one thing. We'll slip into a short break. As we do that, let's introduce Growth Code, a special initiative by Grow and CNBC TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right Summit on November 9th to share their valuable insights and strategies. Here's what ace investor Ramdev Agrawal, chairman of the Motilal Oswal Group, had to say about how many stocks an investor should hold in their portfolio for optimal diversification. Let's hear his thoughts.
For an individual investor, you should have as many stocks, as many you understand. You know, if you have knowledge of 10, 15 stocks, have all of them. Or if you have the knowledge of only 5, 6 you don't know, you're fine with 5. As far as the statistical theory is concerned, after 15, it doesn't matter how many you have. Because all the benefit of diversification gets completed the moment you hit the 15 individual stocks. So, but then if you want to be very aggressive, if you are very young, you are very confident, you know the company, what you're buying, you know the price and value gap, you are pretty comfortable buying 5-6 stocks. I have 20% in 5 stocks.
And while Arbinder reaches this stage, let's take a glimpse into the Blinkit story.
In a world where the Indian consumer craves convenience, one company has redefined shopping. They've made it possible to shop from the comfort of your couch and get deliveries in record time. What began as a mission to deliver groceries in 10 minutes has expanded to include everything from furniture to electronics, covering 26 cities with 639 dark stores. With a 40% market share and a 93% jump in gross order value to 12,469 crore rupees in financial year 24. This brand has revolutionized the shopping experience, more than doubling revenues to 2,301 crore rupees. CNBC TV18 India Business Leader Awards 2024 proudly presents the Disruptor of the Year award to Blinkit.
Congratulations to Team Blinkit. Albinder, before you go, in under 10 minutes, can you quickly take us through your journey?
Sorry, I'm struggling with a bit of cold, but see, I think customers are the ultimate disruptors. They're always unsatisfied. My journey in this over 11 years has gone from delivering in 24 hours to delivering in 90 minutes to now delivering in 10 minutes. But I would, I'm very grateful that we get to serve customers, especially, women, homemakers who really value our service. And I think they understand more than anybody else the value and convenience of getting fast deliveries. And of course, it takes about 3 lakh people in our supply chain to make it happen, whether they are sellers, whether they are store owners, drivers, and thank you for recognizing their achievements.
Ladies and gentlemen, brings us to one of the most significant moments of the evening, the most promising company of the year. Celebrating a mid-sized listed company for strong shareholder returns, sound financials and exemplary governance. And the winner, ladies and gentlemen, please put your hands together, is PI Industries. Congratulations to the team, and may I request Mr. Mayank Singhal, Vice Chairman and Managing Director at PI Industries, to join us here while we watch the company's success story.
A trusted name since independent India, PI Industries has empowered generations of farmers with cutting-edge R&D and an extensive network of 70,000
Welcome back. You're still tuned into Trading Hour. Well, a lot of stocks which are on our radar now. Religare Enterprises trading almost 4% higher. Reports are suggesting that the RBI has approved the Berman family's plan to acquire 26% stake in the company. Our colleague Vivek is joining in with all the details. Vivek?
Well, that's right. So Religare Enterprises is in focus, and remember, this is almost a 2-year or a 1.5-year long drawn battle between the Berman family as well as the board of Religare Enterprises. So now the latest update is that we understand that the company or the Berman family has received the RBI nod to go ahead and make the open offer and complete the open offer for the remainder of the 26% stake that they had announced as far back as September 2023 is concerned. Now, let's just look at the context and the timeline of events that have been transpiring ever since the Berman family started acquiring stake as far as Religare Enterprises is concerned. Looking at the status check for the open offer, number one, the nod has been received from the IRDAI, given the fact that, remember, Religare also houses an insurance subsidiary called CARE. Along with that, SEBI nod, it is yet to be received, but it was largely conditional on the RBI nod coming across. So SEBI nod too is something that is required for the open offer to finally go through. Remember, along with that, there is also a very important event that is expected to transpire as far as December 31st, 2024 is concerned. The AGM of the board will transpire, and in that, one of the key items on the agenda will be the voting as far as the reappointment of Dr. Rashmi Saluja as the executive chairperson is concerned, and also as the director. So that will be one very important event that we need to keep an eye out for. Remember, 2023, Berman family made an open offer to acquire an additional 26% stake, in addition to the almost 24% stake that they hold in the company. This was done at 235 rupees a share. Company filed for the open offer with SEBI on August 6, 2024. Very important development, and this particular event, the RBI nod, is very important for the final open offer to go through.
Okay, that's a significant step forward in the entire battle for control for Religare. And the stock is reacting positively. It's up close to about 5%. But moving on to Glenmark Pharma, because the company has presented the first clinical data from the phase 1 study of a cancer drug. Vinny is here with the details. Vinny.
Yes, good morning. So yes, a positive news flow that we see for Glenmark Pharma, because this is its subsidiary IGI has shared a very promising and positive clinical data for this oncology drug. ISB 2001 is what the number is right now that we're keeping an eye on. The phase 1 study is showing the treatment for relapse and refractory multiple myeloma, which is a cancer treatment, blood cancer treatment, which they're talking about. Now, the drug was tested on 20 patients, and out of that, this is phase 1. So 20 patients were there. Out of that, 83 patients have shown a good overall response rate in there. There was overall a favorable safety profile also across all the patients that they saw. So very good and positive data that is coming in, and that is what is keeping the stock abuzz today.
All right, 2.5% high there. Thank you, Vinny, for joining us with those updates. Let's get some fundamental conversation on the markets. Pawan Parakh, the fund manager at Geojit Financial, joins us now for just that. Pawan, good morning. Thank you so much for joining in. Well, I was going through the Beacon Fund's top holdings, and the interesting names there are Inox Wind, SW Solar, and this renewable theme that has been working off late. But there have also been a lot of reports that this capacity is unutilized, a lot of these capex that has been done by these companies. What makes you so bullish? A lot of them have already run up quite a bit. Do you think this outperformance could continue?
Yeah, hi. I think renewable is one space we've been positive for quite some time. These stocks have made a lot of money for our investors in our funds, and we continue to remain very positive because look at the bigger picture first. Power as a sector, we've been grossly underinvested in the last decade, and now with Digital India, Make in India, and everything, I think electricity is very important for India to continue to grow. Now, having said that, within this electricity theme, renewable is the future. And within renewable, you hardly have got few names to play. As far as these companies are concerned, I think, since they were also going through some tough period, they're ramping up the capacities now. But the important thing to note out here is that a lot of these companies, while they're operating at 50% or 45% of their capacity utilization, they're still expanding their capacities because that is the kind of demand that they're seeing in next 2, 3, 4 years. So I'll not be surprised if these companies deliver more than 20-25% growth in revenues and profits over the next 3-4 years. And hence, considering that within the industrial space, this is one space which has got very high revenue growth visibility, and valuations are relatively cheaper versus the other in the past.
Pawan, hi. I wanted to get your thoughts in on Delivery, because that is one of your top 10 holdings. Now, it listed 3.5 years back, and the issue price back then was closer to 500. So since then, of course, the stock has not done, very well. But you entered much later. So what was the price that you entered in, and what is the rationale? Because to a layman, it appears that there are still some headwinds. So, for instance, companies like Meesho have their own in-house delivery, logistic providers. There is that competition coming through from quick commerce, etc. So, talk to us about the narrative behind Delivery.
Right. I think before I talk about Delivery, you must notice that we are very positive on a lot of these new generation themes within the tech side, and Delivery is just one of them. Think about it this way, if delivery is one of the lowest cost logistics service provider in the country, if Make in India has to do well, if government has to achieve its target of manufacturing, urbanization, there's so many initiatives that the government is taking. For a country like India, you hardly have got a large cap logistic company in the country, right? And delivery has got all the ingredients of being one of the foremost player in the logistics space. For the last 3-4 years, there've been multiple things which have dragged down the stock price. One is that they were in the investment phase, then they made some acquisition which led to a weak year in terms of FY23. Now, as things stand today, what we believe is that one, all the investments have been done, and incremental revenues will have substantially high gross margins, which means that there will be huge operating leverage in play. So, I would want to believe that in the next 3 years, this company will at least double or triple its EBITDA, right? And that is what makes us really excited about this company. Like all other tech companies, this company has got a strong balance sheet and cash. There's cash on the balance sheet as well. As far as this concerned around Meesho is concerned, I must tell you, Meesho is just one of the clients. Delivery is catering to all the large e-commerce guys. It is catering to a lot of the D2C guys. So Meesho is just one client. And with one client here and there, I don't think it changes the fortune of the company. Obviously, it would create 1 or 2 quarters or 1 or 2 years of subdued performance, but that's it. As far as competition for quick commerce is concerned, I think quick commerce largely is for groceries or things which you need on a quick basis. But to compete this, even delivery is getting into rapid commerce, wherein they will deliver within 2 to 4 hours. So, we feel very positive about this company.
Okay, all right. Thank you so much for joining in today with your thoughts on individual names and themes as well. But we have to get into a quick commercial break. On the other side, we'll continue our conversation, and we will also put the spotlight on that big change where Shaktikanta Das' tenure as RBI governor ends today. We'll be joined by Mr. K.V. Kamath to discuss more.
Now making strides in pharmaceuticals. Its new vertical contributes over 7% of revenue within a year of launch. With 85% earnings from patented products, PI has seen revenues grow 2.28 times and profits 3.7 times in just 4 years. CNBC TV18 India Business Leader Awards 2024 proudly presents the Most Promising Company of the Year award to PI Industries.
Congratulations to Mayank and the entire team of PI Industries. Ladies and gentlemen,
going, yes.
Mayank, we would love to hear your thoughts.
Yes, good evening, everybody. Once again, a very thank you to the jury for selecting PI and giving this great honor. I must not forget to thank all the people who contributed to this organization. We are not a young organization. We are about 75 years old. So I must remember my grandfather, who tediously laid the foundations of this organization, set the course of its right values. My father, who propelled it to take it to the next level. Today, PI stands an institution which is taking innovation to the world, basically taking India to the world. We fostered ourselves by saying that we want to be the largest innovative agri-science company with 900 scientists creating innovation. Our first product has got to go to the world. We're fostering this and taking it into the pharma sector, the biotech sector, and putting India on the global map. Once again, thank you very much, and thanks to all the members of PI over the generations who made this company what it stands for today. Thank you.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. we are here at the CNBC TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. Now, Revenue Secretary Sanjay Malhotra will succeed Shaktikanta Das as the RBI governor. He will take over as the new RBI governor tomorrow for a 3-year tenure. We have with us Mr. K.V. Kamath, Chairman of Jio Financial Services, joining us now for his thoughts on this appointment and, of course, what this would mean. It's a very, very closely watched position, which now, of course, has been filled. We'll, by the way, also be hearing from the outgoing RBI Governor, Mr. Das, in just a bit from now, and we'll cut live to that as well. Mr. Kamath, good morning. Great to have you with us here, as always. Prashant this side. Mr. Kamath, first thoughts. Mr. Sanjay Malhotra, career bureaucrat, like Mr. Das, if I may point out. What do you make of it, sir?
Prashant, good morning. Firstly, I think I would like to acknowledge all that Governor Das has done over many years, holding things steady right through COVID and the turmoil that we've seen in the last couple of years. I think Governor Malhotra brings a wealth of experience, and I will just put it in context. I think this is the first governor that we would have who would have had experience leading a financial institution, who has experience leading the Department of Financial Services, then leading a revenue function in the country. And to top it all, Governor Malhotra is a computer science engineer. And, if I look at the RBI today, it's in a very steady state, but the initiatives that they've taken is with regard to technology. Initiatives that RBI has taken are far beyond what other, in other domains we would see central banks and the regulators having taken. So I think we have absolutely the correct governor to guide us through the next phase of sustaining growth and then leveraging technology as we look at the next horizon for India, which is a 25-year runway.
Mr. Kamath, it is, and absolutely, I think very well put. It's a tricky time, right? I mean, growth is slowed down, you would agree. We're in real terms, we're in the 5% handle. Maybe it's an aberration and things will pick up. Inflation still remains sticky, largely because of the supply side issues. And you've got the RBI now, which is, the first MPC meeting will be in February for Mr. Malhotra. We had 3 outside members being inducted into the MPC in October. We have the government advertising for the post of deputy governor. So, you'll have possibly 5 new members. 2 of them would have already voted, though, in the December MPC. But largely, sort of, a lot of new blood in the MPC as they take forward. What next in that sense? Do you foresee any significant change from how the RBI has conducted monetary policy till now?
Thank you, Prashant. No. I think if you look back at history, I think it has always been a steady, let's say, movement in whatever, whether it's exchange rates, currencies, or policies. Never has there been anything happening suddenly. And I would expect the same sort of steady hand going ahead from the government. So everybody looks at the longer picture. The longer picture is a growth story that I don't think we have ever experienced before. And I'm sure RBI, the governor, will make sure that the things stay stable as we go along this journey. So I don't expect any impact of any changes that that you spelled out just now.
The other thing from, again, the financial markets very well and what they expect and what they want to see, etc. Mr. Kamath, one of the things which the RBI has done in 2024 is really crack the whip when you talk about, lending practices across the board. NBFCs, MFIs, digital lending companies, banks, of course, have been at the receiving end as well. And they've kind of steadied the ship in that sense. And this is happening at a time when, at the margin, obviously, asset quality cannot remain as pristine as we've seen for the last couple of years. Things will deteriorate a little bit. It's the nature of things. So I just wanted your thoughts there as well. With the experience which Mr. Malhotra has and what the RBI so far has done in this area, what are your expectations?
Let me put it in context. Firstly, the steps that the RBI took were indeed warranted. I want to be explicit about it. These steps were warranted. Lending was getting loose. And some players were not using technology the way they could have, which resulted in the customers experiencing challenges. So certain steps had to be taken by the Reserve Bank of India, which they have taken, and that was good. Now, very interestingly, we have an incoming governor who has seen it as a secretary in the Department of Financial Services. So he knows what was happening in the marketplace. So he comes with that wealth of experience, having seen it from a slightly different position, as it were, not a different lens, from a different position. So I would think that we would have continuity that I think everybody in the market expects, and more importantly, continuity at a time when technology is disrupting everything. And in Governor Malhotra, you have a person who has the technology bent and would be able to, I'm sure, take forward the initiatives that the Reserve Bank has already put in effect, as it were.
I was coming to that point, Mr. Kamath, right? I mean, the computer science graduate from the prestigious IIT Kanpur. So as you said, he has that bent of mind. So do you see sort of efforts in terms of technology, innovation? I mean, there's the CBDC. I mean, everything is, of course, moving towards, there's more and more technology in everything, in banking as well. Do you see accelerated efforts in that sense with him at the helm now?
I would say that the Reserve Bank has done a remarkable job in terms of sandboxing and setting up institutions, and even now, various new initiatives that they've taken. I think we now have a governor who also understands all these things and will be very easy, would be able to very easily take this forward, which I think is what the country needs to be a leader in financial services. I think today we are admired as a country which uses financial technology very, I would say, effectively in our financial services marketplace, and that would, I'm sure, continue with Governor Malhotra. He has got this extra advantage, as it were, with a background in computer science, which is, I think, where things are heading today. Almost everything that we do is driven by technology, and there certainly he would be very comfortable. And the organization has already taken steps, so sure he will take these forward.
He headed Secretary Department of Revenue. He was also part of the GST Council as Secretary. As you said, he's of course been he's headed REC, and which one of these sort of roles, and of course many other roles as well, which of these you think is the most, which stands out to you, Mr. Kamath, as he sort of takes over charge at the RBI for the next 3 years?
Prashant, all three. Since you first look at, as I said in the beginning, to my knowledge, he is the first governor who has actually headed a financial institution. So he understands the dynamics of a financial institution. And then, his role at the Department of Financial Services, he has, in a way, all the financial institutions in the country were reporting to the department. So he has intimate knowledge of that part of structure. And then revenue, because that is, again, an integral part of what, to complete the picture with the Reserve Bank of India. Ultimately, it is, in a way, policy, monetary policy, fiscal policy, all come together. And he has been at the center of this, I would say, interaction from the government side. Now you would look at it from this Reserve Bank side, and in a monetary policy context. So both the roles is banking regulator role and his monetary policy authority role. I think he would be able to do it, given his background, with great ease.
Mr. Kamath, let me, since I have you with us, let me ask you for your own sort of expectations, or actually, in that sense, demand or want, what you'd want to see. Does growth at the margin, Mr. Kamath, need a little bit of help now? A little bit of hand-holding extra? There's that point about government spending, which maybe will come back and has to come back in Q4, but both on fiscal and monetary side, sir.
Yeah, Prashant, I have never advocated in terms of doing anything major. And I have had great faith in regulators, what they have done, at least over the last almost 28 or 30 years since I came back in 1996 or 1995. So I think that will continue in terms of handholding. Now, what you mentioned, I would look at it with a slightly different lens. Is our runway long enough? The answer is yes. Are there any constraints like quality issues, balance sheet issues? Answer is no. Thereafter, it is just, I would think, temporary things which are taking demand up, taking demand down. I don't think the underlying ability of corporates to invest for growth and to drive momentum has been in any way impaired. So I would think at the right time they will tweak whatever needs to be tweaked. I wouldn't be too worried about it at this point in time. There's enough money in the system. I think the rates are not unattractive. Clean balance sheets. Demand will keep going up and down. Some inflationary pressure would come in because of possibly imported, I would say, inflation. But I think we have been used to handling this. So nothing needs to be done which is spectacularly different from what we have done in the past.
I know I'm a point well taken, but in your long experience, do you think we've hit the trough in terms of growth, at least growth rates?
No, not at all, not at all. I think this is absolutely transitionary, and we could.
Mr. Kamath, what I meant is a trough. I mean, a bottom, with what we saw last quarter, not a top.
Okay. I thought you said. Yeah. I think so. I think see, last quarter. Now that we look at the number. Clearly, government spending in the previous quarter was very low. It has now started to pick up. With that itself should provide a momentum. So we will see. And probably we'll also have to see was there over leverage in certain sectors. In between, we talked about the Reserve Bank tightening. To me, it could be also because individuals were getting over leveraged on an unsecured basis, and the regulator had to tighten. So all this had an impact in terms of. We saw that impacted the marketplace. It should revive in a quarter. So yes, to answer your question, do I think that we hit a trough in the last quarter? Yes, that trough is, I think, behind us, and we should now look at sustained growth.
And as you said, right, I mean, balance sheets are in great shape across corporate India. Banking balance sheets are in good shape as well, although at the margin, cyclically, there is a bit of an uptick in stress. But generally, it's a pretty good environment. So in that sense, from a government perspective, not so much Main Street, you think the focus, it needs to loosen its purse strings a little bit? Too much focus on the fiscal deficit at a time like this, perhaps unwarranted?
I think from what I have read, it appears that it was not a question of the deficit or not. It was a question of releasing liquidity by spending. I think that has now started, and everybody says that the next quarter that should pick up. So I would go with that. Nothing extra is required to look at the deficit per se or interest rate per se at this point in time.
Well, just one last question, Mr. Kamath. Were you surprised with the last minute? The government waited till the very last minute to announce the appointment. Do you think there was any specific reason?
I have not seen when and what other appointments were done. I will say that. We've had, I think, great leaders in the Reserve Bank. And I think the tradition continues with Mr. Malhotra. So that's all I would say. So we look forward to his steady hand, guiding the ship through our next journey.
And absolutely, over the next 3 years, and we all do. Mr. Kamath, thank you so much for taking out the time and being with us here on CNBC TV18. It's a real pleasure having you and your views across. Thank you. Well, I think as Mr. K.V. Kamath and his thoughts, I think we got the numbers for mutual fund data coming through, right? AMFI numbers coming through.
Yes, so let's take a look at that, because the equity flows this time around, they have ebbed a bit on a month-on-month basis. But do remember, last month did see record high flows as well into equity mutual funds. So that is something which is quite expected. So it's coming at 35,927 crore rupees, which compares with 41,860 crore rupees that we saw in the month of October. Again, that was a record high number. Most importantly, we would like to see how hybrid funds have done, because they performed really well in the month of October, and also the flows in the small caps and the mid caps, because despite the fall that we saw in markets in the month of October, these two segments did really well. I got the large cap number. I think that is something that was flashed on the screen as well, and that looked like it was lower on a month-on-month basis. We'll just go through the exact number, what has been the case. Last month it was around 3,452 crore rupees. Right now it has come in at 2,547 crore rupees, and we'll of course be cutting across to the outgoing RBI governor's press conference as well. So just stay tuned for that.
Small cap fund inflows have picked up on a month-on-month basis. So I think it's now come in at 4,100 crore, slightly higher than what we'd seen in the month of October. So overall equity inflows are down, large caps down, mid caps down month-on-month.
No, actually mid caps are also up. I think it's 4,800 crore rupees is what the mid cap number is looking like this time around. And if we compare it with the last month, it's 4,681 crore rupees. So even small caps have gone higher by around 400 crore rupees on a month-on-month basis. If we can flash the mid cap number again, because that will be important to see. Mid caps also have seen an increase. So both small and mid caps have seen an increase. Large caps have seen a decline. Equity flows have seen a decline. So that is exactly what I was saying yesterday, right? In October, despite the fall, mid and small caps did well. So in November, when we did see small cap outperform, that could have been the case. But let's cut across to the press conference.
And all of you have been very cooperative, and I think you have been widely reporting on the Reserve Bank and its activities over the last 6 years. So a special thank you once again to you all, and thank you to your wider, to the wider audience for having been so patient and watching some of my, I presume you have been watching the press conferences of the Reserve Bank. I don't propose to make a statement or anything, but I thought it appropriate that I recall the day I joined in the Reserve Bank of India on 12th of December 2018 at 4 p.m. or so, that they had held a press conference. So I thought it would be appropriate and fitness of things that when I'm demitting office later today, I also sort of share some thoughts with you. So I'm not presenting a report card, I'm not making any statement, but just sharing a few thoughts. If you recall, in that December 12th, 2018 what I had said before you, I had made about a few points. I had said that it's available in the YouTube even now. I had said that the Reserve Bank is a great institution with a rich legacy. I had also said that I will do everything to uphold the professionalism, core values, credibility and autonomy of the Reserve Bank. I had also said that the officials and the officials and the personnel of Reserve Bank, they have high level of knowledge, quality of knowledge, core competence and professionalism. I had mentioned about the teamwork, the need for that my approach. I'm not saying it was not there earlier, but I had said clearly that my approach would be to work in a spirit of teamwork within the Reserve Bank of India and take everybody along and work as a team. I had also said that decision making in the modern world is very complex in today's dynamic world, and therefore a consultative approach is necessary. A consultative approach adds value and depth to the decisions themselves. I had mentioned about the challenges in the banking sector. I had also mentioned that there are certain, and this I am saying 2018, I had mentioned about the challenges that time, before us with regard to the banking sector. I had also talked about the liquidity issue which needs to be addressed. And finally, I had said that the flexible inflation targeting the framework of flexible inflation targeting is very important, and there is always a need to, I had highlighted and stressed the importance of maintaining inflation while being mindful of the growth trajectory. These were the exact words. So in the last 6 years, it has been my endeavor to adhere to these principles which I had mentioned when I took over as the RBI governor. You would be aware that we have adopted we have been holding wide-ranging consultations on many issues. In fact, the consultative approach behind regulation, behind all decisions that we have taken in the last 6 years, the consultative approach is very much evident. In many cases, we hold face-to-face direct meetings with the stakeholders or their associations. In many cases, we release a discussion paper or a draft circular, get the comments of all the stakeholders, and then move forward. In fact, the same approach was followed with regard to the Regulation Review Authority, the RRA 2.0, where we formed the authority was within the Reserve Bank, but we formed a group of experts to advise the regulatory, the Regulation Review Authority within the RBI. So we have followed the consultative approach, and the teamwork in the Reserve Bank was perhaps, in my experience, I can say, I cannot talk about earlier days. It was perhaps, at a very high level. I got excellent cooperation from each and every member of the RBI team. Each of my colleagues, they did their best. During the trying times of COVID, even at the risk of their own safety, their personal health, whenever required, physically they all came for discussions. Only I and the deputy governors, we were coming regularly, and a few senior officers, of course. But I think that was the level of dedication we saw. It was also evident in the quarantine facility, which we set up here. I have talked about it earlier, which lasted, in fact, more than 1 year, 1.5 years or so. And the entire staff and service sector, service providers had absolutely no complaint. And they were very happy to remain there and do their jobs while the families were away at home. Now, that is the level of commitment and the teamwork I saw in the Reserve Bank. So I would like to take this opportunity to convey my thanks to all my colleagues in the Reserve Bank. I would also like to place on record the excellent suggestions, the valuable inputs which we have received in our interactions with various stakeholders. I have already tweeted about it, or X'd, as you call it today. We put up a message in the X platform today morning, so I don't want to repeat on that. My personal journey, it's not a personal journey, it's a journey of a governor of the Reserve Bank. I was fortunate to get this opportunity, and I have tried to give my best to the institution, to its policies in the best interest of the economy. Now, what lies ahead? The key issues in the life of a central bank or any institution or organization, it's always a continuing institution. You deal with challenges, but there are always new challenges. There are jobs which you have undertaken. There are tasks which you have done. Some of it is completed. Some of it would be midway. They will be taken forward. So some issues, important issues ahead of us, not only for the Reserve Bank, but I think for the wider economy also, I would like to list out. First, so far as the Reserve Bank is concerned, I think restoring the inflation growth balance is the most important task ahead of the Reserve Bank. And I am sure the team RBI under the leadership of the new governor will take it forward. Second, there's a changing world order. I have talked about it in my last monetary policy statement. The entire global geopolitical dynamics, the geoeconomic dynamics that is undergoing fast change. The world order is also changing. In this situation, it's always necessary to remain alert and agile and I'm sure the RBI will certainly be at its best. Third, cybersecurity and its associated risks and threats. I think that is a big challenge for every authority, not only in India, but all over the world, and particularly for a central bank. In the last 6 years, and even earlier also, we have given a lot of attention to this issue of cybersecurity and dealing with cyber challenge, the cyber threats and challenges. That is a continuing task because the challenges are continuing, new challenges are emanating, and that will be a continuing challenge for every central bank in the world, including the Reserve Bank of India. Fifth, our focus in the last 6 years has been to capitalize as much as possible on harnessing the benefits of new technology. We set up the RBI Innovation Hub in Bengaluru. We have a continuing regulatory sandbox where many innovative ideas and thoughts have come, and we have always tried to take them forward. We have given our approval to many of the innovative ideas and thoughts and the projects which came in the regulatory sandbox. CBDC is again another area where RBI, among the central banks, is a pioneer. There are very few countries which have, almost every central bank is dealing with, they're talking about, or they're experimenting, or they're discussing about CBDC, but actual launching of a pilot project has been done by very few. And as I see it, CBDC has a huge potential in the coming years, in the future. In fact, it is the future of currency. Similarly, the Unified Lending Interface, ULI, it is a true game changer. And I'm sure its benefits will get harnessed fully in the near future. And there will be a national level, nationwide rollout. And finally, sixth, financial inclusion. We have given a lot of attention. It's again a continuing responsibility. It's a continuing task. You cannot reach a stage of finality in that. The tasks and the works will have to continue. Under UPI, UPI, the unified, the UPI, we have launched many new innovative products under the overarching umbrella of the UPI, and they are producing excellent results. The UPI today has emerged as a global pioneer and as a global leader in payment systems. And ULI, about which I just mentioned, it will be transformational. It will, I think, play a very transformational role in credit delivery to the bottom of the pyramid. The ease of access, the speed, and the simplicity of procedure are the unique characteristics of ULI, and that I would, sitting outside, I would look forward for a nationwide rollout, and I have absolutely no doubt in my mind that the Reserve Bank, with the cooperation of all central government departments and agencies, with the cooperation of the state governments, will do a nationwide rollout. And finally, I would like to take this opportunity to convey my best wishes to the incoming governor, Shri Sanjay Malhotra, a person with wide-ranging, a very wide experience, and I'm sure he will do his best. And from my side, all my best wishes to my successor for success as the 26th governor of the Reserve Bank. So I'll stop here. Thank you very much. And we'll take few questions. I don't want to make it a full-fledged press conference. And after that, we will adjourn for the high tea, and we will. So yes, Deepsika, please.
Deepshika from Economic Times. So when you move to RBI, the relationship between North Block and the Mint Street, as we call it, there were concerns about the divide between the two. As you sign off today, how do you see this relationship now, and what has been your experience in dealing with this relationship?
I would like to mention that I have tweeted about it today morning also. I think the coordination between the Finance Ministry and the Reserve Bank of India, I can't talk about the period prior to my coming to Reserve Bank. I'm talking about the 6 years that I have been here. The coordination between the Finance Ministry, the government on one side, and the Reserve Bank. I should not say one side and the other side, because ultimately everybody belongs to the, we are all working for the nation, for the economy. But the relationship between the government, in the Finance Ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination before COVID, during COVID, after COVID, the multiple challenges which we faced when the inflation spiked following the commencement of the war in Ukraine. The government undertook a lot of supply side measures which helped the Reserve Bank to also check inflation. The same level of coordination continues even as I am speaking to you. Thank you. Yes, Lata, please.
Governor Das, thank you very much for an excellent innings of 6 years in RBI and for all the cooperation you have given to us as interlocutors to the economy. My question is, markets tend to have a simplistic view. When anyone comes from the Finance Ministry, they will do the bidding of the government. They'll cut rates. Can you tell the markets what exactly is, the correct position? And secondly, if Mr. Malhotra were to ask you, what is the mantra? Give me one word, or one advice in this new chair that he will occupy. What will you tell him?
No, first thing is I cannot give any mantra to anyone. And what advice I will give to Sanjay Malhotra, should he ask me. And I'm sure there will be opportunity for interaction between Sanjay and me. But what advice I would give him, should he ask, I think you leave it to, that is something between him and I. So I don't want to talk about it. And the first part of the question is, people have their way of looking at things from outside. It's nothing unusual. But when you take a responsibility, any responsibility for that matter, one is what is expected of that responsibility. The equally important aspect is how do you see the impact of your responsibility, and you have to correlate with the outer world. Perspectives of Finance Ministry or the central bank can differ at times. It happens world over. But in my tenure, I think we have been able to resolve all such issues through internal discussions. I would like to state emphatically that when a governor comes, he looks at the wider economy. He looks at things, yes, definitely from the Reserve Bank's perspective and from the point of view of what is the mandate given to Reserve Bank and how he is going to fulfill that mandate. But while fulfilling that mandate, I can say with confidence and certainty in the past, present if I can say, till today evening and in the future, the governors keep in mind the requirement of the wider economy also. So it is your responsibility, it is your mandate given to you because you are occupying a particular position, plus the requirements of the wider economy. I think it's a synthesis of both, and eventually it's a judgment call which every governor takes. Thank you. Could you restrict the questions? I don't know where to. Yes, Mayur.
Governor, there's this idea about the Reserve Bank of India that it's there to provide forbearance to the government to prevent them from excesses in maybe spending or whatever. So, do you think this role of central bank has been strengthened now under this MPC framework and with this consultative approach to regulation?
Definitely, certainly, the consultative approach to regulation, the FIT framework, and I think the Bibal Jalan committee, which was actually jointly set up by the government it was the selection of members was jointly done by the government, the finance ministry and the Reserve Bank. It was constituted immediately after I took over in the Reserve Bank. I think many things have got institutionalized, and as the economy grows, the economy is also getting formalized. A lot of informal sector activities today, and rightly so, are getting formalized. Similarly, institution building and aspects of institutions which were perhaps not formalized, they have got formalized. I mean, it's a process. I'm not finding fault with that. It was not formalized. I think, for example, the economic capital framework that has been formalized. The inflation targeting framework has also been formalized by an amendment to the law. So I think formalization of aspects of an institution is adding strength to our economy. Yeah, Ankur.
Governor, congratulations on your A+ inning, which has been not only been recognized by internal stakeholders but externally as well. My question to you is, what is that one thing which you would have thought is unfinished agenda of Mr. Das? And if I can ask one more, what has Mr. Das learned from RBI Governor during your tenure?
Okay, what is unfinished task? I mentioned about it. In the life of any institution, there will always be unfinished tasks. It's not like, today day starts here and it ends here, because there is always a next day. Tomorrow is another day. There's a next morning, there's a new sunrise. So it's a continuing process. So you cannot, in the life of any organization, and including a central bank, there will always be things. I don't call them as unfinished tasks, but I always, because unfinished means, as if everything has to be done within a limited period of time. But I think I would like to call them as works in progress. In any institution, there are always works in progress. And second question you ask is? Okay, I think that question, let's leave it for my memoirs. Should I ever write one? Yes. Yeah, please. That's anyone. Okay, I'll come to you.
Sir, what is your plan now? So will you be interested in coming back to public office after RBI in any capacity?
I think let me first, demit office, then I will think about it. Let me enjoy a few, there's no specific plan as of now. And I'll think about it. I'll think about it. Yes, please. Here.
So I'm Falaknaz Sayyed from Deccan Chronicle newspaper. What would you like to say to your critics, who will say that as you demit office, growth has been sacrificed, monetary policy has remained too tight, and inflation still remains beyond the central bank's mandate?
You see, yes. Please complete, yeah.
And second question is, on a scale of 1 to 10, how would you rate yourself?
Well, rating is for you to do, and I can't reply. But on the first question, I am constrained by the fact that we are still in the silent period after the monetary policy. That was on the 6th. Even if I demit office, I am still bound by the silent period, because that is embedded in the law, in the regulations. So I cannot comment on that much. But having said that, I will just like to mention a couple of sentences. People are entitled to their views outside. Even within the Reserve Bank, there are always multiple views, and within the MPC also there are differing views, which is quite normal. So everybody is entitled to their views. But as I look at it, I think growth is impacted by multiplicity of factors, not just one factor of the repo rate. Growth, high growth or slowing growth are impacted by multiplicity of factors. I think somebody mentioned that, looking at, it should not be looked at very simplistically. And monetary policy, our effort has been to follow and make the monetary policy as appropriate as possible keeping in mind the prevailing conditions and more importantly, the overall outlook, what lies ahead. Beyond that, assessment of our monetary policy is for others to make. But I think within Reserve Bank, we are, and within the MPC and within the Reserve Bank, I think we are convinced that what we have done was the best option available and was the best under the circumstances. Beyond that, I cannot and I should not, because I am bound by the silent period of the monetary policy framework requirements. Now there are too many questions, but I think we need to wrap up.
So this is your last, so key ones are
Okay, please there behind. No, I have no problem, but your viewers will all get bored. So.
No, sir, not with you, certainly. So my question is on the banking side. You're possibly one of the few RBI governors to see a lot of bank failures in your tenure. When you came in, we had the ILFS crisis at its peak. People were calling it India's Lehman moment and things like that. You thankfully ensured by keeping liquidity high, etc., that it's not India's Lehman moment. We also had Yes Bank crisis. There was PMC, Lakshmi Vilas Bank, and so on. Each of these banks, you've come up with a new solution to take care of the problem. None of the two are similar. But if in 2024 we are to look back and see if any of this could have been tackled differently, what would it be for you? Or even in the larger scheme of things, if you were given a moment to tackle or look at things in a different way, come up with a different solution, would you want to touch upon any of it, sir?
You see, first our endeavor was not to sort of failure of. In fact, I should say, I should not use the word failure, but crisis or stress in any financial. Incidentally, ILFS had happened, a few months before I joined in the Reserve Bank. But the challenges in the various banking and non-banking institutions which you mentioned, our effort was always to see that public money, taxpayers' money, is not burdened. Public sector banks are not asked to, not to merge an institution with a public sector bank. We did follow that approach in the case of the Yes Bank, but the contribution made by the banks, led by the State Bank of India, were limited. And it was a kind of a bank-led resolution. So we tried to deal with each situation. You cannot have a standard template of dealing with such stress situations, because the problems in every incidence of bank stress or NBFC stress, the problems vary. So each issue, each entity, you have to deal with it differently depending on the circumstances prevailing there. But every such challenge that we have faced is also a learning experience. And what we learned from that and what we have done is to deepen our supervision. I think the supervision vertical of the Reserve Bank, the supervisory methods and systems of the Reserve Bank have been really, really improved. And I have talked about it at length earlier. The deputy governors also have been talking about it. Today, RBI is, if I can say with confidence, and I think it is something about which all my colleagues and I, we feel very happy about and draw a lot of satisfaction. I think today RBI's supervision is much sharper, than what it was earlier. Our effort is always to identify a potential problem, not allow it to become bigger, and to deal with it, to nip it in the bud, to deal with it in advance in a proactive manner. I think in a monetary policy statement, I had used the phrase saying that we do not wait for the house to catch fire. So I think that is the lesson which we have learned from these experiences. Yes, please.
सर आपके टेन्योर में हमने बहुत सारी चीज़ें देखी. यूएलआई के बारे में आपने बताया कि आप आप देखना चाहेंगे कब नेशन वाइड रोल आउट होगा. यूपीआई की ग्रोथ देखी, सीबीडीसी देखा. सर एक ऐसी अचीवमेंट जो आप अपने साथ रखेंगे ये सोचते हुए कि मैंने ये बदलाव लेकर आया, या मेरी टीम ने आरबीआई में ये एक बहुत बड़ा बदलाव इंडियन इकोनॉमी को दिया, सिटीजन्स को दिया, वो एक चीज़ आप किसको पिन पॉइंट करेंगे?
बहुत डिफिकल्ट है, मुश्किल है कहना, क्योंकि बहुत सारे काम हम लोगों ने किया है और कोई भी चीज़ मतलब इंडिविजुअल एफर्ट से होता नहीं. जो भी हुआ है वो सब टीम वर्क का रिजल्ट है. इट्स ऑलवेज अ टीम वर्क. और ऐसा कहना मुश्किल है विच इज़ द मतलब कौन सा ऐसा चीज़ है जो कि सबसे मतलब इम्पोर्टेंट है, क्योंकि और भी इश्यूज है तो वो कहना बहुत मुश्किल है. और लेकिन कई सारे इश्यूज है एंड we internally we have been discussing about this issue which you are saying. So सबसे ज़्यादा कौन सा महत्वपूर्ण काम है. एक इंस्टीट्यूशन, एक सेंट्रल बैंक के लाइफ में ऐसे बहुत सारे मोमेंट्स आते हैं और बहुत सारे डिसीजंस लिए जाते हैं. आप 1930 ये 90th ईयर ऑफ रिजर्व बैंक, आप 1935 से अभी तक देखिए, अगर आप एनालाइज करेंगे रिजर्व बैंक कैसा इवॉल्व किया है तो कई सारे लैंडमार्क डिसीजंस कई सारे लिए गए हैं. और ये डिसीजन ज़्यादा इम्पोर्टेंट था या ये ज़्यादा इम्पोर्टेंट था कहना बहुत मुश्किल है. इनफैक्ट उस टाइप का एनालिसिस भी हम लोगों को करना नहीं चाहिए, क्योंकि इट्स ए कॉन्स्टेंटली डायनामिक वर्ल्ड. चीज़ें स्थिति बदलते रहते हैं. आई थिंक वी हैव टू पुट अ फाइनल. यस प्लीज हियर.
Thank you, Governor. This is Gopika from Mint. We have a new MPC with your departure. Do you think there needs to be some sort of continuity in the whole MPC framework, MPC functioning, now that we have completely new team of MPC members? And my second question is, also under your tenure, we've seen that RBI taking business restrictions, the cease and desist orders against banks and NBFCs. Do you think this has been institutionalized within RBI? This is the mechanism of putting in these business restrictions, or was it something that you took that step to give orders and for these actions?
It's always a collective decision within the Reserve Bank, and in the last monetary policy MPC meeting statement, also in the MPC statement, I have talked about the same thing. Putting business restriction is always the last resort. We always try to avoid such a situation. We engage with the individual banks or NBFCs for months together. In fact, in one or two cases, it goes even beyond 1 year. And there are quite a few, not many, but there are quite a few institutions which have not come to the public light. But through the process of direct interaction, we have been able to resolve the problems, and the concerned institutions, they responded very quickly. We don't like to unnecessarily prolong those restrictions. Recently, 4 MF microfinance lenders, we put restrictions, and we have withdrawn the restriction in one of them in less than 2 months. That's because we saw immediate compliance and very quick steps were taken. So therefore, we don't like to sort of unnecessarily prolong it. We adopt this restriction as a last resort after months of engagement, when we don't see the desired results. It's the last resort, and we always, our effort is to, even after putting the restriction, our focus is on directly continuing the interaction with the institution, helping them out and facilitating quick implementation or quick resolution corrective steps. And as soon as we see the compliances are visible or almost full, the compliances are visible or completed or near, almost completed, we remove the restrictions. Yes, please. Sorry, MPC? No, MPC is an institution. It will continue. I mean that the new members have already participated in 2 meetings. And there is the internal MPC, the Monetary Policy Department of the Reserve Bank, which does all the research and makes presentations. So I don't think it should be an issue at all.
Governor Vishwanath here from NDTV Profit. 2-part of firstly, taking away from Gopika's question, fintech companies in private believe that the RBI is way too tough on them. Would you want to give...
RBI is?
Way too tough on them when it comes to compliance and regulation. So anything on that? And second part, you talked about a lot of the teamwork and the legacy of the RBI and all of that. After the 6 years, is there anything you want to change at the RBI?
It's a continuing institution. There is always room for improvement. That will be my answer to the second question. And the first question you said was fintechs. No, well, I would beg to disagree. In fact, in one of the monetary policy statements or in one of my speeches, I have talked about how many meetings we have held with the fintech companies, either in groups or individually. Now a particular day in the month is dedicated, specifically earmarked for fintech companies and innovators to come to RBI and have face-to-face interaction. There is a separate fintech department. And in fact, the feedback that I have got, not because I am governor and they tell me, because in private, when people come to meet me, either in a small group or individually one company, or when they come and meet me, I always encourage them in those meetings to be absolutely and brutally frank and to share their concerns. My sense is that I think almost all of them are very satisfied with RBI. Those who had some concerns or those who thought RBI was acting very tough, when they interact with us and when we explain to them the background of our action or the background of our stance, my experience and our experience in the RBI is that I think almost all of them appreciate why the RBI is doing certain things. And we have tried to improve our communication also to explain the rationale as to why we are doing certain things. Yes, there. I think this is going too far. I think I'll take another 3-4 questions and we must conclude. Yeah, there, yeah.
Morning, sir. Ashok from the Hindu. In the last 6 years, various approaches to controlling inflation have been spoken about. Apart from the inflation targeting framework, and criticisms about the framework have also come about. In your governorship, have you gotten chance to look at different approaches to deal with inflation, apart from just flexible inflation targeting framework?
You see, flexible inflation targeting framework is embedded in the law. It's there in the Reserve Bank of India Act. So, and different approaches to monetary, to inflation control. Supply side measures government has been taking. We have been interacting with the government. From the monetary policy side, whatever action is required, the Reserve Bank has been taking. Ultimately, the result will be an outcome of the supply side measures, the government side measures, as well as the monetary policy measures, the monetary measures taken by the Reserve Bank. So it is a synthesis, the outcome is a synthesis of both. Beyond that, approach will depend on the prevalent situation and the outlook. You cannot really define. And I would like to say that there is nothing like, it's media or the analysts, they term certain things as hawkish, dovish and all that, names of various birds are used. In fact, I think my predecessor had used the word owl, saying that, Reserve Bank, the MPC keeps its eyes always open. But I think these are, nice ways of describing. As far as I understand, I think the effort of all central banks, and very much in the Reserve Bank, is to take the most appropriate measure in the interest of the economy. So that is the overarching approach. I think this is now going too much, I think we'll have to call a halt. Puneet, you have to take charge. So I think some of the questions we can deal with it during the high tea. So if there is any compelling question, you please come forward, otherwise we can deal with it. Yes.
Mr. Brijesh, he's sitting towards the end.
Okay, right.
Brijesh, you can have
We have to end now. I think we have really overshot.
Brijesh, here. Thank you, sir. एक सर आपने बहुत अच्छी चीज़ की थी जो ट्रांसपेरेंसी के लिए कि आपने आरबीआई बोर्ड मीटिंग के मिनट्स पब्लिक करने शुरू किए थे. उससे बहुत सी चीज़ें देखने और समझने का मौका मिलता था. लेकिन सर एक सवाल जो मैंने आपसे पहले भी पूछा था, फिर से एक बार पूछ रहा हूँ कि जिन कंपनियों के खिलाफ आप एक्शन लेते हैं, रेगुलेटेड एंटिटीज़ के खिलाफ, आप पब्लिक नहीं करते हैं. तो कई बार ऐसा होता है कि उन जानकारियों का चूँकि इंटरनली कहीं ना कहीं होती हैं, उनका मिसयूज़ होता रहा है. तो ये फैसला ऐसा इस पर क्यों स्टिक रहे कि आपने उन चीज़ों को जो भी रीजन ऑर्डर होते हैं वो आप पब्लिक नहीं करते हैं? आपने पब्लिक नहीं किया?
नहीं, हम लोग अभी आपने देखा होगा पिछले कई महीनों में हम जो प्रेस नोट इशू करते हैं, जो प्रेस रिलीज इशू करते हैं, उसमें बहुत विस्तृत रूप में हम एक्सप्लेन करते हैं कि क्यों एक्शन लिया गया है. और बाकी जो आप कह रहे हैं कि ऑर्डर क्यों नहीं रिलीज कर रहे हैं, ये स्ट्रिक्टली बिटवीन द रेगुलेटर, सुपरवाइजर एंड द एंटिटी. सो और उसमें कोई भी अगर मटेरियल चीज ऐसा है, देन जो बैंक है या एनबीएफसी है उनके ऊपर निर्भर करता है. अगर वो लिस्टेड कंपनी है तो उनको सेबी के गाइडलाइन के अनुसार उनको स्टॉक एक्सचेंजेस को इन्फॉर्म करना होता है. बाकी जो है प्रोसेस ऑफ इंटरैक्शन, इट इज ए कंटिन्यूइंग इंटरैक्शन. लेकिन हमारा कोशिश अभी पिछले कई महीनों में, उससे पहले भी हमने शुरू किया था कि विस्तृत रूप में हम कारण बताते हैं क्यों एक्शन लिया गया है.
Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The funniest story I remember is once when Gukesh had a very, very disappointing result during the Olympiad. I went to cheer him up a little bit. So I went to his room expecting to find him slightly distraught. And within 10 minutes, he was trying to cheer me up. He said, why don't we go and play some table tennis? So, I think you're quite affected by this game, sir, and so on. I thought that showed his composure as well.
What did you, if you don't mind, can you share what was the conversation like? What did you tell each other?
Well, I have had really disappointing results, obviously, at some point or the other. And it's taken me a while to get over them. I mean, and the full impact of what I've done hits me. And then, so I tried to go to his room and tell him he shouldn't just wave it away, but, acknowledge that it happened and then try to feel better about it and so on. So I was trying to get him to talk about it. But in fact, his approach was different. He genuinely pushes the past aside and starts again. So after a few minutes, he got bored with me trying to discuss the matter with him, and he said, let's go do something else. And that's when we went off to play table tennis instead.
Our next category, the Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress. The award celebrates an individual whose work has changed the way we think, act and build for the future. And the winner for the Lifetime Achievement Award 2024 is
1966, one visionary set out to ensure that every child could enjoy a healthy childhood at an affordable price. This vision gave birth to the Serum Institute of India, a company that would go on to redefine vaccinations worldwide. Dr. Cyrus Poonawala's journey began with the launch of the first therapeutic anti-tetanus serum and grew into the world's largest vaccine manufacturer, producing over 1.3 billion doses. Today, Serum's vaccines reach 65% of the world's children. Through global collaborations and innovative vaccines like those for COVID-19, Dr.
Good afternoon, you're watching us here on Halftime Report. The markets, well, if you put the snooze button for a while and did not get up in time, you wouldn't have missed much, because the Nifty is just about 20 points lower from what it was at previous close. Very range-bound trade in today's trading session, moves towards the higher levels of closer to 24,650 thereabouts, and thereafter sees some sort of correction as it moves towards 24,700 and sees some purchase around 24,500 itself, 24,550. What's important is individual stocks. They're doing a lot better, even though we do have more stocks declining than the number of stocks which are advancing. The stocks which are gaining include the likes of Nippon Life. We have Strides Pharma, which is doing well. We have Nykaa, which is doing well. LTI, Mindtree, a bunch of them actually doing a lot better than what the index moves would have you believe. I'm Manglam Malu, with me Hormaz Patakia. Hi, good afternoon, Hormaz.
Good afternoon, Manglam. And just as you mentioned, right, the snooze mode continues on the index. 130-point range on the Nifty on Friday, 120 yesterday, it's 110 today, so you're narrowing it down by a 10-point gap every day. But there has been a slight cool-off from the highs of the day, indeed, as Manglam was mentioning, right? We tried getting to 24,700, we did the same yesterday. We have not managed to sustain at those levels, and now we're seeing a bit of a fall. But the big announcement that has come in over the last hour or so has been the AMFI data, and that's the mutual fund data for the month of November. And we'll get you some reactions on that. Sandeep Bagla, the CEO at Trust Mutual Fund, is joining in to discuss the data released. Sandeep, good afternoon. Thank you so much for waiting by and joining us today. I'd like to start off by asking you about the fact that there has been a dip month on month in the net equity inflows, right? There has been marginal dip in the large cap flows, but the broader market flows have remained largely consistent. What do you attribute this fall to? Is it that flurry of IPOs that we saw last month, and big ticket IPOs as well, right? For the likes of Hyundai, for Swiggy. Do you attribute that to, or is there some other reason as well as to why this number has been a reduction over a month on month basis?
So I would like to draw your attention that the numbers of net flows into mutual funds over the period have been close to 36,000 crores on a monthly basis for the last 5-6 months, as per your own visual. Only in the last month it had gone to 42,000 crores, and that was on back of exceptional flows into sectoral and thematic funds. And one or two NFOs in sectoral and thematic funds can easily get inflows of 3,000-4,000 crores nowadays. So most likely the reason was that there were lesser NFOs of sectoral and thematic funds. If we look at the flows into mid caps, small caps, or flexi caps, they are by and large intact, and they have actually grown a bit. I was also told that in November there were lesser number of working days, and that could also lead to some amount of slowdown in the flows. But if you remove the one-off item of, the NFOs for the thematic and sectoral funds, I think the flows have been quite steady, and they have been rising in certain categories like small cap funds and flexi cap funds, where the index performance has been far stronger than, the large cap oriented Nifty 50.
Right. So then a two-part question then. NFO flows have come off. Is that a trend you believe will continue? Because, thematic funds, etc., they've reached their peak. A lot of people are now believing that, it'll go back to steady terrain. That's part one of the question. The second part is with regards to SIPs. I mean, we have the SIP number close to 320 odd crores itself, which is great as a monthly number on an absolute basis. But month on month, that number too has been flat. If you could explain why that has happened.
So See, I think there were a lot of distractions in the month of November. I think there could be some, election-led issues. There could be festivals. So it could have been a slow month. But I expect the SIPs to gradually, increase over a period of time. There could be months where they could be flat or it could even come down. So I don't see any reason or anything to be read into this beyond the numbers which are just marginally lower, but they are flat actually. So I don't see any reason to read much into this. I think the numbers are fairly strong, and 25,000 crores to sustain 25,000 crores fresh inflows into SIP is not easy. So I think it's a fantastic number, and I think it is a great support for the equity markets as a whole.
So do you expect this number to go up? It also shows, right, that there is still more scope for penetration to increase, right? And once that happens, you expect the numbers to go up gradually as well, right?
I do. In fact, I think this is one of the mega trends that we are seeing, that people are, instead of investing more into gold, real estate and FDs, people are shifting money, taking more chances. We have seen the growth of earnings much, much higher in case of small caps and mid caps compared to the larger caps. And I think the Indian investor has understood that trend quite well. And while distributors and fund managers have been saying to be cautious, I think the money keeps on coming. And I think this will continue for a long period of time. I mean, not a few months. I think if you were to speculate that, what will this number be at the end of 5 years, I think will be substantially higher than the current numbers that we are seeing.
All right, we take that point. Let's welcome DP Singh, who's the Deputy MD and Joint CEO at SBI Mutual Fund, joining in as well for a quick word on this. These numbers, while they're strong on an absolute basis, they have seen some softness either month on month or flat moves sequentially, largely because of, the factors that were earlier mentioned as well. Lower number of NFOs, maybe lower number of working days, the festive season, some volatility in the markets as well. 25,000 crore SIP, where do you think this settles going forward? And NFOs, do you think, there is a bit of a pause for NFOs, at least the thematic funds, for the next couple of months? Can we expect that?
No, definitely. I think there will be a pause for NFOs, because whatever themes are working out or whatever the things are there, innovations are there, those have come into the market, and I am definitely agree with you that there will be pause on the NFOs. Of course, on the passive side, everybody would like to complete the bouquet. So whosoever is not having fund houses will complete the bouquet on the passive side as well, because there's no constraint on the capacity or something. One can have a fund starting with 10-20 crores also. So I think that trend will continue, that people will have some passive funds launches, but that will not attract too big a money. But those should not be very meaningful numbers per se.
All right, Sandeep, Mr. Singh, thank you so much for sparing time joining us this afternoon to decode these AMFI numbers. Steady, despite this one-off that we had seen in the month of October, but still steady on an average basis. But the flashes on your screen, if you can see, Religare Enterprises, where the Reserve Bank of India has allowed the Burman family to increase stake in the company, and that is an official statement that is coming in from the company. The stock trading 4% higher currently, and the statement also says that the Reserve Bank of India has granted them approval. Now both Burman and the Religare group will consolidate the structure, and that needs to be done by the 31st of March 2026 is what the statement from Religare currently mentions. So big news coming in there on the Religare front. The stock trading 4% slightly off the highs of the day, but the news developments finally emerging on that front as well. But time for a short break. But before we do that, it's time to introduce Growth Code, a special initiative by Grow and TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Rights Summit on the 9th of November, where they shared valuable insights. Here's a snippet of what ace investor Ramdev Agrawal, the chairman of the Motilal Oswal Group, had to say about the cost of not investing in the markets, and shares the valuable lessons he learned on his investment journey. Listen in.
One of the biggest mistakes which cost me a few percentage of my wealth was not being in the market. I didn't invest anything between 2003 to 2014, and we had the biggest bull run between 2003 to 2008. probably I would have lost 50%. My net worth would have been literally double of what it was in 2014. Say it was about 1,200 crores or something for the company. It would have been 2,500 crores or 3,000 crores. God knows. So once you miss in compounding, you miss the, one of the steps, then it hurts you through the life.
India's leadership in affordable public health solutions. CNBC TV18 India Business Leader Awards 2024 proudly presents the Lifetime Achievement Award to Dr. Cyrus Poonawalla.
Well, many congratulations to Dr. Cyrus Poonawalla and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawalla, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawalla.
Honorable Srinath, my friend Piyush, and our Chief Minister, Mr. Fadnavis. I first of all like to acknowledge with thanks the jury for having selected me for this coveted honor, and also CNBC for supporting such a great honor to me, though I have received many honors as you've seen in the past, but to me this honor is equally important, if not more important. I won't take a lot of your time, but there was one important aspect which I think the audience, some of them know but most don't know, that right from the beginning when I started Serum Institute with a capital of 5 lakhs, of which half was borrowed, and it helped me to grow a vaccine company, which is today, of course, the world's largest vaccine company, in spite, and that's what I want to emphasize, that I've supplied most of the vaccines, if not all, at half or quarter of the market ruling price, in which hundreds of millions of dollars of profits were sacrificed, and I continue to do it at a... And when I was asked about it in the press, I said, apart from my staff who have supported me in this sacrifice, the biggest loser is my son here, only son, because it's cost him at least $3 to $5 billion of cash profits, which we have lost in the process, and we continue to lose till at least in my lifetime. Thank you very much.
Well, thank you, Dr. Poonawalla, for your very, very noble cause. We're ever grateful, and congratulations again on receiving this award. Well, ladies and gentlemen, economic progress is built on a foundation of vision. It is built on a foundation of dedication as well as impact. The next award is a special recognition for outstanding contribution to the Indian economy, which recognizes an extraordinary force behind India's growth. This year, we celebrate IIT Madras for its unparalleled role in driving India's economic growth. Let's take a closer look at their achievements and the achievements of this year's remarkable winner.
IIT Madras, a cornerstone of India's technological revolution, has been shaping leaders since 1959. Known for its excellence in engineering, it has also fostered entrepreneurship, supporting over 233 startups that address real-world challenges. The Research Park, home to 200 startups, bridges academia and industry, driving innovation in AI, robotics and renewable energy. During the COVID-19 pandemic, IIT Madras played a key role in developing rapid testing kits and ventilators. CNBC TV18 India Business Leader Awards 2024 proudly presents the Special Recognition Outstanding Contribution to Indian Economy Award to IIT Madras.
Ladies and gentlemen, a round of applause for Professor Mahesh.
Welcome back. You're with us here on Halftime Report. On to corporate conversations. Then we are being joined by the management of Seagull India. Ramneet Sehgal, the MD and CEO, is joining us on the show now. Mr. Sehgal, good afternoon. Thank you so much for joining in. You know, I wanted to start off by asking you about how the third quarter has panned out so far for you in terms of order inflows, because the first half was a complete washout, right? So what are you expecting your order inflows to be in the second half of the year? And if you could give us a full year number as well.
First of all, thank you so much for having me over. So, you know, at the time of IPO, we have guided our investor that we'll plan at least 5,000 crore of the order book value. And we've been so lucky that we've already secured about 4,000 crore, in which 2,500 crores itself is two projects from Ayodhya. That's Northern and Southern Ayodhya bypass. And there's a 900 crore, 899 crores Odisha Bhubaneswar Metro, which is almost 11 kilometers of the viaduct, one of the longest viaduct metro in country. So then we got another 200 crore project, which LOA is still waited. And 150 crore was a Kanpur Central ISBT project. So as per what we guided, only 1,000 is the shortfall, and we still have 3 months and 20 days. So,
right, so in that case, what do you think you will end this year with in terms of order inflow, order book? And, you know, I remember during the IPO when we had this conversation, you did say that you always bid for contracts based on a targeted EBITDA margin itself. So what's your target for the second half of this year in terms of order inflow, execution, and what do you end this order book with this year and margins?
So we have already achieved what we said before in first 2 quarters. In fact, in first quarter, we received a bonus also of about 18 crores. And inflow, we already have got 4,000 crore projects. We've already quoted for 14,000 crore projects, and we intend to bid for another 15 to 20,000 crore in near future because we can see a lot of visibility. And, you know, as I said before, we don't have a pressure of getting the contracts. So our EBITDA margins, which we typically follow, is about 2-digit. And we always try to maintain that 2-digit EBITDA margin, which is about 14.5% to 15.5%. And the pure EBITDA, which comes from the EPC, is about 12.5% to 13.5%. And rest is the other income, which is royalty, bonus, or awards. I'm happy to announce, I mean, we've shared already with the BSEs, the exchanges, that we have won an arbitration award close to 54 crores last Friday. And the award has been in our favor, and that's with plus 12% interest till the time it is realized in our accounts.
Right, Mr. Sehgal, please stay on. We have more questions for you. We'll come back to you right after this short break. We continue our conversation with the management of Seagull India. Stay tuned.
Department of Applied Mechanics and Biomedical Engineering, Dean Emeritus, IIT Madras Head, Center of Excellence on Sports, Science and Analytics, and Professor Satyanarayana Chakravarti, Department of Aerospace Engineering, Head, National Center for Combustion Research and Development, and co-founder of several startups. Sir, if you could kindly say a few words.
Thank you so much. It's great to be here. I think as the introduction went, I'm here standing in front of you as someone who has been participating as an academic in a number of startups, notably Agnikul, which many of you would have known has launched India's first semi-crew rocket out of Sriharikota. Plus, we have actually been doing lots of other things like E-plane or satellite company called Galaxy and Hyperloop, through Tutor Hyperloop and Avishkar Hyperloop. We're part of a larger ecosystem with many of the faculty members, about 100 of us, who are part of about 300 plus startups.
I want to thank the jury for selecting IIT Madras. Today's IIT Madras is not what many of us imagine. I want to borrow inspiration from a tagline, an old Tata Steel tagline. we also graduate the best engineers and scientists of the world today. We file the largest number of patents for any academic institutions. We hold the highest number of startups. Several technologies are being translated for the world's benefit. I want to make one last point here. I believe we are the first academic institution to be recognized at the IBLA Awards. I want to accept this very gracefully on behalf of all of academia, all of the IITs, and the wonderful work that everybody does today. We need to build a stronger relationship between the worlds of academia and industry. I wrote a piece some time ago that was titled Industry Talks Quarters and Academia Talks Semesters. But I think there is a way to bridge that. Let's make it happen. Thank you all.
Thank you so much, Professor Panchagnala and Professor Chakravarti. A huge round of applause, ladies and gentlemen, for IIT Madras. The next award celebrates someone who has consistently raised the bar in the world of entertainment, delivering performances that resonate deeply with audiences. The winner of this year's Entertainment Leader of the Year is the most versatile actor, striking a perfect balance between commercial success and meaningful storytelling. He has turned the narrative around for himself and continues to thrive. Let's shine a spotlight on this year's Entertainment Leader of the Year.
Rajkumar Rao won hearts and accolades this year for his inspiring portrayal of Srikanth Bolla, a visually impaired industrialist in the biopic Srikanth. The film, a sleeper hit, showcased Rao's versatility and ability to bring extraordinary stories to life. Following this, he starred in Stree 2, this year's blockbuster, and the highest-grossing Hindi film ever. Building on his iconic 2018 portrayal of Vicky, Rajkumar delivered a performance that struck a chord with the audience. From the resilient lawyer to the small-town dreamer, Rajkumar Rao continues to redefine excellence in Indian cinema with his power-packed and heartfelt performances. CNBC TV18 India Business Leader Awards 2024 proudly presents the Entertainment Leader of the Year award to Rajkumar Rao.
Ladies and gentlemen, a huge round of applause for the very talented, very versatile Rajkumar Rao.
Congratulations, Rajkumar Rao. From Stree to Srikanth Bolla, you've had quite the diverse range of roles. If you'd like to say a few words.
Good evening, everyone. Thank you, CNBC TV18. Thank you, jury. It's such an honor to receive.
Welcome back. You're watching us here on Halftime Report. We are still in conversation with Ramnik Sehgal, who's the MD and CEO of Sehgal India. He told that he'll bid for another 15-20,000 crore worth orders in the remainder of this year with 14.5 to 15.5% EBITDA margins. And order inflow target this year has been 4,000 crores as well. So let's talk about the other parts of the business. More importantly, the balance sheet as well. You had looked at repaying some of your debt with the funds that you got in the IPO. So what does your debt stand at right now? And what is your quarterly finance cost run rate likely to be? If you could give us a sense on that. And also, you know, the remainder of this year, what is the kind of order win that you expect? Even if you bid for 15 to 20,000 crore worth orders, given your execution run rate, given your hit ratio, what are the kind of orders that you expect to win?
So thank you once again for having me over. We have already won 4,000 crore. We have already quoted for more than 14,000 crore. And of course, we tend to bid for more, around 15 to 20,000 crore, more projects till 31st March. Our run rate has been almost, say, about 20%. So if I say 14,000 crore, we target to get at least 2,000 to 3,000 crore. But, you know, before that, what is there in a mind as a promoter and as a management thought process that we have to have our EBITDA margins intact. So which I discussed before, that we need to have a 2-digit EBITDA margin. That's more important, because the good thing about a company is geography-wise, we are spread in about 14 states. We have 11 verticals with us. If we don't get a good order in roadwork, doesn't matter, we'll get it in elevated. We don't get elevated, we get in railway. Not railway, then we have in airport. So we have 11 verticals. So winning an order and visibility of new projects is great in the near future. And if you talk about the projects which we have got, it like Ayodhya, we won 2 projects together, 2,500 crores.
Mr. Sehgal, the question that we were getting to was the fact that what does your current debt post the IPO stand? We get the fact that you're trying to win around 3,000 to 4,000 crore orders worth more, considering your 20% success ratio. What is the current debt on the books now post the IPO? And what is the current finance cost that you're running at, and the ratings that you have received from India Ratings right now? Do you expect this to get you better cost of funds going forward as well?
So good question. We have reduced 62% of our debt, close to 413 crores from our IPO proceeds. And this new rating, which is AA minus, of course, that will give a edge on our financing cost. And of course, the financing cost will be reduced. If you typically ask, we take only and only mobilization vans against our projects. Otherwise, we don't need any debt initially for any of the projects. And we invest money in our equity for our new HAM projects or existing HAM projects. We already have put about 230 odd crores in our equity in existing HAM projects. The first HAM project is already complete, which is AAA rated. And going forward, the visibility in cashing these projects by either selling it, we have a lot of opportunities in the market. So equity visibility is not a problem at all. And, debt raising is only against the mobilization advance against these new projects, which is, as I said, 62% we have already paid off from the proceeds of the IPO, about 413 crores.
So you've paid off 413 crores. What does it stand at right now?
It should be around 300 crores.
All right, we take that point. Thank you so much for joining in and giving us all those details. We wish you good luck, and we will touch base with you as and when we get more order updates and execution updates from you itself. Take a short break, but don't lose sight of the market. We have the Nifty at the low point of trade, so we'll talk about all things F&O on the other side of this quick break.
And especially in front of this August gathering, some of my favorite people are here. Thank you for recognizing my hard work. As you said, I always try and push my boundaries. I always try and explore challenging parts, and this year has been truly special with Shrikant and Stree too. So Shri and Stree, I think both have been very lucky for me. But thanks to you guys, nothing would have been possible without your support. Thank you, Geo Studios. Thank you, Mukesh sir, Neeta ma'am, for putting your faith in films like Stree and just to support our cinema. Thanks a lot. Thank you so much, guys. Have a good night.
A huge round of applause, ladies and gentlemen, once again for the very talented Rajkumar Rao.
The Sports Leaders of the Year award recognizes outstanding contributions that have put India on the global map. Now this year, we celebrate the Indian chess team as the sports leader for bringing immense pride to India, to the nation, and inspiring a new generation of players across the country. A big round of applause for our chess team here.
Indian chess has come of age, transforming into a global powerhouse that commands respect on the world stage. At the prestigious Chess Olympiad, both the men's and women's teams made history by claiming gold, a first for India. In the open competition, India triumphed among 195 nations, with D. Gukesh and Arjun Irgaisi shining bright with individual goals. On the women's side, India outplayed 181 countries, fueled by stellar performances from Divya Deshmukh and Vantika Agarwal, who also secured individual goals. A moment of pride, a testament to talent, teamwork and grit. This is Indian chess at its pinnacle. CNBC TV18 India Business Leader Awards 2024 proudly presents the Sports Leaders of the Year award to the Indian chess team.
Please put a huge round of applause for Abhijit Kunde, coach of the women's team and the non-playing captain, and Divyendu Barua, the head of delegation, to join us. Sir, we would like you to kindly say a few words.
Good evening, everyone. We are deeply honored to receive India Sports Leader Award today in this ceremony. It's a historic moment for chess that India won in both the categories, men and women. Chess Olympiad, first time in 95 years, where 180 plus countries were participating. I think it's very rare that such a dominance is displayed in any other sport in both the categories. We are proud that we brought back the crown to India, the birthplace of chess. Today is special that we have been honored among the gathering, I think with the tycoons from politics and business. And we are confident that with your support and guidance, India will lead the sports by 2036.
Well, amen to that. Thank you so much, and a big congratulations again to the team.
I would like to thank on behalf of Indian team. I think most of them are playing in tournaments, so they are not here. And chess fraternity, CNBC and juries, and everyone for supporting us.
Welcome back. The indices have moved towards the lowest end of today's trading session. 24,550 is something that we're looking at on the Nifty. The Nifty Bank also lower from the highs, led lower for the frontline index by Reliance, because the Nifty Bank hasn't seen a big dip. It is still outperforming in the sense that it's not fallen so much. The Nifty has been meandering between two levels. On the way up, it has been the 100-day moving average. On the way down, it's the 50-day moving average. So does it see support here or not will be the first thing that we'll be looking at after this dip from the highs itself. A broader range, if you're looking at the 24,700 call, has been extremely active for a premium upwards of 100 rupees, now at around 80 rupees, telling you around 24,500 is where, 24,800 rather is where the resistance is, and support coming in at around 24,500 itself. 24,500 to 24,800 is the broad range. In that as well, a lot of stocks are on our radar. Nykaa and Glenmark Pharma may see some fresh long positions being added, and that's exactly what we're witnessing here. And fresh shorts on LIC, the first month in F&O, and the company has released its monthly update, which is not as strong as some of its other peers, so as a result of which there's increased shorting activity out there. Just keeping an eye out on Metropolis as well. The open interest activity indicates it may enter F&O ban, so that's one thing that I'll be watching out for too.
An eye out on Metropolis, whether it enters or the F&O ban or not, but there is a slight cool off as well from the highs of the day. 24,550 is the level to watch on the downside for the Nifty. But time for a short break. More on the markets on the other side. Stay tuned.
This is a award from the industry, so I will just put some numbers to it because I think everyone was showing some numbers. So chess is played in more than 190 plus countries. On the ranking, we are world number 2 as far as the top 10 players average rating is concerned. We are world champion in men and women category in the team event, and Gukesh is playing in Singapore for the world championship.
Many
Thank
congratulations. Many congratulations. Thank you so much.
Welcome back. At the lowest point of the day now is the Nifty, and that is courtesy of fall that you are witnessing in Reliance Industries as well. If you could pull up both their intraday charts side by side, you would see that both of them have declined towards the lows of the day almost simultaneously. There you can see both Nifty and Reliance now at the lowest point of the day, 1% lower for Reliance Industries. The stock was seeing a bit of a recovery from the 52-week low that it had hit in November, but for now it is witnessing some bit of profit booking around that 1300 level, which analysts have also cited as a crucial one. 19 points to the downside is Reliance Industries. Bharti Airtel, HDFC Bank, Axis Bank, also some of the contributors to the downside. What's holding on though is Infosys and ICICI Bank. Those are the two that are batting for the bulls currently, but for now it is a very important level that the Nifty has to defend at 24,550, and Reliance Industries is pulling the Nifty lower as we speak. So important levels to watch, and important last couple of hours of the trading session coming up. With that, it's a wrap on this edition of Halftime Report from Mangalammi and the team that put this show together. Thank you so much for watching. Business Lunch takes the action forward.
जिस प्रकार से ये सरकार मोदी जी और मोदी जी की पूरे सरकार किस प्रकार से गौतम अडानी जी को बचाने के लिए ये पूरा प्रयास किया जा रहा है, ये सब सर्वविदित है। आखिर क्या दिक्कत है? जब गौतम अडानी जी के वकीलों ने कुछ पैरवी कर दी, वही पैरवी मंत्री जी कर देते, आके वही पैरवी प्रधानमंत्री जी कर देते तो मामला खत्म हो जाता है। हम पर आरोप लगता है कि हम सदन नहीं चलने दे रहे, और आज क्या हो रहा है?
56 इंच का सीना जो था देश प्रेम के लिए था या अदानी प्रेम के लिए था, इसका जवाब अब हम भी चाहते हैं। इन्वेस्टिगेशन हम भी चाहते हैं कि हजारों करोड़ों का जो घूस दिया गया है, जो यूएस कोर्ट ने इनको इंडाइट किया है, वो क्या ब्यूरोक्रेट्स को क्या था, या सबसे ये सरकार जो चल रही है, ये सारे एमपी जो चिल्लम चोट कर रहे हैं, उनको गया था।
The Brand Campaign of the Year award recognizes excellence in creativity and impact in marketing. And the Brand Campaign of the Year 2024 award goes to Ariel's Share the Load. Congratulations, and request Josie Paul, Chairperson and Chief Creative Officer, BBDO India, and Mukta Maheshwari, CMO, PNG India, to kindly join us on stage. And while we take a glance at this amazing campaign.
Equality begins at home, and for nearly a decade, Ariel's Share the Load campaign, conceptualized by team.
Market gives up gains as key indices trade near the day's low. Street digests a change of guard at the RBI amid slowing growth. Realty, IT are the bright spots, while utilities and capital goods are drags. Revenue Secretary Sanjay Malhotra is set to take charge as RBI Governor for a 3-year term from Shaktikanta Das, whose terms end today. The move assumes significance in the light of expectation of a rate cut at the next MPC meet and key pending regulations. Outgoing RBI Governor Shaktikanta Das sees a CBDC as the future of currency and hopes for an early national-wide rollout of ULI, even as he lists 6 unfulfilled tasks of RBI, with restoring inflation growth balance at the top of the heap. Equity inflows in mutual funds cool in November as new fund offers thin and investments into thematic funds crimp, but small and mid-cap funds see healthy flows and SIP numbers hold steady. Veteran investor and chairman of Motilal Oswal, Ramdev Agrawal, says he's rooting for blue chips that have taken a beating in the recent past. Blue chips have historically come roaring back after a fall, he argues. Hello, good afternoon. You've tuned into Business Lunch on CNBC TV18 and I'm Vinny Motiwala. The afternoon shaping up today is not that good because as of now, what you're looking at it in terms of the market trading at the day's lowest point. Look at it. Nifty 24,560-70 levels. That's what it's managing to hold on to. Slightly, just a few points up from the day's lowest point, but just around that mark. But look at it in the morning because it was trading in the green. And then we have seen that fall coming in the last 30 minutes or so, you could say. So we've seen a bit of a decline coming in for the markets today. As of now, Nifty down 0.2% in trade. Let's pull up what the broader markets are doing also, Nifty mid and the small cap, because they also have seen a decline coming in. Nifty mid cap is also down almost 0.1% in trade. Small cap also is similarly trading with some bit of a cut and trading on, okay, it was in the red, recovered, so it's seeing a slight bit of an up move. So small cap and the Nifty small cap, that's the one that's managing to hold on to some bit of a green. Nifty Bank, that also had slipped into the red of just a few minutes ago, now is trying to make a comeback. So outperformance today, or at least some bit of a better performance coming in from the Nifty Bank and the Nifty small cap side. Let's look at the top losers that are there on the Nifty 50 and what's dragging today in terms of the Nifty 50. We have Bharti Airtel, that's down and out. We have the heavyweight Reliance also, if you could just pull that up, because that's also down almost 1% in trade as well. Trent also down in trade. We have Adani Ports, that's also lagging in trade. So all these stocks are among the top drags that are coming in. Look at Reliance also, 0.9% of decline for all these stocks, at least a 9-10 to 1% decline that we're seeing. Now, where's the bright spot today that we're watching out for? We have capital market stocks that are buzzing in trade. So 361 WAM, we have Novama, Nippon India, that is managing to hold on to some bit of a green today in trade. And that is after we had a note that came in from Motilal Oswal this morning. But let's begin the show with the top story of the day today. And that is the Revenue Secretary Sanjay Malhotra will succeed Shaktikanta Das as the RBI Governor. 1990 batch IAS officer from Rajasthan, Sanjay Malhotra, also holds a computer science degree from IIT Kanpur and a master's degree in public policy from America's Princeton University. He will take over as the new RBI Governor on the 11th of December for a period of 3 years. And in the career spanning over 33 years, Sanjay Malhotra has worked across several sectors. It includes power, taxation, finance and IT, and has also been a part of the board of the State Bank of India. So that is an important update that's coming in. But we also had the outgoing RBI Governor, Shaktikanta Das, who addressed the media for one last time earlier today and spoke about some of the key challenges that lie ahead for his successor. Listen in.
Some issues, important issues ahead of us, not only for the Reserve Bank, but I think for the wider economy also, I would like to list out. First, so far as the Reserve Bank is concerned, I think restoring the inflation growth balance is the most important task ahead of the Reserve Bank. And I am sure the team RBI under the leadership of the new governor will take it forward.
Okay, but we had brokerages that also had a lot to say about the new appointment that's come in. Ritu is here to tell us more about that. Ritu?
Well, with the Reserve Bank of India gearing up for a leadership change after 6 years, as Sanjay Malhotra steps into the role of the governor, markets are weighing the impact of his appointment on the monetary policy and the economy. So Macquarie expects his tenure to focus on balancing growth concerns and stabilizing the rupee. They will closely watch his approach to the regulatory framework, which toughened significantly under Shaktikanta Das. Barclays sees a seamless transition, anticipating continuity when it comes to fiscal monetary coordination and a practical approach from Sanjay Malhotra. They foresee the NPC starting rate cuts from February and do not expect any radical policy shifts. Citi echoes the sentiment, predicting policy continuity in the near term. The focus will remain on balancing growth and inflation, and they also foresee a 25 basis point rate cut in February. Bank of America highlights the tricky period Malhotra is stepping into. They believe his recent silence on key economic issues leaves his policy stance unclear, but the probability of inter-meeting rate cuts has now diminished. Nomura says Malhotra's appointment as another finance ministry insider is going to be welcomed by the markets, and they predict a path for more urgent easing. MK adds that bankers view Malhotra as a straightforward communicator. His push for tech adoption in banking and recent taxation decisions signal a pragmatic approach. To sum up, all eyes are now going to be on the February MPC meeting to gauge the new governor's policy priorities. But for now, the street seems optimistic about continuity and continues to expect the...
Thank you so much for that, Ritu. But early on, we also spoke to KB Kamath, the chairman of Jio Financial Services. Let's listen in to what he had to say about the outgoing RBI Governor Shaktikanta Das and his expectations from the newly appointed RBI Governor as well. Listen in.
I would like to acknowledge all that Governor Das has done over many years, holding things steady right through COVID and the turmoil that we've seen in the last couple of years. I think Governor Malhotra brings a wealth of experience, and I will just put it in context. I think this is the first governor that we would have who would have had experience leading a financial institution, who has experience leading the Department of Financial Services, then leading the revenue function in the country. And I would expect the same sort of steady hand going ahead from the governor. So everybody looks at the longer picture. The longer picture is a growth story that I don't think we have ever experienced before.
Okay, let's move on. And on the sidelines of the Rising Rajasthan Summit, our colleague Rachna also caught up with Ajay Piramal, the chairman of Piramal Group, and quizzed him about the new RBI governor appointment and also the business outlook and stress in the finance system. Listen in.
I think the governor, Mr. Das, has done a tremendous job in his role as the governor. He was there for 6 years through some of the most challenging times, whether it was the pandemic, it was the crisis of the two wars in the world going on, as well as so much of he's improved the health of NBFCs and banks. And I'm sure that we are awaiting the new governor, Mr. Malhotra, has a stellar track record. He's worked across the different departments of the ministry, so his experience is good. And in my humble opinion, that those people who have worked with government, who understand the working of the government, understand finance, they make the best governors. So I'm very sure that we'll have a good stint ahead and just continue to grow and take India to the third largest economy in the world.
Right, so with Pyramid Enterprises being a very key player in the NBFC market, there's a stress in the retail lending that we're seeing. How do you plan to cope with this, and what is your outlook going forward?
So these are, every cycle in the credit, it goes through these, but I think we have enough risks, control measures and credit control measures. I think this will pass.
And now, as we slip into the break, let's introduce Growth Code, a special initiative by Crow and CNBC TV18, with the aim of empowering investors and traders. Prominent investor and professional traders gathered at Crow's Trading REIT Summit on November 9th to share their valuable insights and strategies. Here's what ace investor Ramdev Agarwal, chairman of Motilal Oswal Group, had to say about how many stocks an investor should hold in their portfolio for optimal diversification. Let's hear his thoughts.
For an individual investor, you should have as many stocks, as many you understand. If you have knowledge of 10, 15 stocks, have all of them. Or if you have the knowledge of only 5, 6 you don't know, you're fine with 5. As far as the statistical theory is concerned, after 15 it doesn't matter how many you have. Because all the benefit of diversification gets completed the moment you hit the 15 individual stocks. So, but then if you want to be very aggressive, if you are very young, you are very confident, you know the company, what you're buying, you know the price and value gap, you are pretty comfortable buying 5-6 stocks. I have 20% in 5 stocks.
has been leading the charge for change. From its inception, the campaign challenged societal norms, asking a simple yet powerful question: is laundry only a woman's job? In 2024, Ariel redefined this movement with its #HomeTeams edition. Through evocative storytelling, it urged families to work as a team, sharing responsibilities equally. By highlighting real-life scenarios, the campaign struck a chord with millions, inspiring conversations on gender equality and inclusivity. The impact: a wave of social media engagement, widespread participation in the #HomeTeams initiative, and a reinvigorated push for equitable homes. CNBC TV18 India Business Leader Awards 2024 proudly presents the Brand Campaign of the Year Award to Ariel's Share the Load #HomeTeams.
Ladies and gentlemen, please give a big round of applause to Josie and Mukta here from the Ariel team for this campaign. Many, many congratulations.
Congratulations to you. Would you like to share your thoughts on this?
It's a proud moment and an honor to accept the award for the Brand Campaign of the Year on behalf of Procter & Gamble for Ariel Share the Load. As part of building communication that drives superiority for a product, P&G brands try to communicate values like equality and inclusion, which are absolutely critical to drive conversations in our households so that we can redefine changes needed for society. Thank you so much. Awards like this support our unwavering commitment to build brand narratives that drive the change. A warm thank you to our long-term partners BBDO, who have helped us bring this commitment with their passionate storytelling to life. Brands at P&G, as they look at brand building narratives, do weave in addition to driving business growth, messaging that inspires our communities to have the conversation and inflect change. Thank you, CNBC. Thank you, jury, for putting up an amazing event and for the award. Thank you.
Thank you, Josie, Mukta and team, and congratulations again on winning this award. Well, it's now time for one of the most anticipated categories of the evening, the Young Turk of the Year Award. Now, this award celebrates startups that lead with innovation, agility, while also creating remarkable growth stories. And this year, the Young Turk of the Year Award goes to Noise. So I'd like to request Mr. Amit Khatri, the co-founder of the company, to join us here on stage. And while he does that, let's also take a moment to look back at his journey. Mr. Khatri.
In the fast-paced world of connected living, one brand is leading a silent revolution. Noise, India's top smartwatch brand, is powered by innovation and accessibility. Founded by Amit and Gaurav Khatri, Noise has consistently stayed ahead, pioneering smart eyewear and launching India's first smart rings. Even in a challenging 2024, when others struggled, Noise thrived, achieving a remarkable 19% growth rate and
Welcome back to Business Lunch on CNBC TV18. Let's move on and talk about the AMFI data that has come out an hour ago. Now, the mutual fund data for the month of November has been released, showing that there is some bit of a cool-off in equity inflows. What more are the details coming in from this data? Let's go across to Surbhi, who's standing by to give us all that update. Surbhi, good afternoon.
Hi there. Well, yes, the numbers are still strong, but month on month there is a dip. That's the first big headline. So we're talking about the net inflow now coming into equity mutual funds at just under 36,000 crores. Now compare this to about 42,000 crores nearly that we got in October. It's about a 16% dip. So what's caused the dip? Number one, the SIP number has been a bit stagnant month on month. It's still a very large number. The net inflow through the SIP route is about 25,320. It's a huge number, but like I said, it's flat compared to October. Then we've had fewer NFOs, new fund offerings. The frenzy has not been as much as what we've seen in the earlier part of the year. The net mop-up is just about 4,000 crores via NFOs, which is also why sectoral and thematic, that category's inflow is a little lower than what we have gotten used to seeing. So if you look at thematic funds, which is the bulk of where the MF industry has been picking up a lot of the newer money, the number is at about 7,650 crores. Contrast this with 12,000, 13,000, 14,000, which was being picked up by sectoral and thematic funds in the past several months. Not just this, there's actually a bit of a dip even in the hybrid fund category. Flows have come down. And what are the popular hybrid fund categories? Categories like Balanced Advantage Fund or the Multi-Asset Allocation Funds, the MAF category as it's called. Here as well, money is coming in, but month on month, November over October, there's a small dip in both of these categories. And in terms of arbitrage, those funds have actually seen a net outflow of around 1,500 crores. So that explains why the overall headline equity number is not as robust this time around as the October number. The other interesting facet is the debt category. The debt category has seen a net inflow of just about 12,900 crores, which is paltry compared to the large sums that we typically see moving in and out of this category. And that's because of the seasonality effect. Festive season, which means that there was more money into the market itself, in the banking channels, and lesser money being parked in liquid funds. That category has seen an outflow, which explains why overall debt as a category hasn't attracted too much of an inflow. The full inflow, the total assets under management for the industry, that number has swelled now to over 68 lakh crore rupees, 68.08 to be precise. So in short, the trends are looking very healthy. Equity flows are still coming in, and we must remember that while large caps have seen a bit of a dip on a month-on-month basis, small caps and mid caps, that's where equity investors are still willing to pile in their investments, and that trend remains intact. So not too bad, small dip, but numbers still looking healthy.
Okay, not too bad, small dip, but numbers still looking healthy. That's the word coming in from the AMFI data points. Thanks so much for that, Surbhi. But let's move on. Motilal Oswal has come out with their Wealth Creation Study 2024. To talk about the study, earlier we spoke to the market veteran Ramdev Agarwal and chairman and co-founder at Motilal Oswal Financial Services. Listen in to what he had to say.
Nifty, any Nifty inclusion is also blue chip.
Yes.
So first 50 is what our Nifty companies, And then on top of it, any company which has more than 20% average ROE for 10 years, very stringent not, I can tell you this.
Correct.
So we came across about 107 companies in total. Actually in Nifty, about 20 companies, 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips. You know, from the 300 rupees, see, in buying blue chips, the fun is that blue chips do come back to their old high. See, there is a consumer slowdown for sure. Okay, I mean I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow, and in that then your builders they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market shares. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit. 2-3 Adani companies are there in the list. They have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again massive competition coming from Zepto, Blinkit and Zomato.
Okay, on that note, we're going to take a short break. But after we return from the break, we'll get you the latest from Syria as the tensions continue to escalate.
Crore rupees in revenue. Its success attracted high-profile investors, including its first strategic partner, Bose Corporation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Young Turk of the Year Award to Noise.
A huge round of applause for Amit Khatri, the co-founder of Noise.
Let's make some noise for Noise.
It's a proud moment for all of us, our team, to have this award, and thank you CNBC and jury for selecting us. I spoke to few folks here, few people here. Most of them don't know Noise, which means we have to do a lot of work here. By the way, we are third largest in the world, just not in India. And we are the most downloaded app in health and fitness store. We have close to 20 million users and a lot more to come. So thank you so much, and it's a good motivation for all the noisemakers there in Vodafone. Thank you.
Once again, ladies and gentlemen, make some noise for Noise. It's time now to celebrate visionaries who dare to dream big. Our next category, the Young Turk Startup of the Year, recognizes startups that embody the entrepreneurial spirit, driving innovation and delivering exceptional impact. Let's delve into the incredible journey of this year's winner. Priyanka and Harshil Salot, the co-founders of the Sleep Company, may I request you to kindly join us on stage.
And a big round of applause to welcome them here as we look back at their journey.
In an industry stagnant for decades, one brand is redefining comfort and technology. Co-founded in 2019 by Priyanka and Harshil Salot, the Sleep Company was born from Priyanka's quest for better sleep, a need shared by millions. Since launching their smart grid mattress, the company has transformed over 2 lakh lives, delivering not just restful nights, but better living. With patented technology and relentless R&D, the Sleep Company is raising the bar on sleep innovation. The Salot's dream has found takers, supported by premier investors like Premji Invest, Alteria Capital and Fireside Ventures. The company has entered international markets and achieved a 500 crore rupee annual revenue run rate in just 4 years. CNBC TV18 India Business Leader Awards 2024 proudly presents the Young Turk Startup of the Year Award to the Sleep Company.
Priyanka and Harshal, do stay back and say a few words.
No, absolutely honored to be here and getting this award on behalf of the Sleep Company. At the Sleep Company, our mission has always been to revolutionize the way people sleep and sit, make world a more comfortable place. And we truly believe that, we're at the cusp of a huge consumer disruption where sleep is becoming an integral part of our health and well-being. Just taking a moment to, thank obviously our incredible teams, our investors, and our consumers who put in trust in us for their sleep. And to CNBC and the jury, thank you so much for honoring this vision. I think last but not the least, thank you to our amazing families for their support. And our biggest cheerleader, our 8-year-old son Ayan, who's there. And he's the reason why this all started. So thank you so much, and thank you everyone.
Thank you so much, Priyanka. Many congratulations. A big round of applause for the Sleep Company. Thank you so much. Our next category is the Breakout Brand of the Year, honoring a brand that has reshaped its industry with creativity, innovation, and impact. Requesting Meenu Margaret, founder and CEO of Bliss Club, to join us on stage. Let's uncover.
Welcome back to Business Lunch on CNBC TV18. But quick look at what the market is doing. Almost near the day's US point even as of now. Not much of a recovery that we're seeing coming in. It's fallen 124 points at today when you look at it from the day's highest point, 0.5% down from the day's high. We have a lot of stocks that are in focus as well. Look at something like MapMy India. Yesterday was buzzing. Today it's down 5%. We have CEAT. That's also under pressure. But some bright spots coming in for Raymond as well as Varroc Engineering. Those are seeing very good up moves today in trade. Raymond is up 10% as well as Varroc Engineering also up 10% in trade. But that's how we're looking at the market, almost near the day's lowest point even as of now. With that, it's a goodbye from myself as well as the team who put this show together. Thank you so much for tuning into Business Lunch. Don't go anywhere. You have Midcap Radar up next.
This year's winner, Bliss Club.
In the world of activewear, one brand is redefining the game. Bliss Club. Founded by Meenu Margaret, a chartered accountant turned entrepreneur. Bliss Club's mission is simple. An activewear that's not designed just for an hour at the gym, but for the entire day, blending comfort, style and innovation seamlessly. In just 3 years, Bliss Club has become a leader in women's activewear, with over 65% of its sales from its website and a growing presence on Myntra, Amazon and in 12 retail stores across India. With an ARR of 100 crore rupees and an impressive 80% growth rate in just 3 years, it's won the trust of customers and top investors alike. CNBC TV18 India Business Leader Awards 2024 proudly presents the Breakout Brand of the Year Award to Bliss Club.
Congratulations to Team Bliss Club and to Meenu here. Meenu, you're the Breakout Brand of the Year. Tell us what you aspire to do next now that you've unlocked this milestone.
No, this is a super exciting time for us. Exactly 4 years back, Bliss Club launched from a 2 BHK apartment in Bangalore. We launched with a single pair of black leggings, which we call the ultimate leggings. I don't come from an apparel background, and everyone from the background said, you can't launch an apparel brand, with a single SKU. You need to launch a collection. But in my head, I just thought that if I can just make that one product that's really amazing, which I can call the ultimate leggings, there'll be a lot of women who want to buy it. And that's exactly what we did, and we continue to invest a lot in building insanely amazing products. That's something we want to continue doing. We also want to continue breaking the norms and challenging the industry. And it's been an incredible 4 years. From there, I wanted to thank everyone who's been part of our journeys, our investors, 8 Roads and Elevation, our vendors who've helped us make some incredible products, my family who's here, my husband who's been an incredible emotional support, my sister who's an orthodontist who shut her clinic to help me start Bliss Club during COVID, my parents who brought up 2 women who they said can conquer the world. I have a 6-month-old. I hope I can get her to conquer the world at some time as well. And our, customers who we call Bliss Queens, who really are the heart and soul of everything we do at Bliss Club. But last but not the least, my incredible team. We are 150 of us back in Bangalore as well as in all our stores in India. I have Saket and Nagaraj here with me, and everyone back home. It's been an amazing 4 years to build a 100+ crore brand in a category which is women's activewear, which they say is niche. So we have some very large incumbents in this category, and we hope to build something truly differentiated. Hope to see a lot of women building brands in India.
And more power to you and your tribe, Meenu, and may this tribe continue to grow. Many congratulations again on winning this award.
Up next, the outstanding contribution to climate consciousness recognizes individuals or organizations driving impactful, scalable solutions for sustainability. From water conservation to waste management, energy transition to carbon capture, this award honors efforts that address environmental challenges at scale. Requesting Utkarsh Singh, co-founder and CEO of Batex Energies, to join us on stage to accept the award, and let's learn more about this year's winner.
Batex Energies has recycled 220 million lithium-ion batteries, extracting essential metals like lithium, cobalt and nickel to reintegrate into the supply chain. As India's largest battery recycler, it has processed over 2,500 metric tons of batteries, redefining sustainability.
Welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer. Fall from the highs is what we are seeing right now. Nifty is down 64 points. Midcaps also not participating. They have been outperformers. Bank Nifty absolutely flat, but there is some negative bias there. And markets have been giving up gains from the highs. So a lot to track here.
That's right. You're taking cues from the slightly subdued US markets. Yeah. The only index in the green, and which is not at the top of the screen, is actually the small cap index. So some amount of outperformance as far as the broader end of the markets are concerned. But we have quite a lot lined up on the show. Let's start off with the top headlines. Market gives up gains as key indices trade at the day's lowest point. Street digests a change of guard at the RBI amid slowing growth. Realty and IT are bright spots, while oil, along with auto, are key drags. Mid-caps lag.
Religare surges following after the RBI approves Bourbon family's open offer plan to acquire an additional 26% stake in the company. The stock is higher in trade.
Syngene gains in trade after 82.2 lakh shares change hands in a block deal. Sources tell CNBC TV18 Biocon is the likely seller in this particular block deal.
ICICI Prudential and Max Life report good growth in November premium on favourable base, while LIC, SBI Life and HDFC Life report weak growth on a favourable base.
Glenmark Pharma perks up in trade on positive clinical trial results of its cancer drug for patients with heavily pretreated multiple myeloma. Stock up over 1.5%.
Okay, all right, those are the top headlines, but it's a lot about individual names today. Though the broader market index is not doing so well, there are a lot of moving parts in the markets. We did see that flows in mid caps and small caps in the mutual fund industry have improved, and there is a slight improvement from the lows in the markets as well right now. So the Nifty is down 50 points. The small cap index has seen a tick up as well. So has Nifty. But as I said earlier, it's a lot about stock specific action today.
Lot about stock specific action. One particular stock in just the last 15-20 minutes of trade that moves to the highest point of the day is Manappuram Finance, almost 3% higher, right now trading near the highest point. But for a whole host of other stocks, Hormaz is standing by the wall. He's going to take us to the mid caps that are moving around in the session.
The screen does not always paint a picture of what exactly is happening, right? You may see that the markets are almost in snooze mode, but then there is plenty of action that is happening in specific stocks. And there you can see the mid-cap gainers in today's session. ITI up for the third day in a row. Of course, barely any float in the market. Raymond is up almost 11.5%, the top gainer in the broader markets. Then Phoenix Mills, Nykaa also nearing the highest points of the day. But what is actually having a field day as a segment, though, are the asset management companies. And most of them are trading at their respective 52-week high. highs, be it the likes of Nuvama, be it the likes of the Nippon India AMC. All of them are trading with healthy gains in today's session at the highs of the day. And Nippon Life AMC also got a positive view from Motilal Oswal with a 900 rupee target, and it's showing up in the reaction here as well. Select metal stocks are doing well. Not a very major reaction to all the announcements that were made from China. Of course, they recovered from the lows yesterday, but not a major reaction today apart from a select few like JSPL, Godavari Power, Lloyds Metals. That stock continues to do well though. Stocks on the back of strong volumes will come up on your screen now, and the likes of Varroc Engineering is up 10.5%. Clean Science is sprung up on this list, and Vinati Organics too at the high of the day with almost a 4% surge on very strong volumes. And lastly, some of the high flyers in recent times are witnessing some profit booking. The CEAT is down, was up almost 10-11% yesterday. HEG, Kalyan Jewelers has been an outperformer. They are seeing some bit of profit booking in today's session. Back to you guys.
All right. Thank you so much for that list, Hormaz. Interesting names there. But now, as we slip into a break, it's time to introduce Growth Code, a special initiative by Grow and TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading REIT Summit on November 9th, where they shared valuable strategies. Here's a snippet of what ace investor Ramdev Agrawal, chairman of the Motilal Oswal Group, had to say about the cost of not investing markets, and shares the valuable lessons he learned on his investment journey.
One of the biggest mistakes which cost me a few percentage of my wealth was not being in the market. I didn't invest anything between 2003 to 2014, and we had the biggest bull run between 2003 to 2008. Probably I would have lost 50%. My net worth would have been literally double of what it was in 2014. Say it was about 1,200 crores or something for the company. It would have been 2,500 crores or 3,000 crores. God knows. So once you miss in compounding, you miss the, one of the steps, then it hurts you through the life.
Recycling. Batex is developing 100% off-grid solar EV chargers for companies like MG Motors. Advancing clean energy innovation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Outstanding Contribution to Climate Consciousness Award to Batex Energies.
Ladies and gentlemen, a huge round of applause for Utkarsh and Batex Energies team.
Utkarsh, congratulations.
We would love to hear about your story and your accomplishments.
This award is dedicated to the entire team of Batex Energies, who are dedicated in creating a circular supply chain of these critical materials. We all are talking about electric mobility, but it is not possible if lithium, cobalt and nickel is not there. The only way India can create our own materials is if we start recycling them. And this also contributes to Atmanirbhar Bharat and circular economy. So we are going to keep going ahead with our vision and saving the environment. I would like to thank CNBC and Standard Chartered for giving us this recognition. And thank you to our families. Thank you to my wonderful co-founder Vikrant, and to all our mentors, our investors, our teachers who have got us here to date. Thank you. Thanks
and
a lot.
we wish you all the very best with that, Utkarsh. A big round of applause again, ladies and gentlemen.
We recognize a company that has rewritten the rules of its industries, creating new opportunities while challenging traditional players. The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now this year, the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on stage. And while Albinder reaches the stage, let's take a glimpse into the Blinkit story.
In a world where the Indian consumer craves convenience, one company has redefined shopping. They've made it possible to shop from the comfort of your couch and get deliveries in record time. What began as a mission to deliver groceries in 10 minutes has expanded to include everything from furniture to electronics, covering 26 cities with 639 dark stores. With a 40% market share and a 93% jump in gross order value to 12,469 crore rupees in financial year 24. This brand has revolutionized the shopping experience, more than doubling revenues to 2,301 crore rupees. CNBC TV18 India Business Leader Awards 2024 proudly presents the Disruptor of the Year award to Blinkit.
Congratulations to Team Blinkit. Albinder, before you go, in under 10 minutes, can you quickly take us through your journey?
Sorry, I'm struggling with a bit of cold, but see, I think customers are the ultimate disruptors. They're always unsatisfied. My journey in this over 11 years has gone from delivering in 24 hours to delivering in 90 minutes to now delivering in 10 minutes. But I would, I'm very grateful that we get to serve customers, especially, women, homemakers who really value our service. And I think they understand more than anybody else the value and convenience of getting fast deliveries. And of course, it takes about 3 lakh people in our supply chain to make it happen, whether they are sellers, whether they are store owners, drivers, and thank you for recognizing their achievement.
Welcome back. It's time to talk about Styronic's performance now. Company's board has approved the acquisition of Ineos Styrolutions Thailand via step-down subsidiary. To discuss this and more, let's get in Mr. Rahul Agrawal, the MD of the company, joining us now. Mr. Agrawal, good afternoon. Thank you so much for joining in. Well, if you look at the consideration, it's around $20 million. So you're paying around 160 crore rupees for a company with revenues anywhere between 1,000 to 1,800 crore rupees. That's the financial performance for the last 3 years. On what basis did you reach this valuation? Is the company loss-making? What are the margins and bottom line for the acquired company?
Good afternoon, Sonal. Thank you for having me on the show. This acquisition is a strategically very important acquisition for us. There are a lot of opportunities which come as a result of this acquisition. We get access to additional ABS and SAN capacities in Thailand, which also gives us a lot of market access. They are a specialty ABS producer. There are not many specialty ABS production companies in the region. This is one of the few that we identified, and we were able to go through with this. In terms of technologies, also there are some very key technologies which are present and part of this deal. These technologies will enable us to, add more products in our existing portfolio, better service our automotive, household, and other appliance customers. And finally, in terms of a lot of synergies we will get across the group in terms of market access for products produced in India as well as products produced in Thailand. There has been some volatility, as you have rightly pointed out, in their performance, in terms of how they are placed. But we do intend, with the synergies that are present between Styronic's in India and the company in Thailand, that we would be able to generate significant value out of this deal.
Mr. Agrawal, thank you so much. You've explained the rationale of the deal quite well. In terms of numbers, like you mentioned, volatility over there. Last 3 years, when you're actually looking at the top line, there has been a degrowth over there. In terms of operational performance, can you help us with the operational numbers, the EBITDA numbers, the bottom line numbers? Is there a loss? And, when you're looking at this particular acquisition, it's come quite cheap for you. So what was, the reason why you got such a good asset, like you mentioned, at such a good rate?
So, Vivek, thanks for your question. Now, as you recollect, we had also acquired the business in India from Ineos. And when we had acquired this business about 2 years ago, prior to that also there was significant volatility in the business here, which if you look at our track record in the last 2 years, a lot of that volatility has ceased to exist. We believe that, Thailand will pose similar opportunities for us, and we will be able to use what we have done here, to improve the situation in Thailand as well. In terms of revenue numbers, as you know, in 20 and 21, these were during COVID period where there were significant supply chain disruptions globally, and the revenues were high across the board for a lot of chemicals and specialty chemical companies. And Thailand was no different from that context. I think on a normalized basis, we would look at performance which is better than what is currently there. However, that of course will be ironed out, as we get closer to closing. So now,
yes, Mr. Agrawal, we do get that point. It is not possible because there have been a lot of fluctuations in the industry as well. That is what we've seen in the chemical space. Just wanted to understand what is the bottom line and the operational. What are the margins that this particular company enjoyed? Let's put it that way, because that's not publicly available.
Yeah, so some of this information currently is governed by an NDA between us and INEOS. And we are at liberty to discuss a lot of the numbers, subsequent to closing. However, in terms of operationally, the EBITDA is neutral right now for the current year. And we do believe that there is a significant room for upward.
Is it a profit-making company that you have acquired?
Like I said, it's neutral. It's EBITDA neutral, so there is no profit or loss as of now.
Okay, on the bottom line as well.
Correct.
Okay, Mr. Agarwal, give us a sense. FY25, you're expecting, we understand, to close it in Q4 of FY25. So, number one, do the financials kick in as far as FY25 is concerned? What was the earlier guidance you were working with in terms of revenues, margin, as well as bottom line? With this coming in, directionally, could you give us some number, or what could be the incremental growth that you could see, both for FY25 as well as FY26?
So FY25, we had explained that we would be having a significant volume augmentation in our capacities in India. The revenues would fall in line with the volumes that we have. As you know, a lot of the pricing for our products depends on as a function of raw materials as well, on the inputs, which can be volatile from time to time. However, we do believe that on a volume-wise, we will have a growth in this year along the lines of the volume growth, which we have already mentioned earlier to the markets. In terms of margins as well, on an annualized basis, we will see some margin improvement over previous year, and again, in line with whatever revenue numbers that we would be able to achieve in this year. As far as the Thailand entity and consolidation of that entity into this company is concerned, I think it would be a little early to explain to you how on a consolidated level those revenues and bottom lines would look for in 25. Also, the first real year that we will get is 25-26, and in that we do expect to be some positive contribution coming in from Thailand at a consolidated level.
So you will be funding this acquisition entirely by cash on your books. What's the current number?
So there will be internal accruals and potentially some bank borrowings as well, depending on whatever we believe is prudent as far as maintaining the right discipline for this kind of an activity is concerned in the company. The total consideration is about $20 million for the plant and machinery and the business in Thailand, as you have correctly pointed, and there could be some, small kind of corrections to this number, but this is what it is. This is what has been agreed between us and INEOS, and at the time of closing, again, depending on whatever the prevailing exchange rate is.
Understood that, Mr. Agarwal. Thank you so much for joining us. Thank you for giving some clarity, but we are awaiting a lot more clarity, especially in terms of what is it that the acquired entity can contribute to your own consolidated financials going forward. Thank you so much for joining us. Well, moving on, it's now time to take a quick break. We'll get you more on the markets and stock-specific action on the other side.
ladies and gentlemen, brings us to one of the most significant moments of the evening, the most promising company of the year. Celebrating a mid-sized listed company for strong shareholder returns, sound financials and exemplary governance. And the winner, ladies and gentlemen, please put your hands together, is PI Industries. Congratulations to the team, and may I request Mr. Mayank Singhal, Vice Chairman and Managing Director at PI Industries, to join us here while we watch the company's success story.
A trusted name since independent India, PI Industries has empowered generations of farmers with cutting-edge R&D and an extensive network of 70,000 retail points. Now making strides in pharmaceuticals. Its new vertical contributes over 7% of revenue within a year of launch. With 85% earnings from patented products, PI has seen revenues grow 2.28 times and profits 3.7 times in just 4 years. CNBC TV18 India Business Leader Awards 2024 proudly presents the Most Promising Company of the Year award to PI Industries.
Congratulations to Mayank and the entire team of PI Industries. Ladies and gentlemen,
as you going, yes.
Mayank, we would love to hear your thoughts.
Yes, good evening, everybody. Once again, a very thank you to the jury for selecting PI and giving this great honor. I must not forget to thank all the people who contributed to this organization. We are not a young organization. We are about 75 years old. So I must remember my grandfather, who tediously laid the foundations of this organization, set the course of its right values. My father, who propelled it to take it to the next level. Today, PI stands an institution which is taking innovation to the world, basically taking India to the world. We fostered ourselves by saying that we want to be the largest innovative agri-science company with 900 scientists creating innovation. Our first product has got to go to the world. We're fostering this and taking it into the pharma sector, the biotech sector, and putting India on the global map. Once again, thank you very much, and thanks to all the members of PI over the generations who made this company what it stands for today. Thank you.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
Welcome back to Midcap Radar. Well, let's now shift our focus to Bajaj Finance. The analyst meet of the company is currently underway. Our colleague Abhishek is joining us now with some exclusive details on the company's guidance. Abhishek, what have you managed to pick up?
Well, the company has given long-range, guidance to the analysts present at the meet, wherein they are saying that the customer franchise will increase from 9.2 crore in H1 FY25 to about 13-14 crore by FY28 and about 19 to 20 crore by FY29. The cross-sell franchise will increase from 5.8 crores in H1 FY25 to about 8 to 9 crore by FY28 and about 11.5 to 12.5 crore by FY29. So India payments GMV, that range they are targeting to improve from 0.27% to about 1.25 to 1.5% by FY28 and then back to 0.4% to 0.5% by FY29. The share of total credit will increase, from 2.1% in H1 FY25 to about 3.25% by FY28 and about 3.2 to 3.5% by FY29. The retail credit over there, they intend to increase it from 2.7 3.7% in H1 FY25 to about 3.8% to 4% by FY28 and about 3.8 to 4.2% by FY29. So they are targeting an improvement in their ROE, that is return on equity, as well, from 19.4% that they have as of H1 FY25 to about 20% to 22% in FY28 as well as FY29. They say that AUM per cross-sell, which is at 64,800 rupees in H1 FY25, can improve to 90,000 to 95,000 by FY28 and then fall back to about 80,000 to 85,000 by FY29. So they are targeting a total income growth of a CAGR over the next couple of years between the range of 20 to 22%. Hence, total income would be around rupees 3 lakh crore mark by FY29 from 1.1 lakh crore that it was there in FY24. They are also targeting a PAT CAGR of 18% to 22% over the next few fiscals. So PAT would improve to about 20,000 crore in FY29 from about 8,000 crore that it was there in FY24. Back to you.
Thank you so much, Abhishek, for taking us through those exclusive details. Some very important information being shared by the management of Bajaj Finance in their analyst suite. Well, one particular stock that I've been tracking is Religare Enterprises. The stock today is doing quite well. What exactly has happened? Number one, the company has given an update to the exchanges where they say they are in receipt from a letter from the RBI, where RBI has gone ahead and approved Berman family's plan to go ahead and give an open offer to go ahead and acquire close to 26% stake in the company. Remember, along with this particular letter, RBI has mentioned two key factors that the company or the Berman family actually has to adhere to. Number one, the acquirers, that is the Berman family, would need to consolidate NBFCs in the resulting structure before March 31, 2026. And along with that, a request for appointment of 4 proposed directors by the Berman family, not yet given approval by the RBI. That is something that could happen at a later stage. Now, talking about the status check as far as the open offer is concerned, remember, the IRDAI has given the nod. The CCI has given the nod. SEBI is yet to give a nod, but it was largely contingent on RBI giving the nod. So the RBI nod too has now come in. So going forward, what is it that is key to track as far as Religare Enterprises is concerned? Remember, the company will host its AGM on December 31st. In the AGM, voting is due for reappointment of Dr. Rashmi Saluja as the executive chairperson. Remember, in September 2023, Berman family, after acquiring significant stake in the company, had given an open offer to go ahead and acquire up to 26% stake at 235 rupees a share. On the back of this particular nod, we're talking about Religare Enterprises up almost 4%. But with that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The funniest story I remember.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today we talk about investing for high net worth individuals and how mutual funds help this category, the high risk category it is, to minimize risk and maximize returns at the same time. We'll also talk about how the investment allocation is different from those of retail investors with our guests today, Varun Fatehpuria, who's the founder and CEO at Daulat Finvest, and Nisreen Mamaji, the founder at Moneyworks Financial Services. Nisreen and Varun, thank you so much for joining in on the show today. It's a very interesting topic, so good to get your opinion on the same. Lady, let me start with you because we need to understand with the basics. What are some of the characteristics of HNI or maybe ultra HNI portfolios? How are they different to, say, regular retail portfolios?
Sure. So thank you so much for having me on the show. Let me start with that, and I'll dive straight into the topic. So basically, between ultra HNIs and HNIs, the portfolios will typically vary between size, complexity, and customization. So for a high net worth individual, they have more alternative assets. So they'll have hedge funds, private equity, a wider range of investments, and a higher risk tolerance. So they might also include, a global diversification, highly customized techniques, and exclusive investment options such as direct business investments also, which are all common features for high net worth and ultra HNI investors. In contrast, retail investors are more conventional, will possibly be a little more passive, and are frequently restricted to publicly traded stocks, bonds, and mutual funds. So they will concentrate more on asset preservation, tax optimization, and estate planning, so to speak. So an ultra high net worth and high net worth individual would probably have a higher risk tolerance and, would be able to accept the volatility of equity markets much more. So in a nutshell, this is the difference between what a retail investor would be looking for and an HNI or ultra HNI investor.
Okay, we take that point. Varun, anything you would like to add to that, what Nisreen said?
No, I think Nisreen summed it up really nicely. But I think one of the things that we have observed when we go speak to HNIs, UHNIs, is obviously the ability to take on a higher amount of risk compared to regular retail portfolios, due to which they can create very tailored strategies for each of the financial goals that they have. Right? If we take, for example, a regular retail portfolio, most of them, and that's also reflected in the flows that we see in mutual funds, are geared towards long-term wealth creation, and that's why you see a higher retail participation in equities. But for an HNI, UHNI portfolios, just by the virtue of having a higher investable asset, they can create very tailored strategies for each of the financial goals for, let's say, wealth preservation, for income generation, for longer-term wealth creation, because of the number of instruments that are available to them. So not just mutual funds, but also PMSs, AIFs, unlisted equities, real estate.
Okay, take that point. So it's a diversified portfolio with a lot of high-risk assets as well. So in that case, Nisreen, what would the role of mutual funds be in ultra HNI portfolios?
So the mutual funds play the same role for the retail investors as well as the UHNI and the HNI investors, in the sense they give them diversification, liquidity, and professionally managed exposure to the various asset classes. So they they also complement direct equity, the PMS and the AIF portfolio with which an HNI or an UHNI investor will typically have. So by offering an access to high-performing equity funds, debt funds, and hybrid funds which are tailor-made, for market conditions. So, for example, a focus mutual fund, as a category, would very well suit and complement the PMS and AIF investment which a HNI investor would already have. So, typically, also for the shorter-term liquidity requirements, mutual funds play a very good role for HNI investor. Say a debt fund, a balanced advantage category, a hybrid fund. So, even if you're managing a family office, it would be, in tranches in terms of time. So it would be, you'd be managing a 1-year portfolio, a 1 to 3 year portfolio, and then, longer and so on and so forth. So especially for the 1 to 3 year time frame, the mutual funds play a very active role because the cash management for HNIs and for a family office investor is very well managed by a hybrid equity fund or, a balanced advantage category, or even in some cases, debt funds. So typically an HNI portfolio would be having, also illiquid investments like real estate or private equity or direct business. So those are the ones that you can't really manage for cash flow. So mutual funds actually play a very, active role and a very valid role in an HNI portfolio also because of these reasons mentioned earlier, and also for accessing cash and reallocating funds without having to liquidate, illiquid kind of strategies. So that's where the mutual fund portfolio would have a very, very important role for an HNI investor.
Got it. Varun, coming on this, it's the same. Of course, mutual funds would play largely the same role. But when we talk about the overall portfolio construction, there are other assets as well. As you pointed out earlier, there is real estate. You would have high risky assets as well. So does it balance the overall return profile for ultra HNIs?
Absolutely, Sonal. I think one of the noticeable shifts that we are seeing in our conversations with HNIs, UHNIs over the last few years is obviously this notion that they want to increase their allocation to mutual funds over the last few years. I think previously there was this concept of, gravitating towards only PMSs and AIFs because you have a certain amount of investable asset. But now increasingly we are seeing that HNIs actually want mutual funds to form a core of their overall allocation, simply because these are well-regulated products, easy to understand, simple in nature, and low cost compared to, let's say, other higher, riskier assets with the kind of lock-ins that they come into the picture. So definitely, I think all of those asset classes complement mutual funds from an overall asset allocation perspective. But we are seeing an increasing shift where HNIs are warming up to this idea that they want to increase that allocation to mutual funds due to the advantages that I just mentioned.
Okay. So, Varun, coming back to you yourself, when managing money for Indian HNIs, how much of the money is invested via mutual funds? Is there some data available there?
So I wouldn't say there is a hard and fast data, but I think there was this recent study which was conducted by one of the alternate asset managers, and they were trying to plot out the kind of allocation which, let's say, HNIs, UHNIs, or even family offices would have. And it really depends on the kind of financial goals that each of the individuals or the family offices would have. But if you're looking at, let's say, across the spectrum, it could range anywhere between 20-25% all the way to about 50 to 60% due to it being highly liquid in nature. Again, the kind of benefits that we see mutual funds. So it's really a spectrum, Sonal, from about 20-25% all the way to about 55-60%.
Okay, that's an interesting number actually. I didn't expect it to be that high as well, 55 to 60%. But as you said, liquid assets, so it gives more comfort to even HNIs and ultra HNIs to put in money there. Nisreen, there are mutual funds that have been able to make big money comparable to say PMSs. Is there a portion of HNI wealth you would suggest putting into mutual funds, or the current number, as Varun mentioned, anywhere between 25 to 30, 55 to 60 is the standard?
So typically, depending on the, conservative or the higher risk tolerance of the investor, I think that we can put it around 30 to 50% of HNI wealth, which would be allocated to mutual funds, depending, on the risk profile and the financial goals itself. So typically, and the liquidity constraints, so those are the very key factors that one has to plan for while investing in mutual funds. Because in terms of tax efficiency or any of the other, goalposts, both of them would be slightly similar. Of course, in a PMS or an AIF portfolio, it would be higher risk, higher return. So the risk tolerance would be, paramount, as well as the time or the tenure that you spend with that kind of an investment. Because an HNI typically would not be looking at, the PMS AIF part for the cash flow management. So they have the wherewithal to stay invested in case there's a correction. So the mutual fund part of the portfolio, which could be around 30 to 50%, would be the one which, you look for your liquidity and your cash flow management. Having said that, mutual funds offer professional management, diversification, and an access to the, the high performing equity and debt segments, which are quite comparable to PMS as well. So HNIs can benefit from investing in large cap, flexi cap, focused sectoral funds also, and thereby manage, their requirement, because also, you don't want to have stock duplication in an equity portfolio with what you already have with PMS and AIF. So you have to keep that in mind, that you want to create a very diversified portfolio between the mutual funds, PMS, AIF, and of course, illiquid portfolio like real estate or collectibles and art, because that would typically also form part of a high net worth or a HNI investor. So you have to keep all this in mind. And mutual funds, I think around 30 to 50%, depending on the risk tolerance and the tenure that you're looking at and you're planning for. So those are the, couple of ways that we can manage mutual funds in an HNI portfolio.
Got it. All right. We take that point. Have to get into a quick commercial break. On the other side, we'll continue our discussion with Varun Fatehpuria and Nisreen Mamaji on HNI investing when it comes to mutual funds. Stay tuned.
Had a very, very disappointing result in during the Olympiad. I went to cheer him up a little bit. So I went to his room expecting to find him slightly distraught. And within 10 minutes, he was trying to cheer me up. He said, "Why don't we go and play some table tennis? So, I think you're quite affected by this game, sir," and so on. I thought that showed his composure as well.
What did you, if you don't mind, can you share what was the conversation like? What did you tell each other?
Well, I have had really disappointing results, obviously, at some point or the other. And it's taken me a while to get over them. I mean, and the full impact of what I've done hits me. And then, so I tried to go to his room and tell him he shouldn't just wave it away, but, acknowledge that it happened, and then try to feel better about it and so on. So I was trying to get him to talk about it. But in fact, his approach was different. He genuinely pushes the past aside and starts again. So after a few minutes, he got bored with me trying to discuss the matter with him, and he said, "Let's go do something else." And that's when we went off to play table tennis instead.
Our next category, the Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress. The award celebrates an individual whose work has changed the way we think, act and build for the future. And the winner for the Lifetime Achievement Award 2024 is...
1966, one visionary set out to ensure that every child could enjoy a healthy childhood at an affordable price. This vision gave birth to the Serum Institute of India, a company that would go on to redefine vaccinations worldwide. Dr. Cyrus Poonawala's journey began with the launch of the first therapeutic anti-tetanus serum and grew into the world's largest vaccine manufacturer, producing over 1.3 billion doses. Today, Serum's vaccines reach 65% of the world's children. Through global collaborations and innovative vaccines like those for COVID-19, Dr. Poonawalla has cemented India's leadership in affordable public health solutions. CNBC TV18 India Business Leader Awards 2024 proudly presents the Lifetime Achievement Award to Dr. Cyrus Poonawalla.
Well, many congratulations to Dr. Cyrus Poonawalla, and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawalla, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawalla.
Honorable Srinath ji, my friend Piyush, and our Chief Minister, Mr. Fadnavis. I first of all like to acknowledge with thanks the jury for having selected me for this coveted honor, and also CNBC for supporting such a great honor to me, though I have received many honors as you've seen in the past, but to me this honor is equally important, if not more important. I won't take a lot of your time, but there was one important aspect which I think the audience, some of them know.
Welcome back. You're still tuned into MF Corner. We still have with us Varun Fatehpuria and Nisreen Mamaji, and we are talking everything about mutual fund investing in the HNI category. Varun, let me start with you this time, because SEBI now is looking at a new high-risk category of mutual funds that will fit somewhere between a mutual fund and a PMS. Do you think a space like this could get HNI interest?
Sonal, I think it's important that today investors, whether we are talking about retail investors or HNIs, UHNIs, ask this question to themselves, that where does this particular product, and I'm not just talking about, let's say, the new asset class, but any investment product in general, fit into their portfolio. And as investors have become more mature and educated over the last few years, I think this is something that they're increasingly asking themselves, that is there a fit for their that particular product into their portfolio, or is it simply mimicking strategies that I could very well find in existing products, right? So the new asset class that we are talking about, yes, definitely, I think from a product point of view, from a strategy point of view, is looking to do something different, provide investors with opportunities which today are not available in the mutual fund or the PMS space, like something like an inverse ETF, which has a negative correlation with the market, or a long short fund, which is typically available just in the AIF categories. So there are definitely interesting opportunities and avenues which this new asset class will bring into the market. And it is for the HNIs and for the investors in general to see what their portfolio construct is today, and how does this product fit in from a risk profiling perspective, from a return perspective, from a liquidity perspective. I think these are the questions that investors need to ask before they consider whether they need to invest in this new asset class or not. But just generally to your point, definitely we think there is a lot of potential given what's out there and the consultation paper that SEBI has released. And HNIs could definitely start with smaller sums of money, become comfortable with such a strategy, and hopefully over a period of time, if they see a fit in their portfolio, definitely we can see a gradual adoption of such an asset class.
Yeah, there have been a lot of discussions around this new asset class, right? And we need more details as well on this one. So we'll, of course, get to know in some time. But Nasreen, where is the HNI money currently invested in India? What pockets is it concentrated in? Do they like a particular asset? We spoke about some illiquid assets as well that they like. If you would like to elaborate more on that, I know you've spoken about it earlier.
So in India, typically, the HNI investments are primarily concentrated in equity markets, alternative investments, and real estate. Within equities, they typically favor the blue chip stocks, and sectoral opportunities like, IT, banking, pharmaceuticals. They also invest in emerging pockets like, electric vehicles, renewable energy. So there are certain of these particular sectors that, they take a lot of active interest in. Beyond equities, HNIs allocate funds to the alternative investments, the AIF category, PMS, obviously, and debt investments for diversification. So private equity, unlisted companies, startups, these are the places we know which are growing areas of interest for HNI investors. Additionally, HNI investments in real estate focus on premium residential portfolios and commercial spaces in metro cities like Bombay, Singapore, Bangalore, Delhi, NCR, etc. So the InvITs, REITs, these are the places and these are the investment products that very much interest high net worth individual. So this, in short, is where the HNI and UHNI investor would take interest in.
All right. So Varun, within small and micro stocks, do preferential issues and equity warrant take most of the HNI money? Of course, it's equities, but let's talk about the micro industry as well. Since only 25% needs to be paid upfront, right?
Yes, no, absolutely. I mean, everyone today wants to latch on to small caps, micro caps, right? HNI is being no exception. And especially, I think, after the spectacular bull run that we have seen after COVID, right? Even the numbers that we are seeing today released by AMFI, where about large cap inflows have actually declined, but the mid cap and the small cap category actually continues to shine, right? But just to your broader point, yes, I think there are pockets there in the small cap and micro cap space where HNIs, UHNIs typically have found a lot of interest. It allows them basically to participate in the upside while limiting the downside to only 25%, since that has to be paid upfront and the remaining sort of can be staggered over the next 12 to 18 months. So it allows them to basically participate in the kind of upside in the small cap and the micro cap space. But yes, generally, I think it depends from individuals as well. But definitely, the strong participation has come in from the HNIs in that category due to this.
Okay. So, Nisreen, due to the large amount of money, HNI investing is not only about maximizing returns, but of course also minimizing potential risks as well, right? What, according to you, are the best ways to do this and to protect the downside as well?
So typically, in order to maximize the returns and to minimize the risk, because both of these are very important goals for, any investor, including obviously an HNI investor, you would adopt a strategy like diversification across various asset classes, including equities, debt, and real estate and alternative investments. So also, hybrid products. So AIF, PMS obviously also play a role, but, you also have to manage the risk and also the tenure. So both these are very important factors while creating a portfolio for an ultra HNI investor or an HNI investor, is to make sure that you have had this conversation, very deep conversation with the investor, to make sure that the risk tolerance has been gauged correctly by the planner. Because sometimes, you might say something, but your demographics and, and your lifestyle will prove a completely different situation. So those conversations between the planner and the investor is very important initially while onboarding an HNI investor. Once you've got that right, then the recipe will, continue and work out for itself, where you can allocate towards, slightly longer products with higher risk and slightly shorter term products with lower risk. So that is the, most important, analysis that the planner would have to do while planning for an HNI.
Take that point. I have a lot more questions for the two of you. It was a very interesting discussion, but completely out of time right now. So thank you so much for joining in with your views and your insights as well. Okay, all right. That's all we have on MF Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.
Know that right from the beginning, when I started Serum Institute with a capital of 5 lakhs, of which half was borrowed, and it helped me to grow a vaccine company, which is today, of course, the world's largest vaccine company, in spite, and that's what I want to emphasize, that I've supplied most of the vaccines, if not all, at half or quarter of the market ruling price, in which hundreds of millions of dollars of profits were sacrificed, and I continue to do it at a... And when I was asked about it in the press, I said, apart from my staff who have supported me in this sacrifice, the biggest loser is my son here, only son, because it's cost him at least $3 to $5 billion of cash profits, which we have lost in the process, and we continue to lose till at least in my lifetime. Thank you very much.
Well, thank you, Dr. Poonawalla, for your very, very noble cause. We're ever grateful, and congratulations again on receiving this award. Well, ladies and gentlemen, economic progress is built on a foundation of vision. It is built on a foundation of dedication as well as impact. The next award is a special recognition for outstanding contribution to the Indian economy, which recognizes an extraordinary force behind India's growth. This year, we celebrate IIT Madras for its unparalleled role in driving India's economic growth. Let's take a closer look at their achievements and the achievements of this year's remarkable winner.
IIT Madras, a cornerstone of India's technological revolution, has been shaping leaders since 1959. Known for its excellence in engineering, it has also fostered entrepreneurship, supporting over 233 startups that address real-world challenges. The Research Park, home to 200 startups, bridges academia and industry, driving innovation in AI, robotics and renewable energy. During the COVID-19 pandemic, IIT Madras played a key role in developing rapid testing kits and ventilators. CNBC TV18 India Business Leader Awards 2024 proudly presents the Special Recognition Outstanding Contribution to Indian Economy Award to IIT Madras.
Ladies and gentlemen, a round of applause for Professor Mahesh Panchagnula, Department of Applied Mechanics and Biomedical Engineering, Dean Emeritus, IIT Madras Head, Center of Excellence on Sports, Science and Analytics, and Professor Satya Narayana Chakravarti, Department of Aerospace Engineering, Head, National Center for Combustion Research and Development, and co-founder of several startups. So if you could kindly say a few words.
Thank you so much. It's great to be here. I think as the introduction went, I'm here standing in front of you as someone who has been participating as an academic in a number of startups, notably Agnikul, which many of you would have known has launched India's first semi-cryo rocket out of Sriharikota.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that's been the day so far. It's been a market which has been under pressure, and it's not looked good since the morning. 24,530. But the fact is that it has looked very good for the last 2 weeks, and the backdrop has been very, very strong. I think that's the reason why maybe today you're seeing some pullback. Last night, overnight, US action was a little subdued as well, although no real big triggers one way or the other. We're coming to you from the CNBC TV18 Motilal Oswal Studios. This is Closing Bell. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. Already getting quiet. We're still far away, from Christmas and New Year.
The four of us or the market?
The market. Generally a little quiet and very range bound today.
Well, go on, Nigel.
No, quiet is good, yeah.
Perfect. I think little too early, Nigel, to go quiet. Quiet to the end of the year. But it will get quieter, right? And I think global markets, etc., as we sort of... it's seasonally a good part of the year, absolutely. Last 2 weeks, last 3 weeks or so. But it also is a sort of quieter part of the year. And I think you will start to see that, not just here in India, but of course in the US as well. People sort of travel, all kinds of things. Just a few things before we get into the discussion. So the Nifty and the Nifty Bank, the last I checked, both, even with the cuts that we are trading with, are above their respective hourly averages, 40 hourly averages. For the Nifty, that level is 24,507. So it's about 50 points above that. And of course, the Nifty Bank will come up on the corresponding level, which is the 40 hourly. And we are trading above the 40 hourly for the Nifty Bank as well. That's 52,690 on that one. So comfortably above the 40 hourly for the Nifty Bank. I think as long as that kind of holds, I think should be okay. Should be broadly okay. Broader markets are not seeing any big cracks or anything of that sort. That's the other marker you'd want to keep an eye out on. Small cap is flat, mid cap index is flat as well. Sectorally, IT, I think real estate, these are two areas which are doing well. And I think the PSU space is a bit under pressure. I saw energy as a sector and CPSCs, and I mean generally, I mean that entire pack is trading in the red right now. Rima.
Well, the small cap funds continue to get a lot of inflows. So even the November numbers show that the small cap funds have seen inflows which are 9% higher than the prior month, and the mid cap funds have seen about a 4.5% jump. So even as the overall net equity inflows have moderated by 14% month on month in November, small and mid caps continue to garner attention, and that pretty much explains the kind of up move that we've seen. I think the small cap index is up 5% since the beginning of December itself. By the way, a quick word on Europe, because Asia closed up with strength. You had the Kospi, which was up more than 2%. Nikkei was up 0.5%. Straits, China, these all managed to clock in gains. Hang Seng was the only one which saw profit booking after Monday's mega monster rally. So Hang Seng in Taiwan closed in the red. But other than that, the other Asian markets closed up in the green. And Europe today has started off mildly lower. So the CAC, DAX and the FTSE are in the red as we speak. So inflation data, the all-important US inflation data that comes out tomorrow, so maybe some caution ahead of that.
Absolutely. The Chinese markets turned around because of the macroeconomic numbers that came out there on exports and imports. Those were not looking too hot. And then the excitement around this loser monetary policy and unconventional stimulus measures, all of that excitement kind of fizzled away because it's been 24 hours since we got that announcement. And that was a final close coming in some of the regional markets. Okay, here for us, let's focus on what's working. One pocket of the market that's alive and kicking is this entire capital markets space, companies that are related to the capital markets. And the reason is that today Motilal Oswal initiated coverage, not initiated coverage, actually it came out with a report. Some of the stocks are already under its coverage, and on some it sort of gave out fresh views. And many of those stocks have reacted very well to some of that commentary. Nippon Life India, for instance, 8% higher. Nuvama is 6% higher. We'll tell you more about these stocks and exactly what is the what is the thesis that Motilal is talking about. So that's one theme in the market that's worked well. For the large caps, the saving grace is that tech names are still trying to fight for the bulls. So you've got Wipro, HCL Tech, Infosys. There's still some green on the tech side of the screen. Other than that, not much to speak of in terms of the gainers. Some of the non-banks like Shriram Finance, Bajaj Finance and Finserv, they're having a good run as well on the green side for the Nifty. So you have some of these NBFCs and you have some tech names, and that's where the gains are. Nigel, how's it looking last 1 hour?
Well, that's right. Interesting times. A bit of red on the screen. Third straight session that we could possibly end in the red. So we'll have to see how things go. But let's get in Mitesh Thakkar to help us out with a couple of closing strategies. Hi, Mitesh. Good afternoon. Good to see you, Ben. What's the trade on the Nifty first?
Nigel, on the Nifty in the morning also I commented, I think, we are looking at possibly a range scenario. Therefore, buying should be done closer to about 24,500. And I think now we're not far away from that, about 25, 30 points. So around those levels, once we see some kind of a reversal, I think longs can be taken and keep a 50, 60 point kind of a stop. I believe that 24,500, 800 is the broader range which the Nifty is falling. And therefore, from 500 odd levels, 24,500 odd level, you would expect some kind of a bounce back to about 24,750, 800 zones again. So maintaining a long bias, but waiting for the trade to be triggered. On the stock side, I have a buy on Hoodco. Buy here with a stop at about 247 for targets of 265. And a sell on Marico, which I would recommend selling with a stop at about 621 for targets of 590.
Thank you very much for that. Marico was up 5% yesterday. Down 5% yesterday. Today it's up close to about 0.5%. Moving on, Motilal Oswal in its recent report says the Indian capital market has seen a remarkable growth in the last 5 years. But the penetration still is fairly low. Vamakshi is here with the key highlights of this note. Vamakshi.
Well, that's right, Reema. This whole theme has seen a remarkable growth over the last couple of years. And, when we look at the overall theme, penetration, however, has been low. Case in point, when you look at the DMAT penetration, is at only 12% as compared to 62% for the USA. MFAUM to GDP ratio too is quite low at 17% as compared to the global average of around 65%. But not just that, in terms of headroom, there's several other opportunities as well. Over the next decade, demographic dividend is expected to accelerate. Apart from that, UPI and eKYC have already revolutionized, the brokerage as well as the MF industry, and is expected to likely drive growth going forward as well. Account aggregation is too likely to transform personal finance industry and in turn, drive digitization in wealth management, broking, and several other segments. Yes, the regulations have been tightened of late, but this has been done largely to strengthen the overall ecosystem. The recent F&O regulations that too came through are expected to hurt the volumes only in the near-term basis, but once the base is reset out here, the growth is expected to pick up. Now, largely given all of these factors, sustainable revenue growth of anywhere between 17 to 45% CAGR can be expected over the next 3 years, that is from FY24 to 27. And over the same period, given that operational leverage will kick in, superior profitability could also be expected anywhere between 12 to 75% CAGR. Now, they've also highlighted their preferred picks among the overall capital market theme. Among AMCs, they like HDFC AMC as well as Nippon. They have a buy rating on both of these counters. For HDFC AMC, the target price is at 5,200, while for Nippon, it's at 900 rupees per share. In the broking space, they like Angel One. They have a buy rating out here, target price of 4,200. Among exchanges, they like PSC. They have a buy rating, target price of 6,500. Wealth managers, they prefer Novama as well as 361 WAM. They have a buy rating on both of these counters. And as far as the intermediaries is concerned, they prefer CAMS. They reiterated their buy rating out here, target price of 6,000 rupees per share.
Thank you very much for that. Golden era is what they call it for the Indian capital market ecosystem. Deepak Shenoy, part of that, founder at Capital Mind, is now with us on the show. Deepak, thank you very much for joining in. The opportunity is there, growth visibility is there, but stocks have already run up. Valuation is on the higher side. Do you still like it? Can someone go out there and buy today if they have a 3 to 5 year time horizon and your preferred pick?
Oh, that's an interesting set of questions, Reema. I'll answer the first part. I think the capital markets in general, whether it's debt or equity, relatively under-penetrated from an Indian household perspective. Therefore, we're seeing a lot more activity. We've seen 35,000 crores come into mutual funds in November. Despite a tepid October and November, we've had fairly strong inflows into equity funds. Very diversified portfolio approach. We've got flexi cap funds, mid cap funds, large cap funds, all of them getting reasonable amounts of money. So it's a very, I think India is finally waking up to its equity market potential, and effectively FIIs are becoming, foreign investors are becoming a smaller portion of the non-promoter stake of Indian companies compared to domestic investors, either directly or through mutual funds. But I think that is that's going to be much higher growing phase. We are only about 20% of Indian GDPs in mutual funds, 64 lakh crores. I think that should probably increase to 30 or 40% in the next decade. So we'll see a lot more domestic participation. Therefore, almost a lot of the financial infrastructure players are likely to do well, whether it is people like us who are asset managers, or whether it is exchanges and depositories and RTA agents for mutual funds. I think all of them will do well, including the areas around insurance and some of the other players. I feel, given the markets, there are always going to be pockets of overvaluation and pockets of undervaluation. Strangely, for the most of the past decade, private sector banks have been overvalued. But today, in comparison with the rest of the market and perhaps their own history, they're not as richly valued in comparison. So you might find that they are more attractive from a valuation perspective than many of the other players out there. A lot of others, including some of the PSU players, I think haven't realized their full potential yet. So there is still scope for a 3 to 5 year position in many of them. Now we own some of these stocks, so I won't say I'm unbiased, but I think domestic stories also, including domestic consumption, defense, infrastructure, and domestic manufacturing, all of these plays should do really well in the next 3 to 5 years, mostly because the world is getting more insular and trade is no longer the primary concern. People are more looking at making things themselves in their own countries. If India were to adopt the same approach, we would massively reduce our imports simply because we can manufacture more here. I think consuming and manufacturing here is going to be the story of the next decade. So players there, whether it is an engineering company or a domestic consumption brand, I think all of them will do, many of them will do really well in the next decade.
Okay, yep. And those stocks have been reflecting a lot of that enthusiasm as well over the past many months now. Deepak got that. So that's obviously the capital market space. Deepak, by the way, Waaree Energy, any thoughts? What a listing. I mean, and it's been a little choppy, but there's a lot of interest around, obviously, the stock and the sector.
Yes, I think a little bit about it. We don't have a position there. It's too early, I think, for us. But we'll wait for two things. Firstly, what happens with this whole America's change in stance around renewables, which might change the demand worldwide for someone like Waaree. Of course, I don't know if this will meaningfully affect their financials. I don't also see this as a major challenge in the long term, but it could be that if America steps away and changes its stance on how it perceives rewards for companies that are doing more solar, we might see a change in the demand and supply equation for many of these companies, not just Waaree, but also wind players and so on. And I think it will come at the expense. I mean, on the other side will be nuclear, which is not traditionally known to be a renewable resource, but it's actually a very rich resource for energy. So that might actually do well regardless of what happens. So I feel that beyond that, I don't have any visibility. I think we'll wait for 2 quarters of results after listing before we generally take a position. It tends to give us a little bit more understanding of how good the governance is in the organization, and also about more granular understanding of their demand and the growth potential in the marketplace.
Okay, all right. Deepak, I wanted to ask you about Greaves Cotton. They announced a few days ago that they're going to be demerging and listing the EV part of their business separately, the electric mobility. And that business is a loss-making business, but we know it has tremendous potential. And these businesses are normally valued on sales. Though at the half-year mark, I see there's a degrowth in their total sales volumes. Last few months have been better. What's your view on it? It was at around 180, 190 rupees when that announcement came. Currently, it's around 250 rupees. We know Mr. Kedia has gone ahead and bought a chunk in it. Have you done any work with regard to the sum of the parts? Because the X of the mobility business, actually, they're making profitability.
Yes. In fact, Nigel, I think that is the interesting part of the business, where they've been able to maintain a decent hold on our business, on the engines business, before they went into this Ampere part of the equation, which is the EV part. But the EV part has to scale. There are lots of challengers here, including Ola, which is also listed, but also TVS and a few other players that are getting their act together. We haven't even seen a meaningful move into this market in general in terms of market share. But I think this should become a 20-25% market share of just EV players in overall sales in the next few years. Not because EV is environmentally great and all that. It's just that the lower cost of operation might actually start to benefit people a lot more. Much about this having been said, I think Greaves will have to demonstrate its ability to retain or grow market share. They haven't been able to do that in the last few years, and perhaps the fundraising might give us an idea eventually once they demerge if they were able to raise more funds, to be able to demonstrate to us how they will be able to grow this in a way that they can compete with some of those relatively deeper pocketed players who have even more profitable, other than Ola, the TVS and all of them have very profitable core businesses in their ICE two-wheeler space. So there is a lot more ability to spend and ability to distribute over there. So I believe here that valuations will have to be, not based on profitability. Perhaps even the number as a multiple of sales will be very high to begin with. But I mean, I would wait for that business to list and then buy that business separately. The current business is not, that great from a perspective of growth. I think it's more B2B in nature, but I mean, I would value it at a very high multiple there. But I think based on what Greaves' plans are for the electric division, you might actually give it a much better valuation based on how they plan to do growth. The demerger is the best way to unlock value, to be honest, and I think more companies should do that going forward.
No, I mean, such a sharp move, right? And it's come so hard. The other one, which people have been waiting for I think at least 1.5 years, if not more, and there are people who've owned that stock, just waiting and waiting and waiting, and now things seem to be moving. But let's just hope it's not one step forward and two step back. So I'm talking about Religare. Stocks up. It's off the highs. Now, the news is that the RBI has approved the Burman family plan to acquire the 26% stake in the company, open offer. Vivek is here with details about what this means and what are the next steps. Vivek.
Well, that's right. 1.5 to almost 2 years now, as far as the sparring is concerned between the Burman family, that intends to go ahead and take controlling stake in Religare, and the existing board helmed by Dr. Rashmi Saluja. Now, what's actually happened today? What is the fresh piece of information? Today, the company or the board has received the approval from the RBI. Basically, RBI has given its nod for the Burman family to go ahead and take ahead the open offer. So that is one important tick mark in the process of the Burman family going ahead and announcing, as well as completing all the formalities for announcing and taking over 26% stake as far as Religare is concerned. Now, RBI has two caveats that is mentioned in its letter. Number one, the acquirers, that is the Burman family, need to consolidate all of the NBFCs in the resulting structure before March 31st, 2026. And also, there was a request to go ahead and appoint 4 proposed directors. At this point of time, RBI has not given a nod to appoint those 4 directors. Now, as far as the open offer is concerned, remember, there were approvals required from CCI, which the company has received, from the RBI, which has been received today. SEBI, was awaiting the RBI nod to come, so that too should come. And also, the IRDAI nod was expected, given the fact that the company does have care insurance. So IRDAI nod too is in the favor as far as the Burman family is concerned. So now, next step, the key to track will be the AGM, that is on 31st December 2024. The reappointment of Dr. Rashmi Saluja as a director in the company will be up for voting, and it will be very important to note as well as take note as what will be the outcome of that particular note. Remember, September 2023 is when the Burman family had gone ahead and announced an open offer at 235 rupees a share to acquire up to 26% stake in the company.
All right, Vivek, thank you very much for that. Deepak, again, I mean, I don't know if you own this, but I know lots of people who own it and who waited and have been not been rewarded, not yet. Although it's come up from the offer price at least, closer to 300 rupee levels now. Any thoughts?
No, we actually don't own much, Prashant. I don't own any of this share. It's been a bit of a soap opera, this whole business, for the last 4 or 5 years. And generally, soap opera plays don't work out very well for me from an investment standpoint. Never understand when these turning points come and some court order, something else seems to happen all the time. So not worthwhile when there are other opportunities out there. I think I'll just wait for this whole drama to get over and then maybe take a stance. And once you have a more pakka open offer, if this whole thing actually pans out now, once SEBI gives their approval, then there may be a small short-term opportunity in the share. But I would like to see it after this takeover is complete, how the financials and business actually moves, especially because they may have to integrate some of the other companies into it, and those financials need to be integrated at some level and so on. So I will have to figure out how this whole thing works. I'd wait for the whole thing to die down But I mean, it's a lot of entertainment value, so not denying any of that.
All right, that's nicely put, Deepak. And maybe some good will come out of it as well, right? I mean, after all of the soap opera viewing. Thank you very much for joining us. Good speaking with you, and thank you for being here this Tuesday. We slip into a break, but let's introduce Growth Code. I mean, this is a special initiative by Grow and CNBC TV18 with the aim of empowering investors and traders, prominent investors and professional traders. Gather at Grow's Trading Right Summit on November 9th to share their valuable insights and strategies. Here's A's investor, Ramdev Agarwal, chairman of the Motilal Oswal Group, and what he had to say about stocks an investor should hold in their portfolio for optimal diversification. Listen in.
For an individual investor, you should have as many stocks, as many you understand. You know, if you have knowledge of 10, 15 stocks, have all of them. Or if you have the knowledge of only 5, 6 you don't know, you're fine with 5. As far as the statistical theory is concerned, after 15 it doesn't matter how many you have. Because all the benefit of diversification gets completed you have the moment you hit the 15 individual stocks. So, but then if you want to be very aggressive, if you are very young, you are very confident, you know the company, what you're buying, you know the price and value gap, you are pretty comfortable buying 5, 6 stocks. I have 20% in 5 stocks.
We have actually been doing lots of other things like E-plane or satellite company called Galaxy and Hyperloop through Tutor Hyperloop and Avishkar Hyperloop. We're part of a larger ecosystem with many of the faculty members, about 100 of us, who are part of about 300 plus startups.
I want to thank the jury for selecting IIT Madras. Today's IIT Madras is not what many of us imagine. I want to borrow inspiration from a tagline, an old Tata Steel tagline. We also graduate the best engineers and scientists of the world today. We file the largest number of patents for any academic institutions. We hold the highest number of startups. Several technologies are being translated for the world's benefit. I want to make one last point here. I believe we are the first academic institution to be recognized at the IBLA Awards. I want to accept this very gracefully on behalf of all of academia, all of the IITs, and the wonderful work that everybody does today. We need to build a stronger relationship between the worlds of academia and industry. I wrote a piece some time ago that was titled Industry Talks Quarters and Academia Talks Semesters. But I think there is a way to bridge that. Let's make it happen. Thank you all.
Thank you so much, Professor Panchagnala and Professor Chakravarti. A huge round of applause, ladies and gentlemen, for IIT Madras. The next award celebrates someone who has consistently raised the bar in the world of entertainment, delivering performances that resonate deeply with audiences. The winner of this year's Entertainment Leader of the Year is the most versatile actor, striking a perfect balance between commercial success and meaningful storytelling. He has turned the narrative around for himself and continues to thrive. Let's shine a spotlight on this year's Entertainment Leader of the Year.
Rajkumar Rao won hearts and accolades this year for his inspiring portrayal of Srikanth Bolla, a visually impaired industrialist in the biopic Srikanth. The film, a sleeper hit, showcased Rao's versatility and ability to bring extraordinary stories to life. Following this, he starred in Stree 2, this year's blockbuster, and the highest-grossing Hindi film ever. Building on his iconic 2018 portrayal of Vicky, Rajkumar delivered a performance that struck a chord with the audience. From the resilient lawyer to the small-town dreamer, Rajkumar Rao continues to redefine excellence in Indian cinema with his power-packed and heartfelt performances. CNBC TV18 India Business Leader Awards 2024 proudly presents the Entertainment Leader of the Year award to Rajkumar Rao.
Ladies and gentlemen, a huge round of applause for the very talented, very versatile Rajkumar Rao.
Congratulations, Rajkumar Rao. From Stree to Shrikant Bowler, you've had quite the diverse range of roles. If you'd like to say a few words.
Good evening, everyone. Thank you, CNBC TV18. Thank you, jury. It's such an honor to receive this prestigious award, and especially in front of this August gathering. Some of my favorite people are here. Thank you for recognizing my hard work. As you said, I always try and push my boundaries.
Okay, welcome back. We have the market, which is down about 60 points, 24,556 at this point in time. The general insurance numbers for the industry is flashing at the bottom of the screen. This is company-wise, ICICI Lombard. And I think everywhere there seems to be a bit of a drag. Look at Go-Digit premiums and a bunch of others as well. And, growth rates have fallen quite a bit. And what we're putting out is growth rates for the month of November as compared to what we saw in November 2023. Star Health up on your screen. So sharp deceleration is what we're seeing. So we'll have Yash join us a little later to put this in a perspective. N. Jayakumar is with us, Group CEO and Managing Director at Prime Securities. Jayakumar, good to have you with us here. Good afternoon. Thank you for your time.
Good afternoon.
So we're wrapping up 2024, Jakes. We're looking into 25. So give us ideas how to make money in 25, the big money-making ideas as you look into the next year.
Well, I'm not sure about big or small. I mean, that time will tell us. But essentially, I think the markets have done extremely well in terms of a correction in the way that it's played out over the last 2-3 months. And I think it's shaken out a lot of people. It's shaken off some of the really sort of hardened veterans, if you will, to believing that we've made a top and now, this is going to be a top for some length of time, etc. So a lot of people got shaken up, and I think public in general has been quite skittish. All of this, which has essentially convinced me that around the 200-day moving average, we made a very strong bottom. And given the way the markets bounced off that, covered virtually 50% of the losses from the 26,000 plus levels that it had visited. My own sense is that we could be looking at new highs as early as second, third week January. I think a lot has played out. We are seeing, interest rates to the extent that they will get cut maybe a month, 2 months down the line. I think maybe the change of guard at the central bank could mean that interest rate cuts may be more forthcoming than otherwise. The increase in or the reduction in CRR would help with liquidity. I think that will have its pervading impact in the economy. And the government spending, which has been so far a bit of an issue. We've had the lowest government spending in approximately, 13 years. That, to my mind, will gather pace quite dramatically. So all in all, I'm quite optimistic, and it wouldn't surprise me to see a new high second, third week January as I sort of crystal ball into the next few weeks.
Jakes, hi, afternoon. Reema here. Are you still bullish on PSU banks, or do you think, the stupendous rally that we've seen over the last 2 years is now all the good news is in the price, perhaps, and from here on, it may not be the kind of outperformer as it was?
More bullish right now on private sector banks, especially those that have got, beaten down on one pretext or the other, notably this MFI. Now, it's interesting to note that some of the MFI banks in general are quoting at 2 times book, while some of the private sector banks, which have been, in a sense, which have between 7, 8, 9% of their exposure in the MFI space, they have got hit in some cases to below book and in other cases to close to book. So private sector bank valuations, I think, will catch up. I think that's where the reversion to mean will happen. And the principal reason that guides me to this kind of thinking is that we have probably, as I mentioned in the earlier question, that fair amount of government spending left to be done for the end of the year. And when that sort of moves into the economy and there is velocity of money in the rural space, the MFI stress will come off, and especially banks that have been inordinately beaten down as a result of this MFI exposure or credit card exposure could actually face a fair amount of springback. And I think it's, in a country like India with banking licenses now being almost, no new licenses to be given, and we have only a finite number of banks, the disparity in valuation sometimes that gets set in as a result of one or two factors that could be seasonal or transient. That gives you the opportunity to buy into. So I think private sector banks for me are far more attractive as a group, and I don't want to talk specific stocks, than public sector banks for the moment.
Okay, hi Jakes, good afternoon and good to see you in. I'll ask you about metals in a bit, but what about FMCG? Godrej Consumer out of nowhere, they have come ahead of the end of the quarter and warned that things are not as rosy as it seemed, and HUL as well as Colgate in their investor calls as well, they stopped short of saying that there is a recovery underway. What's your view on these FMCG names? Because the index is closer to the highs, but you have some of these frontline names that are down 20, 25, 30%.
And for good reason. Their growth has been limited, valuation multiples have been excessive, and a lot of, in a sense, the FMCG space exposure has come through the new age companies. I haven't been, in all fairness, a great, for the last several interviews of yours over the last maybe 3-4 years, not been a great fan of the FMCG space. I've been happy, to miss it as 60p stocks move to 80p stocks with 5% growth rates. And if that kind of thing prevails, clearly at some point in time, the cookie had to crumble, the chicken had to come home to roost, as it were. So I think they have come, these could go through long periods of consolidation. People are reluctant selling these companies. The inorganic growth is not there, organic growth is limited, pricing pressures are there, and the new age companies are willing to burn money in order to gain market share, and they're also burning capital in order to bring down prices. So I can't see either pricing power or, in any case, consumption as a theme was limited. So for me, the FMCG is happy avoid, and I'll continue to be there. If I have to play that space, it'll be through some of the new age companies, and that's probably the way to do it as well.
Yeah, the new age companies, they've been definitely catching the market's attention, right? With the Zomato and then now Swiggy making waves. Jakes, great to have you on this afternoon. Good chat as always. I just want to go to pharma, which is a space that you've liked for a while. And it's in the headlines for not so great reasons right now. I mean, at least this week, it's been all about the US Biosecure Act and whether it'll get passed, and whether the legal legislation sort of moves forward or not. So there's been some worry around it. Your thoughts on whether it is the CDMO space that you're more optimistic on, and what happens if indeed this Biosecure Act doesn't go as per plan, which means that it's not advantage India over China?
No, I don't think you can conclude that. It may not be advantage India over China in a short tactical, should I say, CDMO space, but I think what can't be taken away is the fact that the generics pharma space is continuing to do extremely well. The generics pharma space is offering substantially lower prices for the same products, which I think anybody in the sort of helm in the US will go for. So I don't think that has changed. There have been some pockets which they have said has some pricing pressures where there are more than one player. But in general, I think that's a secular theme that will continue. So in the pharma space, I kind of like some of the PLI players, who are manufacturing here as import substitution kicks in, and the generic space. And where there's a combination of both these, I think it offers a great opportunity to buy into. Some of these stocks have come off from their recent highs, and therefore I think they offer margin of safety as well. And there are still stocks in the space going at sub 12 to 13 EV/EBITDA multiples. And I think that's fair for companies that are in the which are producing over 5,000 to 6,000 crores of EBITDA, and there are companies producing even higher than that, going at at best low double-digit EBITDA multiples, and I think they offer great opportunity. The risk is where people get carried away in a theme like the CDMO theme and buy into assuming growth over the next several years when the production itself has not begun or kicked in. That's where the risk is. And wherever there is euphoria, I mean, we've seen this is not just banking, not just pharma, but corrections happen pretty brutally when when people are well committed. So given that, my own sort of sense is there are still pockets in the pharma space that offer a lot of value. 1, 2, 3 companies I can talk about, which are, not on the channel, but which we as a house or me as an individual keep track of as opportunities to buy into.
Okay, all right, got that. Well, thanks a lot, Jakes, for joining in, giving us your view on all those sectors that we discussed, from banks to FMCG to the pharma pack as well. Wishing you a good rest of the day. And in fact, if we don't speak in 2024, looking forward to chatting with you in 2025 as well. But it's that time of the day where we have Nimesh, who's joining in on D Street Chatter to help us out with what he's picking up. Well, Nimesh, another down day, but it's only up and away for you from here on. Happy birthday, Nimesh. Wishing you all the best. It's been great working with you. Absolutely. And I'll tell you what, more than me, all the viewers love it because you're going to give them some insights which no one else can give them.
I mean, that's the part of the job, right? You do what you do best in terms of cruising the management. I do best in terms of getting the chatter. So again, thank you very much for the wishes, Nigel. Thank you everybody in the team as well. From a market perspective, Nigel, I think it's another day of consolidation, but the flow seems to be a bit tepid today. So the activity seems to be on a lower side in today's market. And having said that, the flows are slightly towards the sell side today. That's the overall indication. Okay. Having said that, there is a bit of buying in financials and consumer discretionary from the larger institutions. So that's the overall flow that I can pick up. But the good part is that the broader market seems to be outperforming on a daily basis. Even today, it's recovered from the lows and it's in the green now. I guess one reason for that outperformance is the fact that the inflows in the domestic mutual funds seems to be largely in the mid and small cap funds, right? And that explains that in the last 1 month, the mid and small cap have relatively outperformed. And it looks like that outperformance may just continue back on the domestic flows. From a technical point of view, I think 24,300, 24,350 is an important level on the downside to watch out from a support point of view. So need to see whether we support on those levels. But broadly, I guess today is a day when the flows are a bit tepid. But again, the mid-cap and small-cap outperformance continue.
Well, that's right. And that's what makes portfolios as well feel good. And, Nimesh, as you were doing that piece with regard to telling us, the markets actually have recovered from the lows of the day. So that's good news. But let's focus on individual stocks. What are you picking up?
So, as I said, there is a lot of action in the broader market stocks. So most of the chatter today is part of the broader market stocks. The first name is Kansai Narrow. While the stock is down in today's trade, down 4%. But in general, the stock has been consolidating in a narrow range. But now I understand there could be a large block deal in Kansai very soon. The shareholding is quite tight, right? The promoter owns 75, and there are a few institutions who own 6-7%. So looks like a large block is coming in Kansai Narrow. The second name is SPML Infra. We don't normally talk about that stock, but that's been buzzing on good volumes as well. I understand there is some HN activity as well. And the buzz is that the company is likely to bag a large order very soon. Remember what happened to Carnex Micro as well. A small company bagged a very large order and we saw a big reaction. I guess similar kind of large order can expect in SPML Infra as well. So that's the second name. The third stock is Shiva Moto. Again, a small stock, we don't talk too much, but big volumes on that name. The stock is up 15% last when I checked. Again, maybe the reaction is in anticipation of a fundraising via preferential issue very soon in Shiva Moto. And the last is CG Power. At record levels, stock has seen a bit of a consolidation in the last few months, but now I understand the company is very close to raising funds via QIP, and large part of the fund will be used for some organic opportunities. That's the buzz on CG Power.
Okay, well, Nimesh, thank you very much for that. So, two new names, SPML Infra and Shivam Auto. Not new, but names we don't discuss very often. Of course, the other ones are interesting as well. CG Power, so fundraise finally coming through. They've done a couple of acquisitions, but this, as Nimesh said, for CG Power is going to be used towards organic organic activity. So we'll see and keep track of some of this. Let's listen to veteran investor and chairman of Motilal Oswal Financial Services, Ramdev Agarwal. So we spoke with him earlier today. The theme of this year's wealth creation study is rooting for bruised blue chips. These are blue chips, essentially, self-explanatory, which have taken a large dip because of XYZ reason. Ramji spoke about this in that interaction. Listen in.
Nifty, any Nifty inclusion is also blue chip. So first 50 is the whatever Nifty companies, and then on top of it, any company which has more than 20% average ROE for 10 years. Very stringent note, I can tell you this.
Correct.
So we came across about 107 companies in total. Actually in Nifty, about 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips. You know, from the 300 rupees, see, in buying blue chips, the fun is that blue chips do come back to their old high. See, there is a consumer slowdown for sure. Okay, I mean I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow, and in that then your builders they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market shares. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit. 2-3 Adani companies are there in the list. They have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again massive competition coming from Zepto, Blinkit and Zomato.
Explore challenging parts, and this year has been truly special with Shrikant and Stree too. So Shri and Stree, I think both have been very lucky for me. But thanks to you guys, nothing would have been possible without your support. Thank you, Geo Studios. Thank you, Mukesh sir, Neeta ma'am, for putting your faith in films like Stree and just to support our cinema. Thanks a lot. Thank you so much, guys. Have a good night.
A huge round of applause, ladies and gentlemen, once again for the very talented Rajkumar Rao.
The Sports Leaders of the Year award recognizes outstanding contributions that have put India on the global map. Now this year, we celebrate the Indian chess team as the sports leader for bringing immense pride to India, to the nation, and inspiring a new generation of players across the country. A big round of applause for our chess team here.
Indian chess has come of age, transforming into a global powerhouse that commands respect on the world stage. At the prestigious Chess Olympiad, both the men's and women's teams made history by claiming gold, a first for India. In the open competition, India triumphed among 195 nations, with D. Gukesh and Arjun Irgaisi shining bright with individual goals. On the women's side, India outplayed 181 countries, fueled by stellar performances from Divya Deshmukh and Vantika Agarwal, who also secured individual goals. A moment of pride, a testament to talent, teamwork and grit. This is Indian chess at its pinnacle. CNBC TV18 India Business Leader Awards 2024 proudly presents the Sports Leaders of the Year award to the Indian chess team.
Please put a huge round of applause for Abhijit Kunde, coach of the women's team and the non-playing captain, and Divyendu Barua, the head of delegation, to join us. Sir, we would like you to kindly say a few words.
Good evening, everyone. We are deeply honored to receive India's Sports Leader Award today in this ceremony. It's a historic moment for chess that India won in both the categories, men and women. Chess Olympiad, first time in 95 years, where 180 plus countries were participating. I think it's very rare that such a dominance is displayed in any other sport in both the categories. We are proud that we brought back the crown to India, the birthplace of chess. Today is special that we have been honored among the gathering, I think with the tycoons from politics and business. And we are confident that we
Welcome back. Well, keep your eye on a couple of stocks. You know, Sambandhana Motherson, I think, should come up for you on the screen. The stock has recovered a little bit from the low point of the day. It's still 20% off the recent peak. But as we speak, the volumes are fairly decent over there, and it's above the 20 DMA. You know, just moved above the 20 DMA. So Sambandhana Motherson is one stock that we're tracking. And the other one is Senco Gold. You know, the stock from the day's low has seen a good recovery. Yesterday as well, it went to a high of around 1,180, and from there, it did see some selling. But today as well, it's moved a little bit higher in the last hour or so. Mitesh Thakkar is back with us. Mitesh, the headline index has seen a good recovery, but give us some individual trading ideas.
Yeah. So I have a BTST. I think, you know, Emphasis and the entire IT pack is still looking better than the rest. So Emphasis is a BTST. Disclaimer, we have some options positions over here. So there's vested interest. But this I would recommend a BTST with a stop at 31.69 for targets of 32.20. And the other one which I like is Godrej Properties, you know, which could show good traction on the intraday and the daily charts. So BTST here with a stop at 2794 for targets of 2840.
Okay, let's get to the insurance numbers then. The general insurance industry has seen a sharp drop in the premiums in the month of November. Yash is here with the numbers. Yash.
Well, Rima, the industry was doing pretty well till like the last month as far as premium collection is concerned. But in the month of November, there's a sharp drop, as you pointed out, which has been seen in the premium collection numbers. For the entire industry, November premium collection has grown just by about 4%. For the first 8 months, the premium collection has grown at about 9%. The industry was growing anywhere between 15 to 18%. And we've seen a slide of about 4% growth in the month of November. Standalone health insurance industry has grown at 10%. First 8 months, the premium collection has been up 21%. This side of the industry, that is standalone health insurance, was growing at about 25 to 28%. The slides come all the way down to about 10% growth. ICICI Lombard, after a very long time, there's been a degrowth in the premium collection in the month of November. The premium has contracted by 3% in the month of November. For the first 8 months, it's up 12%, and there's a 22 basis points market share gain also. For ICICI Lombard also, the growth has been good in this year so far, about 15 to 18%. Now, in the month of November, there's a contraction of about 3%. New India Assurance, November premium has grown just by about 6%. First 8 months growing at 3%. And there's a 71 basis points market share compression for New India in FY25. Go Digit General Insurance, again, a contraction in the month of November by about 4%. First 8 months, the premium is still up about 9%. And there is an increase of 1 basis points as far as market share is concerned. Speaking about the two standalone health insurance companies, Star Health, the premium collection in the month of November is up 8%. This growth was about 18%, and now it's come down all the way to about 8%. First 8 months, the growth is 14%. Niva Bupa Health Insurance, the November premium growth stands at 15%. This was somewhere about 30 to 35% in the recent past, now coming down all the way to about 15%. And first 8 months for Niva Bupa, the premium growth stands at 26%.
Okay. All right, Yash, thanks very much for that. So that's all the insurance data on the radar. Okay, that's PNB. The PMLA court is allowing monetization of Mehul Choksi's properties. That's a large amount that PNB then could get once it's allowed to monetize some of those properties that it would have seized as part of that scam which took place a couple of years ago now. And the stock's moving higher because of the prospects of maybe getting up to 2,500 crores from the monetization of those assets. So that's PNB making headlines this afternoon as well. Speaking of financials, there's one more stock that's on the radar, Bajaj Finance. Abhishek is joining in. The company, I think, met a couple of analysts today. There was a conference call of sorts. Abhishek, tell us more.
Well, there is an ongoing analyst meet that Bajaj Finance is holding for analysts or buy-side community at large. So they have given the long-range strategy over there, wherein they say that customer franchise will increase from 9.2% in FY25 to about 19 to 20 crore by FY29. They see a huge jump in FY29 versus FY20 FY28, given the fact that they have also mentioned that there will be some acquisition which will boost the customer base over there. Cross-sell franchise will increase from 5.8 crore in H1 FY25 to about 11.5 to 12.5 crore by FY29. Now, India Payments GMV, that is 0.27 at H1 FY25, that margin will improve to about 1.25 to 1.5% in FY28, but it will fall down to about 0.4 to 0.5 in FY29. So, share of total credit will increase from 2.1% in H1 FY25 to about 3.2% to 3.5% by FY29. Retail credit, that will increase from 2.7% and H1 FY25 to about 3.8 to 4.2% by FY29. They also expect an improvement in the return on equity, which is at 19.4% in H1 FY25 to a range of 20 to 22% by FY28 and 29. So AM per cross-sell will improve from 64,800 that they had in H1 FY25 to about 80,000 to 85,000 by FY29, but it will be on a higher range in FY28 at about 90 to 95,000. Bajaj Finserv, over there, the consolidated income that is being targeted is about rupees 3 lakh crore in FY29 versus rupees 1.1 lakh crore in FY24. So they are expecting a CAGR of 22% over the next few fiscal. They are targeting a PAT of 20,000 crore by FY29 versus 8,000 crore that they had in FY24, which is a CAGR of 18% to 22% over the next few fiscal. With reference to the life insurance, they say that they'll continue to gain market share with top line growth being at 2x of the industry level, and they also want to increase their contribution to 10% of RWRP, which is retail weighted received premium, from 4% that they have in FY24. So in terms of product mix also for the life insurance, they are planning to change it to about protection being 10%, non-participation being at 25%, participation at 30% and ULIP at 35%, from currently traditional to ULIP being at 61 to 39 ratio. So return on embedded value is targeted at 18% to 20% in the near term or in the coming future versus 15% that they have in FY24. And VNB growth, they are targeting that to be faster than the retail weighted received premium that they are targeting going ahead. Back to you.
That's an ocean of numbers, Abhishek. Tell me this, Abhishek. So with what you've seen, are we likely to see any change in ratings, upgrades, anything tomorrow morning?
Seems like growth rate might come down. Now they have been growing north of 25 to 30%. That growth rate might come down to anywhere between 20 to 25% CAGR that they are targeting. However, the return on equity improvement that they are targeting should augur well for the company.
Okay. Growth rate should come down compared to what they've already done or compared to what the street is expecting?
That estimate is not there by the street for FY28-29.
Okay, all the way to 2029. Thank you very much, Abhishek. Appreciate it. We'll take a quick commercial break here. We're going to come back and, we'll speak with Jay Bala. He's, of course, with Catch the Chaos, and we'll talk technicals and specific trades. Stay tuned.
Guidance, India will lead the sports by 2036.
Well, amen to that. Thank you so much, and a big congratulations again to the team.
I would like to thank on behalf of Indian team. I think most of them are playing in tournaments, so they are not here. And chess fraternity, CNBC and juries, and everyone for supporting us. I think this is a award from the industry, so I will just put some numbers to it, because I think everyone was showing some numbers. So chess is played in more than 190 plus countries. On the ranking, we are world number 2 as far as the top 10 players average rating is concerned. We are world champion in men and women category in the team event, and Gukesh is playing in Singapore for the world championship.
Many
Thank you very much.
congratulations. Many congratulations. Thank you so much.
Welcome back. Now it's unchanged on the Nifty. 0-point move on the Nifty as we speak. Sensex is just up close to about 30 points. Few minutes to go as we wrap up today's trade. There has been a bit of a pickup in the markets. We were down 20 odd points. Now we're flat. Jay Bala of cashthekiosk.com is now joining us on the show. Jay, last 2 days things have been very, very sideways for our markets. What have you made of the action and any trends that you can spot towards the end of this calendar year?
Hi, Emma. Good to be here. See, the market is doing something more important. You know, Monday it broke the Friday's low. Today it broke Monday's low. So the market is signaling weakness, although the market is flatlining today. As I pointed out last week, I said the bears would be better off if they conceded some ground and let the market climb to somewhere close to 23,800 or even 25,100. The market has come to 24,857 and is starting to look weak. You know, one more high would be okay, but even close to 25,100, that would make the market structure look like it's turning positive, but it's not. It's just a counter trend rally. But what would convince me that the downturn has resumed is a break of 24,295. Until 24,295 is taken out on an intraday basis, I would assume the market is still correcting upwards. Wait for the confirmation to come through below 24,295.
Okay, all right. Hi, Jay. Good afternoon. Sounding cautious as we've heard in the last few weeks on the markets. So we take that point on the index. But today you're going to give us two calls, and I believe one of them is the long call. So go for that first and then give us your short call. I think it's in Grasim.
Yeah, the September high for PI Industries, that's looking like an incomplete move for the stock. And the decline from the September high to the December low is an overlapping move. So that's possibly a corrective structure. But because the overall opinion of mine is, slightly cautious, I want to be sure that this stock is turning. So I'll wait for the stock to close above 41.78, and then that will trigger a long for me. A very strict stop loss at 40.30 is important, and anticipating the stock to climb to fresh 52-week highs past 5,000 mark. And the short call I have is from the Adani Group. Grasim is looking like a corrective decline is still due. The recent high of about 27.34 is unlikely to be not taken out. So stop loss are above that level of 27.34 with the price objective of 2,400. Even Adani Ports is looking like the recent low it clocked in November. That looked like an incomplete move. So probably some moves are happening in the Adani Group. So if today's low gets taken out tomorrow, probably that will be convincing move that Grasim is moving towards 2400.
IT is up 5% since the beginning of December, and that's the only index, according to you, that hasn't broken important supports.
That's right, Rima. See, the markets are, for the IT index, it's moving from the November low in an overlapping fashion, but that's a 5-step move. A 5-step move is usually a trending move for technicians like us, but it's an overlapping move. But that's signaling that although the IT index is clocking fresh 52-week highs or fresh all-time highs, this is probably an ending move for the index. But as long as the index stays about 39,900, the sector remains bullish. So maintain bullishness, but with tight stop loss. The front line, Infosys and TCS, they are weaker than the broader names like Coforge or Persistent.
Okay, all right. I think, Jay, stay with us. We're going to just wrap out things here on the program. But those are interesting views from Jay, as always, in terms of specific trades as well. So there were two calls. One is short Grasim from Jay, and the other one was long PI Industries, which Jay has put out. Of course, apart from Nifty levels, and for Nifty, of course, Jay believes 24,295. That swing low is important, and if you start to trade below it, I mean, that would mean that the market has resumed its decline, and a few other sectors as well. I think that's the closing bell which has gone off, and you know, much better, by the way. We end with nothing. Actually, we end slightly higher, maybe even, right? I mean, 1.5 odd points. The adjusted close will come up on your screen in just a bit. The Nifty Bank perhaps also should come up. And here also, actually, about 1/3% gain, which came through after a very sharp bounce from about 150. 150 or so was the low for the Nifty Bank. And from there, the Nifty Bank also posted a smart recovery. The mid-cap and small-cap indices end flattish, about 1/4% higher. Both about 1/4% in the green. Market breadth did actually also recover quite nicely into close, and I think we were almost at about 1:1 as far as NSE advanced decline goes. Lots of movers. Shriram Finance, Wipro, Bajaj Finserv were some of the gains coming through on the Nifty. Losses coming through in names like Bharti, HDFC Life and Adani Ports. And of course, I mean, in the broader space, a lot happening. So LIC was a loser. And of course, in many cases, it was just reversals from yesterday. CET, MapMy India, HEG, Syngene, MTNL, these were all sharply higher yesterday, and they're all sharply down today. So just, I mean, you know, day-on-day kind of reversals is what we saw. A theme which did well, of course, was capital market companies. So Nippon India, Novama, 361, all these names were higher. And Gokuldas maybe deserves a mention as well. Gokuldas Exports with almost 1,100 after taking out $1,000 yesterday. Well, it's a wrap on the session and closing bell. Markets forward. We'll pick up on all the action on the other side.
जिस प्रकार से ये सरकार मोदी जी और मोदी जी की पूरे सरकार किस
The market ends near the day's low, led by financials. Mid-caps fare better. Realty and IT are the top sectoral gainers. Energy and infra lag.
Revenue Secretary Sanjay Malhotra is set to take charge as the RBI governor for a 3-year term from Shaktikanta Das, whose terms end today. The move assumes significance in the light of expectation of a rate cut at the next MPC meet and key pending regulations.
Equity inflows into mutual funds cool in November as new fund offers thin out and investments into thematic funds slow down. But small and mid-cap funds see healthy flows and SIP numbers hold steady. Hello and welcome to Markets Forward, your go-to show where we aim to get you a lot of the day's market action, the key data points and the commentary that we picked up today. And we promise to gear you up for the next trading day. I'm Surabhi Upadhyay and with me on the show today is Vinny Motiwala. Vinny, not a bad day, but a very quiet one would have to say. Very, very sort of range-bound moves coming through.
Range-bound move, but at least the last 30 minutes became exciting, right, for an investor review. When you look at it, 30 minutes, we saw that recovery. It's not a bad day, but like you're saying, it's a range-bound trading session that is coming in for the market.
Absolutely. Slightly thinner Q, especially if you're looking at the large cap screen. Lots of individual stock level action. We'll get to that in just a bit. But if you talk about the larger picture, let's pull up the Nifty. It'll tell you that the ending was fairly flat. Though, of course, there was a recovery from the intraday low. So that was the good news for the bulls. They managed to close at that flat line. Let's talk about the winners and the losers. Actually, what was working well for the large cap space was the fact that the twin engines were firing away rather nicely. Banks were actually the best performing part of the market. The Bank Nifty had a gain of about 0.3%. And some of the larger IT names, the big boys in the IT pack, they were also contributing positively to the upside. So then where was the problem? Generally speaking, infrastructure, PSUs, this was slightly a lackluster space. The market's still confused over FMCG after that howler of a update that came in from Godrej. That's also a fairly soft spot. But then, Vinny, I mean, mid-caps, I guess, faring better. And, you know, at an individual stock level action, there was plenty to track today.
Absolutely. A lot of action to track. And yesterday, actually, what we saw, you know, remember MapMy India in the last 30 minutes, that announcement came in. That's our run-up coming in yesterday. But today, MapMy India has actually seen a fall. So that is something that you should be watching out for. We had CEAT also yesterday was buzzing. Today, nothing exciting that happened for CEAT as well. So that is among the losers that we are watching out for. But let's look at something like an HDFC Bank also, what that did in trade. Yesterday, that was a top gainer. Today, interesting to watch out for. HDFC Bank recovered from the day's lowest point, but then managed to come back to the green side. A lot of individual stocks we'll be talking about through the show as well. And actually, here's the lineup, what we have planned for you all in store today. We'll start with the top movers and shakers of the day with Vivek. Well, and the stocks of the day are Religare, Bajaj Finance, Greaves Cotton is what we'll be talking about. And we'll give you the key reasons why the stocks were buzzing in trade today. Last but not the least, we'll delve into the markets and key events to watch out for in tomorrow's trading session. Okay, let's go and start the first segment of the day. We'll go to Vivek, who's joining in with us to tell us from the big wall, what are the key stock movers in trade, what are we watching out for today, and what was moving.
Well, thank you so much for that. You know, like you mentioned, you know, largely a very lackluster trading session, but in the last half hour, you did see some buying activity emerge. Now, in terms of the gainers, you know, quite a few stocks did move quite well within, you know, the entire pack as far as the market is concerned, which has been very volatile. One oasis of calm has actually been the IT pack the last few trading sessions, and even today was no difference. Have a look at some of the names there. LTI Mindtree almost 3% higher, Emphasis 2.5%. The mid-cap IT actually doing very well in the session. The other stock on the radar was Raymond. Now, this particular arm, remember, is the demerged entity as far as the erstwhile Raymond is concerned. And today, it ended up almost 11% higher. This is after a very sharp sell of the stock saw post its listing onto the exchanges. Varroc Engineering, another stock today that moved up higher on very, very strong volumes, almost 9% higher as far as Varroc is concerned. And Manappuram Finance within the NBFC pack, remember, they have been laggards, but today almost 3.5% higher for Manappuram, also amongst the top gainers as far as the F&O space was concerned. When you're talking about some of the laggards today, LIC, you know, can't go beyond this given the fact that on the back of very weak operational data, stock ended lower by almost 4%. CEAT, like you mentioned, yesterday there's quite a bit of up move that we saw as far as CEAT was concerned. This on the back of positive news flow emerging as far as the acquisition was concerned. Today, giving up significant portion of those gains, almost 6% lower. MapMyIndia or CE Infosystems yesterday, again, after the company rolled back the decision to go ahead and invest in Rohan's entity, this particular stock yesterday higher by almost 18%, today down 5%. So overall, very lackluster trading session, thin volumes is what you're anticipating when the data comes out today evening.
Okay, all right, Vivek, got it. Thank you very much for all of the details. Let's just go across to our guests now. There's plenty to talk and discuss. Jay Bala of Cash the Chaos is with us, and we also have Mayuresh Joshi, Head of Equity Research at William O'Neill. Thank you, gentlemen, for joining in. Jay, first, let's get an overall view with you, because you seem to be a little cautious. The markets had a nice bounce back, but now we're entering the fag end of the year. So what are the critical levels you're watching, and what would the trading bias be now from a positional standpoint, say over the next couple of days?
Yeah, hi, Surabhi. The markets are flatlining today, but it's doing something very subtle. Yesterday it broke the Friday's low, and today it broke Monday's low. So that although the markets seem like it's not gone anywhere, it's giving you an important message. And if 24,295 on the Nifty were to get taken out, I think that will signal the downtrend is resuming. But the whole market seems to be waiting for HDFC Bank to top out. It's got a little bit of limiting move going on. Probably for the higher highs to come through somewhere close to 1900. But if HDFC Bank were to close below 1816 on a closing basis, yeah. So if that's were to happen, the market would probably signal the banking sector, which is right now slightly leading, would actually point to a reversal. So 1816 from a sector perspective as well as overall market perspective is going to be pretty important.
Okay, Jay, thank you for that, and surely keeping an eye out on those levels. But Motilal Oswal, in its recent report, says that the Indian capital market has seen a remarkable growth in the last 5 years. But penetration has been low. Vamakshi is joining in with us to give us those key highlights of the brokerage note. Vamakshi.
Well, absolutely, Vinny. The capital market theme has seen a remarkable growth in the last 5 years, but the penetration has been quite low. Case in point, when we look at the DMAT penetration, it came in at almost 12% as compared to 62% for the USA. MFAUM to GDP ratio too came in at 17%, which is much lower as compared to the global average of 65%. But despite this, there are several growth levers and opportunities at play for all of these companies, and that is because over the next decade, demographic dividend is expected to accelerate. UPI and eKYC have already revolutionized brokerage and MF industry, and they will continue to drive growth for them as well. Account aggregation too is likely to transform personal finance industry and is expected to drive digitization in wealth management, broking, as well as some other segments. Recent F&O regulations are expected to hurt the volumes in the short term, but however, as the base resets, the growth is expected to pick up from here on. Overall, they're expecting a revenue growth of anywhere between 17 to 45% for most of these plays from FY24 to 27. Operational leverage will also kick in, and this in turn will lead to better profitability for all of these companies, and therefore they're expecting 12 to 75% CAGR over the same period. They prefer certain picks in the AMC space. They like HDFC AMC, Nippon AMC. They have a buy rating on both of these counters. From the broking space, they like Angel One, while in the exchanges, they like BSC. Now, among wealth managers, they like Nuvama as well as 361 WAM. And as far as the intermediaries are concerned, they like CAM, and they have a buy rating, target price of 6,000 rupees per share on this one.
Oh, okay. All right. Got it. Thanks very much for that. Vamakshi, the hat note definitely moved a lot of the stocks in the capital market arena today. Let's actually take that forward with Mayuresh. Mayuresh, I know we've discussed these stocks ad nauseum for the last many months now. But it's amazing, right? A new note can still stir a fresh lease of life and get them all excited, 6-7% higher. It just tells you the market's appetite. If you were to buy something fresh in this capital markets, broking, wealth management space, what would it be?
Afternoon, Surabhi. You're absolutely right. I think the kind of value additions that we've probably been seeing in terms of SIP flows, the number of demat accounts that have got added, and let's not forget, if you probably look at the overall savings pool, just 5% of the overall savings go into Indian equities or equities in general, which probably means it's far, far lower than the global average. So again, I think there is significant runaway growth expected over the next decade or so in terms of more demat accounts being added, expectations in terms of the demographic changes that are expected to happen. If you probably look at a lot of the wealth management firms, they've actually put out these slides where the top tier incomes might actually increase quite substantially, and they might need professional managers to manage their assets as well. And therefore, I think the all-round show that we're probably seeing and witnessing in terms of SIP flows, in terms of PMS flows, AIF flows, demat additions, that might very well continue. Now, you can very well argue, should be on one side, valuations have become very, very dear compared to 5-year averages. But if you look forward for the next 10 years, the growth will probably keep on coming through, specifically in all these areas. So looking at all these data points put together, our own sense is that asset management companies like a UTI AMC as an example, or an HDFC AMC as an example, might look expensive at this juncture. But the bigger picture, the landscape that it probably offers, there is still decent amount of other things to look at. So the asset management firms is something that we like at owning at this juncture.
Right, okay, that's the view coming in on HDFC, AMC and all those capital market names. Keep an eye on that. But let's talk about one of the other stocks that have been in focus today and surging in trade was Religare Enterprises. And this is after RBI has approved Berman family's plan to acquire 26% stake in the company. Let's go across to Vivek, who's joining in with us to give us more details on this one. Vivek.
Well, almost a year and a half is where you've actually seen the tussle going on between the Religare board as well as the Berman family. Remember, Berman family, after picking up significant stake, over 20% stake, actually went ahead and announced an open offer in August 2023 to acquire an additional 26% stake. Post which, they have been at loggerheads. We're talking about the Berman family versus the Religare board. So today, a very important development coming in. RBI has gone ahead and given the nod. This is a nod for the open offer as far as the Berman family is concerned. So one more tick mark or one more check mark coming in as far as regulators are concerned. So which are the regulators that have given the nod? CCI approval has come in. RBI approval has come in today. IRDAI approval, given the fact that Religare also houses an insurance arm as far as care is concerned. So 3 regulatory nods have been approved. SEBI notice or the SEBI approval is still pending, but the SEBI approval was largely contingent on RBI giving the nod. RBI, however, takes 2 key points into focus. Number one, they say that the acquirers need to consolidate the NBFCs in the resulting structure group before March 31st, 2026. And also, the request of the Berman family for appointment of 4 proposed directors at this point of time does not still have an approval. So now, apart from this, key to track as far as Religare is concerned is the fact that there will be an AGM on December 31st, the end of this particular year, and there will be a vote that will happen as far as the reappointment of Dr. Rashmi Saluja as the chairperson as well as the director on the board. So this is another very important development that we need to wait and watch out for. Remember, the open offer price is at 235 rupees a share. The stock price currently is trending much above that particular level.
That AGM is on the 31st of December, right, Vivek?
That's right. And which is when, the vote results of the voting as far as the reappointment of Dr. Rashmi Saluja will come. And, that is when there could be some further movement as far as the open offers concerned.
Absolutely. A very, very important meeting. They've chosen an interesting day, last day of the year.
New year, new people, I think.
Hopefully, new year, new beginning, clarity, all of that for Religare. Got it. Thank you very much for that, Vivek. Let's now put the spotlight on Bajaj Finance. The company has put out its guidance for FY29 in an analyst call today. Bajaj Finance is expecting the customer franchise to increase 19 to 20 crore in by FY29, shall we say. Abhishek has more of the highlights. Abhishek.
Well, Bajaj Finance held its analyst or investor meet today, wherein they have given a long-range strategy with respect to FY28-29 guidance versus what they have delivered in H1 FY25. So, customer base will grow from 9.2 crores in H1 FY25 to about 19 to 20 crore by FY29. Now, they are also targeting an acquisition by FY29, which will boost the numbers of FY28 to 29 growth over there. Retail credit share will increase from 2.7% in H1 FY25 that they had to about 3.2 to 3.5%, and ROE, that is return on equity, will increase from 19.4% that they had in H1 FY25 to about 20 to 22% by FY29. So in terms of Bajaj Finserv, the console level, they are targeting a total income of about 3 lakh crore by FY29 from 1.1 lakh crore in FY24, which is a CAGR of about 20 to 22% 4% over the next few fiscals, and they are targeting a PAT of 20,000 crore in FY29 versus 8,000 crore that they had in FY24, which is a CAGR of anywhere between 18% to 22% over the next few fiscals. In terms of life insurance, they continue to gain market share, and they intend to grow the top line 2x of what the industry growth rate is, and they intend to increase contribution to RWRP, which is retail weighted received premium, to about 10% from current levels of 4% in the future. And they also intend to change the product mix. Currently they have a traditional and ULIP product mix of 61 to 39, which they intend to diversify and make it protection 10%, non-par that is non-participation to about 25%, par that is participation to about 30%, and ULIP at around 35%. They also intend to increase their return on embedded value to about 18 to 20% in the future from the current levels of 15%, and value of new business growth that will be significantly faster than the retail weighted received premium growth rate that they intend over the next few years. Back to you.
Thank you so much for that, Abhishek. Let's move on to the next stock that has been in focus today. That's Greaves Cotton. The stock has seen a massive rally today, and December was the best month for the stock. Hormaz is joining with us for telling us what is the reason for the rally.
You put a buzzword in a stock and it starts to move, right? EV is one such buzzword that has come in with Greaves Cotton, and that has been the factor behind the surge that it has seen in the month of December. But today it was up around 18-19%, up, so already 36% in the month of December, which has now turned out to be the best month for the stock in 2024. And in terms of the calendar year as well, the stock is up almost 65%, and it is the best calendar year returns that the stock has had since 2014, when the stock has almost doubled in value. Now, what's happening here? On the 1st of December, the board has approved the IPO of its electric vehicle subsidiary, which is Greaves Electric Mobility, and that will be an IPO of a fresh issue as well as an offer for sale, but they have not specified a timeline for the IPO yet. They said it will be subject to market conditions, although an IPO has been given an approval. Now, yesterday there was a deal where Vijay Kedia, the investor, veteran investor, acquired around 0.5% stake in the company, and that has also caused a surge in the stock price in today's session. Some of the other fund houses who have bought stake in Greaves Cotton during the December quarter include the likes of Dimensional Fund Advisors, Sundaram AMC, Motilal Oswal. So fund houses are piling in, investors are piling in ahead of the electric vehicle mobility IPO, and it's showing up in the stock price as well.
Okay, thank you so much for that, Hormaz. But, Jay, I'm going to take a question to you in terms of this. Relicare Enterprises or Greaves Cotton, both the stocks we've just heard are the reasons for them. Anything exciting that you're finding in any of them?
Yeah, Greaves Cotton actually looks good, and probably it's got a very strong momentum backing it, and the price structure, although from the 2020 pandemic low, it seems to be finishing a complete structure at around 340, 360. So while the upside that itself is quite sizable from here, but it will be probably completing it out. And from the investment and asset management space, Relicare has got one more higher highs to come through. But not much upside. But what is more interesting is what is not shown on your screen is actually Nippon India. Nippon India is breaking out in a very constructive fashion. It's probably got further higher highs to go through, somewhere about 1,000, 1,020. But the risk reward is about not great. So it's about 660 stop is required for it. So, and an objective of 1,000 gives you about just 1:1 risk reward. But among the asset management space, that looks the strongest for me.
Okay, sure. Thank you so much, Jay, as well as Mayuresh, for joining with us on the show and giving us your insights there. But it's time for a short break, and we'll get you more on the other side on the D Street Chatter. What's happening on that front after this break?
गौतम अडानी जी को बचाने के लिए ये पूरा प्रयास किया जा रहा है, ये सब सर्वविदित है। आखिर क्या दिक्कत है? जब गौतम अडानी जी के वकीलों ने कुछ पैरवी कर दी, वही पैरवी मंत्री जी कर देते, आके वही पैरवी प्रधानमंत्री जी कर देते, तो मामला खत्म हो जाता। हम पर आरोप लगता है कि हम सदन नहीं चलने दे रहे, और आज क्या हो रहा है?
56 इंच का सीना जो था
देश प्रेम के लिए था या अदानी प्रेम के लिए था, इसका जवाब अब हम भी चाहते हैं। इन्वेस्टिगेशन हम भी चाहते हैं कि हजारों करोड़ों का जो घूस दिया गया है, जो यूएस कोर्ट ने इनको इंडाइट किया है, वो क्या ब्यूरोक्रेट्स को क्या था या सबसे ये सरकार जो चल रही है, ये सारे एमपी जो चिल्लम चोट कर रहे हैं, उनको गया था।
Welcome back to Markets Forward on CNBC TV18, and it's time now for our segment on D Street Chatter, where Nimesh will get us all the insights into the dealing room chatter. Nimesh, what's on your radar today?
Well, it was a day of consolidation, but the broader markets continue to outperform, and a lot of individual names are buzzing in trade. So here's my list of chatter. The first name is Kansai Narrowlight. The stock was down 4%. The volumes were on the higher side. Well, the stock has been consolidating post Q2 earnings, but now I understand there could be a large block deal in Kansai very soon. The second name is SPML Infra, a small stock, but that was buzzing in trade on large volumes as well. I understand the company is likely to bag a large order very soon, so that's the buzz there. The third name is Shiva Moto. Again, a small stock, but big move in that name as well. The stock was up 15%. Again, the volumes were on the higher side. I understand there is a bit of HN activity as well. And the company is likely to raise funds via preferential issue very soon in Shiva Moto, so that's the buzz there. And the last name is CG Power. Well, at record levels, the stock has been consolidating the last couple of months, but now I understand the company is likely to raise funds via QIP, and large part of that fundraising will be used for organic opportunities in the domestic market.
Okay, all right. So lots of stock-specific buzz out there. Thanks, Nimesh, for getting us all the details, and enjoy your day. It's Nimesh's birthday today, so hope you have a great one in the evening. Well, with that, it's a wrap on this edition of Markets Forward. But before we go, let's present to you the Growth Code, a collaboration, an initiative by Grow and CNBC TV18. Our mission is to equip you with valuable insights and strategies to navigate the market and make informed investment decisions. Today, we will help you understand if you should be trading in cheap, out-of-the-money options.
Don't trade out-of-the-money options just because they're cheap. Traders often get tempted by out-of-the-money options, lured by the possibility of turning small bets into massive profits. But what's the reality here? Out-of-money options are cheap for a reason, because they're based on outcomes that are less likely to happen. For instance, if a stock is trading at 100 rupees, an out-of-money call with a strike price of 120 rupees is inexpensive, because the chances of that stock reaching that 120 rupee mark before expiry are slim. The real challenge for those who are buying this option is time decay. As expiration approaches, out-of-money options lose their value rapidly. Each passing day without significant movement towards the strike price erodes the wealth of those who've bought that option. In essence, buying out-of-money options is a high-risk, low-probability situation. Other side is that selling these out-of-money options. If you go ahead and sell them, when you make money, it would be a limited amount that you would make, just that premium. But were there be a situation when the stock price actually crosses that 120 rupee mark, the losses that you would have would be massive. So the potential rewards, while they may seem enticing, the odds in out-of-money options are stacked against you.
The Brand Campaign of the Year award recognizes excellence in creativity and impact in marketing. And the Brand Campaign of the Year 2024 award goes to Ariel's Share the Load, Congratulations and request Josie Paul, Chairperson and Chief Creative Officer, BBDO India, and Mukta Maheshwari, CMO, PNG India, to kindly join us on stage. And while we take a glance at this amazing campaign.
Equality begins at home, and for nearly a decade, Ariel's Share the Load campaign, conceptualized by BBDO India, has been leading the charge for change. From its inception, the campaign challenged societal norms, asking a simple yet powerful question: is laundry only a woman's job? In 2024, Ariel redefined this movement with its hashtag Home Teams Edition. Through evocative storytelling, it urged families to work as a team, sharing responsibilities equally. By highlighting real-life scenarios, the campaign struck a chord with millions, inspiring conversations on gender equality and inclusivity. The impact: a wave of social media engagement, widespread participation in the hashtag Home Teams Initiative, and a reinvigorated push for equitable homes. CNBC TV18 India Business Leader Awards 2024 proudly presents the Brand Campaign of the Year Award to Ariel's Share the Load hashtag Home Teams.
Ladies and gentlemen, please give a big round of applause to Josie and Mukta here from the Ariel team for this campaign. Many, many congratulations.
Congratulations to you. Would you like to share your thoughts on this?
It's a proud moment and an honor to accept the award for the Brand Campaign of the Year on behalf of Procter & Gamble for Ariel Share the Load. As part of building communication that drives superiority for a product, P&G brands try to communicate values like team.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty end flat after a range-bound session. Equity mutual fund inflows declined 14% in November. Even a small and mid-cap fund see healthy flows. SIP numbers hold steady. Brokerages expect the transition from Shaktikanta Das to Sanjay Malhotra to be smooth and seamless, as the market will move to a price in a rate cut during the February Monetary Policy Committee meeting. The rupee hits a new all-time low in anticipation that the new governor could shift towards a more accommodative monetary policy stance.
The relationship between the government, in the finance ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination.
RBI Governor Shaktikanta Das bids farewell after 6 years at the helm, says the relationship between the bank and the government have been at its best during his tenure. Ad supervisory methods have become much sharper today. RBI allows the Burman family to hike stake in Religare Enterprises from 25 to 51% through an open offer, but lays down certain conditions. The company cannot appoint new directors at this stage, and Burmans need to submit a detailed consolidation plan within 90 days. Israel pounds Syria's capital Damascus, targeting airports and strategic military infrastructure. Syrian security officials say Israeli military incursion has reached the outskirts of Damascus. Iran, Qatar and Saudi Arabia accuse Israel of a dangerous land grab after it seized a buffer zone in Syria. Parliament logjam continues. Both houses adjourned for the day. Opposition lawmakers move a no-confidence motion against Rajya Sabha Chairman Jagdeep Dhankar. Marks the first such instance in India's parliamentary history. However, the motion is expected to be defeated as opposition does not have the required numbers. The Supreme Court takes note of the controversial comments made by Allahabad High Court Judge Shekhar Kumar Yadav at a VHP event. All India Lawyers Union had called for action against the judge for using a communal slur and saying India will be run as per the wishes of the majority community. Well, let's start with the market action of the day. The Sensex and the Nifty ended the day flat after a range-bound session. Both indices are largely unchanged when compared to yesterday. That's the Nifty for you. The Sensex just about in the green. The Nifty bank higher by about 170 points, and the mid-cap index added 136 points. Now, inflows into equity mutual funds dropped by more than 14% in November. Large-cap funds were, in fact, the worst hit, with the AMPI data showing an over 26% dip. Surabhi is standing by now to take us through the numbers for the month. Surabhi. Well, Shireen, the numbers actually are showing that slight dip, but they're not bad. I mean, the net equity inflow picture is still quite healthy at just under 36,000 crores. But yes, I mean, it's looking a shade lower than the near 42,000 crores that equity funds pulled in October. So why the dip? Actually, before I talk about the reason, let's talk about the all-important SIP number. Now, that's still a very lofty 25,300 odd crores. But again, it's very flat. Month on month, there's no growth in SIPs. That's something that you have to keep in mind. So why the dip? The primary reason is that in the month of November, we didn't have hectic NFO activity, as has been the case in the last couple of months, which is why NFOs actually mopped up just about 4,000 crores. Compared to the 10,000, 12,000, 15,000 crores of these big ticket fund offerings, new fund offerings, they were pulling in the big money in the earlier part of this year. That also explains why thematic funds, if you talk about sectoral and thematic funds, which is how the mutual fund industry is pulling in a lot of the new money, that category has seen a dip as well. Compared to the trends that we've seen in the earlier part of the year. But the good news is that investors are very well keeping the faith in small caps and mid caps. While the large cap category has seen the net inflows drop by about 1,000 crores. Again, this is month on month comparison. Look at mid caps and small caps. Small cap funds have pulled in over 4,100 crores. That's not a small sum of money. Mid cap funds are now pulling in almost 5,000 crores on a monthly basis. So the mid and small cap party is well and truly on. Also explains the recovery in those indices in the last couple of weeks. On the hybrid side, interestingly, flows have thinned out as well. And here there are very popular categories like the multi-asset funds or the balanced advantage funds. But there's been a bit of a dip. They haven't pulled in as much money in November as what we saw in the recent past. Finally, you talk about the total industry AUM that has swollen further. And now it stands at above 68 lakh crore rupees. So looking good, not too bad. But yes, there has been a bit of a short-term dip, a month-on-month dip in those numbers.
All right, so many thanks for joining us on the mutual fund data. Now to the money market action. The rupee hitting a fresh record low against the dollar today. It surpassed its previous low of 84.75 that was hit last week. Now this after the appointment of a new RBI governor, Sanjay Malhotra, increased expectations of a possible rate cut next year. Brokerage firm Nomura said that a likely shift towards an accommodative monetary policy stance is among the potential changes that are anticipated under the new governor. And speaking of the new governor, the new governor Sanjay Malhotra is set to take charge at the Reserve Bank. A 1990 IS officer from the Rajasthan cadre, Malhotra served as the Financial Services Secretary before his stint as the Revenue Secretary from December 2022. In fact, visuals of Sanjay Malhotra, Revenue Secretary, exiting North Block as Revenue Secretary one last time, and of course will be heading to the Reserve Bank of India. That is Sanjay Malhotra, the Revenue Secretary, leaving his perch at North Block. Brokerage firms expect the transition from the RBI Governor Shaktikanta Das to Malhotra to be smooth and seamless. They also expect strong coordination between the fiscal and monetary policy. The appointment of Sanjay Malhotra has also revived hopes that the RBI MPC may vote for a repo rate cut in February. Ritu's here with what brokerages make of Sanjay Malhotra's appointment. Ritu.
Well, with the Reserve Bank of India gearing up for a leadership change after 6 years, as Sanjay Malhotra steps into the role of the governor, markets are weighing the impact of his appointment on the monetary policy and the economy. So Macquarie expects his tenure to focus on balancing growth concerns and stabilizing the rupee. They will closely watch his approach to the regulatory framework, which toughened significantly under Shaktikanta Das. Barclays sees a seamless transition, anticipating continuity when it comes to fiscal monetary coordination and a practical approach from Sanjay Malhotra. They foresee the MPC starting rate cuts from February and do not expect any radical policy shifts. Citi echoes the sentiment, predicting policy continuity in the near term. The focus will remain on balancing growth and inflation, and they also foresee a 25 basis point rate cut in February. Bank of America highlights the tricky period Malhotra is stepping into. They believe his recent silence on key economic issues leaves his policy stance unclear, but the probability of inter-meeting rate cuts has now diminished. Nomura says Malhotra's appointment as another finance ministry insider is going to be welcomed by the markets, and they predict a path for more urgent easing. MK adds that bankers view Malhotra as a straightforward communicator. His push for tech adoption in banking and recent taxation decisions signal a pragmatic approach. To sum up, all eyes are now going to be on the February MPC meeting to gauge the new governor's policy priorities. But for now, the street seems optimistic about continuity and continues to expect the first rate cut of the cycle come February.
Ritu, many thanks. And outgoing Reserve Bank Governor Shaktikanta Das has bid farewell after 6 years at the helm. In his last press conference as governor, Das said the relationship between the central bank and the government has been at its best during his tenure, and issues between the two have been resolved internally. When asked about government officials taking charge at the central bank, Das said he's confident that governors will prioritize the need of the wider economy.
The relationship between the government, in the finance ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination before COVID, during COVID, after COVID, the multiple challenges which we faced when the inflation spiked following the commencement of the war in Ukraine. The government undertook a lot of supply side measures. Perspectives of finance ministry or the central bank can differ at times. It happens world over. But in my tenure, I think we have been able to resolve all such issues through internal discussions. I would like to state emphatically that when a governor comes, he looks at the wider economy. He looks at things, yes, definitely from the Reserve Bank's perspective and from the point of view of what is the mandate given to Reserve Bank and how he is going to fulfill that mandate. But while fulfilling that mandate, I can say with confidence and certainty in the past, present if I can say, till today evening, and in the future, the governors keep in mind the requirement of the wider economy also.
I would like to acknowledge all that Governor Das has done over many years, holding things steady right through COVID and the turmoil that we've seen in the last couple of years. I think Governor Malhotra brings a wealth of experience, and I will just put it in context. I think this is the first governor that we would have who would have had experience leading a financial institution, who has experience leading the Department of Financial Services, then leading the revenue function in the country. And I would expect the same sort of steady hand going ahead from the governor. So everybody looks at the longer picture. The longer picture is a growth story that I don't think we have ever experienced before.
I think the governor, Mr. Das, has done a tremendous job in his role as the governor. He was there for 6 years through some of the most challenging times, whether it was the pandemic, it was the crisis of the two wars in the world going on, as well as so much of he's improved the health of NBFCs and banks. And I'm sure that we are awaiting the new governor, Mr. Malhotra, has a stellar track record. He's worked across the different departments of the ministry, so his experience is good.
Well, reactions there coming into the change of guard at the Reserve Bank. And speaking of the Reserve Bank, shares of Religare Enterprises up in trade today and briefly, in fact, hit a 52-week high. This after the Reserve Bank of India approved Burman family's plans to raise their stake in the company from 25% to 51% through an open offer. The RBI's approval came with a condition that the NBFCs are consolidated within the Burman Group by the 31st of March 2026. This development marks a major step towards resolving control disputes between Rashmi Saluja-led Religare and the Burman family of Dabur, India. Here's the action from the commodity space. Oil prices slipping as concerns eased after the fallout from Syrian President Bashar al-Assad's overthrow. However, China's vow to ramp up policy stimulus, which could boost the top global crude buyers' demand, have kept the losses in check. So that's the latest as far as the oil markets are concerned. Now, tensions in Syria continue to rise after Israel carried out airstrikes across the country, including the capital city of Damascus. Forces have targeted 3 major airports and other strategic military infrastructure across Syria. Israeli forces also managed to seize areas including Mount Hermon and surrounding villages in southern Syria, claiming its presence in the territory. Iran, Qatar and Saudi Arabia accused Israel of a dangerous land grab, but Israel defended its action, calling it a defensive move. Meanwhile, the rebel group leader in Syria has vowed to publish a list of former government officials that were involved in human rights violations, including torture and unlawful detention. The leaders also vowed to pursue war criminals and hold them accountable for their actions. Countries like Germany and France have also appreciated the departure of the Al-Assad government in Syria. Both French and German officials have said they are ready to work with the new regime in Syria. This as the US has pledged humanitarian aid to Syria for relief work. And staying with tensions in West Asia, Israeli forces continue to deepen its offensive in Gaza. Dozens of Palestinians, including women and children, were killed in attacks in the last 24 hours. The attacks also caused a power outage at a hospital in the northern part of the enclave, threatening the lives of more than 100 patients. Reports suggest that an Israeli drone has also attacked a refugee camp in northern Gaza, killing 3 people. And speaking of Israel, Prime Minister Benjamin Netanyahu is set to take the witness stand and testify for the first time in a bribery trial. Netanyahu was indicted in 2019 on the charges of bribery, fraud and breach of trust. The Israeli Prime Minister has denied any wrongdoing and has claimed to be a victim of a political witch hunt. Revenues of global airline companies expected to exceed $1 trillion for the first time in 2025. However, as per International Air Transport Association, that's IATA, profitability remains wafer thin, while airfares in 2025 will be lower than those in 2024. Madiha is standing by to take us through the details. Madiha, so an optimistic scenario being painted there by IATA as far as global air travel is concerned, but profitability wafer thin.
Exactly. So the outlook looks both bullish as well as bearish. And I'll tell you why. Global airline industry revenues are expected to cross $1 trillion, and that is for the first time ever. And that's 4.4% up than what it was in 2024. But airlines' profitability, as you also mentioned, remains quite low. IATA is expecting profits of all airlines to touch $36.6 billion as compared to $31.5 billion in 2024. Now, here's a number that gives a better perspective on what the profitability is going to be. Average net profit per passenger is expected at $7, which is up from $6.4 in 2024. So it's a very marginal increase. But it is lower than $7.9, as I was mentioning, in 2023. And Middle East carriers are most likely to be the strongest in terms of profitability, to see a collective net profit of 8.2%. Now, since airlines continue to grapple with supply chain issues, they're spending more on aircraft leasing and maintenance, and that is expected to push expenses by 4% as per IATA's outlook, which means airlines will be spending $940 billion in 2025. Then as more people travel by air, which is also the trend seen in India, the global passenger traffic is expected to reach 5.2 billion in 2025, and that is up by 6.7% from 2024. And which is exactly why 2025 will see more flight departures. IATA's forecast says 40 million flights will depart in 2025, which is up 4.6% from 2024. And given the demand versus supply gap, these flights will continue to see a load factor or occupancy of 83.4%, which is almost the same that was in 2024. Now, cargo volumes are expected to reach 72.5 million tons, an increase of 5.8% from 2024. Now, while airlines walk on a tightrope, it is going to be a good year for passengers. I'll tell you why. Because according to IATA, the average airfare in 2025 is expected at $380, which is 1.8% lower than 2024. So that is the outlook for 2025 by IATA.
All right, a minor relief there coming in as far as prices are concerned for consumers. That's the estimate and the expectation. Many thanks, Madiha, for joining us. We will head into a break, but up next, the Supreme Court takes note of the controversial comments made by the Allahabad High Court Judge Shekhar Kumar Yadav at a VHP event. That and more when we return.
And inclusion, which are absolutely critical to drive conversations in our households so that we can redefine changes needed for society. Thank you so much. Awards like this support our unwavering commitment to build brand narratives that drive the change. A warm thank you to our long-term partners BBDO, who have helped us bring this commitment with their passionate storytelling to life. Brands at P&G, as they look at brand building narratives, do weave in addition to driving business growth, messaging that inspires our communities to have the conversation and inflect change. Thank you, CNBC. Thank you, jury, for putting up an amazing event and for the award. Thank you.
Thank you, Josie, Mukta and team, and congratulations again on winning this award. Well, it's now time for one of the most anticipated categories of the evening, the Young Turk of the Year Award. Now, this award celebrates startups that lead with innovation, agility, while also creating remarkable growth stories. And this year, the Young Turk of the Year Award goes to Noise. So I'd like to request Mr. Amit Khatri, the co-founder of the company, to join us here on stage. And while he does that, let's also take a moment to look back at his journey. Mr. Khatri.
In the fast-paced world of connected living, one brand is leading a silent revolution. Noise, India's top smartwatch brand, is powered by innovation and accessibility. Founded by Amit and Gaurav Khatri, Noise has consistently stayed ahead, pioneering smart eyewear and launching India's first smart rings. Even in a challenging 2024, when others struggled, Noise thrived, achieving a remarkable 19% growth rate and crossing 2,000 crore rupees in revenue. Its success attracted high-profile investors, including its first strategic partner, Bose Corporation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Young Turk of the Year Award to Noise.
A huge round of applause for Amit Khatri, the co-founder of Noise.
Let's make some noise for Noise.
It's a proud moment for all of us, our team, to have this award, and thank you CNBC and jury for selecting us. I spoke to few folks here, few people here. Most of them don't know Noise, which means we have to do a lot of work here. By the way, we are third largest in the world, just not in India, and we are the most downloaded app in health and fitness store. We have close to 20 million users and a lot more to come. So thank you so much, and it's a good motivation for all the noisemakers there in Vodafone. Thank you.
Once again, ladies and gentlemen, make some noise for Noise. It's time now to celebrate visionaries who dare to dream big. Our next category, the Young Turk Startup of the Year, recognizes startups that embody the entrepreneurial spirit, driving innovation and delivering exceptional impact. Let's delve into the incredible journey of this year's winner. Priyanka and Harshal Salod, the co-founders of the Sleep Company, may I request you to kindly join us on stage.
And a big round of applause to welcome them here as we look back at their journey.
In an industry stagnant for decades,
Well, the big national story, opposition lawmakers have moved the no-confidence motion against Vice President and Rajya Sabha Chairman Jagdeep Dhankar. The opposition MP cited Dhankar's alleged partisan approach in managing the House proceedings. This marks the first such instance in India's parliamentary history. However, the motion is expected to be defeated as the opposition does not have the numbers. Both houses of parliament were adjourned for the day amidst disruptions. Congress leaders Rahul Gandhi and Priyanka Gandhi Vadra led the opposition's protest march against the government over the Adani issue inside the parliament premises. The Supreme Court has taken cognizance of the controversial statements made by the Allahabad High Court Judge Shekhar Kumar Yadav at a VHP event. All India Lawyers Union had called for action against the judge for using a communal slur and saying that India will run, and I quote, as per the wishes of the majority community. Ashmit joins us now with the details. Ashmit, the Supreme Court now taking cognizance of the comments coming in from the Allahabad High Court Judge. What about the Bar Association?
Well, these comments that came from Justice Yadav, which incidentally happened within the High Court Bar's Library Hall of the Allahabad High Court, which some point out make it aggravate the entire issue, aggravate the comments that he's made, has been criticized by a whole host of stakeholders, not just various stakeholders, various lawyers, but even the Bar Association, Supreme Court Bar Association, President Kapil Sibal has called for his impeachment, in fact, not stopping at that, and saying that it is now called upon the likes of the Prime Minister, the Home Minister, and even the government MPs to come forth and support this call for his impeachment, that the government cannot be seen siding with such a communal discriminatory judge. Not just that, Owaisi, a sitting Lok Sabha MP, has also made a call for his removal, Justice Yadav's removal, saying that how can a minority community member go ahead and seek justice from a judge who has made comments along these lines. In fact, to that end, important to point out that the Supreme Court has also taken note of these media reports. The Supreme Court has said that it has sought details from the Allahabad High Court as to what exactly transpired, the nature of comments that were made by Justice Yadav. And to that end, the Supreme Court statement pointing out that this issue is under consideration. And not just that, there was also a complaint filed before the Apex Court by the CJAR. This is an NGO which essentially claims that Justice Yadav's comments have brought shame to the judiciary, that they are communal in nature, they are discriminatory in nature, and that at the very least, the Supreme Court should institute an inquiry and should withdraw all judicial work from Justice Yadav during the pendency of that inquiry.
All right, Ashmit, appreciate you joining us. Now, former External Affairs Minister S.M. Krishna passed away at the age of 92 after a prolonged illness. He's been credited for the transformation of Bengaluru into an IT hub during his tenure as Karnataka Chief Minister from 1999 to 2004. He also served as the Governor of Maharashtra for 4 years. Earlier this year, Krishna was awarded India's second highest civilian award, the Padma Vibhushan, in recognition of his 6-decade-long political career. Krishna joined the BJP in 2017 after a 46-year association with the Congress Party. And with that, it is time for us to wrap up this edition of Business 360. But before we go, let me present to you the Growth Code, a collaborative initiative by Grow and CNBC TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand the hidden risks of cheap options and how to avoid over-leveraging.
Let me tell you about the hidden risks of cheap options. Avoid over-leveraging. Now, these cheap options may seem like an opportunity, but they can quickly become a trap. Now, here's how. When the options are inexpensive, they're tempting to buy too many contracts. And in that, you take up more risk than you realize, and you end up over-leveraging. For instance, if you're trading a 10 rupee out of the money option, you might buy or sell 100 contracts, thinking it's just a small investment. But if these options expire worthless, you've lost 1,000 rupees. And if they expire in the money, you are losing money on those 100 contracts that you've actually sold. Now imagine doing this repeatedly. These losses add up very fast. Additionally, cheap options face rapid time decay as well. As expiration nears, their value erodes unless the stock moves significantly in your favor, which is a rare occurrence when you're buying out of money options, and quite a possibility when you're selling those out of money options as well. So what you need to focus on is risk management. Buy fewer contracts, the amount that you can afford, and prioritize at the money or in the money options with higher chances of success on the long side.
Is redefining comfort and technology. Co-founded in 2019 by Priyanka and Harshil Salot, the sleep company was born from Priyanka's quest for better sleep, a need shared by millions. Since launching their smart grid mattress, the company has transformed over 2 lakh lives, delivering not just restful nights, but better living. With patented technology and relentless R&D, the sleep company is raising the bar on sleep innovation. The Salot's dream has found takers, supported by premier investors like Premji Invest, Alteria Capital and Fireside Ventures. The company has entered international markets and achieved a 500 crore rupee annual revenue run rate in just 4 years. CNBC TV18 India Business Leader Awards 2024 proudly presents the Young Turk Startup of the Year Award to The Sleep Company.
Priyanka and Harshil, do stay back and say a few words.
No, absolutely honored to be here and getting this award on behalf of the Sleep Company. At the Sleep Company, our mission has always been to revolutionize the way people sleep and sit, make world a more comfortable place. And we truly believe that, we're at the cusp of a huge consumer disruption where sleep is becoming an integral part of our health and well-being. Just taking a moment to, thank obviously our incredible teams, our investors, and our consumers who put in trust in us for their sleep. And to CNBC and the jury, thank you so much for honoring this vision. I think last but not the least, thank you to our amazing families for their support. And our biggest cheerleader, our 8-year-old son Ayan, who's there. And he's the reason why this all started. So thank you so much, and thank you everyone.
Thank you so much, Priyanka. Many congratulations. A big round of applause for the Sleep Company. Thank you so much. Our next category is the Breakout Brand of the Year, honoring a brand that has reshaped its industry with creativity, innovation, and impact. Requesting Meenu Margaret, founder and CEO of Bliss Club, to join us on stage. Let's uncover the story of this year's winner, Bliss Club.
In the world of activewear, one brand is redefining the game. Bliss Club. Founded by Meenu Margaret, a chartered accountant turned entrepreneur. Bliss Club's mission is simple. An activewear that's not designed just for an hour at the gym, but for the entire day, blending comfort, style and innovation seamlessly. In just 3 years, Bliss Club has become a leader in women's activewear, with over 65% of its sales from its website and a growing presence on Myntra.
Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the appetite for dry fruits in India has been skyrocketing as the healthy snack has become the preferred gift to give and to get during the festive season. Well, this, along with the increased usage in ice creams to snacks, has made India one of the fastest growing markets for dry fruits. India's consumption of dry fruits has also nearly doubled in the last few years as pecans and prunes also become staple snacks in many households. Well, this has boosted the retail market's value to nearly $6 billion this year, with experts expecting it to double in 6 years. So what lies ahead for the industry? Joining us now to take that discussion forward is Gunjan Jain. He's president at Nuts and Dry Fruit Council of India. Rajiv Pabreja is managing director, Commodity Trading Corporation. We're also joined by Sameer Bhanushali. He's founder and MD at CEO at Ashapura and Bazana. Yash Gowdy, in the meanwhile, is CEO at Candor Foods, and Sameer Harlalka is director at #India. Gentlemen, hi, thank you so much for joining us. Well, we have seen very, very strong numbers in 2023. It was the highest in 5 years that we saw dry fruits demand in the previous year. The first question, Gunjan, really is, has 2024 built up on that? What is the kind of demand that we have seen in this year until now?
So yeah, in fact, I think demand is continuing to be robust. 2024 really picked up on 23. Of course, 23 was a very tough act to follow because I think everything went perfectly for the industry in terms of pricing and everything. So the demand really shot up. We had a lot of new consumers. But even this year, we are seeing the same trend continue. Demand has been rising. In spite of higher pricing, we haven't seen any small fall in demand or anything. Diwali sales were robust. Now that the wedding season is here, we are seeing great demand here. We are seeing very robust, overall from all segments, a very good demand.
Gunjan, I want to get the numbers out of the way to begin with. So what is the kind of price rise that we have seen for various dry fruits, and what is the kind of demand number that you're seeing on an year-on-year basis?
So I think everything's going up in terms of pricing. As I said, last few years was an anomaly where the worldwide the crops were so large that we were getting excellent pricing. Now pricing has moved up a little. It's moved up right from about 10% to 25% across various commodities in our segment, right from cashew nuts to almonds to pistachios. Having said that, demand still continues to rise. I think India will add another 3,000 to 4,000 tons of pistachios demand this year. Cashew nuts and almonds, already we have such a large base that I think even a small rise would mean adding again. So all in all, I think India will add about anywhere between 80,000 tons to 100,000 tons of consumption this year. across all the segments put together.
All right. So India is going to be consuming 80,000 to 100,000 tons more. Gunjan, just what is the total tonnage that India consumes as of now when it comes to dry fruits?
So it's a huge number now. I mean, cashews, India does close to 300,000 tons. Pistachios, about 35,000 tons. Walnuts has gone as high as 90,000 tons from 18,000 tons in the last 7 years. Pistachios has moved to 36,000 tons from just 9,000 tons in 4 years. So I think overall everything is just going up and up.
Oh, absolutely. It's absolutely skyrocketing, and the kind of tonnages that India is consuming in sense of dry fruits is just amazing. Rajiv, this one is to you. So we do understand that this quarter is clearly the most important one because Diwali is just done, and we do understand that the numbers were on the stronger side. But now it is the winters, a period when people eat more dry fruits, and then it is weddings as well, where the gifting and consumption just about increases. So what are the kind of numbers that you're looking at for in this quarter?
See, if you see that Indian this year, till from 12th to 16th, 11th or 12th November to 16th of December, there are approximately 4.8 million marriages in India. That means 48 lakh marriages. And in Delhi itself, there are around 5 lakh marriages. And total consumption, you can imagine, in the marriage time is huge. Total 6 trillion business will marriage expense will be done. It's like a economy of many other countries, the GDP of many countries, what will be spending on just on the marriages. And if a demand of at least 15,000 to 20,000 metric ton will be in the Diwali time, or for the marriages, the minimum. This is the minimum demand, and especially the new nuts which are coming up, like pecans, cranberry, many things. And even if you see in the marriage season now, people are coming with innovative ideas of, like earlier there used to be the only one gajar ka halwa or some badam ka halwa. Now they have from dates, they have from khajur, they have from cranberries, they use it, figs, everything. They make halwas or 5-6 types of halwas and many varieties. It's adding and adding every year.
Oh, well, absolutely. Yash, this one is to you. So as Rajiv said, you know, from desserts and various kinds of it now, but it's not just that. I mean, we've seen usage in ice creams, in cereals, in namkeens, in basic food, catering. You go to a hotel and when you look at the breakfast buffet, you have a different section altogether for dry fruits. Now, clearly, people are opting for this one.
Oh, absolutely. I think we've seen dry fruits, nuts, and also dates, notably to mention, are very versatile ingredients, almost natural, chemical-free, and they've been in the Indian palate for a while. It's now that, you know, the bakery segment, the biscuits, the chocolatiers, I think they're kind of including all of these nuts, the traditional almonds, cashews, but also the new nuts that Rajiv mentioned, to macadamias, pecans, hazelnuts, and also in the winter season, we see a lot of uptake and consumption of pine nuts, which are more of a winter kind of nut. High in oil, bring a lot of warmth to the body, and great in nutrition. So very versatile ingredients, chemical-free, and add a lot of flavor to any recipe or any cuisine for that matter. So great. I mean, as an industry, we're pretty upbeat about how these nuts and dry fruits and dates are going to be consumed.
Oh, absolutely, Yash. With the kind of numbers that you guys are working with, I'm assuming it's a happy industry at that too. Healthy is apart from that. Samir Vanushali, this question is to you. So what is the industry doing really to ensure that the business can be grown, can be smooth, the stakeholders are partaking, and it is, as a value chain, everybody continues to grow here?
Yes, as you see, I think all the industry participants are investing a lot today in processes, in machinery, bringing the global techniques of food production to India. So we all are cognizant of the fact that this industry is set to grow massively and exponentially each year. And we all are building our back end to kind of support that kind of a growth. So I think we are set to support the kind of volumes that we are seeing for the next 6 years. You just showed the number that in the next 6 years, we expect this to double, which is humongous. We already are among the top dry fruit importers in the world, and to double that up is no no joke. It's a big deal. So we as industry players are invested in it, but we also see a lot of innovation happening besides us, right? You see a lot of chefs working with or creating products with nuts and dry fruits. You see a lot of snacks today using nuts and dry fruits. The conventional snacks of maida-driven snacks are now being replaced by oats and dry fruits. So I think the innovation and investment is happening all around, and it's not only financial investment. People are really invested in this emotionally as well, because Indians view nuts and dry fruits very emotionally. I think that's how I can see this.
Oh, absolutely. Mr. Halalka, this one is to you then. And as we go ahead from here, how would you look at the distribution side of it? Because this is another thing that is really added into the buying ease, the whole e-commerce, quick commerce, and the fact that a lot of Indians now buy a lot of food, including dry fruits, from these platforms.
Manisha, thanks for inviting us. To carry forward my Mr. Bhanushali's thought, that we are investing more and more in the business and to increase the consumption of dry fruits in India. I think government should also help us in increasing the consumption. As you know that India is growing at a rapid pace of 7%, but still India is the diabetes capital of the world. Because of the health awareness is not that high, and we need the government help for this health awareness. Like India, the government is promoting the millets program. We understand that the government should help us to promote the dry fruit industry with their dry fruit program. It is like Swachh Bharat, it should be a Swasth Bharat also. And rightly said that dry fruits khayega India, to healthy banega India.
Well, I do see, Mr. Halalka, you have all your advertising lines absolutely ready there. So when you say that you need government support, when you look at the business growing, what exactly would you say is your 1, 2, 3 when you want to get?
Like, first of all, like the way government is promoting millets, they are holding programs, they are creating awareness as a healthy product. Same way, like we need the dry food industry also need the support. Like, because of the lack of awareness that which product and to eat, when to eat, like a little addition of almonds or pistachios in your food can make you more healthy. It is adding a protein to your meal, and like it will give you less sugar spikes, and it will be more healthy for your diabetes, and if you're suffering for diabetes. And secondly, like they have to give us more subsidy. I would like to add the word subsidy for us, and more rationalization in the duty structure, because most of the dry fruits are imported and from various countries. So if that duty is rationalized, then we would be able to sell at lower prices, and there would be more awareness, and there can be more consumption of the dry fruits.
Oh, well, yes, those are the top things that the industry has been asking for some time, and quite opportune as well, because it's soon going to be budget and the finance minister will start holding a lot of conversations as well. So these are some things that perhaps the dry fruit industry is putting out in sense of representations. Well, gentlemen, do stay on with us. We'll go for a very short break. When we come back, we'll talk also about the year 2025, the plans therein, the promotional activities to, of course, the kind of imports that we do. All of that after this break.
In 12 retail stores across India, with an ARR of 100 crore rupees and an impressive 80% growth rate in just 3 years. It's won the trust of customers and top investors alike. CNBC TV18 India Business Leader Awards 2024 proudly presents the Breakout Brand of the Year Award to Bliss Club.
Congratulations to Team Bliss Club and to Meenu here. Meenu, you're the Breakout Brand of the Year. Tell us what you aspire to do next now that you've unlocked this milestone.
No, this is a super exciting time for us.
Exactly 4 years back, Bliss Club launched from a 2 BHK apartment in Bangalore. We launched with a single pair of black leggings, which we call the ultimate leggings. I don't come from an apparel background, and everyone from the background said, you can't launch an apparel brand, with a single SKU. You need to launch a collection. But in my head, I just thought that if I can just make that one product that's really amazing, which I can call the ultimate leggings, there'll be a lot of women who want to buy it. And that's exactly what we did, and we continue to invest a lot in building insanely amazing products. That's something we want to continue doing. We also want to continue breaking the norms and challenging the industry. And it's been an incredible 4 years. From there, I wanted to thank everyone who's been part of our journeys, our investors, 8 Roads and Elevation, our vendors who's helped us make some incredible products, my family who's here, my husband who's been an incredible emotional support, my sister who's an orthodontist who shut her clinic to help me start Bliss Club during COVID, my parents who brought up 2 women who they said can conquer the world. I have a 6-month-old. I hope I can get her to conquer the world at some time as well. And our customers who we call Bliss Queens, who really are the heart and soul of everything we do at Bliss Club. But last but not the least, my incredible team. We are 150 of us back in Bangalore as well as in all our stores in India. I have Saket and Nagaraj here with me, and everyone back home. It's been an amazing 4 years to build a 100+ crore brand in a category which is women's activewear, which they say is niche. So we have some very large incumbents in this category, and we hope to build something truly differentiated. Hope to see a lot of women building brands in India. And more power to you and your tribe, Meenu, and may this tribe continue to grow. Many congratulations again on winning this award.
Up next, the outstanding contribution to climate consciousness recognizes individuals or organizations driving impactful, scalable solutions for sustainability. From water conservation to waste management, energy transition to carbon capture, this award honors efforts that address environmental challenges at scale. Requesting Utkarsh Singh, co-founder and CEO of Batex Energies, to join us on stage to accept the award, and let's learn more about this year's winner.
Batex Energies has recycled 220 million lithium-ion batteries, extracting essential metals like lithium, cobalt and nickel.
Welcome back, and you're watching Commodity Champions. Well, when it comes to dry fruits, India is the second largest consumer of peanuts, almonds, cashews, third for raisins. It is fourth for dried figs, sixth for walnuts, seventh for dates, and I could just about go on. That's the kind of consumption numbers that we continue to see in India. This one is to you, Gunjan. When you talk about promotion, when you talk about awareness, when you want to talk about creating more categories when it comes to dry fruits within India, what are the plans for that for 2025?
So, like Sameerji said, that's the main need of the Swasth Bharat campaign. So we are working, in fact, even with international boards as a Nuts and Dry Fruit Council, we are working to create awareness and promotion. So if that can be added on by the Indian government, so what we are doing is talking with the various boards to talk about the health benefits of nuts, to educate people on protein content, on all just the dietary benefits that these nuts have. But just adding on to that, I would just digress a little on the government thing. I think just wanted to add that we really request the Indian government, and we've put it to the finance minister, the commerce minister, that like all other industries, textile, toys, our industry also needs a PLI to really push it to the next step forward. As Mr. Sameer Bhanushali mentioned about the fact that we are investing heavily in terms of the back end. But all this can be catalyzed further if we are able to get a PLI for the industry. That would really get new players in. That would really get a much faster injection of capital in to this industry. We are saying we'll double in 5 years. So a lot of work needs to be done on the processing side. So that's where I think a PLI would be very helpful to get this to happen very profitably for the country, for revenue, for everything. Coming back to 25 and on the promotions that are going to happen, I think There's a lot of stuff planned around new nuts and dried fruit, pecans, cranberries, prunes, all these new healthy nuts. A lot of campaigns are happening on that. Of course, there are campaigns going around. A lot of people in India still don't. Cashews is the most consumed in India, but unfortunately, everybody doesn't associate it with as much health as it is. A cashew is a very healthy nut. So I think some campaigns on cashew health promotion are going to happen a lot. Cashew is very healthy, but it still needs to go out to the Indian public in general that cashews are also as healthy as an almond and a walnut.
Rajiv,
those are the campaigns.
Oh, well, absolutely. So there are various campaigns, more awareness, especially when it comes to health. We do understand that there are a lot of, dry fruits is also coming up in sense of alternate food. It also is a plant-based meal. It also is non-dairy meal. So there's a lot of things that dry fruits actually can take attributes on and pat their backs on. But Rajiv, I also do understand that you guys are also coming up with a new conference now in the next year as well. So what is going to be the theme for that one?
The new conference is in the best center in the world, the famous center with the Ambanis had the marriage, the Geo Convention Center. And we have booked the same hall where the marriage happened. And you will be surprised. Last year we had 6,000 people turning up for the exhibition. This year we're expecting at least 10 to 12,000 people. The business was around 600-700 crores last year. This year we're expecting around 1,200 to 1,500 crores business to happen in an exhibition. Exhibition is almost double, and not only we are doing it's not a networking, it's people from the world, every corner of the world who's dealing in nuts and dry fruits in India and the world are coming. We'll be there, almost 400 to 500 foreign delegates will be attending the show. And the best part is the show is not only about business, it is about networking and fun also. We are having one day, India, every Indian has a cricket in their blood. So one day is only cricket. First day is cricket, then we have Bollywood night, we have Hollywood night, and one day is only for we'll be wearing all traditional Indian dresses. Even the foreigners who are invited will be wearing foreign Indian dresses. It'll be a massive show.
Clearly going into the spirit there with that event there. Yash, this one is to you. Talk to us about, it has been spoken about everybody that yes, India does consume a lot of dry food, but what is the market size that we're looking at right now? I got those numbers out of Gunjan, yes, but what is the kind of profitability there? We do understand that this is still a largely not organized market. So in the years to come, are we looking to balance that number as well?
The growth for India is not only the the overall market size increasing basis all the promotional and the educational activities that we end up doing. But it's also a great shift that we see as an industry from unorganized to the organized. So you're going to get a lot more relevant and credible numbers coming out from forums like us. We currently look at the industry between $7 to $8 billion today in US dollar terms. And in terms of profitability, I think it's a little on our sector level, it should be between 8 to 12%, but it's different for different commodities basis the size and the demand and supply. Larger commodities like almonds and cashews may see a little smaller margin structures across the chain, but then there are other commodities where the margins are pretty healthy for the businesses to sustain and to reinvest, because as my co-panelist also mentioned, I think for building for 2030 and the business size being 2x of what it is now, there's going to be significant investment and capital that needs to be deployed to manage the demand that we hope that India can generate for the dry fruits, nuts and dates. So yeah, I think it's a pretty healthy industry. We will see a lot of investment coming in and a lot of capacity to be built and interesting products and segments to cater to.
Oh, absolutely. Mr. Bhanushali, this one is to you then, and we do understand that dry fruit consumption, even every month there's a new product. The previous ones were perhaps roasted and salted and then honey and then barbecued, and then there are so many different ways of eating dry fruits now. So when you guys look at a season which is the most prime, what is it that you're pushing out this time? What are the newer trends this time?
So Manisha, it's pretty interesting world that we live in, right? So the trends catch up so quickly, due to the social media. So it's no longer, just dry fruits being consumed as Indian mithais. We see the trends happening in Europe, US, and other Western countries, and we adapt that very quickly. So if you look at the kind of innovation that's happening and the new products that are coming in, you see a lot of energy bars being launched. Then you have cookies like pecan cookies and all. Then you have a lot of confectionery like chocolates and all using nuts and dry fruits. Of course, ice creams as well. And because of the nature of the product, nuts can be used in almost everything, be it your salad, be it your snack, be it anything, right? Your milkshake, your cookie. So because of the wide usage of the product, you're going to see more and more innovative products coming in, and the young generation is very open to this, right? Unlike a few years back, right? The today's generation is open to trying new things. They're ready to pay for that as well, and the general awareness between the generations before and now is much higher, and people are ready to invest in their health and wellness and are ready to spend, and that is fueling more and more innovation in this category. So 2025 is going to be really exciting, as is 2026-27 as well. So we are very excited with what we are seeing with the nuts and dry fruit industry, and as I said, we all are invested in this and are going to enjoy the journey going forward.
Oh, well, absolutely. Mr. Halalka, this one is to you. So while earlier you told me on what you're expecting from the government on this one, but as a consumer, I'm expecting better quality, easy availability, affordable prices, and availability also in Tier 2, Tier 3, Tier 4 cities, perhaps. What is the industry doing for that?
Manisha, in that Tier 2, Tier 3 cities, I'm telling you, like, the consumption is more than the metros. The rising consumption is coming all from Tier 2, Tier 3 cities. Now imagine a Tier 2 city replacing a chocolate bar with a protein bar. Can you imagine a sushi filled up with dry fruits, a momo filled up with dry fruits? So in such manner, like as I said, we are doing many things regarding to maintain and to uplift the quality of dry fruits also. Like the sorting part, the manufacturing part, the machineries are getting updated, the sorting part is getting updated. We are daily doing more and more research to how to make the quality better and better for our consumers.
All right, so there are various promotions, more innovations. The imports are on the higher side. The investments on the back end and the front end is happening quite strongly. And there's just so much to look forward to in sense of the season and in 2025. And of course, there's a budget. And we already have a wish list from this sector there. Gentlemen, thank you so much for joining in and filling us up with that sector and the latest that's happening there. And with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Integrate into the supply chain. As India's largest battery recycler, it has processed over 2,500 metric tons of batteries, redefining sustainability. Beyond recycling, Batex is developing 100% off-grid solar EV chargers for companies like MG Motors, advancing clean energy innovation. CNBC TV18 India Business Leader Awards 2024 proudly presents the Outstanding Contribution to Climate Consciousness Award to Batex Energies.
Ladies and gentlemen, a huge round of applause for Utkarsh and Batex Energies team.
Utkarsh, congratulations.
We would love to hear about your story and your accomplishments.
This award is dedicated to the entire team of Batex Energies, who are dedicated in creating a circular supply chain of these critical materials. We all are talking about electric mobility, but it is not possible if lithium, cobalt and nickel is not there. The only way India can create our own materials is if we start recycling them. And this also contributes to Atmanirbhar Bharat and circular economy. So we are going to keep going ahead with our vision and saving the environment. I would like to thank CNBC and Standard Chartered for giving us this recognition. And thank you to our families. Thank you to my wonderful co-founder Vikrant, and to all our mentors, our investors, our teachers who have got us here today. Thank you. Thanks
And
a
we
lot.
wish you all the very best with that, Utkarsh. Big round of applause again, ladies and gentlemen.
We recognize a company that has rewritten the rules of its industries, creating new opportunities while challenging traditional players. The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now this year, the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on stage. And while Albinder reaches the stage, let's take a glimpse into the Blinkit story.
In a world where the Indian consumer craves convenience, one company has redefined shopping. They've made it possible to shop from the comfort of your couch and get deliveries in record time. What began as a mission to deliver groceries in 10 minutes has expanded to include everything from furniture to electronics, covering 26 cities with 639 dark stores. With a 40% market share and a 93% jump in gross order value.
As you can see, Revenue Secretary Sanjay Malhotra, as he embarks on his new journey to take over as RBI Governor, his entire office, his entire team of officers, including the additional secretary, joint secretaries, etc., his staff, his OSD, all are here to see him off. And a major uphill task that he's going to take over as RBI Governor.
The relationship between the government, in the finance ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination.
Hello and welcome to News Centre. I'm Arundhati Ramanan. A top North Block official heads to Main Street to succeed another career bureaucrat. Outgoing Revenue Secretary Sanjay Malhotra bids farewell to his North Block colleagues as he gears up for a 3-year stint as the Reserve Bank Governor. He succeeds Shaktikanta Das, whose 6-year tenure ends today. An IAS officer with a degree from IIT Kanpur and Princeton University, Malhotra's appointment comes at a time when inflation is above the RBI's comfort zone and growth is at a 21-month low. Lata Venkatesh joins us now. Lata, you know, the government there choosing a bureaucrat as RBI governor yet again, and Malhotra, it looks like, would have his hands full.
Well, the new governor definitely has his task cut out. First and foremost is, as Shaktikanta Das put it, restoring the inflation growth balance. You know, for the past quarter at least, inflation has been inching higher than expected. Growth is coming in lower than expected. He has to turn it. The delta of growth has to go higher and the delta of inflation has to point lower. That's his first task. The important point is there will be a perception in the market that he's just come from finance ministry. He's the government's man. That perception also needs to be corrected. He also has to build a cohesive MPC. The 3 external members are new. A long-time pillar of the MPC, Dr. Michael Patra, also ends his term in January. So he has to, of course, find the new man and make it into a cohesive unit. Reserve Bank is a deep institution with a lot of knowledge. And Patra is always only a phone call away. Former governors, others are also only a phone call away. But he has to get the groove of making policy confidently. The bigger challenge of macroeconomy comes after Jan 20th, when there will be a new Trump era. What does he do to tariffs, and will that mean more Chinese dumping? Will that mean inflation or deflation? Will that mean more pressure on the currency? You know, for all you know, January, February onwards, it could be baptism by fire for him. That would be a task cut out. The second issue would be banking regulation. The RBI has already set up a superb supervision system by using technology, but there are some unfinished tasks. For instance, the Reserve Bank has expected loss provisioning system. Draft regulations are in, but it's not yet been made into final regulations. Banks are resisting, government is resisting because it will mean keeping away more money as provisions. Likewise, there is an extra provisions for infrastructure, which is also in the works. That also has not yet been resolved, so to speak, in its draft regulations. Another draft regulation is higher liquidity for unstable deposits. You know, more people are saving through mutual funds and less through FDs. For the bank, what does it mean? The money is staying in the banking system, but they are more unstable deposits because they're coming as mutual funds. Mutual funds keep buying shares, selling shares, buying shares, selling shares. So the money is not stable. Therefore, the RBI is asking for more liquidity, resistance from the government, resistance from the banks. That also has to be resolved. So these are the unfinished tasks before him. A more larger task is harnessing technology in finance. Finance is best placed to harness technology, but it's not easy. One of the big positive developments is CBDC, Central Bank Digital Currency. It's just a pilot. It can be scaled up as a national currency. That's a big challenge. A second one is ULI lending, lending over the UPI. That again has just started. It can be scaled up for financial inclusion nationally. But digital currency also means problems. What if cryptocurrency is given a boost by the new president? The Reserve Bank has to be, guarding against these, guarding against the ill uses of digital, which means faster withdrawal of currency from a bank that is seen to be wobbly. Those are the forthcoming challenges of Sanjay Malhotra.
Right, Lata, many thanks for those details. Now, meanwhile, brokerage firms expect the transition from RBI Governor Shaktikanta Das to Malhotra to be smooth and seamless. The appointment of Sanjay Malhotra has also revived hopes that the RBI MPC may vote for a repo rate cut in February. Ritu Singh is here with what brokerages make of Sanjay Malhotra's appointment. Ritu?
Well, with the Reserve Bank of India gearing up for a leadership change after 6 years, as Sanjay Malhotra steps into the role of the governor, markets are weighing the impact of his appointment on the monetary policy and the economy. So Macquarie expects his tenure to focus on balancing growth concerns and stabilizing the rupee. They will closely watch his approach to the regulatory framework, which toughened significantly under Shaktikanta Das. Barclays sees a seamless transition, anticipating continuity when it comes to fiscal monetary coordination and a practical approach from Sanjay Malhotra. They foresee the MPC starting rate cuts from February and do not expect any radical policy shifts. Citi echoes the sentiment, predicting policy continuity in the near term. The focus will remain on balancing growth and inflation, and they also foresee a 25 basis point rate cut in February. Bank of America highlights the tricky period Malhotra is stepping into. They believe his recent silence on key economic issues leaves his policy stance unclear, but the probability of inter-meeting rate cuts has now diminished. Nomura says Malhotra's appointment as another finance ministry insider is going to be welcomed by the markets, and they predict a path for more urgent easing. MK adds that bankers view Malhotra as a straightforward communicator. His push for tech adoption in banking and recent taxation decisions signal a pragmatic approach. To sum up, all eyes are now going to be on the February MPC meeting to gauge the new governor's policy priorities. But for now, the street seems optimistic about continuity and continues to expect the first rate cut of the cycle come February.
Right, Ritu. Many thanks for taking us through those details. Now, outgoing Reserve Bank Governor Shaktikanta Das has bid farewell after 6 years. At the helm in his last press conference as RBI Governor, Das said that the relationship between the central bank and the government has been at its best during his tenure, and issues between the two have been resolved internally. When asked about government officials taking charge at the central bank, Das said that he is confident that governors will prioritize the need of the wider economy. Take a look.
The relationship between the government, in the finance ministry in particular, and the Reserve Bank of India, I think they have been at their best. We had excellent cooperation, excellent coordination before COVID, during COVID, after COVID, the multiple challenges which we faced when the inflation spiked following the commencement of the war in Ukraine. The government undertook a lot of supply side measures. Perspectives of finance ministry or the central bank can differ at times. It happens world over. But in my tenure, I think we have been able to resolve all such issues through internal discussions. I would like to state emphatically that when a governor comes, he looks at the wider economy. He looks at things, yes, definitely from the Reserve Bank's perspective, and from the point of view of what is the mandate given to Reserve Bank and how he is going to fulfill that mandate. But while fulfilling that mandate, I can say with confidence and certainty, in the past, present if I can say, till today evening, and in the future, the governors keep in mind the requirement of the wider economy also.
I would like to acknowledge all that Governor Das has done over many years, holding things steady right through COVID and the turmoil that we've seen in the last couple of years. I think Governor Malhotra brings a wealth of experience, and I will just put it in context. I think this is the first governor that we would have who would have had experience leading a financial institution, who has experience leading the Department of Financial Services, then leading the revenue function in the country. And I would expect the same sort of steady hand going ahead from the governor. So everybody looks at the longer picture. The longer picture is a growth story that I don't think we have ever experienced before.
I think the governor, Mr. Das, has done a tremendous job in his role as the governor. He was there for 6 years through some of the most challenging times, whether it was the pandemic, it was the crisis of the two wars in the world going on, as well as so much of he's improved the health of NBFCs and banks. And I'm sure that we are awaiting the new governor, Mr. Malhotra, has a stellar track record. He's worked across the different departments of the ministry, so his experience is good. And in my humble opinion, that those people who have worked with government, who understand the working of the government, understand finance, they make the best governor. So I'm very sure that we'll have a good stint ahead and just continue to grow and take India to the third largest economy in the world.
Right, so with Pyramid Enterprises being a very key player in the NBFC market, there's a stress in the retail lending that we're seeing. How do you plan to cope with this, and what is your outlook going forward? So
these are, every cycle in the credit, it goes through these, but I think we have enough risks, control measures and credit control measures. I think this will pass.
From quoting Mahatma Gandhi to Martin Luther King, during press conferences, references to the Mahabharata, and occasionally a famous Bollywood song, Shaktikanta Das's 6-year tenure has been an eventful one. Here's a snippet.
Shaktikanta Das certainly comes with a lot of qualifications, been there, done that, and therefore has seen the equation from the government's side.
Today, there is a turn in the wind which suggests that it is not imprudent to dream of a brighter tomorrow, even in the bleakest of times. As Dr. APJ Abdul Kalam, our visionary former president, said, I quote, "You have to dream before your dreams can come true. A dream is not that which you see while sleeping. It is something that does not let you sleep." If patience is worth anything, it must endure to the end of time. And a living faith will last in the midst of the blackest storm. As the great Lata Mangeshkar, whom we lost recently, sang in her immortal voice, "Aaj fir jeene ki tamanna hai." It is faith that steers us through stormy seas, faith that moves mountains, and faith that jumps across the ocean. Mahatma Gandhi's insightful words, and I quote, "We are wakeful, ever vigilant, ever striving," unquote. We will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy. I recall what I had said in my statement of February 8, 2023, wherein I had quoted Netaji Subhash Chandra Bose, "Never lose your faith in the destiny of India."
Meanwhile, Sanjay Malhotra's replacement as Revenue Secretary will have their hands full. Timsy Jaipuria is here with more on the challenges facing the next Revenue Secretary. Timsy?
Well, as Sanjay Malhotra, current Revenue Secretary, embarks on a new journey to take over as RBI Governor in Mumbai, here back in Delhi at North Block, for his seat for the new upcoming Revenue Secretary, he leaves some uphill tasks. Top on the agenda is the immediate ask of GST Council, where 3 group of ministers are likely to submit its report or seek an extension. Top will be GOM on rate rationalization, where they are likely to propose changes of as many as 148 rates, which could give boost to the lower income group, but yes, enhance taxes on the middle class. And yes, carving out of a special 35% rate for aerated drinks and tobacco products. That's on the agenda. Apart from that, GOM on life insurance and health insurance are likely to submit their report, seeking a reduction in rates on life insurance and health insurance premia. GOM on compensation cess is likely to seek an extension. All these 3 key decisions are likely to be there in the 21st December GST Council meeting, where Revenue Secretary is also Secretary to the GST Council, and he has to steer through these changes. Apart from that, next comes up the budget on 1st of February, where 2 key challenges are there. Firstly, unveiling of simplified direct tax law, and yes, unveiling and overhauling of custom duties, where rationalization of custom duties is slated. So these 2 key challenges from both CBDT and CBIC side, keeping the hands of Revenue Secretary full. Also, the Revenue Secretary oversees key agencies such as Enforcement Directorate, FIU, DGGI, Income Tax Investigation Wing, etc. So that is something that is very challenging for Revenue Secretary. Apart from that, adaptation of technology to plug revenue leakage, and at the same time to ensure ease of doing business and simplification of compliance. So let's see how the new upcoming Revenue Secretary deals with these key challenges.
Absolutely. Many thanks for those details, Dimsy. On that note, it is time for us to head into a short break, but don't go anywhere. More news and updates continue right here. Stay tuned.
And 469 crore rupees in financial year 24. This brand has revolutionized the shopping experience, more than doubling revenues to 2,301 crore rupees. CNBC TV18 India Business Leader Awards 2024 proudly presents the Disruptor of the Year award to Blinkit.
Congratulations to Team Blinkit. Albinder, before you go, in under 10 minutes, can you quickly take us through your journey?
Sorry, I'm struggling with a bit of cold, but see, I think customers are the ultimate disruptors. They're always unsatisfied. My journey in this over 11 years has gone from delivering in 24 hours to delivering in 90 minutes to now delivering in 10 minutes. But I would, I'm very grateful that we get to serve customers, especially, women, homemakers who really value our service. And I think they understand more than anybody else the value and convenience of getting fast deliveries. And of course, it takes about 3 lakh people in our supply chain to make it happen, whether they are sellers, whether they are store owners, drivers, and thank you for recognizing their achievements.
Ladies and gentlemen, brings us to one of the most significant moments of the evening, the most promising company of the year. Celebrating a mid-sized listed company for strong shareholder returns, sound financials and exemplary governance. And the winner, ladies and gentlemen, please put your hands together, is PI Industries. Congratulations to the team, and may I request Mr. Mayank Singhal, Vice Chairman and Managing Director at PI Industries, to join us here while we watch the company's success story.
A trusted name since independent India, PI Industries has empowered generations of farmers with cutting-edge R&D and an extensive network of 70,000 retail points. Now making strides in pharmaceuticals. Its new vertical contributes over 7% of revenue within a year of launch. With 85% earnings from patented products, PI has seen revenues grow 2.28 times and profits 3.7 times in just 4 years. CNBC TV18 India Business Leader Awards 2024 proudly presents the Most Promising Company of the Year award to PI Industries.
Congratulations to Mayank and the entire team of PI Industries. Ladies and gentlemen,
going, yes.
Mayank, we would love to hear your thoughts.
Yes, good evening, everybody. Once again, a very thank you to the jury for selecting PI and giving this great honor. I must not forget to thank all the people who contributed to this organization. We are not a young organization. We are about 75 years old. So I must remember my
Welcome back. You're still with us on News Center. A quick look at the markets. Sensex and Nifty ended flat after a range-bound session. Both indices are largely unchanged compared to yesterday. Mid-caps and bank stocks relatively outperformed the blue chips. Inflows into equity mutual funds dropped by more than 14% in November. Large cap funds were the worst hit, with the Amphi data showing an over 26% dip. Surbhi Upadhyay joins us now with more. Surbhi, take us through those numbers.
The numbers actually are showing that slight dip, but they're not bad. I mean, the net equity inflow picture is still quite healthy at just under 36,000 crores. But yes, I mean, it's looking a shade lower than the near 42,000 crores that equity funds pulled in October. So why the dip? Actually, before I talk about the reason, let's talk about the all-important SIP number. Now, that's still a very lofty 25,300 odd crores. But again, it's very flat. Month on month, there's no growth in SIPs. That's something that you have to keep in mind. So why the dip? The primary reason is that in the month of November, we didn't have hectic NFO activity, as has been the case in the last couple of months, which is why NFOs actually mopped up just about 4,000 crores compared to the 10,000, 12,000, 15,000 crores of these big ticket fund offerings, new fund offerings. They were pulling in the big money in the earlier part of this year. That also explains why thematic funds, if you talk about sectoral and thematic funds, which is how the mutual fund industry is pulling in a lot of the new money, that category has seen a dip as well compared to the trends that we've seen in the earlier part of the year. But the good news is that investors are very well keeping the faith in small caps and mid caps. While the large cap category has seen the net inflows drop by about 1,000 crores. Again, this is month on month comparison. Look at mid caps and small caps. Small cap funds have pulled in over 4,100 crores. That's not a small sum of money. Mid cap funds are now pulling in almost 5,000 crores on a monthly basis. So the mid and small cap party is well and truly on. Also explains the recovery in those indices in the last couple of weeks. On the hybrid side, interestingly, flows have thinned out as well. And here there are very popular categories like the multi-asset funds or the balanced advantage funds. But there's been a bit of a dip. They haven't pulled in as much money in November as what we saw in the recent past. Finally, you talk about the total industry AUM that has swollen further. And now it stands at above 68 lakh crore rupees. So looking good, not too bad. But yes, there has been a bit of a short-term dip, a month-on-month dip in those numbers.
So a slight dip, but not too bad. Thank you so much for those details, Surbhi. Now, shares of Religare Enterprises surged in today's trade and briefly hit a 52-week high. This after the Reserve Bank of India approved Berman family's plan to raise their stake in the company from 25% to 51% through an open offer. The RBI's approval, however, came with certain conditions. This development marks a major step toward resolving control disputes between Rashmi Saluja-led Religare and the Berman family of Dabur India. Vivek Iyer is here with more details. Vivek, what has the RBI said?
Well, that's right. 1.5 to almost 2 years now, as far as the sparring is concerned between the Berman family, that intends to go ahead and take controlling stake in Religare, and the existing board helmed by Dr. Rashmi Saluja. Now, what's actually happened today? What is the fresh piece of information? Today, the company or the board has received the approval from the RBI. Basically, RBI has given its nod for the Berman family to go ahead and take ahead the open offer. So that is one important tick mark in the process of the Berman family going ahead and announcing, as well as completing all the formalities for announcing and taking over 26% stake as far as Religare is concerned. Now, RBI has two caveats that is mentioned in its letter. Number one, the acquirers, that is the Berman family, need to consolidate all of the NBFCs in the resulting structure before March 31st, 2026. And also, there was a request to go ahead and appoint 4 proposed directors. At this point of time, RBI has not given a nod to appoint those 4 directors. Now, as far as the open offer is concerned, remember, there were approvals required from CCI, which the company has received, from the RBI, which has been received today. SEBI, was awaiting the RBI nod to come, so that too should come. And also, the IRDAI nod was expected, given the fact that the company does have care insurance. So IRDAI nod too is in the favor as far as the Berman family is concerned. So now, next step, the key to track will be the AGM, that is on 31st December 2024. The reappointment of Dr. Rashmi Chaluja as a director in the company will be up for voting, and it will be very important to note as well as take note as what will be the outcome of that particular note. Remember, September 2023 is when the Berman family had gone ahead and announced an open offer at 235 rupees a share to acquire up to 26% stake in the company.
All right, Vivek, many thanks for those details. Now, the Supreme Court has taken cognizance of the controversial statement made by Allahabad High Court Judge Shekhar Kumar Yadav at a VHP event. All India Lawyers Union had called for action against the judge for using a communal slur and saying India will run as per the wishes of the majority community. Ashmit Kumar joins us now with the details. Ashmit, take us through what the top court said on this matter.
These comments that came from Justice Yadav, which incidentally happened within the High Court Bar's Library Hall of the Allahabad High Court, which some point out make it aggravate the entire issue, aggravate the comments that he's made, has been criticized by a whole host of stakeholders, not just various stakeholders, various lawyers, but even the Bar Association, Supreme Court Bar Association President Kapil Sibal has called for his impeachment, in fact not stopping at that, and saying that it is now called upon the likes of the Prime Minister, the Home Minister, and even the government MPs to come forth and support this call for his impeachment, that the government cannot be seen siding with such a communal discriminatory judge. Not just that, Owaisi, a sitting Lok Sabha MP, has also made a call for his removal, Justice Yadav's removal, saying that how can a minority community member go ahead and seek justice from a judge who has made comments along these lines. In fact, to that end, important to point out that the Supreme Court has also taken note of these media reports. The Supreme Court has said that it has sought details from the Allahabad High Court as to what exactly transpired, the nature of comments that were made by Justice Yadav, and to that end, the Supreme Court statement pointing out that this issue is under consideration. And not just that, there was also a complaint filed before the Apex Court by the CJAR. This is an NGO which essentially claims that Justice Yadav's comments have brought shame to the judiciary, that they are communal in nature, they are discriminatory in nature, and that at the very least, the Supreme Court should institute an inquiry and should withdraw all judicial work from Justice Yadav during the pendency of that inquiry.
Thank you, Ashmit, for the latest on that front. With that, it is a wrap on this edition of News Center. But before we go, let me present to you the Growth Code, a collaborative initiative by Grow and CNBC TV18 India. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand the hidden risks of cheap options and how to avoid over-leveraging. Take a look.
Let me tell you about the hidden risks of cheap options. Avoid over-leveraging. Now, these cheap options may seem like an opportunity, but they can quickly become a trap. Now, here's how. When the options are inexpensive, they're tempting to buy too many contracts. And in that, you take up more risk than you realize, and you end up over-leveraging. For instance, if you're trading a 10 rupee out of the money option, you might buy or sell 100 contracts, thinking it's just a small investment. But if these options expire worthless, you've lost 1,000 rupees. And if they expire in the money, you are losing money on those 100 contracts that you've actually sold. Now imagine doing this repeatedly. These losses add up very fast. Additionally, cheap options face rapid time decay as well. As expiration nears, their value erodes unless the stock moves significantly in your favor, which is a rare occurrence when you're buying out of money options, and quite a possibility when you're selling those out of money options as well. So what you need to focus on is risk management. Buy fewer contracts, the amount that you can afford, and prioritize at the money or in the money options with higher chances of success on the long side.
Tediously laid the foundations of this organization, set the course of its right values. My father, who propelled it to take it to the next level. Today, PI stands an institution which is taking innovation to the world, basically taking India to the world. We fostered ourselves by saying that we want to be the largest innovative agri-science company with 900 scientists creating innovation. Our first product has got to go to the world. We're fostering this and taking it into the pharma sector, the biotech sector, and putting India on the global map. Once again, thank you very much, and thanks to all the members of PI over the generations who made this company what it stands for today. Thank you.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
As 2024 wraps up, it's time to shine a light on the trends and people who shaped this incredible year. If there's one big story, it's how startup IPOs came into their own. A record 12 startups went public, raising billions and showing the world that India's startup ecosystem has come of age. This was also the year when venture capitalists saw their patience pay off. Years of backing and building startups delivered, with VC funds taking home over $4 billion from IPOs and public market sales. That's double what they made in 2023 and 2.5 times the returns of 2022. Big names like SoftBank, Peak 15, Accel, Elevation and Process turned bold bets into blockbuster successes on the Lal Street. Now, this IPO wave didn't happen by chance. India's market thrived despite global challenges thanks to steady economic growth, favorable market conditions and improvements in the regulatory framework. As per an S&P Global Market Intelligence report, while the US, China and Europe saw muted IPO activity, India's startups stepped up. Swiggy's $1.35 billion IPO, the biggest tech listing in the world this year, was a standout moment fueled by the growing appetite for tech-driven innovation with a focus on financial sustainability and profitability. And the story doesn't end here. 2025 promises an even bigger lineup, 25 at last count, with IPOs expected from names like Zetwork, Meesho, Bluestone, Urban Company, Zepto, Grow and Pine Labs, just to name a few. 2024 has also seen the return of big deals and bets by VC funds. Zepto alone raised over $1 billion in the year. That saw over $10 billion being pumped into the system. And interestingly, family offices poured in over $1 billion into startups. Hello and welcome to this very special edition of Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. And joining me on the show today, 2024 has crowned venture capital investors as the true winners of India's startup IPO boom. And to reflect on the year gone by and what 2025 has in store for us, I'm joined by Mukul Arora, co-managing partner at Elevation Capital, and Anand Daniel, partner at Accel. Gentlemen, appreciate you joining us here on CNBC TV18. Mukul, let me start by asking you, we've just taken our viewers through a whole host of the trends that shape 2024, IPOs being the big one. But to your mind, what would be the standout, trends, the big performers in the year gone by?
Sure. Shireen, first of all, thank you so much for having me on the show. And I want to start by congratulating you for completing 25 years of being a wonderful cheerleader for Indian businesses and startups. So thank you for that. Now, coming to your question, so if we look at this year, we have to step back and look at last 3-4 years together. So 2021 and early 22 was a period when we saw a lot of capital coming into the startup ecosystem. And then as the capital markets dried up, last 2.5 years have been years of efficiency. They have also been years which have really separated high quality companies from not so great companies. And therefore, this year we have seen a lot of questions about Indian startup ecosystem being answered in a very, very comprehensive manner. So one, we always used to hear questions on, hey, is the India market large enough or not? And we have seen a lot of categories in India have now become very large, whether it's $100 billion of Indian marketplaces, whether it is $10 billion of ad revenue, and I can go on and on. Second, we used to hear a lot of questions on, will these companies ever make money? So they make GMV, but will they ever be profitable? Again, we have seen a lot of companies become very clearly profitable and generating hundreds of millions of cash. And third were questions around exits, which you've already covered in the introduction, that we have seen finally a lot of very strong exits and very attractive reception on public markets for these companies. So I would say this has been a coming of age year for Indian startup ecosystem, where finally they have moved from being startups to established businesses and will hopefully keep compounding from here for decades ahead.
Well, that's very aptly put. And yes, we now need to categorize these companies differently. We cannot keep calling them startups. I mean, companies like Zomato, Paytm, etc. have no business being called startups any longer. But let me go to Anand and bring him into the conversation as well. Anand, many thanks for joining us here and representing Accel on the program. To take forward what we just heard there from Mukul, to your mind, what have been the big trends that have shaped 2024 and that will continue to drive momentum and deal activity in 2025?
Hi, Shireen. Thanks for having me and congrats on the show. So I echo all that Mukul talked about, right? So startups focusing on building in the sustainable areas that we've been very excited about is we've always tracked the consumer movement over a period of time, and we feel there's a lot of activity still to be seen in the Bharat side of things, which is tier 2 plus India. So as you know, we've done a lot of work around that. The other area where a lot of activity is still early days is AI. AI startups from India, for India and for the globe. That's another sector. The third being manufacturing and B2B companies that, tech companies that make this more efficient. You talked about Zedwork earlier on, and Inframarket and more such companies, and Blackbuck, which went public as well. So all these are going after the B2B opportunities. And these are some of the areas where we think there's a lot more to be done from an India perspective. I'll pause there.
Anand, let's pick up on the consumer bet that you spoke of, and I'll ask you this in the context of course, Accel's big exit from Flipkart, Walmart, and the possibility now of Flipkart finally IPOing. First, of course, reverse flipping and then finally IPOing. And what you make of this space, the lines between e-commerce and quick commerce now fast blurring in India. We've seen the kind of deal activity in the quick commerce space with the companies like Zepto, etc., raising over $1 billion just in 2024. How are you reading now the next wave as far as this sector is concerned?
Yeah, that's a really good question. I think the Indian consumer now is really well trained to order and expects a lot of convenience, and convenience in 10 minutes as well, right? So that we have seen in the last couple of years. So the lines are really blurring. So when quick commerce started, or e-commerce started, just getting things at home and getting it in the prescribed time in a couple of days was a big deal. But now everything you want in 10 minutes, be it electronics, be it any category you take across various categories, people want it faster and faster. So that's a trend. It's a balancing act. How do you do that while not stocking up too many things? That's the fine line. The e-commerce is known for long tail. So you can't have long tail as well
Yeah.
as quick delivery. So that's the balance that needs to be done by the companies.
Yes, that balancing act, of course, will be tested as we move forward. But Mukul, let's talk about the kind of investments that you've made through 2024 and what we should now expect in 2025. I'm just taking a look at, your portfolio. You invested in more than 30 companies, totaling over $140 million just in 2024. These include both new investments as well as follow-ons. Take me through the bets that you have made in 2024, the investment thesis that will continue to drive your checks and where they head in 2025.
Sure, Shireen. So, see, for us, we have three core pillars at Elevation, and then there's a fourth which we have started building this year. So, the first three core pillars are consumer, which includes consumer tech platforms like Swiggy, but it also includes consumer brands, where we've been early investors in companies like Country Delight, Bliss Club, etc. Second is fintech financial services. Third is SaaS plus AI, India building for the world. And the fourth, which we have very actively started building out this year, is healthcare. So these four will continue to be big focus areas for us going into the next year as well. And if we contrast Indian market with, let's say, rest of the world, where 80-90% of venture capital today is going into AI, our view is in India, where we are as an economy, there is a lot of headroom across all of these categories. And therefore, in India, both investment and returns will be much more broad-based and secular and not really limited to AI. And second, we also believe role of AI in India will be a lot more cross-cutting. So it can play a role in education, it can play a role in healthcare, it can play a role in financial services. And therefore, there will be multiple avenues versus only SaaS and B2B software for the world, which of course will remain a focus area as well. So this year, like you mentioned, we ended up investing in 30 companies, pretty much equally split between the first three and a little bit in healthcare. And my view is next year will be very similar for us as well.
Well, more of the same, a little bit of more of the same for 2025 as well. Anand, let's talk about the bets that you intend to make in 2025. And, to build on what we heard there from Mukul as far as the AI bet is concerned. Now, are you looking at India building on the LLM kind of space, or are you looking at India continuing to take the API route as far as addressing the AI side is concerned on use cases? I mean, what's the thesis as far as AI is concerned, and how will that drive your investments?
Yeah, that's a good question, Shireen. So if you take the base of the LLM layer, right? So on top of that sits a middleware layer, which is used for fine-tuning the LLM and infrastructure. So we are starting to see companies and that middleware layer. And on top of that, there are applications that go across all the areas that Mukul talked about, be it consumer or enterprise side. And then there's also another aspect of service as a software. I'll talk about that in a minute. So I think from an India perspective, we feel there's an opportunity for a lot of middleware companies. For example, we invest in a company called Simply Smart, which optimizes the inference engine for AI, and so these are two young entrepreneurs from India, but building a world-class product sitting out of here, right? So we expect to see more of that coming out of the middle layer, and then on the applications across both consumer side as well as the enterprise side, it could be platforms, agentic platforms like Emma that we invested in that go and solves for various use cases. We see there will be opportunities like that. And then finally, what we call services as a software, because if you look at India, it has a very deep services industry, and it's been built over the last 20, 30 years. And there's a lot of talent there. Can you combine AI with that talent and provide amazing service, right? So that's why we're calling that service as a software. And that's an area where we feel there's a lot of opportunities as well. So these are some of the areas within AI we feel we'd love to invest in.
Anand, I just want to build on that, because you talked about the potential of this middle layer, so to speak, and how India can make a bid and a play in that, not just for the domestic market, but to build for global markets as well. Where are we now in that cycle? I mean, are we at a very, very early stage? Where are we in that cycle at this point in time, given all the hype surrounding AI?
Yeah, you're talking about the layers below, right? So there is a lot of activity still at the LLM level, and then everyone like there are large players like OpenAI and like Anthropic and more, and then there's Amazon that has also launched a bunch of things. So there's a lot of activity at the infrastructure layer. So it's tough to go and compete at that layer, being a startup, right? So whereas can you build on top of that? Can you make those layers a lot more efficient and be the bridge between those various layers? Like, and you can make it even agnostic to those different platforms and make it more user friendly for the people building the apps. So that's what I call as the middle layer. And there, I think like we have 50 million plus developers. It has one of the largest markets for developers and who are all hungry to learn AI and build stuff around AI. So I think there is a lot of opportunity there. And there's a lot of product thinking also that's happening at that level. People who are working in various startups, learning what are the problem sets while building for AI, and they're coming out and doing some of this as well.
Mukul, just build on that, the way that you're addressing AI and the middle layer, so to speak, if at all, in India.
Sure. So, Shireen, let me add a couple of points to what Anand said. See, one unique advantage we have in India is that some of the tech companies in India are probably largest in the world in terms of number of users and complexity they are handling. Swiggy would be a good example of that. Meesho would be a good example of that. They have hundreds of millions of annual transacting customers. So it's bigger than even some of the US companies. And therefore, the kind of complexity that Indian developers, Indian engineers are handling is almost the best in class. And therefore, that's what is critical in this middle layer, where if you are building software which is managing security, which is managing stability, which is managing this complexity at middleware for these companies at scale, you can do it for rest of the world as well. So as we are getting into this AI era, the same will continue to happen from India. That is one. Second, we also feel if we draw a parallel to SaaS era over the last 15, 20 years, we were probably late to the game. SaaS companies in US started in late 90s, early 2000s, whereas Freshworks started in 2010, 2011. So we were almost a decade late. And we also did not have role models on how to sell software from India for the world at that time. But over the last 15 years, we have had those learnings, we have those role models, we have best-in-class talent as we spoke about. So as we also enter the AI application layer era, India will be much better prepared. And our view is we will see many more companies like a Freshworks, like a Browser Stack coming from India and building for the world and capturing meaningful share of that market. So we are very, very excited both about this middleware, which we spoke about, and also about the application layer AI companies getting built from India.
Anything in specific? Any companies that you're going to be watching out for, Mukul, whether they're part of your portfolio outside of it?
Sure. Actually, let me share a couple of examples with you. So one of the companies we had invested in their previous round, and coincidentally, Axel invested in that company this year. They are called NanoNets. And they are an AI first company. What they do is, before NanoNets, in a pre-AI era, document processing companies used to work on structured documents. Thanks to AI, NanoNets type technology can now work on unstructured documents. And then they are saying that if you are a company which has a lot of documents, which could be invoices, which could be purchase orders, etc., we'll not only help process them automatically, even if they look very different, but also we'll integrate into your workflow so that the entire workflow gets automated, right from, let's say, a company placing an order to the payment, the entire flow gets automated. So these are the kind of things which are becoming possible, which would have had tens of or hundreds of humans in a developing country manually going through those documents. So this is the kind of innovation we are seeing in the AI application layer now.
Well, that's the kind of innovation and that's the kind of disruptive power that is, of course, being bet on at this point in time as well. Anand, let's address the Bharat issue, and I'll put that in the context of Mukul's argument that Indian startups have answered the question about how large is the market, how large is the addressable market, and can you actually make money off of it? Now, you know, what's different or what's starting to emerge as being different now in the Bharat layer as you're going about addressing it via your own portfolio companies?
Yeah, so what's different now is that if you look over the last 4 or 5 years, the internet access problem is completely solved for the Bharat consumer. If you look for 50 million plus smartphone users spending 100 minutes plus per day on a smartphone, so they're looking at the best things out there, right? So be it through Instagram, whatever, YouTube, wherever, they want the best. They're aspirational. They know what's happening everywhere, right? That's number one. So they have the internet access. The second is previously the physical access, the logistic networks and all that. Tier 2, 3 maybe existed, but if you went beyond, it wasn't there. And over the last 5-6 years and a decade, perhaps, like all that problem also has been addressed. And the third thing is the ability for them to transact online. So previously it had to be mostly through cash on demand, right? So, but right now, because of the UPI, ubiquitous nature of UPI, they are able to pay and purchase that. So these three, and for the top 30% of the rural population, if you look, the ability to spend is higher than the bottom 50% of urban. So that's not a very well-known fact. So it is a really exciting market that needs its own solutions. Mukul works with Meesho. They started with that, right? So and they've shown that it can be done. And we are seeing more and more of that. We have a company called City Mall, again, common between us and Elevation. That's showing a different way of approaching. We have another company called Apna Mart that's trying to go after that. So there are various ways to go and address this market and solve problems that they uniquely face, which couldn't have been done a decade ago for sure.
Well, yes, those structural changes that you spoke of have certainly created that enabling framework and enabling environment to make some of these businesses take off. But Mukul, just build on that and let's address this issue of the addressable market. I mean, for a brand like Bliss Club, which you're invested in, what are we really talking about in terms of the kind of headroom for growth? I mean, the runway that you foresee from here on for some of these consumer brands now operating in India, because there are questions on the consumption power, on the discretionary spending power at this point in time?
So, Shireen, I think those are all the right questions if we think of here and now. And as you know better than anyone else, if we look at India from a 10-year lens, that's when you get to see how much progress is really happening. And if we go 10 years back, I don't think anyone would have imagined we'll have 1,000 crore plus new age consumer brands getting built in less than a decade, which we are already starting to see. In fact, even till 3-4 years back, consumer brands was not even considered a venture capital investable business, because people would feel, hey, will they grow big enough? Is there enough TAM or not? Now, if we look at where we are sitting today, nearing in $2,500-3,000 per capita income, and 10 years out, it could be 2.5x of where we are today. So we'll be at $6,000-8,000 per capita income. At these levels, discretionary income starts to grow much faster than the rate of GDP growth. And therefore, we believe in a lot of these categories. Bliss Club is right there where consumers are premiumizing. They are looking for best in the world products. So if a consumer in India who wants athleisure, they are looking at a US market and saying that, hey, my friends in the US have access to brands like Lululemon, which, by the way, their products start at $100. So I have the same aspiration. I want the same quality. I'm willing to pay up by Indian standards. So I will not buy a $100 product, but if Bliss Club can give me similar product for 1,000, 1,500 rupees, is there demand for that? And we have been very, very surprised. So we had done seed investment in Bliss Club in early 2021, mid 2021. So it's been almost 3 years since that investment, and they are nearing 200 crore annualized revenue run rate and very close to profitability. Again, this goes to show that if you have a very differentiated, high quality product at the right price, and in India, all of these are important. You can't have quality but very expensive. You can't have cheap but poor quality. You have to find the right balance. But if you find it, the TAM is very, very large. And we will continue to be positively surprised over the next decade as well with the kind of TAM or revenue scale some of these companies will achieve.
Well, yes, Bliss Club walking away with the breakout brand of the year at the CNBC TV18 India Business Leader Awards over the weekend. But Anand, you know, talking about surprises, let's talk about what has surprised you in the year gone by, both the positives as well as the negatives. I mean, what have been the big surprises and the big upsets?
Big surprises. That is a good question. So I think the reception of tech IPOs in the Indian market has been I would say, a pleasant surprise. Like the public markets appreciating companies that were built over a period of time and different areas, be it a Swiggy in consumer or Blackbuck on the B2B side. So that was that's good to see. That's the work of over 10 plus years being able to see the next step of that evolution. So that's a good one. What can be better? I would say I'm like going back to my theme. I'd love to meet more and more founders building for Bharat or new age consumer platforms, AI, like any of these. Always as a VC looking to find good founders. I feel there's still there is some level of skepticism around building for Bharat. So hopefully people get over that. And I feel there could be a lot more high quality AI companies coming out of India because we have some of the best founder base here. So looking forward to that. I would say that's an opportunity rather than a disappointment. Yeah.
Well, certainly an opportunity to watch out for. But Mukul, let's talk about some of the risks. We're talking about the opportunities as well as the headroom for growth. But what would you qualify as the risk that we should be mindful of as we enter 2025?
Sure. So, see, the biggest opportunity and the biggest risk, and at the risk of repetition, we have already spoken about it, is this whole AI shift which is happening. And if I had to say what is one thing I wish I had seen more of in this year, I would say it was global best-in-class AI companies coming out of India. We spoke about that middle layer. We spoke about the application layer. We are starting to see some of that, but nowhere close to the same scale as what is happening in the rest of the world. So there we cannot, as a country, get left behind. There, I think we have to be much more bolder, much more ambitious, and say that, hey, over the next 5, 7, 10 years, how do we make sure we have best-in-class global AI companies being built out of India? And today we have the talent, we have the capital, we have the market access. So that, in my view, is the biggest opportunity and biggest risk if we miss out on it. So next 12, 24 months will be crucial for that.
Yes, certainly will be crucial for that. But one of the other interesting trends that we've seen pick up pace through 2024 is the emergence of family offices and domestic capital venturing into Indian startups. Now, what does that mean as far as the startup ecosystem is concerned, both in terms of the kinds of companies that are likely to be funded, as well as the valuations that we're expected to see? Anand, let me start by asking you. What's the likely impact of this domestic capital, which has been, which we've been waiting to be unlocked, finally starting to be unlocked?
No, I feel that's really good to see more of the local, both entrepreneurs who have seen exits, as well as people, other HNIs jumping into the startup side, both early stage as well as into pre-IPO and post-IPO. So I think that's a very healthy thing for the ecosystem. And see, valuations will go up and down. I think long term, we are here for the long term investment. So I'm not too concerned about the short term fluctuations, right? I think it's a long term good trend to see more and more local investors coming into the market.
Mukul, what about you?
Shireen, I completely agree with Anand on that. And if we look at total tech market cap, public and private in India put together, and I'm just looking at new age companies, it will probably be in that $300-400 billion sort of zone. And over next decade, it is going to multiply manifold. And so far, participants in this value creation obviously have been domestic investors, but it has also been a lot of foreign capital as well. And as we look at next 10 years, obviously, as this value creation happens, we should see more and more domestic capital participating in this. HNIs is one part of it. Is there even room for, like, globally, lot of endowment funds, lot of universities, lot of fund of funds are participating in this asset class? Why should domestic capital miss out on this opportunity? So we would love to see much more domestic participation in this hundreds of dollars of value creation, which is hundreds of billions of dollars of value creation, which is going to happen over the next decade or so.
Well, speaking of value creation, 2024, as we pointed out, has been a big year as far as new age company IPOs are concerned. Mukul, let me start by asking you, 2025, there's a long list, a long pipeline that is looking to head to the Lal Street. What's the expectation? Do you believe, given the fact that we are in a volatile market at this point in time with many global events, including the Trump administration taking office in January, that could potentially impact the way that the markets move? What's the outlook as far as the IPO pipeline itself is concerned?
Sure. So see, from our perspective and from the company's lens, what we can control is our own performance. And the good news is, like you said, there is a long list of companies which are growing well, which have become profitable, which also know that they are now mature enough to go public and have a predictable business trajectory. So that is what is in our control. And it's great to see that now tens of Indian companies are getting into that bucket. Now, next year, like you said, there are a lot of domestic as well as global variables basis which we'll know how long does this IPO window remain open. And therefore, we'll have to wait and see how many of these companies can actually list. But even if some of them cannot next year, it's perfectly fine because they are resilient businesses. They'll keep compounding. And whenever the opportunity and timing is right, they can always come back to the market at that time.
Well, Anand, what's your expectation? Do you believe that 2025 is going to be an even hotter IPO pipeline than 2024?
The Indian market, if you look overall on an aggregate basis, VC-backed companies are less than 5%, right? So there's a lot of headroom for growth. So high-quality companies are getting created. As Mukul said, the company's job is to get ready, be ready to list. If the market's open, they will at that time. And we really hope that markets continue to be, valuations could go up and down, but if the market continues to embrace new age tech companies, I think that's great for the overall ecosystem. And we hope to see more and more of that.
So to put it simply in one word, and Anand, I'll start by asking you, as you walk into 2025, what's the word that captures how you feel, the mood?
Super excited.
Super excited. Mukul, what about you?
Very optimistic.
Very optimistic and super excited. That tells you the mood as far as India's VCs are concerned when it comes to the year ahead. 2025 expected to be an even better year when we talk about the possibility of listings as well as deal activity, given where we find ourselves. Mukul Arora and Anand Daniel, many, many thanks for joining us on this special edition of Young Turks as we mapped out the year that was for India's startups and what the road ahead looks like. We will take a break here. Don't go anywhere. We're back in a moment with a lot more here on CNBC TV18. That's it then on this edition of Young Turks.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The funniest story I remember is once when Gukesh had a very, very disappointing result in during the Olympiad. I went to cheer him up a little bit. So I went to his room expecting to find him slightly distraught. And within 10 minutes, he was trying to cheer me up. He said, "Why don't we go and play some table tennis? So, I think you're quite affected by this game, sir," and so on. I thought that showed his composure as well.
What did you, if you don't mind, can you share what was the conversation like? What did you tell each other?
Well, I have had really disappointing results, obviously, at some point or the other. And it's taken me a while to get over them. I mean, and the full impact of what I've done hits me. And then, so I tried to go to his room and tell him he shouldn't just wave it away, but, acknowledge that it happened and then try to feel better about it and so on. So I was trying to get him to talk about it. But in fact, his approach was different. He genuinely pushes the past aside and starts again. So after a few minutes, he got bored with me trying to discuss the matter with him, and he said, "Let's go do something else." And that's when we went off to play table tennis instead.
Our next category, the Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress. The award celebrates an individual whose work has changed the way we think, act and build for the future. And the winner for the Lifetime Achievement Award 2024 is...
1966, one visionary set out to ensure that every child could enjoy a healthy childhood at an affordable price. This vision gave birth to the Serum Institute of India, a company that would go on to redefine vaccinations worldwide. Dr. Cyrus Poonawala's journey began with the launch of the first therapeutic anti-tetanus serum and grew into the world's largest vaccine manufacturer, producing over 1.3 billion doses. Today's Serum's vaccines reach 65% of the world's children.
Good evening, ladies and gentlemen. Great to have all of you here. We are, of course, coming to you from the sidelines of the Motilal Oswal Wealth Creation Study. It's the 29th edition. Each study, of course, is something to behold. It's a study into which a lot of hard work goes in. Ramdevji, of course, spearheads the study, but an entire team is involved. And, of course, it's been our pleasure at CNBC TV18 to bring this study to you year after year. As I said, it's a 29th study. Ramdevji was earlier joking with me that at least about 5 years of his life have gone into the wealth creation study, maybe more, and we'll get to it in just a bit. It's a very specially curated panel that we have with us today, because we'll hear not just from investors. We have Ramdev Agarwal, of course, with us. Amit Goyla needs no introduction as well. He's a veteran investor, partner at Rare Enterprises. He's been with Rakeshji's side for 20 years plus. And he's, of course, seen, the ins and outs of markets for a long, long time. But we'll also hear from corporate veterans. Anish Shah is Group CEO, MD at the Mahindra Group, someone under whose watch the Mahindra stock has gone up about 4 times. Anish, great to have you with us here. Thank you very much. And, of course, Mr. Akhil Gupta joins in as well. He's, of course, Vice Chairman at Bharat Enterprises, someone who's, again, been in a sector which is... I think has been a tricky one over the last 2.5 odd decades, but Bharati, of course, under his leadership, has emerged as a big winner. So once again, thank you all for being here. Now, the topic for the discussion, of course, is how to profit from bruised blue chips. And that is essentially what we're going to be talking about. There is, of course, the wealth creation component part of it, which I will get to in just a bit. But I think it's really interesting how to profit from blue chips which have fallen out of favor, bruised blue chips, as Ramdevji put it in his study. So, Ramdevji, why don't you set the context for us? what do you mean by bruised blue chips? How do you decide that they are really bruised? And how does repair happen? And when do you buy them?
So I think there are two aspects. One is the definition of blue chip itself, and then how do we define the bruised blue chips? So blue chips are the companies which, in our view, earns at least 20% return on equity for average return on equity for 10 years, and that does the magic of creating wealth for the companies. So 10 years of average return on equity, there are not many, maybe 20, 25%, 22% of the listed companies in top 250 are blue chips. And then also by size, you need to have size and stability leadership. So top 50 Nifty companies and the companies of 250 at the companies with 20% ROE, we have termed them as blue chips, because blue chip is practiced all over. Everybody talks about blue chips, but nobody tells the definition of blue chips. So we have defined for the study definition of blue chips. Second is, what is a bruised blue chip? Bruised blue chips are companies in last 5 years, whatever is the high, and now the companies have fallen by more than 50%. Say if company has gone to say 1,000 and it has fallen below 500, 60, 70, 80%. So those companies are bruised. They have not lost the blue chip status, but for some reason, competition or failure products or regulator or whatever, the stocks have fallen by more than 50%. That we call them bruised. So these are the two things which we have to keep in mind while talking about bruised blue chips.
Typically one would, otherwise blue chips are blue chips, but as your study shows, they do, and quite regularly.
Yeah, quite regularly, every year. If you see the study period of 5 years, every time out of 250, 78 companies are the blue chips on an average. And of that 40, or literally half, they get bruised. Other half, they don't get bruised, as you say. But 40%, so no blue chip has traveled the journey without getting bruised. Maybe TCS or Infosys might be 2 or 3 companies, but actually almost all the companies, they go through a rough patch, and that is the point of time when they're deeply bruised. I think if you understand the company, you can buy tons of them.
And as your study shows, the hit rate is pretty good. When you buy them at that very, very bruised state, you tend to make a lot of money.
I have not practiced. Probably Amit can talk more about it, because for me, this is just the study.
Right.
But if you practice it, few companies I know for sure, which came to my mind, that was one of the Jindal Steel. Since I know that company, DLF at 70, 80 rupees, I have gone on record saying that this is a great time to sell your real estate portfolio and buy into DLF. So 2, 3 companies I remember, but I have not made too much of money out of bruised blue chips.
That's a cue for you. Ramdevji says he's not practiced it, but you've been a big practitioner over the last 2 decades plus. So tell us a little bit. You heard the presentation earlier, you heard Ramdevji explaining it.
One of the core style of dear Rakesh and your mentor and partner and boss, I think he had the unique style of picking these companies. Yeah. Because whenever I used to meet him, he used to tell me, this is the Ramdev, this is the stock I bought, why don't you buy them? Chahe Scores ho, chahe Indian Oil ho. But I never could see the light of why he's saying so. In fact, I used to feel this guy is already drunkard, and probably he's telling me something which he wants to pass off. That used to be my feeling. I never made money out of it. And he was so sincere. He always wanted me to make money. Yeah. And now I can see that what he wanted. But it's too late. Anyway, Amit.
Yeah, Ramdevji, thank you for having me here. So Prashant, as you said, I've been with Rakeshji. So Rakeshji was the practitioner of this kind of investing. I was supporting him. I was helping him doing the work. But the real practitioner was Rakeshji. And I've seen him consistently over a period of time pick stocks like this which were in trouble, or the companies were in trouble, and he's made serious money in them. And the starting, he never coined them as a bruised blue chip or anything of that kind. He was a value investor. And his starting point was that cannot be a loss of capital. See, he would invest through leverage. And he would service the debt through either dividends or from trading income. So there was no question of a capital loss. So anything which was like a book value, though I don't even remember calculating too many times around when I was around him. But PE was quite critical, and dividend, like sometimes most of these companies were not even giving a dividend because they were in bad shape. So the PE was very critical, the market cap in terms of the opportunity, that was very critical. Those are the couple of things he would look at. And his basic core was there cannot be a capital loss. So he said, my edge is I have time on my side. I'll keep sitting tight. I don't have any benchmark to beat. I don't have to prove anything. And so I will remain invested, but I cannot have a capital loss. That was his basic core of investing in these kind of companies. And he had a very open mind. So he didn't, it was not, I will only look at one sector. He invested across sectors. We were sector agnostic. Yeah, like so.
You know, let's get this very well put, Amit. Anish, you know, we get the investors' viewpoint all the time, but it's a hall full of investors waiting to hear from you and Akhil. You came into Mahindra & Mahindra, and I dare say M&M was not bruised, but it was going through a tough patch. And you came in and you turned things around. Talk to us about that point when you came in. What was on your mind? What was the task given to you? And generally, what were the conditions? I mean, what was the experience like?
The start of the first phase of my role, the first year was as Deputy MD and Group CFO, began on 2nd April 2020. And that was a time when we had just hit a low point. The stock had lost about 70% of value. SsangYong was a major burden, and we had close to 5,000 crores of losses from what I called our loss-making entities. And as a result, the results of that year were just about break-even. And it was the start of COVID, and no revenue for the first month of April. So that was the starting point. But the foundation was very strong. And that's one thing I want to highlight in terms of the Bruce blue chip story, is that the foundation had been built over many years. And in fact, it was a Motilal Oswal analyst report that in 2018 had highlighted that M&M was the best performing stock in the Nifty since 2002. And that doesn't happen easily. So there were many elements of the company, of the group, that were important and took us forward and helped us weather the storms. Yes, there was some reason for the storms, but the people we had, the talent was of a completely different quality. The ethos of the company, the purpose-driven approach, the focus on entrepreneurship, all of those were elements of the DNA of the company. And which is why even through those storms, we never really were very concerned, because we knew that we were going to get out of that very easily. So I give a lot of credit to our predecessors who really helped set us up for success. And we had to just go forward and implement the few things that we felt were important.
Through global collaborations and innovative vaccines like those for COVID-19, Dr. Poonawalla has cemented India's leadership in affordable public health solutions. CNBC TV18 India Business Leader Awards 2024 proudly presents the Lifetime Achievement Award to Dr. Cyrus Poonawalla.
Well, many congratulations to Dr. Cyrus Poonawalla, and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawalla, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawalla.
Honorable Srinath ji, my friend Piyush, and our Chief Minister, Mr. Fadnavis. I first of all like to acknowledge with thanks the jury for having selected me for this coveted honor, and also CNBC for supporting such a great honor to me, though I have received many honors as you've seen in the past, but to me this honor is equally important, if no more important. I won't take a lot of your time, but There was one important aspect which I think the audience, some of them know, but most don't know, that right from the beginning when I started Serum Institute with a capital of 5 lakhs, of which half was borrowed, and it helped me to grow a vaccine company, which is today, of course, the world's largest vaccine company, in spite, and that's what I want to emphasize, that I've supplied most of the vaccines, if not all, at half or quarter of the market ruling price, in which hundreds of millions of dollars of profits were sacrificed, and I continue to do it at a... And when I was asked about it in the press, I said, apart from my staff who have supported me in this sacrifice, the biggest loser is my son here, only son, because it's cost him at least $3 to $5 billion of cash profits, which we have lost in the process, and we continue to lose till at least in my lifetime. Thank you very much.
Well, thank you, Dr. Poonawalla, for your very, very noble cause. We're ever grateful, and congratulations again on receiving this award. Well, ladies and gentlemen, economic progress is built on a foundation of vision. It is built on a foundation of dedication as well as impact. The next award is a special...
I think what we want to know is what did you do? I mean, you set the ball rolling. You set ROE targets, and you sort of decided to sell off some of these unrelated diversifications and all of those things. I mean, just talk us through. I mean, the point that Ramdevji made, external mistakes, internal, sometimes you kind of sort of go astray, large companies. So just talk us through those moments and what you saw.
So let's start with the losses. Right? We knew that we had to address that, and we had to do that quickly. And therefore, we created a list of companies that made that 5,332 crores specifically of losses. SsangYong was highest on the list with 2,400 crores of losses that year. And we said that if we are to be credible, that's the first decision we have to take. And Ramdevji is right. A lot of people at that point said, you said this, but it's not going to happen. Right? And therefore, we had to make that happen. But that wasn't enough, because we still had another 2,600 or 2,800 crores of losses. And therefore, we had to exit a number of other companies, and we categorized them. We said, look, some of them actually could be good jewels for us if we can turn them around. So our categorization was category A, companies that can be turned around, and they will be companies that we'll be proud of, and they can meet our 18% ROE target. Category B, companies that will likely make some losses but have a quantifiable strategic benefit for us. And category C is none of the above, and therefore they need to exit. And we exited 15 companies in the next 18 months or so. And we just moved very quickly and did that. We did not wait in terms of any sequential order. We just started that simultaneously. So that was the first big step. The second big step was pivot to growth. Because just meeting an 18% ROE target is not enough. If you don't see EPS growth as investors, it doesn't matter from an investor standpoint. So we very quickly pivoted to growth from there. And we identified a set of companies that we thought were very strong and what we call the growth gems. And these were strong because they had a strong position in their industry, at least from a potential standpoint. They had a strong, what we call, right to win. And these growth gems collectively had valuation of less than $1 billion in March 2020, close to about 900 million. And the first thing we did there was to say that if you have an aspiration to be a $1 billion company standalone, you'll be called a growth gem. And the aspiration has to be matched with a plan that in the next 3 to 5 years, you will be a $1 billion company. 3 years later, the collective group had gone from 900 million to 3.4 billion. And we raised the bar. At that point, we said that to stay a growth gem, you've got to now grow 5x in the next 5 to 7 years. So that 3.4 must go to 17. And that's one part of what's driving our growth now, is the ambition as well as the ability to then deliver on each of our businesses.
You communicated obviously very clearly internally. Did you communicate as you were going along externally as well to the outside world, investors, the investor community?
In June 2020, June 12th, 2020, we communicated an 18% ROE target. And the basic response back from investors were, "You're crazy. There's no way you're going to do this." Right?
But how did you arrive at 18%?
Because we just looked at it first to say that, look, if we take 5,000 crores of profit out, or rather losses out, right, that comes in. And here are certain growth targets which we think we can meet. And therefore we said, to be on the safe side, we'll get to 18% in 3 to 5 years. But we got there in 18 months because we could move quickly on getting those losses out, and we could meet certain growth targets that we laid out. So it was a very deliberate target based on, here are the specific actions. If we take these actions, we get there.
And all these actions you did, you had a full authority to, because all these companies were collected by Mr. Mahendra with a lot of pain and effort. So did he give you full authority to just chop it off?
So the answer to that is yes. And that is one of the privileges, or I would say that something we're very grateful for, is that the teams were fully empowered. And I would, in all cases, go back to Mr. Mahendra and seek his guidance. And he gave very good guidance in a number of areas. And he always used to say that, look, your goal is to create investor value. And you do what's right for the company. And that is how we worked.
Amit, you want to come in as an investor's perspective?
Yeah, so I wanted to add two things to this. One, the turnaround becomes all... Sorry. Yeah. I wanted to add two more things to this. The turnaround becomes all the more creditable because it was done during COVID. They made the announcement in August 20, like when you came up and said 18%. So that was in deep COVID. And then the follow through. And I have not seen a more publicly telegraphed and told to investors turnaround which has happened. Quarter on quarter, he would come on the conference call, he would put up the capital allocation chart, and he would say, look, this is what I had said and this is what I'm doing. So all you had to do was to keep listening to the conference calls quarter and quarter, and you would have made serious money. I'm not joking. 20 years I've not seen this kind of a telegraphing of a turnaround which has been happening on a public platform. Yeah.
And when did you buy it? Fine.
See, we had been tracking Mahindra because we had owned Escort. So, we had been tracking it for a while.
No, but did you double down once?
Not this one.
You wish you had?
We didn't. Unfortunately, we didn't.
You wish you did, obviously.
Very, very insignificant position. I wish we had done it. So.
But why didn't you? I mean, was it because you...
We had already invested in Escort, Tata Motors. There was quite a heavy exposure in autos.
Ramdev, you said...
I think you had gone into telco big time, isn't it?
Yes.
They had taken at 70 to 90 bucks. They had bought 4-5% of telco. So now they can have only that much appetite for auto sectors.
Ramdev, why did you not...
I didn't have the framework. I used to think that any company which is going down, good Lord, I don't have that stock. I mean, I was about QGLP. Robust companies growing, going to the sky. We always paid full price for the growth stocks. We were never practicing the companies which are going down. It was never in my, syllabus to buy the companies whose earnings are going down. No, I never looked at it. That's why, for me, it's a very, very important study. Now, when Asian Paints or anything is falling, it's an opportunity for me to look at, are they getting bruised enough for me to step in? And at some point of time, with the grace of God, probably will hit the opportunity.
So I think you're giving us what आपकी नजर कहाँ है? Asian Paints. उस पे बात करेंगे.
Let it happen. See, till it has happened 50%, let's not bother about it.
I see. Let's bring in Mr. Akhil Gupta, who's been listening in keenly. He's got a smile on his face. Mr. Gupta, thank you for waiting patiently. Tell us a story about Bharti. I mean, as I began by saying, it's a sector which is, I think, since 99, it's a regulation is one aspect, competition is another, and of course, you went through a very large player coming in, disrupting the market in a very, very big way. Tell us that story, Mr. Gupta.
First of all, my sincere apologies for not being there. You can hear me, I hope. So, sincere apologies. I really wish I was there among the stalwarts. Ramdev, what a fantastic study, and how modest you are to say you did not catch this trend. So really a great lesson. Well, telecom industry in India has not only been bruised, it has been battered, it has had existential crisis, not once, but twice. And so it's been a great journey. And some of the things which we learned in this journey was to stick to some fundamental beliefs. And those beliefs were, one, that in difficult times, strong companies become stronger and weak companies get weaker. Two, that to remain strong, the one major thing you have to take care is your balance sheet. Therefore, whatever you do, keep the balance sheet strong. And third, you've got to keep your flock, your people, really motivated. Of course, strong balance sheet helps in doing that, because the biggest demotivation for people is when you're not able to pay salaries on time, they're not able to pay vendors on time. I think steadfastly, through very difficult periods, we stuck to these three mantras. And so I think we were able to sustain and get over those very tough periods.
So, the second bruising, as you called it, the second episode, the crisis, as you called it, when Jio made its entry and it was in the process of garnering subscribers, and it very quickly reached a very significant, large number. You kind of stayed the course with these three mantras, as you put it. You knew that you would come out stronger on the other side. You had to, or was there a moment of doubt? You had to do something.
Absolutely.
Sorry. Yeah.
Yeah, I think we had no doubt, because first we had no choice. Unlike many other groups, we only had telecom. We had nothing to say we can shut it down. So we had to stay the course. And we really believed in this mantra that if you can get over this difficult period, you will emerge stronger, which we really did. Vodafone Idea fell into difficult time because I think great company, but some of it just could not manage the balance sheet.
For outstanding contribution to the Indian economy, which recognizes an extraordinary force behind India's growth. This year, we celebrate IIT Madras for its unparalleled role in driving India's economic growth. Let's take a closer look at their achievements and the achievements of this year's remarkable winner.
IIT Madras, a cornerstone of India's technological revolution, has been shaping leaders since 1959. Known for its excellence in engineering, it has also fostered entrepreneurship, supporting over 233 startups that address real-world challenges. The Research Park, home to 200 startups, bridges academia and industry, driving innovation in AI, robotics and renewable energy. During the COVID-19 pandemic, IIT Madras played a key role in developing rapid testing kits and ventilators. CNBC TV18 India Business Leader Awards 2024 proudly presents the Special Recognition Outstanding Contribution to Indian Economy Award to IIT Madras.
Ladies and gentlemen, a round of applause for Professor Mahesh Panchagnula, Department of Applied Mechanics and Biomedical Engineering, Dean Emeritus, IIT Madras Head, Center of Excellence on Sports, Science and Analytics, and Professor Satyanarayana Chakravarti, Department of Aerospace Engineering, Head, National Center for Combustion Research and Development, and co-founder of several startups. So if you could kindly say a few words.
Thank you so much. It's great to be here. I think as the introduction went, I'm here standing in front of you as someone who has been participating as an academic in a number of startups, notably Agnikul, which many of you would have known has launched India's first semi-cryo rocket out of Sriharikota. Plus, we have actually been doing lots of other things like E-plane or satellite company called Galaxy and Hyperloop, through Tutor Hyperloop and Avishkar Hyperloop. We're part of a larger ecosystem with many of the faculty members, about 100 of us, who are part of about 300 plus startups.
I want to thank the jury for selecting IIT Madras. Today's IIT Madras is not what many of us imagine. I want to borrow inspiration from a tagline, an old Tata Steel tagline. We also graduate the best engineers and scientists of the world today. We filed the largest number of patents for any academic institutions. We hold the highest number of startups. Several technologies are being translated for the world's benefit. I want to make one last point here. I believe we are the first academic institution to be recognized at the IBLA Awards. I want to accept this very gracefully on behalf of all of academia, all of the IITs, and the wonderful work that everybody does today. We need to build a stronger relationship between the worlds of academia and industry. I wrote a piece some time ago that was titled Industry Talks Quarters and Academia Talks Semesters. But I think there is a way to bridge that. Let's make it happen.
Ramdevji, come in here. Investors' perspective on, because you've seen this. I mean, I think this is, you're right there. I mean, if anyone knows this company, you do. So talk to us a little
I
bit.
made the fastest money here, but not as a falling company. As a growing company in 2002-03, at 25, they came out with public issue, I think, at about $45. And in 2003, January, they declared the break-even. And then at 24 rupees we bought, and the stock went to 1180 in next 2.5 years. I mean, 50x in like 2.5, 3 years. So that was the ride I had. And that's why I have been meeting Sunil and Akhilji off and on. But I was stunned to see the kind of capital management they did, in the sense that they went to Africa because they had so much of cash flow. They didn't know where to deploy. And so I don't know whether I would call it as a capital misallocation, but I think Akhil never agreed with me. But what's his view? I would like to listen.
Yeah, I still don't agree. We did have a difficult time in Africa, but that was, I would say it was a growth market. But of course, some of the currency problems have been very severe, which we never anticipated. Nobody can actually. Not a terrible decision, but yes, some internal mistakes in terms of execution. We are back on track, and I think ultimately we will emerge. We have come out of the shadows. So not a real bad capital allocation in 2010, when things were just phenomenal. We were making so much money that if we were not able to grow at that time, it would have been not good for the investors.
Amit, you have any thoughts on the Bharti story? I mean, the latest episode, what we talked about. I mean, what were you doing around that time? Did you look at the stock? What were your thoughts as an investor?
No, Bharti's done a phenomenal job of turning around things. They faced maximum pressure at a point of time. As an incumbent operator, whatever I have read and experienced, I don't think an incumbent has ever faced this kind of a pressure from a new entrant. Like it was like in basketball, you say full court pressure. It was that kind of pressure here, so. And they fought back and they came back, which was quite extraordinary here, so. And I think now they're here to stay, so. They fought it, and they fought it clearly on customer service, and and they brought down their cost to be able to operate at the structure at which the new person was operating.
Yeah, the change from a minute-based pricing to a database pricing. I think these guys, Bharti, was earning money by selling the minutes.
Yeah.
And here comes Jio. He says that there is no minutes. You have a flat plan of $100 or whatever at 200 rupees, and they're selling data. In fact, it was a complete migration from, say, cellular telephone to digital telephone. And the business plan, the tariff plan was completely different. It's a very disruptive thing to move from minute selling to flat plan. And that to flat plan, literally nothing. They pumped in 5-6 lakh crores, and they wanted that 50% market share. So there is a complete bloodbath on this thing. When you see from outside, I couldn't believe that anybody will survive. and now they survive, now they're prospering, and I think the best days are ahead. So, I mean, that's what has happened in M&M. They not only survived, now they're 11,000 crores profit that of last year. I don't know, this year they'll do 14, 15,000 and the ambition are like even more. So they go for kill. See, one of the biggest thing is that you buy free option when you buy a successful turnaround companies. Because you are buying for a doubler or tripler. But actually when the management is actually successful, they go for the kill. Now this management in M&M or Bharti's management, they are not going to stop at whatever they are making. They will go for the, kind of a big, and the big thing is they went into trouble at $4 trillion economy. They will come out in $8 trillion economy. So opportunity size is multiplied, profit pool is increased, and they will go for the best. So I think in Mahindra & Mahindra, at least we are seeing 10, 11, 12,000 crores profit. But in Bharti, I think ROE is still pretty low. How do you see the future? How do you see where exactly, when will you ever eat 18% ROE of Anish?
Are you asking me?
Yes.
Okay. Well, in our peak, we had an ROE of about 32, 33%. So, obviously, having an ROC of 12%, an ROE around that, is not something we are very proud of. This industry still needs a lot of repair. Undoubtedly, we have turned around, but there is such a long run to cover. And I won't say when, all that I know is we will keep moving forward. Our investors, any investor in the market, at least deserves a 20% ROC. And that's what we believe we have to keep working towards.
No, that's very well put. Anish, by the way, Ramdev said once you start, for the person who's coming in at the lows, it's a doubler or a trebler, but when the new management takes over, they don't stop. It can go anywhere. So you want to give us some sense of where M&M is headed? Without, just a broad idea. What's the road looking like for M&M from here?
So for us, our focus is really on continued execution. In terms of your question, as well as I do, that we can't give any forward-looking guidance on this part. But what we feel proud about is the fact that across our businesses, things are moving very well. And we're no longer just an auto company. In fact, if you look at the last 4 years, what we call a services business has generated more cash than either auto or tractors. And that's something we've talked about publicly as well. So we've started to see all our businesses really live up to their potential and drive significant growth for us. And what we want M&M to be looked at as a company that plays in 70% of India's growth over the next decade. And while we have leadership positions today in auto and farm, we have businesses that are very well poised to take leadership positions in multiple other sectors in the industry.
When you buy, Amit, as an investor, when you buy some of these sort of bruised blue chips, it could be a long gestation period in that sense, right? So talk to us a little bit about that mindset. How do you decide?
The gestation period is infinite. It can be 1 year, it can be 2 years, it can be 3 years. See, once you bought this, you are in, because you normally would want to buy it when, at least what I have seen was that the commitment was very strong. When you identified something like this, you would back it up with and put serious money behind it. So there was no question of entry, exit, getting in. So you were in it. And so there have been periods when the stocks, I have seen stocks which have been bought in front of me for 1 year, 2 years, they've done nothing. So we've been plagued with serious self-doubt, serious frustration. We have felt at a point of time there were 3-4 stocks in our portfolio which were turnaround stories. The markets are booming and we thought we are sitting in a bear market. So it's very difficult to go through these periods. You really need to be convinced. See, look, money can't be just gone and you can't find a 10-bagger, 20-bagger like that. Yeah. So you have to go through the pain, and we've experienced, Rakeshji has experienced serious pain. Yeah. He's not only experienced serious pain, he's experienced serious drawdowns from the time he has bought the stock again also. Even at the low levels from there also, I've seen some stocks heavy.
Why don't you talk about your escorts experience? Because you guys minted money in that, but the kind of pain you go through.
Yeah, so Escorts for 3 years did nothing. And it was during, we bought Escorts in 2013, Rakeshji bought it in 2013. 14 to 17, the mid-caps went berserk when Mr. Modi came. Escorts did nothing. And it was a very large position for us. So there was, we were continuous self-doubt was there. We would keep examining our position. We would keep thinking what is happening. And as it is, like Mahindra was a 40% player. They were a 10% player. Are they doing it right? Even the external factors were not good. The weather situation was not good. Competition was discounting. So it was a very tough period for 3 years. But then suddenly when things started turning, they turned around much faster than anybody could have expected. And it was just a dream story after that. Yeah.
Any other examples come to mind? Any other name like Escorts? I mean, just to kind of run the audience through the experience of going through it.
How was the experience in Titan?
So, see, Titan is a story which everybody, like what Rakeshji is associated with. It has been his best pick and closest to his heart. And I was just, since you called me for this, I was going back and looking at some numbers. So while Titan has been 1000x since he's bought it, I went and looked at what the balance sheet was when he bought the stock. Okay, like Ramdevji had put up over here, then it's a Bruce blue chip, what it is, and this kind of stuff. You guys, most of you, I don't think have looked at the Titan balance sheet, what it was at that point of time. Okay, Titan's market cap was 250 crores. Titan had 750 crores of debt. Titan's profit had come down from 23 crores to 8 crores. Titan's jewelry business had started, but it was just it was just emerging. Watch business was there. They had lots of money blocked up in working capital. So to go and buy an infected balance sheet like that, because he was convinced that the Tata name, the jewelry market is disorganized, and the Tata name will lead to people coming and buying jewelry, and the jewelry market will get organized. So this was the kind of balance sheet he invested in, sir. So while it's very good to look at the chart when we see right-hand side compounding, ownership for lifetime and all those things, and so you go back and look, so you see what kind of foresight was required, and then the courage to put serious money at that point of time, sir.
Yeah, he made a good point. Not only you need insight, you need massive foresight. You know, that foresight thing was there with Rakesh. Actually, in Titan, to be fair, for one of the institutional investors, I sold the stock from 140 to 30. After that, we stopped selling. And then one day I realized that all the leftover things have been bought by him. You know, so I'm the guy who sold the stock and he's the guy who bought it. You can see the difference. I made some I made 25, 30 basis point brokerage and he made 1000x.
And Prashant, it's a 20-year holding now. And you've seen drawdowns where like you've lost 50% of your value. It doesn't happen easily.
No, absolutely. Anish, how important is, as you were sort of engineering that turnaround at M&M and that ROE target, etc., how important do you think is the external environment? Because, I mean, after COVID, generally consumption got a bit of a tailwind, right? I mean, especially at the premium end. Do you think that also helped? And to what degree? What you did, of course, was absolutely critical. So tailwind without the engineering in the company would not have worked. But how much would you attribute to, I mean, you know, tailwind from the outside world?
So if you look at the facts here, there were two large factors that drove the turnaround. One is exiting loss-making businesses which had nothing to do with the environment. And second is the pivot to growth. And in the pivot to growth, the auto industry has grown single digits over the last few years. But it's really been the strength of our products, and we've tripled capacity and still haven't been able to meet demand. Similarly, the tractor industry has grown on average low single digits, except for 1 year, the COVID year was a strong year. But our tractor business has managed to gain share in a tough market as well. And then other businesses have grown from low bases in some cases, or a turnaround in both Mahindra Finance and Tech Mahindra from larger bases as well. So the external factor helped in the sense that it wasn't negative, but I think a lot of the growth was driven by a different approach that was taken by our teams to be able to get on a faster path of recovery and then go beyond that.
I mean, the product introductions, etc., right? I mean, you had to meet the market and what it wanted. So you had to do that from the company side. Mr. Gupta, you want to just sort of come in there as well? I mean, the outside environment, and again, is that example of Jio and when they came in, how much was, of course, you strengthened the balance sheet and you made sure the three things that you spoke about, but is that a big factor as well in your opinion? I mean, that the external environment eased out a little bit.
Well, ours was a strange industry because COVID really helped our industry. We had some of the best demand scenario for our industry during COVID. The work from home, all that added. So we were never had a great loss on that account. But yeah, external factors do make a difference. But I think if your industry is solid, you have to just keep the course.
Thank you so much, Professor Panchagnala and Professor Chakravarti. A huge round of applause, ladies and gentlemen, for IIT Madras. The next award celebrates someone who has consistently raised the bar in the world of entertainment, delivering performances that resonate deeply with audiences. The winner of this year's Entertainment Leader of the Year is the most versatile actor, striking a perfect balance between commercial success and meaningful storytelling. He has turned the narrative around for himself and continues to thrive. Let's shine a spotlight on this year's Entertainment Leader of the Year.
Rajkumar Rao won hearts and accolades this year for his inspiring portrayal of Srikanth Bolla, a visually impaired industrialist in the biopic Srikanth. The film, a sleeper hit, showcased Rao's versatility and ability to bring extraordinary stories to life. Following this, he starred in Stree 2, this year's blockbuster, and the highest-grossing Hindi film ever. Building on his iconic 2018 portrayal of Vicky, Rajkumar delivered a performance that struck a chord with the audience. From the resilient lawyer to the small-town dreamer, Rajkumar Rao continues to redefine excellence in Indian cinema with his power-packed and heartfelt performances. CNBC TV18 India Business Leader Awards 2024 proudly presents the Entertainment Leader of the Year award to Rajkumar Rao.
Ladies and gentlemen, a huge round of applause for the very talented, very versatile Rajkumar Rao.
Congratulations, Rajkumar Rao. From Stree to Srikanth Bolla, you've had quite the diverse range of roles. If you'd like to say a few words.
Good evening, everyone. Thank you, CNBC TV18. Thank you, jury. It's such an honor to receive this prestigious award, and especially in front of this August gathering. Some of my favorite people are here. Thank you for recognizing my hard work. As you said, I always try and push my boundaries. I always try and explore challenging parts, and this year has been truly special with Srikanth and Stree too. So Shri and Stree, I think both have been very lucky for me. But thanks to you guys, nothing would have been possible.
Let's talk about the, so there are bruised blue chips, but are there also broken blue chips? Are there mistakes to avoid here as well?
Of
so
course.
when you laid out the framework.
No, of course. I think it has, because there are not many broken blue chips, so there is a difference between bruised blue chips and broken blue chips. So sometimes because of the regulatory framework or completely a company which is by chance goes into, say, some kind of embezzlement, complete corporate swindling, so then the companies don't get bruised and they come back. But the company is finished. Like, say, one of the corporate misgovernance, I would say, it's a very harsh word to say for any company, nobody likes it, but say CG Power. It's a brilliant blue chip company. Leader in their own field, transformer, switchgear and all that. And then they literally went through the bankruptcy because of complete misgovernance financially as well as in all aspects of it. And from there, when you see the change of the management, from a completely mismanaged to most brilliant guy to come in, Velayan and Murugappagal, most ethical, most competent to handle. And then on top of it, turnaround happens and then tailwind comes. So it's like a complete exponential from $5-6 bucks. The stock is now more than 1 lakh crore, and stock is 700-800 rupees.
And 1,000 crores in net profit last year. So,
and there is the capex cycle just already started.
Absolutely.
So they will go for the kill.
Amit, you want to add anything to this in terms of mistakes to avoid while we talk about all the opportunities in the upside?
No. Mistakes to avoid when looking for these stocks, or mistakes to avoid which leads to a stock becoming like this. Yeah.
Mistakes to avoid when looking for opportunities in this area. I mean,
it has to be a very deliberate decision. Yeah? It cannot, your portfolio cannot be contrarian or consisting of this only, but this happens once in a while. So you cannot say, I'm going to be constructing a portfolio consisting only of these kind of stocks. Yeah? So if you think that every stock you can pick up, you are a contrarian and you can make then you are going to be in trouble. Yeah? These kind of opportunities don't come often. Yeah? That can be the biggest mistake. And having a closed mind. Like for example's sake, like in telco, twice he had gone wrong, Tata Motors, and still he put money third time. So you have to have a very open mind also.
Anish, just to sort of wind this down, what is your experience being when dealing with investors, speaking with them, and how's that journey evolved in terms of managing expectations and sort of taking them along, but at the same time also, of course, you have to do what you have to do for the company, and then the market does what it does.
So we have valued the input from many of our investors, and we interact with them on a very regular basis. From everything I've seen, it's important to have a very clear approach that we outline, and then be able to deliver on what we've said. Yes, there may be some times when things may not go exactly right, but then we've got to be able to stand up and say, yes, this did not go well, we did not execute well here, here's a lesson from this, and then we go back and fix it and move forward. Because everything's not always going to go 100% right, but taking ownership for that is important. So essentially, it's a clear strategy, deliver what we commit, and take ownership for things that haven't worked well and fix them. And that's worked well for us.
Mr. Gupta, last word to you on that front.
Well, on the investor front, we were one of the first companies when we got listed in 2002 to say we will not give a guidance. Those were the times when it was not only fashion, it wasn't fashionable, it was kind of mandatory to give guidance. And we did not want to put undue pressure on ourselves or our execution teams to chase the tail. Because things change, strategies change, the way of delivering, that changes. So we never gave guidance. But what we believed was be extremely transparent. Not for the investor, but for our own teams. The more transparent we were, the more we could see the mistakes which we were making, the more feedback we got, and that really helped us in correcting the course whenever something was going wrong. So investor feedback can be very good, but to just go with what the investors would be wanting may also not be a great policy for a corporate. One cannot, as a corporate, to my mind, get obsessed with share price. One should not.
No, that's very well put. And let's wind this down. We have the best of the stock pickers here. Ramdev ji, you already told us Asian Paints. आपने बोला जब bulb जलेगा तो.
अरे ऐसा मैं कुछ नहीं बोला भाई. So, this is, if you see that 11 companies we have put in the report, all kinds of companies are there. And
but don't limit yourself to the 11 companies. I mean...
No, right now the data says that more than 30% decline in the price from all-time high, there are 11 companies and they are blue chips.
Correct.
Now, first it has to fall 50%.
Okay.
It has not fallen.
Okay.
And I don't wish them to fall that much. So don't misunderstand. See, the opportunities come walking to you. There will be so much of pessimism, there will be so much of corporate war, profit war, that it might throw opportunity. Because right now markets are in bullish condition.
Correct.
The valuations are 10 book, 20, except for IOC. But I don't like that segment that much. But IOC is about 1.1 book, and it's fallen by whatever, crazy number. So I think that is one stock And when you're saying IOC, obviously HPPP also comes with that. So clearly that is one segment to watch. Now what happens to the oil price? By chance oil price comes down from, all the charts they say that it is going to come down to 50. If by chance that were to happen, you'll see story developing out there. So I think, but I don't have anything live where I can put a finger on.
But the watch list is ready.
Watch list is ready. Always it will be ready.
Amit?
Repeat your question.
Sorry?
No, what are you asking? Like,
anything on your radar right now, which has fallen enough, which looks like a...
Oh, you want a particular stock?
I mean, 1 or 2 or 3, I mean, up to you.
No, I've got nothing like that to...
Nothing?
Maybe Anish has some.
Yeah.
I was going to say M&M, but I cannot say that. So I should
Go ahead, America.
Let me ask one question about M&M. See, now one of the biggest transition is going to be from IC to electric. You are basically an IC company right now. And I think you are on the verge of launching one of the biggest, a good portfolio of electric vehicles. How do you see next 5-10 years, at what pace this transition is going to happen? Because when I was driving electric vehicle, I think the BYD vehicle was amazing, the kind of pull and the noise-free, the saying. So future definitely belongs to electric. And I think you also believe in that. So how exactly this is going to transit for you? Is it disruptive? Tesla and all are going to come? Or you have a game plan ready for that? And mint money in electric era also.
So I will start again with facts. We've recently launched 2 born electric vehicles. These are on a made-for-electric platform. And the reception so far, while we haven't opened bookings as yet, is very, very strong. We've seen 1.3 billion views on social media for the vehicles. And I would let the product speak for themselves. So as they come into the marketplace, we feel very confident that they will match the best in the world in terms of quality. And that's going to drive the transition to EVs, because as consumers see products that they love and products that take care of all the range anxiety that used to be there earlier, because the rated range in these 2 products is going to be 682 and 656 kilometers. And the actual range on roads that we've tested over the last 6 months across 21 cities is greater than 500 kilometers in every single city. So you're going to really take care of all the range issues. And what we expect is that 30% of our portfolio will be electric in terms of new sales in the next 3 to 4 years. And that's going to really help jumpstart the transition to electric from the country standpoint.
How much of the IC world, in the sense that all the four-wheelers, how much of that do you see in next 5-6 years to be electric in practical way? How much transition can happen?
I don't think the transition is going to happen that fast overall in terms of everything moving to EV, because with the growth in the market, our forecast is we will be making the same amount of ICE vehicles we make today, even 5 years later. But that's because we're going to grow in electric as well, because there will be still some applications for 4x4s, off-road vehicles, where you need the torque that diesel provides. And in some sense, we will see that transition, but it's not going to happen overnight.
You know, for both Mahindra and Bharti, there is one common, I don't want to say threat, but Mr. Musk. There is his Tesla, there is his Starlink, and both are waiting to make an entry into the country. Is that, are we going to see cheaper Teslas? Much lower import, is it possible? And how does that play in the marketplace?
So we have benefited significantly from competition over the last 25 years. The kind of vehicles we make today, we would not have made if it hadn't been for strong competition. And from that standpoint, we would welcome Tesla or anyone else to come in as well. And as I said earlier, we will let our products speak for themselves.
Mr. Gupta, I mean, Starlink, does it really go head to head in terms of competition with incumbent telecom players, or is it largely for, as they say, dead zones? I mean, the satellite service in terms of what Starlink offers, or does it have real commercial use in terms of what you offer? Go on.
No, it can be. I think the direct-to-device coming, if you roll up 10, 15, 20 years, 10 years maybe, enough capacity, it can be. And I think all sensible companies, to my mind, must always be threatened by something or the other to be on the toes. As far as Mr. Musk and Starlink is concerned, I think they're doing a great job. Definitely, they are becoming a threat to the developed world telcos. Now, why I say that is, it's a matter of pricing. In India, a GB costs 13 US cents. In US, it costs $5 to $6. He's already at that price. And therefore, in a world which is used to $50, $60 ARPU for 6 or 7 or 8 GB of data, I think it's already a threat. But India, in some ways, a very defensive story. They are so cheap that it will be a long time before it becomes a threat. And by that time, the cost of producing a GB on terrestrial networks will further come down, because the capacity which will be available on 60, which would come later, will be phenomenal. So, yes, I think quite safe, but yeah, this is certainly a threat. It should be watched very carefully.
Got that. I think we've come to an end of our discussion here. Mr. Gupta, Anish, thank you very much, both of you, for coming on. And I'm sure with the businesses you've built, with the leadership position that you have, both of you will, of course, weather any challenge which comes your way and continue to grow and create wealth for investors. Thank you very much, Mr. Gupta and Anish. Amit, thank you so much for candidly sharing all those experiences with the viewers here. It's been a real pleasure. Thank you very much. And Ramdevji, thank you for being a teacher more than anything else with your wealth creation studies. We really enjoy it, look forward to it. I certainly learn a lot from it.
Yeah, thanks very much to all the people who have come here, and very special thanks to Anish and Akhil for sparing their, from busy schedule to come here and talk to the investors about their experiences. Thank you very much.
Thank you, Geo Studios. Thank you, Mukesh sir, Neeta ma'am, for putting your faith in films like Stree and just to support our cinema. Thanks a lot. Thank you so much, guys. Have a good night.
A huge round of applause, ladies and gentlemen, once again for the very talented Rajkumar Rao.
The Sports Leaders of the Year award recognizes outstanding contributions that have put India on the global map. Now this year, we celebrate the Indian chess team as the sports leader for bringing immense pride to India, to the nation, and inspiring a new generation of players across the country. A big round of applause for our chess team here.
Indian chess has come of age, transforming into a global powerhouse that commands respect on the world stage. At the prestigious Chess Olympiad, both the men's and women's teams made history by claiming gold, a first for India. In the open competition, India triumphed among 195 nations, with D. Gukesh and Arjun Irgaisi shining bright with individual goals. On the women's side, India outplayed 181 countries, fueled by stellar performances from Divya Deshmukh and Vantika Agarwal, who also secured
We at CNBC TV18 are committed to being not just a brand of choice in India, but a brand of global relevance in a digital era. While we continue to lead on TV, we will earn our right to win in the digital age. We are today the largest Indian business news brand on YouTube and WhatsApp, and our journey has only just begun. Well, this brings me to our second and equally special milestone, celebrating 20 years of the coveted India Business Leader Awards. So, ladies and gentlemen, let's take big strides together to make the India of our dreams. Thanks you once again for being a part of this journey, and welcome you all to the 20th edition of the India Business Leader Award.
We start with a category that celebrates campaigns by touching lives and challenging societal norms. The Brand Campaign of the Year award recognizes excellence in creativity and impact in marketing. And the Brand Campaign of the Year 2024 award goes to Ariel's Share the Load. Congratulations, and request Josie Paul, Chairperson and Chief Creative Officer, BBDO India, and Mukta Maheshwari, CMO, PNG India, to kindly join us on stage. And while we take a glance at this amazing campaign.
Equality begins at home, and for nearly a decade, Ariel's Share the Load campaign, conceptualized by BBDO India, has been leading the charge for change. From its inception, the campaign challenged societal norms, asking a simple yet powerful question: is laundry only a woman's job? In 2024, Ariel redefined this movement with its #HomeTeams edition. Through evocative storytelling, it urged families to work as a team, sharing responsibilities equally. By highlighting real-life scenarios, the campaign struck a chord with millions, inspiring conversations on gender equality and inclusivity. The impact: a wave of social media engagement, widespread participation in the #HomeTeams initiative, and a reinvigorated push for equitable homes. CNBC TV18 India Business Leader Awards 2024 proudly presents the Brand Campaign of the Year award to Ariel's Share the Load #HomeTeam.
Congratulations to you. Would you like to share your thoughts on this?
It's a proud moment and an honor to accept the award for the Brand Campaign of the Year on behalf of Procter & Gamble for Ariel Share the Load. As part of building communication that drives superiority for a product, P&G brands try to communicate values like equality and inclusion, which are absolutely critical to drive conversations in our households so that we can redefine changes needed for society. Thank you so much. Awards like this support our unwavering commitment to build brand narratives that drive the change. A warm thank you to our long-term partners BBDO, who have helped us bring this commitment with their passionate storytelling to life.
Well, it's now time for one of the most anticipated categories of the evening, the Young Turk of the Year Award. Now, this award celebrates startups that lead with innovation, agility, while also creating remarkable growth stories. And this year, the Young Turk of the Year Award goes to Noise. So I'd like to request Mr. Amit Khatri, the co-founder of the company, to join us here on stage.
Huge round of applause for Amit Khatri, the co-founder of Noise.
Let's make some noise for Noise.
It's time now to celebrate visionaries who dare to dream big. Our next category, the Young Turk Startup of the Year, recognizes startups that embody the entrepreneurial spirit, driving innovation and delivering exceptional impact. Let's delve into the incredible journey of this year's winner. Priyanka and Harshal Salod, the co-founders of the Sleep Company, may I request you to kindly join us on stage.
Priyanka and Harshal, do stay back and say a few words.
No, absolutely honored to be here and getting this award on behalf of the Sleep Company.
Our next category is the Breakout Brand of the Year, honoring a brand that has reshaped its industry with creativity, innovation and impact. Requesting Meenu Margaret, founder and CEO of Bliss Club, to join us on stage.
Congratulations to Team Bliss Club and to Meenu here.
Up next, the outstanding contribution to climate consciousness recognizes individuals or organizations driving impactful, scalable solutions for sustainability. From water conservation to waste management, energy transition to carbon capture, this award honors efforts that address environmental challenges at scale. Requesting Utkarsh Singh, co-founder and CEO of Batex Energies, to join us on stage to accept the award. Ladies and gentlemen, a huge round of applause for Utkarsh and Batex Energies team.
Utkarsh, congratulations.
Moving ahead, we recognize a company that has rewritten the rules of its industries, creating new opportunities while challenging traditional players. The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now, this year, the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on stage. And while Albinder reaches the stage, let's take a glimpse into the Blinkit story.
In a world where the Indian consumer craves convenience, one company has redefined shopping. They've made it possible to shop from the comfort of your couch and get deliveries in record time. What began as a mission to deliver groceries in 10 minutes has expanded to include everything from furniture to electronics, covering 26 cities with 639 dark stores. With a 40% market share and a 93% jump in gross order value to 12,469 crore rupees in financial year 24. This brand has revolutionized the shopping experience, more than doubling revenues to 2,301 crore rupees. CNBC TV18 India Business Leader Awards 2024 proudly presents the Disruptor of the Year award to Blinkit.
Congratulations to Team Blinkit.